in terms of a base case scenario for a solid earnings growth in the second half. Having said that, and you're absolutely right, Surbhi, I think the entire space has probably moved in tandem with all these expectations coming through. And therefore, I think stocks like an M&M or Hyundai India within the four-wheelers is something that we continue holding in our global and local portfolios. As far as the two-wheeler space is concerned, TVS is something that is a clear hold, both in our domestic and global portfolios as well. Margins have inched up nicely. They are expanding their dealer and distribution reach as we speak across the rest of the country. They're looking at a few export markets, and the new launches have been accepted very well by the markets. Let's also not forget Hero MotoCorp, decent set of numbers, the new launch that they've done in the 125cc category, expectations of the rural demand coming back might also aid volume growth and numbers going forward. So I think a few of these OEMs is something we continue holding. But auto anchors as a space should be is something our belief and our rating rankings at Markets with India indicate that is one space where actionables still exist. And a few stocks which I've mentioned, something like a Uno Minda, something like an SGS Enterprises, is our belief can continue doing well because the content per vehicle with new launches, expectations of market size increasing, might actually do well in terms of their new product offerings, as well as balance sheet support that both these companies probably offer from a numbers perspective.
All right, got it. Hi, morning, Mayuresh. Good to see you, Ben. What about metals? That's been the outperforming sector of September, right? Normally, high beta, on the downside as well gets hit. But the street believes that China is going to get its act together. In India as well, we've got protection for the ferrous space. And, that's why, in fact, the street is bidding it up. Do you think rightly so?
Morning, Nigel. In fact, I loved your piece that you did on the metals part. I think that was very, very informative and very, very crisp. Having said that, I think, obviously, I think a combination of all these factors are working for the sector as a whole. And therefore, I think the expectations in terms of decent volume growth continuing in the Indian domestic context might play out for ferrous as well as non-ferrous. Obviously, I think the prices as far as LME is concerned still remain subdued because of the overall global demand, and specifically how China is expected to come out of its slumber. But I think the government initiatives, as you pointed out, the expectations of a Fed rate cut, the kind of synergies that India and China are building up with, I think that is giving a good hint to the market that there might be some respite around the corner. However, in our opinion, again, I think we are being very, very selective here. I think in the non-ferrous space, Hindalco is something where ratings, rankings, institution holding as per our cancelling mechanism seems to be on track. Within the domestic space, as far as the ferrous space is concerned, I think JSW Steel looks decent. But again, I think Sarda Energy is something that we continue to remain very, very optimistic about. I think the numbers that Sarda has posted in the previous quarter has been pretty decent. And let's not forget, I think the entire mechanism that Sarda is probably going through, right from a commodity player to probably being more of a power utility player with the SKS Power acquisition, the backward integration through Garai Palma 4 blocks, which will propel the SKS Power acquisition as well. The realizations which have gone up as far as few of the hydro projects are concerned, which are high margin. The energy business itself is a high margin business. And debt equity ratios not being too high, net debt to EBITDA still remains very, very manageable, makes it a very good case from a risk reward perspective. So I think JSW Steel within ferrous, Hindalco non-ferrous, and Sarda is a clear actionable at this point of time at last.
Another space, if I can just put up, is textiles, which under the radar did very well. So just three names, if you can put the intradays up. Gokuldas exports was up 7% yesterday. Himmat Sinka was up about 7%. And something like a Arvind and a bunch of others were up between 3 and 5% as well. So that is Gokuldas for you. Of course, back in the 700s handle, Himmat Sinka 7 and Arvind, etc., looking higher as well. No news flow per se, and this is, of course, a very tariff-sensitive sector and maybe one of the hardest hit as well. Just some bottom fishing here or something else. What's the sense?
Morning, Prashant. No, so again, I think, as you pointed out, I think the tariff-related issues might still act as a bit of a headwind for these players as well. And obviously, I think what will come out is anybody's guess. So I think if there is some element of resolution that comes through, over the next few days, over the next few weeks, you'll get a strong hint in terms of a decent bounce back that will probably come through for this sector, because it's beaten down. Risk reward probably seems very, very attractive at this point of time. However, I think the element of risk is a tad bit higher compared to what might or might not happen. And therefore, I think within this space, I think it's a wait and watch that we're probably doing. If there is any amount of relief that comes through on the tariff front, I think a few players like a Gokuldas as an example, Indocount as an example, which is clearly building up capacities in the US itself. And they've done quite a few acquisitions within the US market to increase their pillow capacities as an example, can be clear beneficiaries, but it's all dependent on a lot of factors at play.
Right. You know, the other thing I think which we will have to wait and watch, Mayuresh, is the government has been talking about. One is, of course, tariff relief itself from the US. The other is, will the government here, as we've heard from official accounts, do something to help the industry? It'll not sort of restore profitability, but at least it'll prevent the worst outcomes in terms of support, targeted support for sectors, labor-intensive sectors like textiles, etc. I think we had Sajid with us 2 weeks ago, and he said that, well, something should be done immediately. I mean, not wait, in the next few weeks. And I think we are within those time frames. So I'm not sure. We'll try and find out if something is coming from the government here. But that was the other chatter in terms of, because, I mean, as you said, who knows what happens on the tariff front. The other one, Mayuresh, just stay with us. We're going to come to you, is Infosys, which has said it will consider a proposal for share buyback on the 11th of September. Sandeep Agarwal is with us, fund manager at Sovelo Investment Managers. Sandeep, good to have you back on the program. How do you think about this at a top-down level before we get into stock implications, etc.?
So, good morning and thanks for having me on the show. So, I believe that, the sector is generating huge amount of cash, and right now there is not enough opportunity for anyone to, deploy that kind of cash. So it is best to, not hold it back and return to shareholders, because the acquisition which are available also, they are very, very pricey right now, and it doesn't make much sense to do any large acquisition or anything. So I think, these are cash generating machine. They keep on generating cash every quarter, every year. So even if some opportunity arises, these companies can very well use that accrual, or even they can borrow for temporarily. So I think there is no other option but to return the cash, and I think they are doing the prudent thing in that sense. And I think all of them will have to do that because the generation is very, very significant.
Sandeep, hi, good to have you on the show. So, I mean, but the thing is that, yes, in the interim, obviously, who doesn't like cash, right? As a shareholder, if you're not getting too many stock returns, least you can get is either a dividend or a buyback in Infosys' case. But, and we've had this discussion. You have very clearly laid out the reasons why you are negative on a lot of the large IT services companies. But when does that start to change? Surely there has to be a better way of utilizing all the money that they're generating at a time when they're barely growing 2-3%.
So I think what will happen...
Whether it's talent, I mean, you said acquisitions are expensive. It could be getting top dollar talent. It could be incubating some absolutely new ideas. Surely there has to be a better way to use cash when you are simply fighting for growth.
So, the deployment of cash is very, very gradual. Even if you want to build capability, I'm sure they all are trying to do that. And they have always done that in the past. Also, they have caught up with new technology. But the deployment of cash is also very gradual. If you see even Reliance Intelligence, how much amount they are saying, 855 crores, right? So it is not a big amount. These companies are generating tons and tons of cash. So even if they want to invest in talent or anything, I don't think it will cost so much. And secondly, I don't think these companies will suddenly like to change their business model from services to any product or building some LLMs and all that. I think they will try to fit themselves where they can add significant value to the end client, because they also don't want to, get into a direct competition with those big techs, which are big provider of their revenues. And, they both can coexist and do much better. So the only reason I am negative on the sector is that on the large cap, because the PEG ratios are very high. And I think, for at least 1.5 years, the amount of effort which will fall, that can't be compensated with the realization improvement. So I think after 1.5 years, there could be a reset and we will have a relook at that time.
The last, I think, 4 times that Infosys has done a buyback, it's been through the open market route. So we don't know. We'll see what the board decides this time around, the quantum and the route, etc. But generally, I mean, best case scenario, that does what? It just puts at least a floor on the stock, because the stock is now barely some 8-9% off the 52-week low. It's fallen 25% this year. So, what's the best case scenario ahead for Infosys shareholders?
So obviously, there are a lot of funds in the world which buy the stock with high dividend yields, and their mandate is to do that. So I think for those funds, it makes a lot of sense to have these stocks. And as I said, Surbhi, this sector, large caps are like, mid-single digit kind of growth story. So if this year growth doesn't come, we have seen low growth last year. So, there will be 1 year, maybe next or next to next, when you will see again 15% growth also. And in that year, you can make 30-40% return. Plus, if you are getting 3-4% dividend yield in form of direct dividends and buyback, I think it makes sense for a lot of people whose expectations are 8-10%. There are many funds in the world who are happy to invest at 8-10% also. So I think from that perspective, plus they give a lot of cushion, and it is also a hedge against falling rupee and so many other things. So it makes a lot of sense. And also, as I said earlier, also many people would like to replace IT with FMCG because growth rates are more or less similar, and cash generation and everything are similar. So why not to buy something at half the multiple of something else? So I think those things play out in the favor of this sector.
No, absolutely. And take your point completely. I mean, for all of those reasons that you've mentioned, perhaps large cap IT still has. I mean, it's not a very offensive play. It's a defensive play in the portfolio, but perhaps it still has a place.
Well, indeed. And we had Sandeep yesterday, on Finding Alpha, and he was telling us about, how we are cribbing that the Magnificent Seven is not yet here in India. He said, give it time. All these Microsofts and the likes, they as well started small. As a percentage of the US GDP, it was very, very small. As the GDP scaled up, these companies as well, today they contribute 10 to around 12% of the GDP. That is the market cap of those max 7 companies as a percentage of the US GDP. And he sees it's, in all probability, India can do the same as well with the larger names. But Sandeep, you briefly mentioned about Reliance Intelligence as well. You believe there's big potential, 850 crores. Just run us through that bit. Why are you so positive?
No, so, they are doing the right thing because there is a competition which has come in form of Perplexity and OpenAI. So, the obvious, and Reliance has a huge telecom base, a huge customer base. So, they are trying to buy this hardware and they are going to invest around 855 crore in Jamnagar, and they have tied up with Meta, which is working on the Llama LLM. And, in turn, Meta has hired the best talents in the world. You just see the kind of people they have hired in last few months, right from 100 million base salary to 1.4 billion. So tremendous amount of work is happening, and now combine that with Reliance own acquisition in 2019 of Haptic, where it will be easier for them to distribute this product. So I think Reliance Intelligence is very beautifully building the whole ecosystem where they can give a tough fight to the competition which is coming in. See, now this is not a recommendation of Reliance or anything. I run a PMS, so I'm just giving how they are thinking and how they are trying to build the ecosystem. And Nigel, I would say that, when Microsoft got listed, US GDP was 4.6 trillion and Microsoft was just 750 million. So I think we will do phenomenally from here. As GDP goes up, you will see a lot of techs coming in and, replacing a lot of big techs, which we are taking services today in India. I am very, very confident we will definitely achieve that.
Hopefully, absolutely. Sandeep, so since we have you, why don't you just, some of the stocks that you mentioned yesterday in terms of high conviction ideas, why don't you just recap those for our viewers, Sandeep?
No, so I have not recommended anything, but I would say this, that, we love the platform space because, the people, the nuclear family concept, the falling population growth rate and the lower fertility rate, all this works very well for the, the delivery platforms because people want solutions. It all works very well for, the small solver, like the carpet providers of carpenter, plumber and all. So those business models, it augurs very well for the tourism industry because, the way tourism is growing, and, you will need lot of platforms which can provide you comfortable and safe stay. So a lot of platforms will evolve like Airbnb. I'm sure that, there'll be a very big competitor to Airbnb, which is homegrown Indian competitor. Very, very soon you will see that. So we love all these themes. There's so many themes to play. There is a, luxury car rental theme. And so we are very confident that, platforms are going to solve more and more human problem, and the way life goes busy, even in the medical side, we will see a lot of diagnostic things coming up because, no one wants to do the ancillary work. For example, 10-15 years back, restaurant were delivering food to the doorsteps of customer because they did not have a choice. There was no one who can do that. So they we are focusing on two businesses. As soon as Swiggy, Zomato came today, if you ask a restaurant below your apartment, he will say, please do Swiggy or Zomato. I have experienced it every day. So, no one wants to do the ancillary work. So tomorrow, diagnostic, today they are collecting blood samples. Who knows, tomorrow something else can come which can do for them. So a lot of scope for platforms that take time to earn money, but then it is great business.
Absolutely. Directionally, talking about irreversible change, perhaps a lot of the companies that play in this space. Thank you very much for the conversation this morning. You have a good day, and we'll look forward to connecting again. Thanks very much, Sandeep. We'll take a break on that note. Coming up on the other side, technical setup with our experts, Sudarshan Sukhani and Mitesh Thakkar will be in.
Okay, welcome back. The big mover yesterday, and actually the big mover in September so far, has been MobiKwik. I think in the month of September so far, stocks up 50%. There's no big news flow or anything of that sort. ADIA, the Abu Dhabi Investment Trust, sold out their 2% odd stake last week. So that was a bit of a clean out trade. But, beyond that, I couldn't find very much. But beyond the price action, Hormuz has looked at some data points which I think are useful. Hormuz, over to you.
There's some increased data and trading activity seen in MobiKwik, as you were mentioning, Prashant. In the last 6 sessions of September that we have had, the stock is up almost 50%, not only recapturing its IPO price of 279, but also going well past it now. And of course, as you mentioned, it was the 2nd of September which is when the Abu Dhabi Investment Authority sold its remaining stake, made an exit from the company. That day, the stock was up 20%. But even before that, the stock had seen increased trading activity. Now, if you can see the month of September, all the 6 trading sessions that we've had, in every session, the volumes every single day have been in excess of 1 crore shares for MobiKwik, and the highest, of course, being on the 2nd of September, which was the day when the ADIA block deal took place. Almost 7 crore shares had changed hands in that entire day during that trading session. But if you take a look at the volumes before, in the 3 months preceding the 1st of September, the average daily traded volume on MobiKwik stood at almost close to 20 lakh shares. in a single trading session. But after starting September, that has increased to well over 4 crore shares in a single day on an average is what MobiKwik is seeing. Even in yesterday's session, we had almost 5.5 crore shares change hands. That was well above the 20-day average of 1 crore shares. And of course, that 20-day average has also increased considering the trading activity that we have seen starting September the 1st. Even yesterday, almost close to 40 lakh shares were marked for delivery in comparison to the 20-day average of which is well just above 12 lakh shares. And the turnover in yesterday's trading session almost close to 1800 crore rupees, and that is almost 70% of the company's market cap, which is around about 2500 crores as of yesterday's closing. So increased trading activity, as a result of which, as I mentioned, the stock is above its IPO price, 16% higher, but from its post-listing high, which is almost close to 700 rupees, the stock is still down 53% from those levels.
All right, Hormuz, very, very interesting as always. Beyond just the percentage change, what's happening as far as volumes, delivery, etc. is concerned. Mayuresh is still with us. Mayuresh, any thoughts on this one? MobiKwik?
No, Prashant, so I think if you go by the past quarter numbers, obviously I think the numbers have shown some element of improvement as far as the EBIT is concerned, some bit of improvement on the PBT front as well. And therefore, I think even if the top line probably remained tad bit around the same levels quarter on quarter, I think the reduction in terms of the losses, both on the EBIT and the pre-tax number, is something which has enthused the street. However, I think what comes through in the next 2 quarters is going to be extremely critical. Are they probably going to achieve the element in terms of an EBIT break-even? It's something that the street will probably be looking at, and us as well at Markets with India. So I think we will be in a wait and watch mode, specifically looking at Q2 numbers and the benefit count.
Okay. Got that. Mayuresh, just very quickly, we were having that discussion on Infosys. I'm sure you could hear. The bigger debate is a different one, the utilization of cash, better or not. But here's the thing. Now there's a buyback happening, which, if nothing else, puts at least a floor on the stock, which is already down 25%. Would you be a buyer? That's what we were exactly discussing with Sandeep, that from a more defensive stance, does a stock like Infosys merit a place in the portfolio?
At this point of time, I think we'll again wait and watch, Subhi, because I think the numbers are still not coming through. And the commentaries have still remained a tad bit on the weaker side as we see it. Obviously, there is a huge amount of transition that is probably happening, as Sandeep was pointing out. I think the arbitrage advantage that all these behemoths had a decade ago in terms of labor, in terms of the outsourcing and the processing elements that they carry through, have drastically changed over the last couple of years. And therefore, I think accelerated investments in new products and platforms is something that is the need of the hour. Obviously, I think orders will keep on coming through. The execution will also keep on happening. But I think the pricing and margins of newer orders is something to be watched out for. And different sectors, specifically BFSI, and within BFSI, specifically insurance and banking as a space, how do they probably come out in terms of this entire tariff conundrum is something to be watched out for. Therefore, our take is, even if the risk reward probably seems very, very attractive at this point of time, I think we've been very, very choosy within this space. I think Emphasis is the only mid-cap stock which we continue holding in our global portfolios.
All right, Mayuresh, very quickly, any view on PCBL, the Sanjeev Goenka company? They had an analyst meet yesterday, and they're talking about revenues go from ballpark 8,000 crores to 16,000 crores. But they're also talking about margins moving from mid-teens to mid-20% odd, and the net gearing ratio will improve. Any view on that? He has told this to Shireen in the past as well. But do you have a view on the stock?
No, so I think, again, Nigel, I think the expectation largely is that it's aspirational. And obviously, I think the numbers that the company or the management is talking about over a longer period of time can get achieved. However, I think there are a lot of ifs and buts in terms of input cost inflation, in terms of new clientele that they're probably expected to add. And therefore, I think the stock has given a decent amount of run-up. Again, as I said, we are a little bit choosy when it comes to auto inks as a space. We want companies where the balance sheet growth probably looks stable, where the product portfolio is expanding at a very, very good pace, and where there is a lot of technical or a technology kind of support in terms of new product innovations that they're bringing onto the table, which is with a relative higher margin, and therefore should sustain earnings growth going forward. So decent company, but again, I think we still continue liking the other players within the auto ink space.
All right, Mayuresh, we'll leave it there. Thank you very much for joining us. Good chat as always. Appreciate your time here on CNBC TV18. So that's Mayuresh Joshi with a view on a variety of sectors and stocks. 4 minutes to go for the pre-open session. We'll come back. We'll, of course, get you the technical trades. Jyoti Gupta of Nirmal Bang will also be joining us to talk about the outlook for the defense sector, the 15-year plan in terms of what the focus areas for the government is going to be for procurement. So Jyoti weighs in on that in just a bit.
Welcome back. Well, let's get in our technical experts. We have Sudarshan Sukhani who joins us, as well as Mitesh Thakkar. Good morning, gentlemen. Yesterday promised to be a good session and it was pretty okay. However, towards the end, the markets did lose their way a little bit. Now, today's weekly expiry, how are you all approaching trade? Sudarshan, you go first.
Yeah, good morning. Well, the uptrend continues, and we had that small correction, sudden correction yesterday. And it's very difficult to predict such moves. So we go by the larger picture. The big picture is that the market trend is, the short-term trend is up. We are in some kind of a trading range. Every dip inside this range is a buying opportunity. Today, again, we have that FNO expiry, so it becomes unpredictable. Within this unpredictability, we still want to be a buyer. If you have long positions, stay with them. Otherwise, buy on a small dip.
Yeah, absolutely. Gentlemen, morning. Great to have both of you here. Mitesh, what about you? How would you set up things?
Morning, Prashant. I've been advocating that the indices will be in a range, and I think getting past 25,000 to about 25,150 will be tricky. Yesterday, we kind of reversed from close to 24,900. I think it is still a market which is directionless for me. Buying, yes, I would look at closer to about 24,500 if you get there. Otherwise, you try and take profits on long position on the index if you have closer to about 24,950, 25,000 zones. But I think the bigger money or the better trading results would be obtained if you are more focused on individual stocks.
Okay, let's talk about those individual stocks then. Sudarshan, what's on your list?
Well, it's an all-buy list like it has been for some time. Syngene is a buy with a stop under 636. Tata Elxsi is a buying opportunity with a stop under 53.70. It's also a positional buy. Ashok Leyland is a buy with a stop under 134. And Bharat Forge, in spite of the fact that it had a very decent rally, continues to be a buying opportunity with a stop under 1178.
Got it. Okay, all right. Thanks for that, Sudarshan. Mitesh, what about you?
I have Bharat Forge on my list as well. Yesterday, clearly there was a strong price volume breakout. So keep a stop below 1180. Look for targets of around 1245 here. Buy on Adani ESOL, Adani Energy Solutions, where we got a good reversal on the 2-hourly, 3-hourly charts. So buy here with a stop below 763, 764. Look for a first target of around 800. Couple of sell calls. I have a sell on Asian Paints. There's a good chance that we might be seeing a double top formation over here. The indicators have broken down, so chances are that price will follow. I'll suggest a sell here with a stop at 25.60 for targets of 24.70. And the last is a sell call on LTI Mindtree, which has broken from a rising trend line. So sell with a stop at about 51.30 or just above it, and look for a target of around 5,000.
Okay, all right. By the way, keep an eye out on the bottom of your screen, the money market alert that's come in there. The money market was closed yesterday. It's reopened today. And there is some strength that we're seeing on the rupee that's pulling back close to around 0.3%. So keep an eye out on the bottom of your screen. That said, let's focus on Voltam. As Nimesh told us that there's likely to be a large trade. Nimesh, bang on, tell us more.
Well, Nigel, so we all know the news that there's going to be a large block in Voltam. The promoters are looking to sell 7.8% via block deal. It's a very small 2% discount to yesterday's closing price. The follow price is 7,600. But I've done a bit of a deep dive into Voltam as well. Now, after today's block deal, the promoter holding will fall below 30%. And in the book, it's mentioned, and if they indeed sell their entire 7.5 lakh shares, then there will be a 2-year lockup for the promoters to sell further. So no further supply likely. Interestingly, in September 23, the promoter had sold 12% stake at an average price of 4,633. And since then, after that, in that 1-year period, the stock had hit an all-time high of almost 14,800. So that's the kind of move we've seen when the first time the promoter sold 12% stake. In this year, the stock is down. Like Y2D, the stock is down close to 25% and 46% from the 52-week high. Now they are selling another 7.8%. But since the first block, I've just looked at the numbers as well. Since 2023, when they sold the first stake, the revenue has risen only 11%. The margins are down 100 basis points since then, since 2023, and the net profit is up 17%. What is interesting is this could be the potentially large stake sale from the promoter. So from that sense, the supply overhang will be out of the way. And if you look at the past history, after the first block, we see a big re-rating in that stock. So that is something to keep in mind. And today there is going to be a block at a 2% discount to yesterday's closing price.
All right. That's a very, very interesting, a quick deep dive. Nimesh, thank you very much for that. Well, let's just talk about the standout brokerage report of the day as well. Nimesh, since we have you, why don't we wrap that up as well? What are you picking up?
Well, Prashant, just give me a minute because I just had to cut this call and come back to you. Give me a minute to come back for this.
Okay. Got that. I think we'll go back to innovation a bit from now. The Defence Ministry has unveiled a comprehensive modernization 15-year roadmap for India's future capabilities as far as defence and warfare is concerned. How should this be read is the question. Jyoti Gupta, defence analyst at Nirmal Bang, is now joining us to help us with that. Jyoti, good morning. Great to have you with us here. For our viewers, for the uninitiated, and I trust you've looked at what was put out. Just if you can tell us the big highlights in terms of what you picked up from the document.
Well, first of all, I would like to begin by acknowledging the tragic floods in Punjab. Our hearts go out to people impacted. This is a time for all of us to stand together in support of relief and recovery efforts. Thank you so much for having me on the show. Honestly, this roadmap is long awaited. And this is for the first time that the government has put forward a truly comprehensive long-term plan that unifies Indian Army, Navy, Air Force modernization under single vision. I mean, on an overall basis, if I look at the document, a total of 151 projects are being progressed by the services under Make 1, 2, and 3. Out of these, 63 have been accorded AONs, which is acceptance of necessities, and 4 projects have been contracted so far. There are some critical platforms which are already progressing well, even beyond what's not even mentioned in the document. So, what I think that, honestly, it does prioritize next generation technologies such as AI, hypersonics, hyperspace, and robotics, strikes a balance between indigenization and global partnerships, and of course sets out a 5-15-year timeline backed by budgetary documents. But challenge now is execution, matching ambition with delivery so that the roadmap does not remain aspirational, but translates into real combat capability on the ground, at sea, and in the air. It is very important. And to be fair, I think this marks a decisive shift from a reactive procurement to proactive capability building, something which has been demanded since Cargill Review Committee in 1999. So I'm just hoping that things fall in place and the entire defense ecosystem is benefited from this roadmap.
No, absolutely. You seem a little, right at the end of it, a little skeptical, long awaited, but you think there's a chance of us, as they say, slip between the cup and the lip? Or this is now set, the trajectory is set, needs to be executed?
Yes, the trajectory is set. I do not want delays. I don't see a slip, but I don't want delays this time.
Yeah, nobody wants to face.
Very, very critical at this point of time.
Yeah. From a listed universe, Jyoti, let's just distill it down. What does it mean for what companies?
So building on this entire story, I think what stands out to me is that this roadmap creates opportunities not only for defense PSUs, but for the entire defense ecosystem. Subsystem manufacturers, private players, and MSMEs will increasingly be pulled into this larger programs as India transitions from assembling to integrating and eventually exporting complex platforms. Now, this will naturally put pressure on companies across value chain to scale up, meet global standards, and execute with discipline. From an industry perspective, the shift also means defense is no longer a sectoral play, but an ecosystem story, where strong order inflows, robust research and development, and tighter supply chains will define winners. Some firms will capture outsized gains, others more modest, but collectively the industry is entering into a multi-year growth cycle. And what needs to be understood is that this is a highly capital-intensive industry. Therefore, large players are obviously expected to be benefited. They will have resources, and I think they should pull into all these smaller players who have the real capabilities and create a very, very robust system.
So Jyoti, right, absolutely. So distill it down for the viewers then. From a shareholder perspective, if someone wants to make money out of defense stocks, say in the next 1 to 2 years, should they stick to the large players like you're saying, go in for your BEL or the PSUs basically like an HAL or a Masgaon or a BDL, or should they look at also private sector names? Give us top three picks, say.
So you would have my top 3 picks, which I've been talking about it. My top picks across, even when I'm pitching to my clients and in my reports, has been held, BEML, and in the private players data pattern. So you should not look at defense PSUs alone. You should look at private players because they could be multi-baggers. But having said that, I think the entire defense ecosystem is going to perform very well. We just need to identify who are going to be outliers, big outliers.
I'm recapping top 3. You said HAL, BEML, right?
Yes.
So Hindustan Aeronautics, BEML, and data patterns is one private sector pick. Okay, got that. And you've been positive on these companies for a while now. So got it. Thank you very much, Jyoti. Good conversation.
So just one thing, Jyoti, does it make sense? There are these defense funds, etc. as well. I mean, to get a broader exposure that is for retail investors, that makes sense as well, since you believe this is the start of a multi-year upcycle.
Actually, defense index is a good way to invest. They're all-time low any which ways. And see, all these platforms that you see is not going to benefit in 1 or 2 years because even the prototypes are still not out. So this is a long-term story. This is a 3 to 5 years. So if you invest now, sit back for at least 3 to 4 years and you're going to make it. This is definitely a story to look at.
Okay, all right. Jyoti, thank you very much for joining us. Good speaking with you, and it's a pleasure. And good conversation. Let's now bring in Nimesh. Nimesh, morning again. The brokerage report of the day.
Hi, morning, Prashant. Today's standard is on the Aditya Birla Fashion and Aditya Birla Lifestyle brands, the two companies which got demerged, very recently. So Morgan Stanley has put out a note today on both these companies, and they've upgraded ABFRL to an overweight with a target price of 113. They believe that ABFRL is at the cusp of fundamental improvements, including leading to profitability, and they see a potential re-rating as well in terms of valuation. So that's a big call on ABFRL. Now, ABFRL, Morgan Stanley believes, is a good play on the luxury businesses, and they expect a 14% revenue and a 27% EBITDA CAGR between FY27 and FY28, and at valuations of 10 times FY27 EV/EBITDA, the risk reward seems to be favorable as per the Morgan Stanley note. So that's an upgrade on ABFRL. They've also initiated coverage on the other demerged business, which is the Aditya Birla Lifestyle brand. There they have a target price of 175, and they believe that it's a good mix of core businesses as well as the younger brands which are likely to grow faster, and that is where there could be a re-rating coming in that company as well. And they expect a 10% revenue CAGR between FY27 and FY28 estimate, and they expect a gradual improvement in the profitability as well. And this stock is trading at close to 13 times on FY27 EV/EBITDA. So a coverage on both these companies, but an upgrade on ABFRL by Morgan Stanley with a target price of 113.
Okay, so Aditya Birla Fashion and Retail and AB Lifestyle, will keep both of them on our radar. Thank you, Nimesh, very much for that. By the way, as the pre-open has settled, look at Infosys. 3.5% is the initial opening pop that the stock is indicating. In fact, some of the other IT names like Wipro, etc., are also higher on the back of that excitement. Maybe more buybacks ahead from the IT giants. Let's quickly move on. We have our technical experts standing by for the 9-10 calls. Sudarshan, which stock will it be?
That'll be Tata Elxsi. Buy Tata Elxsi with a stop under 53.70.
Okay, and Mitesh, for you?
I'll go with the buy on Bharat Forge for targets of 1245.
Yeah, absolutely. Gentlemen, thank you very much, both of you. 2 minutes to market open. Naveen Florin is what we want to shine the spotlight on once again before we start. Sud is back with us. So over to you.
So before I talk about Jeffrey's view, take a look at the stock performance. It's down 14% from 52-week high. The stock had hit on July 31st, but still up 44% in 2025. Now, Jeffrey has come out with a note. It has a buy call and target is 6,025 per share, and that implies an upside of 30% from current levels. It says company has started deliveries of 3 new molecules in specialty chemical and 1 new molecule for CDMO space, and R32 ref gas prices are holding firm on strong US demand and limited exports from China. Also, recently company has bagged an order from Samsung Electronics, and that is going to be a new growth driver. As far as the valuation are concerned, it's trading at a long-term average for PE while offering 36% EPS CAGR over FY25-28.
Okay, all right. So got it. Thank you very much. So we'll keep Naveen Florin on the radar. Naveen Florin's up about 1% in the pre-open. Aditya Birla Lifestyle, the stocks that Nimesh was just talking about, 4.5% higher. Yeah. And then, IT obviously is a big theme today.
ABFRL yesterday, so day before, Friday's close was, I think, 85. Yesterday went up like a rocket. High was 94 and then closed at 88. So it was along with the market which sold off, this one also came off very sharply. Middle of the day, it made that high. So this morning, it's again trying to get back to it. It went to a high of 94 odd rupees or so. So at about 90, just under 92 this morning, with large volumes in the pre-open session as well. So Naveen Florin is perhaps the other one we should look at before we go any further. And the first rate should be with us in a couple of seconds from now. So 90 and 340 on the Nifty and the Sensex respectively. And then we will look at the Nifty heat map, get down to individual stocks, etc. Shortly. 24,860 on the Nifty, 54,300 on the Nifty Bank. Small cap index is up about 1/3%. You got the mid cap index, which is up about 1/4%, 57,500 plus. And it's a pretty good start all told this morning. I think right out of the gates, you've got 1,300 stocks higher and about 400 stocks lower, but this typically does change. And the Nifty heat map should come up next, which will give you a sense of where we are likely starting before we get to individual names, etc. Voltamp, I think that 8% block has changed, equity has changed hands, 2% lower on Voltamp. So 76.20 or so is where that is trading at. It's largely all in the green, and you can spot a lot of IT on one end Remember, the IT index has sold off pretty hard on Friday and yesterday as well. Of course, I mean, it's been underperforming before that. On the other end, in terms of what's down, there is Bajaj, Eternal, etc. So, but overwhelmingly in the green. And of course, that's the IT index with about 1.8%. I'm assuming largely propelled by what's happening with Infi. Surbhi.
Absolutely. So Infosys 3% higher, Wipro's 2.5% higher, HCL Tech 1.5%, Tech Mahindra, TCS. I mean, it's just gotten the whole sector excited, saying maybe other companies will follow and return more cash to shareholders like Infosys is planning to do. Remember, the board meeting is on the 11th of September and we'll have more details then. Beyond IT, HDFC Bank is a good support. Stocks up about 0.6%, 0.7% right now. L&T is another heavyweight that's providing some cushion today, 0.5% higher. So looking pretty decent. After that, it fizzles out. The only stocks that are down are some of the consumer and auto names that are cooling off after the big run-up that they've had. So Bajaj down by 1% or so. M&M is down about 0.5%. Titan, there's also Lever, which is showing a smidge of red. Reliance is absolutely flat, so it's not really contributing. Ditto for ICICI Bank, largely on the flat side. But it's IT on the way up. Trent is recovering after the drubbing yesterday. Trent was down quite a lot. It's up about 0.5% at this point in time. Nifty around 70 points higher, largely all thanks to IT.
Two stocks that have been big underperformers are finding its form in the month of September itself. Prime Focus up 30% now for the month of September. Precision Camshafts, there was that talk about them trying to do something on the electric vehicle side. Retrofitting is something that they've been looking at. I think they're selling one of their assets in or writing off the asset in Europe. So Precision Camshafts is the other one that's up close on 7%. And for this month itself, that one's up more than 35%. So big up move is what we're seeing on that name. IOL Chemicals, that's the other stock that was higher in yesterday's trading session. It's seeing some follow through. Railtel bought a small order. Street likes it. So that stock, in fact, is holding up well in the green. On the flip side, a couple of stocks are coming for some profit taking after the big run that we've seen. GMDC is now down close to around 4%. MobiWik, that's another one that's coming for some profit taking. Remember, both these two stocks have had a one-way run. Voltime, you already mentioned, is lower. And Ola Electric, after dancing away closer to around 70 rupees, last few trading sessions, there has been supply that's resumed. So that one now has just breached the 60 rupee mark. So I think that's another stock that you should be keeping on your radar, whether or not that dip that does get bought into. But Prime Focus, clearly the stock of this month itself. And TBO Tech, we had spoken to the management yesterday. Remember, post that acquisition, the stock has seen a big run. In fact, yesterday, intraday, it did see some profit taking, but it's moving back up. The reason being, the acquired asset will increase their revenues by close to around 50%, right, and EBITDA by close to around a third.
Well, so TBO and actually Prime Focus, right? Two names which have done very, very well. Right there on the top of the list. So 76 points in the Nifty, 24,850 is where we are at. And we should have some of the buzzing sharp movers at the bottom of the screen. So, Prime Focus again. IOL was a big mover yesterday. It's up 4%. Precision Camshaft, I think we just mentioned 5.5 higher here. Railtel out of the blue. I mean, it's not done very much last few weeks now, 3%, but it's got volumes. Action Construction Equipment, that's up about 3%. So you got lots of these decent, well-tracked, well-owned names. Force Motors, today, actually, Force Motors sold one-way move. It's still up like crazy this year so far, but then it had a pretty meaningful pullback as well. Last 2 days, it's trying to come back up. Taj GVK is up about 4.5%. Policy Bazaar is another one which is up about 2% or so. So yeah, I mean, lots of names, volumes. If I go down the list, then start to thin away a little bit. NetWeb is another one of those movers, right? I mean, it has gone up like a rocket over the last 5 days, 6 days. Today, it's down 3%. It's got the second largest volumes on the downside, NetWeb. And Mosship is another name which has gone up like a rocket. It's down 4.5% today. Again, third largest volumes on the NSE. And, MIC Electronics, MICEL, we highlighted this yesterday again. These are all shooting stars, but we'll see if they are short-lived or durable. But this one is coming down 6.5%. Fourth largest volumes on the NSE. MobiKwik is another one which Hormoz highlighted with lots of delivery, etc. stats. 50% this month. MobiKwik is down about 3% right now coming through. So lots moving. We'll get you more in a bit. Sandeep Bhatia is with us, Managing Director, Head of Equity India, Macquarie Capital. Sandeep, great to have you with us here. Thanks very much for your time. Your view broadly and I'm just paraphrasing or just summarizing your views, that you've been a little cautious at the margin, right? On the back of a bunch of things. And it's kind of borne out because as far as individual stocks go, something here and there is always there. But at a broad level, the feedback is, people have not really made a lot of money. Over the last 3 months, 6 months, maybe even 1 year, we've been kind of flattish. Do you think there is more time correction ahead of us, or you think, ingredients are coming into place and we perhaps in short order should reverse some of this negative sentiment? What's your sense?
Yeah, I would agree that we're still in the slow burn phase of this market. I think the GST cuts which have been announced are welcome. I would actually believe that the GST cuts will do more benefit for the economy than the income tax cuts which happened in the Feb budget, because the GST benefits a wider section of the population. It's around spending, and it's not necessary that some of the income tax savings will be spent. They may be saved. So all told, GST move is actually better than the income tax cut. But if you see the current picture, we are in the Shraddh, Pitru Paksh. So I think consumption will still broadly be weak till 21st of September. So this quarter is not going to be good. While we saw last quarter come with good GDP growth, we'll see actually a downtick in terms of the number from the high that we saw in the previous quarter. So all told, it's still a slow burn. The only thing I can visualize is a good festival season. And if we see that, I think October to December markets will see another rally. But on the whole, we are still on high valuations. We still face uncertainty on tariffs from the US. We also are in a very geopolitically volatile region. We saw what happened in Nepal yesterday. So all told, it's still a slow burn.
Okay, slow burn. So still have to be a little cautious. Take that point. But Sandeep, I really want to congratulate you on the call you made on autos. And I remember, I think we spoke very early in August, much before the Prime Minister's speech from the ramparts of the Red Fort. And you said auto as a sector is looking interesting. And at that point, your thought was more centered around the fact that we're getting rate cuts. So, maybe it gets people to go out there and buy. Since then, individual stocks are up anywhere between 15, 20, 25% in some cases in the last 1 month. So how much of the excitement and, this pop, how much of it is in the price? Or do you think the GST cut, because it's permanent in nature till the next round, or do you think it really turns something, especially, say, for the passenger vehicle space, maybe for stocks like Maruti or Hyundai, which have been totally bombed out?
I would actually think that the GST cut in the auto space gives it a lot of legs. I also believe that eventually this small engine capacity cuts have to go. Now, whether it takes 2 years, whether it takes 5 years, I don't know. But GST in autos should be uniform across size of car and across engine capacity. Maybe that will take a couple of years before it comes. But in the near term, there is definitely a big impact on model cycle. I expect both Maruti and Hyundai to benefit from the GST cuts, and also from the fact that there is a model cycle impulse, which will drive people to the showroom, which will drive people to buy cars. So to that extent, all the three manufacturers, whether it's M&M, whether it's Tata Motors and Maruti and Hyundai, all of them will see benefits, and especially vehicle manufacturers which have new models coming in. I would definitely think that Mahindra has benefited a lot from this. I would expect Hyundai and Maruti now to also come through in this on this pulse of new model and new launches.
All right. Hi, Sandeep. Good morning. And I also recall, on autos, you were positive. That's played out well. So good on you. The other, industry that you liked was the hospitality space. I recall us chatting the last few times actually about hotels. And there seems to be no let up. A couple of conferences that I got a sneak peek into. I was, hearing those that are heading some of these hotel chains, and they are sounding extremely optimistic. Would you share their optimism? Or do you think after the recent run, you believe that, maybe in fact, you're not as bullish as what you were earlier?
So structurally, we are positive on the hotel sector. I think now, in terms of valuations, as we are cautious with the market, we just have to think about valuations. If your holding period is more than 2.5, 3 years, then you can definitely continue to be extremely positive on the hotel sector. We have to look at what is the mix of new properties coming through, whether this is these are big capex investments or these are existing hotels which are taken over under management control. What's the capital efficiency of these new projects, and so on. So all told, I'll be positive, but not the kind of run which they have seen in the last 12 to 18 months. That needs to moderate.
Yeah. I mean, what runs very fast. What doesn't run is crawling, right? I mean, that's the two-speed state for the market. Or so, in terms of really out and out, down and out kind of spaces, if there are any, Sandeep, and typically that is the time to kind of sort of focus on it instead of trying to chase things higher. Anything left out there of interest to you?
It's a bit of a tired sector, but banks can actually do better. They have not been down and out per se, but they have not been the best in the last couple of months. I think we could see another rate cut. I think consumption is going to come back in this festival season. I think some of the banks will get their mojo back. And well-managed banks look interesting. So I think banks definitely look good. And especially in a geopolitically volatile world, export sector remains a bit of a question mark. So domestics like autos and to an extent banks and, as I said, hotels all look better placed on the whole.
Insurers, Sandeep? Any thoughts?
Insurers, have to go through this margin hump in terms of the GST cut, input tax credits, and so on. So yes, I mean, longer term that's fine. But in the near term, there is this GST impact and input tax credit impact which you need to pass through.
Internally, just one last from my side, Sandeep. Internally at Macquarie, as a team, is there? What do you think? How long before we get a tariff truce with everybody's got their thoughts, theories, etc. But I'm just curious.
I'm not privy to what the White House thinks.
No, nobody is privy, Sandeep. Yeah, I mean, but that doesn't stop people from. It's all about looking ahead, right? So is it short-lived? Is it longer? What's your sense?
So, if you look at the political calendar, and I don't think people have forgotten that we have a very heavy political calendar in 2026, starting from elections in West Bengal and also in Tamil Nadu, which are two big important states for the BJP. I think they want to do this before March, because after that, the political calendar is extremely heavy with state elections. So logically, it should be between now to March that it should happen. But of course, the stars need to align, and things need to fall in place. But we because 2025 was a very light political calendar, and we have not had much impact. There's a Bihar election in end October, November. But other than that, we actually forgotten the politics. And I think to come 2026 and 2027, the state election calendar will be very important and will have an impact both on policy, will have an impact on the government's preoccupation.
Interesting, Sandeep, since you're mentioning about that, Mr. Modi has held its ground. He has said clearly he wants to protect everyone here in India, particularly the farmer community. So otherwise it would be easier, for India to approach United States, try to arrange a dialogue, because you don't know what Mr. Trump is going to do next. He'll put it out on X or some platform that, the delegation approached me, they really wanted me to give in. So I think it has to be handled very, very carefully, because you have a Bihar election that's, just around 2 months or so, less than 2 months away. So, a little bit of a tricky situation. Otherwise, a phone call from Mr. Modi to Mr. Trump could have been on the cards. I think that will have to wait a little bit, or a lot of thought will have to go into it because of the man we're dealing with, Mr. Trump.
Yeah, that's we never know. Just have to wait and watch. Never second guess what the White House is up to next. But two quick questions from me, Sandeep. One is, okay, let's take IT, and then I'll ask you the market question later. IT. Now, Infosys, you would expect the company, I think the market would be far happier if it was a very great tactical acquisition or something pro-growth, but what we've got is a buyback announcement. Would you look at buying IT stocks just because at least the valuations are maybe more comfortable now, and there's a cash play, there's a defensive play? What are your thoughts?
So we are cautious going into the near-term numbers for IT stocks. So you should have a 3-year time frame for IT. Then you can probably look at them. There's a lot of moving parts in terms of the US and whether it makes any other further moves. I don't expect, actually. So I'm not in the camp that things will get worse as far as the Indian IT sector is concerned. But yes, I mean, you should, as I said, you need a slightly longer time frame, at least 2.5 to 3 years.
Okay, so have a longer term time frame if you are venturing into IT stocks, traditional IT services, that is. Finally, Sandeep, the point on the market itself, and when we spoke earlier, you had a view that there will be this time correction lasting. Now that we have another big stimulus boost in the form of GST, where does that leave us with expectations of a bumper festive seasons, the earnings pick up, and eventually the market picking up? Where are we on the whole trajectory?
Well, where are we on the whole trajectory? If the markets were 10 to 15% down, then we would be at the cusp of a run. Because the markets are not down as much, though they've been burned on a slow burn path. It's a combination of whether we really see a big earnings surprise. And as I said, I don't expect the September quarter numbers to be a big earnings surprise. October, December, festival season logically should be good, and I'm actually optimistic for a change on that front. But even then, whether we see that continue in terms of the tariff issue getting resolved with the US and so on. So we need a couple of, other than just the immediate GST earnings kicker, we need more stability on the economy and some good news on politics before the market can really see a big leg up. So yeah, it's where we are, and and we have to go through this next couple of months slow burn phase.
Yeah, absolutely. Sandeep, good chat, good conversation, and look forward to the next one. Appreciate your time here on CNBC TV18. Thanks very much. So that is Sandeep with his thoughts on the market from Macquarie. Well, what we want to do is quickly play out this specific portion from the FM interview that my colleague Rahul sort of conducted. And this is essentially with regards to Finance Minister Sitharaman essentially reaffirming support for exporters. The most hit sectors like textiles. And she basically promised a package for exporters soon. Basically saying that we will not leave them in a lurch. Listen in.
There is a package which consists of very many different ways in which we want to help them. So we'll wait for the cabinet to clear it. But there is something coming to help them so that this tirade of the tariff is something which they can face. And also suddenly having to look for newer markets is also a challenge. But we'll have to help them out on that. But we really can't leave our exporters high and dry saying it's going to change sooner. We will work with them.
Okay, that's the Finance Minister, promising relief that it would be coming soon for export sectors. Well, with that, let's quickly move on and get the next management on our radar. And we're going to be in conversation with Mr. George Alexander Muthoot, MD of Muthoot Finance. Great to have you with us on the show, sir. Always a pleasure to get perspective from you. So, today specifically, we want to focus on 3 talking points. Number one, of course, given all the changes, the GST cuts, the talk of more stimulus, whether you will be looking at revising your guidance higher at all, FY26. Then we have to, of course, understand how your yields are moving. And then, of course, an outlook on the cost of funds, whether you expect more rate cuts and what that will mean for your margins. So, Mr. Muthoot, let's start with your, broad brush, read through of the GST cut. What will happen is, because for a lot of daily consumption items, the rate has come down from 12% or 18% to 5%. People will have more money in their hands. Now, the question is, what are they going to do with it? Whether they'll buy more, whether they'll go back and repay some outstanding loans. What's your, best case read through of this?
Thank you. And first of all, good morning to all of you. You were asking about the GST. So GST...
Yes, and the implications on your business, sir, yes.
GST number 2 is a big bonanza. It was big bonanza. And I should call it not GST, but see it as a great savings tax. Not GST, no. Great savings tax is what GST 2 is all about. So it's a bonanza for everybody. But of course, directly we are not involved. were not affected or impacted positively or negatively by the GST. But of course, all our customers have been impacted. That's exactly what you said. All our customers have been impacted positively because I'm sure all their disposable incomes will be much better, much higher. They'll be able to spend more and probably save more also. So I think that's a big boost to the spending, etc., which will have an indirect impact on maybe the people who borrow and who are able to repay easily. Yes, that is the good impact we see on the GST front with regard to gold finance.
So, Mr. Muthoot, sir, since there's likely to be more buoyancy, it's also a sentiment booster, right? Generally, when I have more money, the propensity to buy more, maybe borrow more, and then fund my purchases, maybe more gold loans. So, would you look at revisiting your guidance? And you anyway had a flying start in the first quarter. So, instead of 15%, do you think 20% growth is going to happen this year?
Surely, definitely. Last year we had almost a 40% growth. As it stands, in the first quarter we had done well. I think second quarter also we are doing well. So probably after this, during the second quarter results, when we are announcing, we should certainly give a revised guidance, which definitely will be more positive and probably which will reflect on what is happening and what is going to happen in the next year. Certainly, it will be a better performance this quarter also, and we hope, and I'm sure we'll be able to continue what we were doing last year with regard to the guidance. So I don't want to give a number right now. That number I will give during the second quarter results.
Surbhi, Nigel, when we speak with Mr. Muthoot, it's always so always smile. It's a nice smile, right? And you make us smile as well, sir. It's contagious. So look forward to our conversations. And in August, Mr. Muthoot was with us. He said, 15% is the growth guidance, but would be definitely higher than that.
And now he's saying he'll definitely be better, but he'll tell us a number in second quarter.
But mathematically, it has to be the case, Mr. Muthoot. You're teasing us. You're making us wait till the end of quarter 3. Now you have to revise it. That's a given. The question is how much? What is going to be the new number which we'll be waiting for? I know and the floor is open to you. You can go for it right now. You can give us a broad range and then narrow down on that range at the end of quarter 2. What do you think?
I don't want to do that right now anyway. See, our job is to run the company well. This is a good time for the business. The gold loan sector is doing well. The demand is very much there in all the sectors, wherever it is the outside the rural sector or in the cities also. Demand is definitely great. More people are getting attracted to this. So now priority now is to actually do the business better, grow the AUM, and that is our priority. We will do that, and I think guidance, etc., is just a number which I'm sure we have been doing well. We should be doing well there also. Guidance for the profit, guidance for the AUM. I'm sure it will be positive. As it stands, it's positive. Even the regulations which came are quite positive into this sector. So the gold loan sector definitely should do better, and the demand is also great.
Okay, we won't push you any further. We'll patiently wait for second quarter, but it is looking good and definitely a lot better than what you've said in the past, which was 15%. Since we were talking gold loans, sir, our colleague who tracks the company, Gaurav, pointed out that there were reports indicating, I think Bloomberg did a report yesterday, that the RBI is asking entities to pull back from subsidiaries having an overlapping line of business. For instance, for you, the parent company is into gold loans, and there is Muthoot Money, which also gives out gold loans. I don't know, if have you heard anything of this sort? Is there any regulatory change that you're anticipating on gold loans?
We haven't heard, but if the regulator insists that we should merge it, we should merge it. That's all. We don't want to go against the regulators. Whenever they come, they have not said anything like that till now. We have not heard anything. If at all they say something, that we will follow it. Simple as that.
Okay. All right, Mr. Muthoot. Okay, so you don't see nothing big on this front. If it's needed, you'll follow what the regulator has to say. Yeah, right. The other point is you have things going for you, right? Gold prices are up. That obviously helps growth. Give us 2 more numbers if possible. One is on tonnage growth. What kind of tonnage growth can we look at? Because gold prices are moving up, which is obviously helping the business. But on the tonnage side, if you could help us out on that front. And also the cost of funds, that's likely to come down. I think you were guiding for, 30, 40 basis points, a little more than that. So how do we see that flowing through? The cost of funds coming down?
Yeah, I think I should talk about the cost of incremental borrowing. The incremental borrowing from the NCD market, the local NCD market is quite positive. We have been borrowing, we have been getting 3-year funding and 5-year funding at maybe sub 8%. I think that's a good one. Probably that is definitely good for us. 3-year and 5-year NCDs bonds at less than 8% is quite good. That is an incremental cost of borrowing. As far as the bank funding, which constitute about 50 to 55% of our total borrowing, the banks have just recently or just starting to revise or bring down the MCLR. The MCLR has really not come down. So thankfully, today the bank borrowing cost is still less than 9%, maybe 8.75, etc. I'm sure in the next 1 or 2 quarters, that's also start coming down. The point here is the banks transmitting the lower cost of funding is slow in coming. Probably we should see the bank funding cost also coming down in the next 2 quarters. The third source for us would have been the external commercial borrowing. We did a 600 billion external commercial borrowing last week. The money is in the bank now. So we got, it's fully subscribed, and it is done at 6.45 to 6.35% in the national market. Considering the hedge cost, etc., probably the cost should be around 9% or a little less than 9%. Why we did the international funding is that we wanted to diversify our funding source. We did not want to rely too much on the Indian market, etc. So it is just, though it is a little more expensive, today it constitutes about 10% of our total borrowing. So we wanted to diversify. So overall, we see that the cost of funding is coming down. And as usual, that's our practice, the Muthoot Gold Loan Company, Muthoot Finance practice, that whenever the cost of funding comes down or cost comes down, we pass on the benefit to the customers. So we today, the blended rate is maybe 17.5 or 18. If the cost of funding is coming down, we will pass on that to the customer as and when necessary. We will certainly maintain our spread and our net interest margin. We will maintain that. And to maintain that, if the cost of funding is coming down, we will pass it on to the customer. That is one of the reasons why more and more customers come to Muthoot. Actually, 80% of our customers are repeat customers.
No, absolutely. And you've always maintained that you will pass on any benefits of lower cost of funds. But can you just reiterate that? I think spreads you said will be around 9.5% this year. Given the rate environment and your cost of funds, diversifying the source of funds as well, what does all of that mean for margins this year? What is the range or, a rough guidance on net interest margins as well?
Yeah, net interest margin has been in the range of about 5.5 to 6. I think we should be able to maintain that between 5 and 6. We may be able to maintain that also.
Okay, Mr. Muthoot, we'll leave it there, sir, and look forward to our next conversation.
Thank you.
Very
You're
much.
all an encouragement for us.
No, absolutely.
I really encourage Muthoot, encourage us to do better and better. That is why we are doing better.
And you do the same.
Keep on encouraging us also.
You do the same for us, sir, and we look forward to our next.
Happy belated Onam.
Ona Shamsagal, sir. Happy belated Onam to you too. Thank you very much for joining us and those greetings. I think, we're going to just look at the market for a quick bit. 77 odd points on the Nifty, 24,850. And it's looking pretty solid so far. And we'll see if there is any change. By the way, market breadth has compressed a little bit. Just look at the advanced decline lines. 1,500 stocks are higher and about 1,100 stocks are lower. So the gap is right there. You've got, I don't think the leaderboard has really changed. It's still the same. Only that precision camshaft, I think we highlighted with a 5% gap up in the morning. It's up 11%. So 543, beg your pardon, 243 on precision camshaft. But the others, Infi, Prime Focus, IOL, Railtel, these are all there in the morning. Action Construction, Force Motors, Taj GVK is another one. Taj GVK is up 8%. Now it's actually picked up more gains from the first time that we highlighted it. TBO Tech has pulled back a little bit, but it's had such a large move recently. And Engineers India Limited is up about 5% as well. So that's the overall picture as things stand right now. 80 points on the Nifty.
Just one point on Taj GVK. We had, explained this company purely for educational purposes earlier in our segment. We have Midcap Microscope, and there were a few factors why the stock was trading cheap. One was that it's only South focus. The second factor is that, they haven't expanded at the rate at which the rest of the industry has expanded. And the third factor was Indian Hotels has 25% in the company, while the GVK group has 50%. So there was uncertainty with regard to, what's going to happen with that shareholding. So whether or not there's going to be some resolution on that front, that's something that the street will track. But otherwise, valuations were in favor for a 2,600, 2,700 crore market capitalization company with approximately 1,500 rooms by the end of this fiscal. So on that EV per room, actually, it had support, but now maybe something with regard to clearing off of that shareholding pattern. We'll have to wait by, but the last few trading sessions, the stock has done well. It's been a relative underperformer, catching up in the last few sessions. I'll tell you what, we'll slip into a short break. On the other side, we'll connect with the management of Prudent Corporate Advisory. The company, in fact, had done some inorganic growth. Stay with us. Welcome back. This is Corporate Radar. Well, the next company on our show is Prudent Corporate Advisory. We have Sanjay Shah, the CMD of the company, who joins us. Hi, Sanjay. Good morning and good to see you, Ben. Well, first, we'll just tell our viewers the three big talking points that we're looking at. Indus Capital's mutual fund business acquisition rationale. That's what they have done. What's the rationale on that? Will the acquisition be margin and EPS accretive? And also, what's the growth expected from Indus Capital's mutual fund business in the time ahead? Thanks a lot, Sanjay, for speaking to us here on CNBC-TV18. And, before we get on with the rationale about this, I wanted to compliment you. I've noticed in the past there have been some filings where you share some part of, of the wealth you're creating via equity with your staff, with your support staff as well. So kudos to you. I've, observed that earlier this year as well. I think in June 2025, if I remember, the quantum was around 45 crores. So good on that. That said, let's focus on the acquisition that you've done. Indus Capital's AUM is only around 2%, I think so, of your total pie. But the PBT margin's around 7%. So tell us, how do you see scaling up of this business and also in terms of profitability?
So thank you very much, Nigel, first of all, for complimenting. And if you look at, because specifically if you look at as far as mutual fund industry is concerned, I think we have been always looking for the inorganic growth because company is sitting on a significant cash. And this is the business which has been run by Mr. Sanjay Sanghvi, who is the founder. And he has been in this business for almost now more than 22 years. If you look at the entire business construct, they have been managing roughly about 3,500 families, and the average AUM per family would be less than 1 crore. And 95% of assets comes from the long-only mutual fund in the equity bucket. So, and then another important thing is that this entire business has been managed by 15 real estate managers who are there in the business for more than about 15 years. So it's a very, very well-structured business. Mr. Sanghvi was looking for aligning the interest with Prudent, and it was a very win-win situation for us. If you look at from the point of rational, because prudent has been very, very strong on the B2B side, but we wanted to give a message to the entire mutual fund distribution community also that if somebody who is looking for aligning their interests with the larger platform, then prudent is ready to absorb them from the point of business continuity and service continuity to their customer and absorbing the existing talent pool. So I think overall, it's a very good mix for both of us, for Indus as well as prudent. And another important thing is that I think Sanjay Sanghvi will remain as a core advisor to our organization as a strategic advisor.
All right. The couple of factors that the street likes is the MF AUM per client is substantially higher for the business that you're acquiring in comparison to the core business. And also the acquisition, I think, is done at low teens, in comparison to the multiple that the company is trading at. So I think those are the two big numbers. Give us a few more details. Any kind of debt you'll be taking on board, employees, integration, synergy benefits, if you could quantify it?
So I think, Nigel, we have been sitting on a significant cash. If I'm talking about currently, company has 600 crore of cash on hand. And it's an all cash deal. May not be 100% money is going at in a one tranche now. So I think we'll be giving about 85 crore now, and rest of the amount will go in next 3 years time or after 3 years. So the company is not required to borrow anything. Everything is available on the books. As far as synergy is concerned, as I told you, Mr. Sanghvi has positioned himself as a mutual fund expert, and he was selling only and only mutual funds to their customer. So we got a very strong, loyal client base. However, as we all understand that customers' needs are now changing dramatically. So I think the biggest opportunity which we will have would be the cross-selling with the help of their existing 15 loyal team members headed by existing CEO called Mr. Gaurav Gupta. So I think the using our technology platform, our brand, our support, our research, and the multiple product will definitely help us significantly. On the EPS side, it's definitely strongly cash EPS accretive, because I think we are investing roughly about 120 crore, but I assume we'll have a cash EPS of about 13-14 crore. However, if you look at the reported profit, because these 120 crore need to be amortized over a period of 10 years, you may not see significant uptick on the reported profit, because you might earn 15 crore by way of profit before tax, but 12 crore will probably amortize over a period of 10 years. But overall, it's a win-win situation.
Sanjay, great to speak with you. Prashant here. And, we talk about mutual fund companies, we talk about broking companies, we talk about all other companies, but your business has been, as Nigel also pointed out, a true sort of wealth creator. And we don't talk often enough, but that is only because you don't join us often enough. So I hope that this is the start of many. I had a couple of fundamental questions, right? I mean, beyond this acquisition, I was having this discussion with a friend. For a business like yours, where, more and more new investors, right? Money is coming in, pouring in terms of every month we get that data. How much of that is coming through, is the share of direct going higher, Sanjay? And, how should one think about that? Is that a risk? Because on the set of, the clients that you have, I mean, that of course is sticky money in that sense, right? And you will continue to earn a trail. But on new investments which are coming in from new investors, etc., how much is direct, and is that a risk?
Prashant, I think we believe market is poised for a significant growth, and both, whether you talk about it direct or you talk about the advisor-led business, both the business will grow significantly. However, if you look at when we look at our growth, we always look at, are we able to capture the market share in the regular piece of the market, because we do not address the direct piece of the market. In case of direct, Prashant, we need to always keep in mind that all direct is not DIY. They have been either supported by the some RIA or some PMS guy would be using the direct money. So there is a inbuilt advisory cost which is also involved. If you look at average cost of servicing customer is about 30, 40, 50 basis points in the direct side, and what we earn is roughly about 80-90 basis points. So I don't think there is a huge difference between two. However, we believe that today country has hardly about 5.5 crore investors, and this number can easily double. On ground, number of advisors are very, very, very less. Prashant, hardly about 175,000 people are there to advise. Compared to that, if you look at insurance industry, only POS number is more than 25 lakhs. So I believe that a huge scope, and as long as you are able to capture your target segment, which is a regular plan, we'll be very, very happy.
So steady state 15-20% kind of growth visibility is there, Sanjay, for your business?
Yeah, because Prasad, we have roughly about 1,060 crore AUM as of 1,060 crore of Sept against a total AUM about 117,000 crore. So सालाना हमारे पास करीबन roughly about 10 to 12% I collect by of SIP, and if you assume about 10% by way of mark to market, so I think 18 से 20% growth on the AUM side and similar growth on the revenue side can be easily assumed without keeping in mind the market volatility, because
without the extra, so that's a very decent, nice breakup. So 12% SIP and then 10% mark to market. So that gets you 20% clean kind of growth visibility for from here. So that is well understood. So just one more thing. There are financial innovation is also starting, right? For example, this new product which is the SIF, 10 lakh investment. From what I understand from AMCs, etc., is that distributors are, they're also, that entire machine will start. Distributors have to be trained about the product for them to be able to sell and distribute, etc. Will all this also be, and this product specifically also be a big growth driver according to you? Will Prudent be doing this?
Yes, and so if you look at Prasad, for us, we probably, as we told you, in the 120,000 crore of AUM which we manage, I think the average AUM per investor is roughly about 6.5 lakh rupees. So मेरा मानना है कि my customer base doesn't have an appetite significantly to buy the PMS AIF, but this 10 lakh rupees product is significantly better for us. And I can tell you, we have been doing a lot of efforts to, I think, certify our advisors to get the SIF. Today, country has about 500 plus people who have certified got the SIF license. I think 160 is by us only. So we've been doing a lot of efforts there. And I think next year is going to be a huge driver in this segment, the SIF segment.
Yeah. I know some launches are happening. Sanjay, I've been listening to the whole conversation as someone who covers personal finance. It's been really good listening into you, because you and, of course, the other distributors, the whole fraternity has done a great service as well. And the fact that it can be a profitable business, it's really a win-win. So it is quite heartening. Just want to understand the margins and how they will shape up from here on. The entity that you've bought, that has higher margins than the margins at which you're operating. And now as the product mix evolves, abhi aap SIF mein jayenge, that's 10 lakh rupees ticket size, and it's more nuanced. It is for more nuanced customers. And I'm sure even the industry will push it in a big way. So I'm sure even the commissions there will be probably better. Not sure if the structure of those commissions has been laid out or not, but I think it'll be pretty much how it's been for mutual funds. So as all of this evolves, what will the margin profile of your business look like over the next year or two?
Overall, if you look at last 2 years, we have some pressure on the remuneration side to my team. So I think the operating expenditure on the salary was a little bit of elevated in nature, which might continue for a year or so. However, operating leverage will be significantly in our favor going forward. Coming to the margin, I don't think that the overall top line will now probably plateau. So today, currently, we have a, let's say, yield of about 90 basis points. I assume that with 1 or 2 basis points here and there, I think the top line should get stabilized, and my operating margin gradually should improve. So overall, it's a conducive environment as far as I don't think there is a significant deterioration which will happen, but the improvement will be definitely visible. If you talk about
So if you say improvement in the margin, if we, and this is what our colleagues have been telling us, let's say if we talk PBT margin, then what you acquired, this company, Indus Capital, it's operating at 70%, not sure how. You are closer to 25%. So pick any metric, whether you want to talk EBITDA margin, operating margin, PBT margin, and give us, again, the trajectory from where you are at today. How will it improve? To what level, over how many quarters?
I think you need to look at both the business separately. We are purely into a B2B where we have 34,000 mutual distributors who work with us, and they are all into a variable model, and we share roughly about 65 to 67% of our revenue with them. While this is the B2C business.
B2C, so higher margins.
There you already have the employees who manages the business, and there is a definitely very high revenue sharing with them. So if you look at Prudent, originally started as B2C, we have roughly about 10,000 crore in 120,000 crore which we are managing as a B2C, and this 2,000 crore is added into B2C, which is a high margin for us also.
Okay, so blended company margin, that's what I'm trying to ask. Blended margins for your company, from where they are today, let's say 4-5 quarters down the line, where will they be? If you can share that number.
I haven't worked on that, frankly, because I think yesterday only we announced. So I think blended margin I haven't worked on, but I think it might be a little bit improvement will be visible on the consolidated level.
All right, Sanjay, very quickly, before we let you go, just to clear the air, the entity that you're acquiring is not coming with any debt, right? Because you're just trying, you've got a very, very good valuation. That's why I'm asking you.
No, it's I think the mutual fund business, it's a business without any working capital requirement.
Cool. No, just want
to... Yeah, no liability, no issue.
No,
Absolutely.
yeah, Renow's team just wanted to confirm that, point number one. Point number two, your market share in the monthly SIP, it's hovering around the 3.5%. Where is it headed? What's the target you have on that number?
I think we would like to maintain the 3.5% the total, because in the total segment, the direct piece is gradually increasing. So if you look at without direct, in the regular piece, my margin has improved from 4.5 to now 5.25%. And I want to maintain 5 to 5.5% in the regular piece and 3.5% the total piece.
All right. And for those that were not informed, the reason I started the interview by complimenting Sanjay is because, in June 2025, he gifted around 44 crores worth of shares to 650 odd employees and household staff. So for those who are not informed, that's the reason why we said good acquisition for your shareholders and, taking care of your employees as well. Thumbs up. Looking forward to chatting up with you soon.
Sanjay, come back more often. Thank you very much. Good luck.
Thank you.
So that is prudent with perspective. We take a quick, all right, I think what we'll do is we'll go across to Vinay Rajani with a quick view on markets and what's happening, the price action so far, right? So holding up 76 points, 24,850. Vinay, what do you have and what would you trade?
Yeah, good morning. So setup is quite strong. Broader markets have been performing well, though we have been underperforming the Asian markets. As we can see, Korea market is near to its all-time high and US markets are performing well. In fact, Hang Seng is at 4 years high. So global setup is good. The dollar index is under control. Crude is under control. Only thing is that we need a breakout about 25,000, which is a very strong hurdle. So above which we can expect a short covering by the FIs in the index future. So currently we can say that Nifty is currently into a consolidation phase, but bias is positive, sector specific, stock specific bullishness is there, and in the long side we can keep a stop loss at 24,700. that should be on the trailing basis. So yes, bias is positive, selected stocks are performing well, so with the stop loss one can remain long and stop loss should be 24,700, and above 25,000 we can see a sharp short covering, and that short covering could take Nifty towards the next resistance on 25,500. The stock specific, I see strength building in Adani Ports after a long time. So Adani Port can be traded long around 1367. I would recommend a stop loss at 1348. On the upside, I am expecting a target of 1400. Second pick I would take from the Devyani International. So this stock has given a nice breakout and has been resilient in the downfall in the previous downfall. So Devyani International can be traded long around 183. Stop loss I would suggest at 178, and around 192 should be the target for next couple of sessions. So Adani Port and Devyani International on the long side.
Okay. All right. Thank you very much for that. By the way, you just saw some visuals there, Prime Minister Modi, and I think I saw a glimpse of Mr. Rajnath Singh, Raksha Mantri. I'm not sure. I think there were some other visuals there as well. That was the elections for the vice president, where voting is taking place right now. Votes are being cast. And that's what the visual depicted. For the timing, let's talk about some stocks which are on the move. And one of them is definitely RailTel. RailTel is up 6%. The company's won an order. Let's find out more. Vinny, tell us more. 6% is a decent move.
Absolutely, because they have around 5-6 order wins that have come in, valuing overall total value is around 700 crore rupees. Now, this order is actually come in, these individual orders or letter of acceptances that the company has got is from the State Project Director of Bihar Education Project Council. Now, there are different orders that are there in this, like I mentioned, right? So, among that, the two big ones, one is an order related to procurement, supply, installation of smart classrooms at the government middle school, which is valuing around 262 crores. Another one is also similar, procurement, supply and installation of smart classrooms at government secondary school and middle school as well. That is of around 257 crores. And then there are smaller orders and ancillary orders related to this as well. So overall, 700 crores order win. That's why the stock is buzzing at trade.
All right. By the way, prime focus at the bottom of the screen, right? 1% equity changed hands once again. It was, by the way, it came out of circuit for a while. It was up 7%, 7.5%, but it's limit up once again. So about 192, 30% Friday, Monday, and today, 30% on it for now. Now, IT is what we want to focus on, right? I mean, Friday was bad, yesterday was poor, but there's a bit of a rebound on the back of that Infi buyback announcement. Rima is here with details. Rima.
Thanks so much for that. So first the news, Infosys board will be mulling a buyback on the 11th of September. That's got the stock excited. So after a 20% decline so far this year, the stock is up close to about 3.5%. This would be the company's 5th buyback since 1993. Now, a buyback or any form of a capital return always signals confidence that the promoters believe perhaps the share price at this level may be undervalued or fairly valued. Morgan Stanley, the next question is how large could the buyback be? The last 3 buybacks were in the range of about 9,000 crore rupees. They were open market buybacks. But remember, from 1st of April 2025, open market buybacks are disallowed. So this time it's got to be a tender buyback. Morgan Stanley says that we see the potential for a 10,000 to 14,000 crore of a buyback. Historically, buyback premium has been about 18 to 25% from where the stock was before, and the total buyback size, to their mind, could be about 1.3 to 2%. The next question is, because the entire IT space is active, who else is eligible for a buyback? Well, of all the large 5 IT companies which are a part of the Nifty, it's only Infosys, Wipro and TCS which have been pretty regular with their buyback. HCL Tech and Tech Mahindra not so. So, HCL has only done 2 buybacks in their history, Tech Mahindra only 1. So the other 2, that's TCS and Wipro, both completed their previous buyback more than a year ago. So the street is saying now it's time for them perhaps to come out and announce a buyback. Back to you.
All right. Thanks very much, Rima, for that. So that's Infi for you on the back of that buyback announcement. We'll take a quick break here. On the other side, Manisha focuses on commodities. So stay tuned. Coming up.
Welcome back. So the equity market is having an okay morning, not too bad. But let's find out what's hot in commodities. We have Manisha with the latest. Manisha, what's top of mind for you?
Well, I'm looking at soft commodities right now, shifting focus because, you're looking at gold prices making all-time highs every day. Silver is surging higher. Metals are doing very well as well. But what is not doing so well really is some of these soft commodities. So I'll take you through 4 or 5 of them. I'll start with cotton because the prices here have constantly declined. There is higher availability that we are working with right now. So when you look at the Indian markets, we are looking at stronger numbers in sense of crop, and then 11% duty is done away with. So imports also are going to be on the stronger side. And it's not just about India. Brazil, Texas, these are the other major cotton producers, also are looking at a strong cotton crop going forward. So cotton not doing well in 2025 till time. The other one to watch out for is rice now. Remember, India has had very strong rice crop in the last seasons, and this season also is expected to be a record number. And then there are inventories which are much higher. And then export numbers are not so good as well. That is because the international rice availability is quite strong. High production in Thailand as well seems to be weighing on to the markets. And this is the USDA report which says that in 2025, the global production is expected to reach a record 543 million tons. So India, Thailand, global rice numbers are very huge is the reason. It's a 5-year low in the international markets and a 3-year lows for the Indian markets as well. The other one on your screen is soybean. Here as well, Brazil is set for a record soybean production. So is US, and that is what is weighing on to the markets. And even as there are some biofuel mandates, even despite that, markets are looking at constant pressure coming in for this one. Brazil is set for a record crop, and then you're looking at China, soybean stocks as well, much on the higher side. 6.8 million ton on what Chinese stocks are is at a March high for this one. Cacao should come in on your screen because that one is trading at a 10-month lows. We did see all-time highs in 23, even 24 was a volatile year, but 25 has seen profit taking. So $7,000 a ton is how cocoa seems to be trading at. There are improvement in supplies from West Africa. Ecuador could surpass Ghana as the world's second largest producer with the kind of numbers that we're looking at. So higher production is the constant impact that we've seen coming from the higher prices as well. And finally, I want to talk about sugar because we're looking at a 4-year lows in the international markets for this one as well. So the raw sugar prices have continued to decline. There is expectation of ample supplies, and then the fund selling pressure also has been on the higher side. And then you're looking at higher production from the top producer, Brazil. India is looking at an 18% jump in sense of sugar production for the coming season. And Thailand, the third largest producer, also is looking at very, very strong numbers. I want to leave you with the final plate which tells you on how many of these international agriculture commodities have done in 2025. So you have wheat prices down 9%, cotton is declined by 5.5%, rice is down by 19%. As I said, 5-year lows coming in for that one. And then other commodities like sugar is down 19%, second straight year of decline for sugar. Cacao is down 38%, and you have seen rubber prices decline quite sharply as well.
Okay, all right. Yeah, for the traders, maybe not such great news, but for consumers, those declines perhaps look good. Lesser inflation. Thank you so much for joining in, Manisha, with that quick analysis. We'll take a break on that note, come back on the other side, and it'll be time for a special segment, It's the Economy. Today, Lata discusses the outlook for banks and NBFCs after the recent tax cuts. Suresh Ganapathy of Macquarie Capital will join in.
Welcome to It's the Economy. Banks and NBFCs remain underperformers despite many boosts to consumption coming from the government and the Reserve Bank. To get a closer view of the impact of the GST cuts in particular, and of course the rest of the impulses on the financial sector, I have with me Suresh Gadapati, Managing Director and Head of Financial Services Research at Macquarie Capital. Good morning, Suresh. Thank you very much indeed for your time. Well, first up, after the GST cuts, we saw Bajaj Auto have its day under the sun, probably for a day or two, and then it's all quiet. How would GST cuts basically impact? Should it not push up retail loans across the board?
Yeah, it should, Lata. I mean, coming from the third quarter onwards, see what's happening here is that so far growth has been tepid, right? And going into the second quarter also, the numbers are not going to be very encouraging. In fact, the bulk of that 50 basis points rate cut, which was done end of June, will flow into the second quarter, thereby affecting earnings. And what we are hearing here is that on the asset quality front also, I think 2Q will be a tough quarter. Not going to see any kind of a reduction in provision. So near-term earnings remain under pressure. Now, it's all a question of hope whether things will recover from 3Q onwards because of GST rate cuts and what could be the implication for the retail loan growth. Near term, there are challenges due to which the stocks aren't necessarily factoring in that kind of optimism.
Would you have any ranking in terms of who benefits from GST cuts?
Largely, for example, all the major private sector banks like the likes of HDFC, ICICI are, of course, heavily involved in the retail segment. Almost 60% of the portfolio comes from retail and therefore they should benefit. Of course, a whole lot of NBFCs, both vehicle finance as well as non-vehicle finance NBFCs like the likes of Bajaj Finance and all should benefit. Stocks have already rallied and pricing in that kind of optimism. So to that extent, maybe one could argue that the current price is more than adequately factoring the optimism coming from GST rate cuts in some of these stocks, I would say. But largely, banks and NBFCs which cater to the retail segment are the ones which are going to benefit from the GST rate cut. Basically, those who are there in non-housing portfolio, let's put it that way. Yeah.
Okay. Got that. Retail, non-housing lenders are going to be the beneficiaries. Why are you so negative on Bajaj Finance? Was it that MSME hit that they announced?
Yeah, look, I think our view here is, Lata, both growth and ROA cannot coexist. I mean, if you indeed want to deliver 24-25% growth, say for the next 3 years, 4 years, then you can't deliver at the current 4% plus kind of an ROA that they report. Because growth at the margin will have to come more from secured segments, which will be margin dilutive in nature. And again, credit cost is unlikely to touch the level seen, which we had seen earlier, right? So it will still remain at 200 basis points, kind of an elevated credit cost trajectory. So there is a downward pressure on ROA. And I don't think the current price factors that possible outcome. That's the reason we are a bit more skeptical on BAF. Not that we don't like the fundamentals of the company, but if you have to look at fundamentals in the context of ROA, which could decline and where the valuations are, I think there could be a downside in the near term.
Okay. What you're saying is that they've lent so widely that hereafter extra lending will either come at a higher risk or at a lower return. That's a view on BAF, and so incremental gains are less. Okay, you recently upped Kotak Mahindra. Can you take us through your argument?
Yeah, sure.
So, up the target price, right?
No, we haven't. We haven't changed our view on the name. It still remains neutral. But what we are telling here is that 1Q was exceptionally bad, driven by margin compressions and credit cost, which of course really disappointed the street. We do believe at the margin, some of these pain points could abate. It's not that it's going to come down very significantly, but at least there is going to be sequential improvement. Note that they also cut the savings rate, but bulk of that happened towards the end of the quarter, and therefore the full impact of that savings rate cut will flow into the flow from second quarter onwards. To that extent, their margin performance should be relatively better. And there is an acknowledgement of some of the issues which are facing them, and therefore the bank is on a course correction mode. Now, some of these things will take 2, 3, 4 years for it to get shown in the numbers. But near term, at least there is a sequential tailwind coming to the stock, and therefore it remains a good tactical outperform in the near term. We do have a neutral perform over the medium term on the stock.
Yeah, I noticed it was neutral, but I thought the price had been upped. Okay, let me come to the very interesting report you wrote around the time when the bank results came out, saying that the best result award goes to City Union Bank. Is that still one of your best buys?
I mean, and the mid-cap one, yes, and they will also be big beneficiaries of all these rate cuts, which will eventually, GST cuts, which will eventually have a positive effect on the SME space. They have a very large exposure. Also note that Lata, they are the only ones in the system which has 99% of the portfolio secured. And today, there's a greater degree of challenge, as you know, on the unsecured portfolio, but things are still not completely out of the woods. Let's put it that way. So to that extent, they are relatively in a better position, even when it comes to the asset quality. And for a couple of years, their growth was also relatively weak. Because they were going through their own internal structuring and restructuring, and today the base is comfortable enough for them to grow. So all those things work in their favor. Valuations are also relatively reasonable in the current environment, and therefore CUBK still remains a decent pick for us. And I think some of the export incentives which are being talked about by the government on the SME space, again, CUBK having 50% of the exposure to the SME space will also benefit in case the government, of course, decides to tackle on the tariff issue and implements some of those things that they've been talking about.
Okay, the other thing that we keep getting from bankers is that the worst pain of MFI is over.
Yeah.
If that is the case, are you turning positive on IndusInd or Bandhan? I mean, IndusInd has fallen enough for all the troubles it went through. So, and also MFI portfolio for both these banks. On the cusp of something better there?
Yeah. See, Bandhan, we already have a positive view, and we do believe second half will be better. The only joker in the pack is BR elections, Lata, because sometimes around these elections, something or the other happens, and therefore we have to be a little bit more guarded about our base case view of credit costs coming down in the in the MF5 space is also contingent on no untoward activity happening, say in Bihar. And of course, remember, West Bengal also goes for elections in April of next year, right? So we have to be a little bit more careful around the election times, and these are all event risks. It's very difficult to predict. Notwithstanding any of these election-related issues, at least the MFI sector should see across the board a reduction in credit cost. And note that since the start of the year itself, a lot of people have started implementing the three-lender rule. Some of the benefits of that should start flowing into the overall economy in terms of reduced slippages and credit costs, right? With a greater degree of discipline emerging. Now, IIB is a little bit more different because I think you have to look at the fact that while there could be tailwinds to the MFI space, I think the path towards 1% ROA is very arduous. They will have their own set of challenges. A lot of management related changes will happen, and that path towards 1% ROA being difficult and longer term and fraught with its own set of challenges means that risk reward even now at the current price is unfavorable, and we will be a little bit more skeptical, and therefore it remains an underperform for us.
Okay. Okay, still, I guess Rajiv Anand will have to show some mettle.
Yes.
Let's come to the other GST category, which is much discussed and in which you have hardly, you don't have too many buys, the insurance sector. You're surprisingly having a outperform on LIC, where your earnings CAGR is only 9%. And you have an underperform on HDFC Life, where the earnings CAGR for 3-4 years is actually 16%.
Yeah.
Is it that it is so expensive? Is that why HDFC Life is a sell, but LIC is a buy?
Yeah, look, I think, Lata, when you're getting 15% VNB CAGR, the market is paying 20 times VNB multiple, whereas the VNB multiple for LIC is negative because it trades below EV, right? So there is a valuation discrepancy, point number one. Second thing, we do believe that the RBI's regulations on third-party mis-selling of products on the banca front will come through in due course of time, and that will affect definitely people who have a larger degree of dependence on banca. LIC has the least dependence on banca. There are also LIC benefits. So there are some near-term things which are working in LIC's favor, due to which we have an outperform in LIC. I do believe that because of the GST, there will be some marginal impact on the VNB in the near term. First half has been a challenge in general because of the base effect of last year. So all these pieces of puzzle, if we were to put together, we're looking at a relatively a modest year for FY26 when it comes to the insurance space. And that is the reason where the valuations are. We are relatively a little bit more guarded for the life insurance space. And we have a bias towards a low valuation entity that like LIC. And of course, we're waiting for the RBI regulations and the banca front, which will have some impact on the life insurance players.
Okay, I guess Reserve Bank is also holding back since everyone wants consumption to pick up.
Yeah.
Well, actually running out of time. Very quickly, you don't like any of the fintechs?
Yeah, look, I think PB Fintech is the only player which we do like because at the end of the day, we do believe that if there is going to be more number of players, as you have seen, entering into the life insurance space, if the banca thing goes through, then obviously there will be a greater degree of a dependence or sales happening through the PB Fintech channel. Overall, I think the GST cuts are good from a demand perspective, both on the life as well as general insurance over the medium term. It may not happen immediately next quarter or so. All that will benefit a broker like a PB Fintech. So PB Fintech is a better play in my opinion. And of course, even the Insurance Amendment Act, which talks about the composite licensing regime, that should benefit a broker like PB Fintech better compared to some of the other channels, I would say.
Okay. I'm absolutely being warned. If you can give a one-line answer for this. The positive on banks seems to be that now that MCL and our deposits and all will start repricing.
Yes.
So margins should have bottomed. But on the other hand, the negative we hear is this, are MSMEs now becoming a problem?
Yeah.
Where are you on that? As briefly as you can.
See, first to begin with, Lata, we have done extensive checks, and what we have realized here is that the large banks, when it comes to their MSME portfolio, be it the likes of HDFC and ICICI, are doing very well. I mean, there is not even an iota of stress that they are seeing. Of course, there will be some recalibration of portfolio with respect to MSMEs in the textile space, but they are really fine. So what's happening in the MSME space is the stress currently is visible in the unsecured and also, of course, on the lower ticket size. The larger ticket size, which is greater than 1 crore plus, MSMEs are still doing very well. And I think that situation is at least unlikely to change. So we have to be a little bit more selective there when it comes to MSME stress. The tricky part with respect to the overall banking space here is I still believe market is not pricing in a rate cut happening in the October to December quarter. Because if that indeed goes through, and I don't know, it's your guess, anybody's guess, whether it can be 25, 50, maybe they don't do. But if at all they indeed do 25 to 50 basis points, GST cut will also result in lower inflation by 25 basis points as per some economists, thereby opening a little bit more amount of leeway in the near term. Then there is going to be a shift of the entire margin recovery. So what you thought would happen in 3Q and 4Q will now get pushed to 1Q of next year. And that I don't think the market is pricing in.
Oh, absolutely. And we haven't even spoken about the fact that the bond book has crashed.
Correct.
Other income is going to be less. Thank you very much, Suresh. Pleasure speaking with you, giving us a 360-degree perspective. We have to wrap up on Bazaar on that note. Chartbusters up next.
Infosys is the top gain on the Nifty and leads the sector higher as it announces that its board will mull a buyback on the 11th of September. Remember, Infosys last conducted a buyback worth around 9,300 crore rupees in 2022.
Morgan Stanley upgrades Aditya Birla Fashion to an overweight rating with a target of 113 rupees per share on improving fundamentals and a potential valuation re-rating. Brokerage is also overweight on Aditya Birla Lifestyle with a target of 175, expecting return ratios to improve. Both stocks higher.
RailTel trades with gains after the company wins multiple orders worth around 700 crore rupees from the BR Education Project Council.
And Prime Focus extends its rally, locked in another 10% upper circuit after Kraft EM Fund acquires nearly 4% stake in the company. The stock has now surged 30% in just the last 3 sessions.
Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and to the top of the screen, well, the indices are mostly in the green, barring the Nifty Bank. That's lost its way a little bit, and that's down close to 200 points. So, Mangalam, you have the two pillars of the market. One's in fine form just for today. That is the Nifty IT index is finding its form. But the banks, yet again, slipping 200 points from the high point of the day. It needs to get its act together. Otherwise, you can't have such a large constituent continue to underperform.
Take that point entirely, Nigel. And what's interesting today is that the advanced decline also is far more in favor of declines than what it was yesterday. In yesterday's trading session, we had a 2:1. Now the split is between 1:1 itself. Those lines are coming fairly close. The other interesting thing is that yesterday's high on the Nifty was 24,885. Today's high on the Nifty so far, 24,879. So as we move towards levels of 24,900, closer to that level, there is some sort of supply that creeps in, irrespective of, the upside booster. So let's see how the second half pans out today. We have the weekly options expiry as well. But we do have Somil Mehta of Mirae Asset joining in for a quick technical check on the market. Somil, good news after good news, but we still see selling at highs. When do you think the Nifty breaks out of the range? What is it chartically that would, give you a sense that, okay, it's now ready to move big in either direction?
At this point of time, I don't think so there's any direction or any trigger left for Nifty to just break out of this range. We've been stuck in this range for like probably 3-4 months already, around 25,000. The range is very obvious. 25,000 is the higher end, 24,500 is the lower end. I'm not expecting markets to go down below 24,250 levels, which is close to 200 daily exponential moving average, and that will be a very crucial level to watch out for on the downside. However, I think this range will break out on the upside, maybe in the medium term outlook. In the very short term, we still see range bound movement in Nifty, and the targets on the upside would be 25,500, 25,750. So these are my targets in the medium term outlook. But at this point of time, I think we should more focus on stock specific and sector specific action. We've seen autos doing great, metals doing great, and I think IT and railways are picking up now. So I'll be focusing more on sector-specific moves.
Okay, all right. Hi, Somil. Good to see you. Somil, it reminds me of the Indian team in the 1990s, right? Everyone could bat, from around 4 till around 10 and put in some runs. But the team did well when Sachin, batted well. And Sachin, I would say, is the Nifty Bank. So currently, the Nifty Bank is off form. Becomes very difficult for the Nifty to move higher. On the Nifty Bank, what are the levels you're looking at? The nearest possible technical level is a 20-day MA. That's around 500 points away from here. But what is the range you're looking at? How would you trade it?
See, at this point of time, the most important thing here is that we have Bank Nifty has made a triple bottom at 200 daily exponential moving average, which is a very, very positive sign last week. 200 daily exponential moving average is at 53,600, and I'm not expecting last week lows to be broken on the downside. I'm expecting a range bound movement here, and then this range to break on the upside. My targets are 55,200, 55,800 in the very short term, but yes, range bound movement is expected. I think ICICI is looking great, HDFC is looking great, but they are still very slow to move on the upside.
All right, let's talk about today's cricket team then. You usually speak about the bowling attack now. There's Bumrah and the others. But in absence of Bumrah, you have to have someone like a Siraj who does well. And today, that is the IT pack. We have Infosys, which has moved higher. We had made this point earlier that 1500 call has seen a fair amount of writing. It has the highest open interest. Do you fancy Infosys' chances to actually go past that 1500 mark after the big up move that it's seen already? Or do you think the buyback move is done?
I think the buyback move is already done, and I'm not expecting too much from Infosys at this point of time. Maybe from Emphasis and Coforge, but not from Infosys, because the medium-term outlook still remains negative on the IT side. Short-term, maybe a little bit of movement here, but not much from the large caps.
And what would your impact players be? I mean, individual stocks, you've spoken about the sectors, you've spoken about Nifty, Nifty Bank, Nifty IT and Infosys, but you've laid out some stocks for us today as well.
Absolutely. I have some very, very interesting impact pairs. Chola Finance, from the finance side, it has broken out of a small, a triangle pattern on the upside. And I'm expecting this stock to rally in the medium-term outlook as well. It is trading below 200 daily moving average, but I'll be expecting a good rally here. Stop loss is 1465 and target would be 1620. It can go up much higher. The second call would be Titagarh. This stock has exactly taken support at 20 and 40 daily moving average, going above the consolidation. Great stock to be in for a momentum play. Stop loss would be 838 and target would be 920.
All right, and before we let you go, I'd just like your views on two stocks in particular. One is Ola Electric. A big move is what we saw on the stock earlier. Then there was some profit taking that came by on Friday. Yesterday it opened well, thereafter closed relatively flattish. Today as well it opened lower, but from lows it's seen a near 7-8% recovery. So your view on Ola Electric. And the second one, which is seeing a big surge after underperforming for a while, is Sula. Sula is up 5%. Remember, the stock is halved from its 52-week high. It's been quite an underperformer fundamentally as well. Speaking in terms of numbers, etc. But now there are reports that they may get into other segments too. Sula is up around 1.5%. In fact, 5.5% right now as we speak. So on Sula and Ola, your thoughts?
Ola Electric, definitely very positive on the stock. Even my fundamental desk is a little positive on the stock. I think from here, Ola Electric medium-term outlook technically would be 100. 100 is the level I'm watching for. But in the very short term, it has taken support at 200 daily exponential moving average, which is exactly at 58 levels. And in the short term, the targets would be around 70 and 80. These are the two levels I'm looking for. On the upside, to be very specific, 8.40 is the next swing high. So that would be my target. Sula is looking a little positive in the short term, but I would not bet on the medium term outlook. In the very short term, yes, the targets would be around 307, 308 levels, which is the previous swing high. Stop loss would be around 257, but this is a short term play, not a medium term play. So I'll be still watching out for a close above 325 for a medium term breakout.
All right, Samil, thank you so much for joining in and giving us your views on a bunch of stocks and an extended conversation today. With that, let's get you some more ideas for profit. We have our colleagues from Money Control Pro joining in. Today we have Khushbu Rai Gupta, who has a stock that she's been tracking. Khushbu, what do you have?
In today's idea for profit, we have Aptus Value Housing. The low-cost housing finance company is an established player in South India and targets first-time home buyers in remote areas. The market-leading position of Aptus offers good pricing power and higher yield, which helps the company to protect margins and offer best-in-class return on asset. If we look at the recent earnings performance, the profitability growth during the quarter was driven by healthy growth in the asset base, supported by branch expansion. The home loan segment also saw strong disbursement trend, while the asset quality remained largely stable, led by improvement in the collection efficiency. Although the spread saw slight decline, the management expect them to remain at the current levels. Aptus loan book is slightly riskier and hence the asset quality needs continuous monitoring, and hence we believe that Aptus Value is a promising stock for high-risk investors at the current valuation.
All right, we take that point. Thanks a lot, Khushbu, for that. Meanwhile, just before we slip into a short break, pull up Titagarh Rail Systems. That stock too has spiked up around 3.5%. Samil was just speaking about The rail stocks gaining some traction. Railtel is higher because of the order win that has come by. But Titagarh Rail Systems is the one which is up around 3.5%. Take a short break, come back, get you more on a lot of stocks that are moving around and also the markets at large.
Your first reactions on this GST rationalization?
I see this as the most transformative step the nation has seen possibly in the last 50, 60 years. We will continue to be friends. We will continue to be engaged with the United States. And I'm sure we will continue to have greater economic relationships, defense relationships, greater interest in a safe, fair and secure Indo-Pacific.
Can we trust China?
Now that we have been largely able to resolve the issues of disagreement with China, I think it was very natural that we should also reset our ties.
Welcome back. Amber Ent was an underperformer in yesterday's trading session, value unlocking in one of their material subsidiaries, but now from lows it's seen a bit of an improvement, marginally in the green, and PG Electroplast is the other one, which after having a very forgettable previous series is now marginally in the green, up around 0.4%. We do have a bunch of stocks which are on our radar, none moving as hard as MobiKwik. Hormaz joins in. Hormaz, it's been a big move.
Big move indeed. And after that big move, we are seeing some bit of profit taking at higher levels for MobiKwik in today's session. But the one trend that remains common is the fact that after the 1st of September, we have had almost 1 crore shares plus trade every single day for MobiKwik. And that seems to be continuing in today's session as well, because we have already had more than 80 lakh shares that have already changed hands in today's session. That is well above the 20-day average, of which is around 45 lakh shares at this time of the day. So already moving on high volumes on the downside as well is MobiKwik. And when it comes to delivery volumes as well, even in yesterday's session, we had almost close to 5.5 crore shares that had changed hands, and courtesy of this heightened trading activity since the start of September, more particularly so after the Abu Dhabi Investment Authority exited the stock on the 2nd of September. Since then, the stock has continued to move on either side in very high direction, more so towards the upside. And the 20-day average volume as well now has gone up to almost 1 crore shares now. Even in yesterday's session, close to 40 lakh shares were marked for delivery in comparison to the 20-day average of around 12 lakh shares. And even yesterday, which had very extremely high turnovers as well, close to 1,800 crore rupees, which is almost 70% of MobiKwik's market cap as of yesterday's close, which stood at around 2,500 crores. Despite this 50% move that the stock had seen in the last 6 sessions before today, the stock does move above its IPO price, is around 15 to 16%, but from its post-listing high, which is close to 700 rupees, the stock is still down well over 50%.
Okay, all right, Hormaz, thanks a lot for that. Well, let's hop across to Nimesh. He's here to tell us the standard brokerage report that he picked up for today. Nimesh?
Hi, Mangalam. So, hi, Nigel. So, today's standard was on Aditya Birla Fashion and Aditya Birla, so ABFRL and Aditya Birla Lifestyle. Morgan Stanley has today upgraded ABFRL to an overweight with a target price of 113. They believe that ABFRL is at the cusp of improving fundamentals, largely led by profitability, as well as they see a valuation re-rating for the company going forward. ABFRL is a good play on the luxury brand, and they expect a 14% revenue and a 27% EBITDA CAGR for FY27 and FY28, and at 10 times EV/EBITDA on FY27 estimate. They believe the risk reward is favorable. So that's an overweight call on ABFRL. They've also initiated a coverage on Aditya Birla Lifestyle brand, which is a demerged entity from ABFRL, and they have a target price on that stock at 175. For Aditya Birla Lifestyle, Morgan Stanley believe it's a good mix of a good core lifestyle brands as well as the young brands, and that can be actually a bit of a game changer in terms of earnings for this company going forward. They expect a revenue CAGR of 10% for FY27, FY28 estimate, and the stock is currently valuing at close to 13 times on FY27 EV/EBITDA. So even there, the valuation is attractive, and hence an initiating coverage. So basically a coverage in both these stocks, an upgrade on ABFRL, and an initiating coverage on Aditya Birla Lifestyle.
Wonderful. Both stocks higher, Nimesh. Thank you so much for that. In fact, consumption stocks, the discretionary stocks are fairly well bid in today's trading session. So just pull up something like a Metro Brands, that's up around 4%. We're seeing some traction in names like, Sheila Foams as well. That's the one which is up around 4%. And we have United Spirits, which too has moved higher at the high point of trade for that stock. Take a short break, come back, get you more on the markets and a lot of stock-specific action.
Welcome back. Well, we're focused on the equity markets till now, but let's take a break from that and let's focus on the money markets. The rupee, remember, earlier today opened stronger, but that's quickly given away some of those gains. Lata joins us to help us understand what's going on in the money market space. Lata?
Well, after a long while, if you were a rupee bull, there was a bit of a cheer early morning when the dollar cost less than 88 rupees. It went rather quickly to 87, 94, 93 levels. But it was only briefly over there. The reason for that is quite obviously only the dollar weakness. The dollar is weakened considerably in the last 24 hours, as it has been doing all of this year. It's because of the expectations of a Fed rate cut. There were also some problems in Indonesia with the financial minister getting fired and people expecting, therefore, that FPI is buying Indonesian bonds, will now buy India bonds. And all that led to that kind of positivity we saw in the rupee, but it was very brief, a very brief moment under the sun. At around 87.90 levels, you just saw PSU banks come and buy the dollar heavily, mostly for importers. Importers probably stayed back on Friday because of the huge FPI buying. And the moment they saw some kind of, cheaper dollar, you saw them rush in, mostly oil importers perhaps, but importers of all hues. And therefore, the rupee remains the weakest currency in Asia. I'll just give you a measure. The dollar is actually weak 10% this year, if you count from January to now. Remember, it was 106, the dollar index, now at 96. It's a 10% fall. And you have seen gains in across, the Thai baht, Korean won rising 7%, each of them. Even the Chinese yuan is up about 2.5%, 3%. The yen is up about 6% versus the dollar. The rupee is still weak 2.5% versus the dollar, despite the dollar falling 10%. And that's largely because of this relentless tweets that you're getting, the fears in the market of, services tariffs, or, other kinds of bad-mouthing from other quarters. Unless those series of, negative tweets or negative statements stop, it's very difficult to see the rupee recover much. People are looking at 87.90 to 88.30 now. Correctly speaking, 87.50 should come very quickly, even if there is a bit of positivity on the tariff front.
All right, Lata, thanks a lot for that. We'll definitely monitor the happenings in the rupee space. Currently closer to that 88 mark itself. But a lot of that Lata spoke about was related to the US macros, the US dollar itself. The United States added just 22,000 jobs in August, which was dramatically lower than expectations of 76,500. The unemployment rate too rose to around 4.3%, which is the highest level that we saw all the way since 2021. This bolsters the case for a rate cut when the Fed meets later this month. In fact, let's listen into what economists and market experts had to say about this and the impact that they have on the Fed's rate path outlook.
I think that the weak jobs report that we got, which sort of confirmed August weakness, really shows that the labor market has lost some momentum. It's not falling off a cliff, but it certainly has weakened over time. And even though, there's reasons to believe that immigration is affecting the supply side, we're not getting as many jobs per month as needed to keep the unemployment rate constant. We saw an uptick in that unemployment rate. Again, not a crashing labor market, but certainly one that has lost some of that positive momentum. So if I were in the room, I would say, let's move ahead with a 25 basis point cut in September. We still have some more data on inflation, but we know that inflation is going to be moving up because of the tariff.
In the past, when the Fed has cut interest rates, when the economy has been doing okay, it has usually been a recipe for a bubble. That's what happened in 99, 2000. And some will argue that that's what, possibly even happened in 2021. But I think the main issue here is the fact that financial conditions are super easy. The Fed has never cut interest rates when financial conditions have been this easy. But there's no evidence, that's the point I make, that the monetary policy is being restrictive. We don't know what the neutral rate is given how fiscal policy is. The fact that you're running a fiscal deficit today of 6.5% of GDP, that's very stimulative as far as the economy is concerned. We don't know what the neutral rate really is, because the fact of the matter is that if the Fed funds rate is 4.5%, the nominal GDP growth is still well above that at 5 to 6%. So I don't see any evidence of how monetary policy is being restrictive. I had some sympathy with the argument that the Fed does need reform, that this whole idea that the Fed has done such a fantastic job for the last 20, 30 years and the Fed should be left alone. No, I do feel the Fed should be held accountable for its mistakes. But in my book, those mistakes have had to do with easy money, not to do with the fact that the Fed is being pushed now into cutting interest rates more. Even without pressure from the Trump, the Fed's been far too dovish, has been my argument. And it's the real reform that the Fed needs is to deal with its mission creep something that Secretary Scott Bessent also spoke about in a recent piece. But I'm really surprised by how many people on Team Trump have now flip-flopped, that they used to criticize the Fed for being too easy, for stoking financial market bubbles, for promoting wealth inequality with their easy money policies. And here they are with the economy, they claim, doing just fine, and yet they're calling for lower interest rates and pretty aggressive rate cuts.
All right, with that, we have come to a close on this edition of Chartbusters with the news that barring IT, no other sector is contributing on the way up for the frontline index. Infosys obviously at the high point of trade, but we are seeing some catch-up come by on Wipro as well, which is up around 2.8%. Take your leave, and on the other side, we have the team of Trading Art take all the market action forward. Thank you for watching.
Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal and with me as always Hormiz Patakia and Reema Tendulkar. Hey guys, good morning. You know, yesterday we were talking about how IT was a drag. Nifty closed in the green but was off the highs. Today it's the opposite. Nifty, yes, it is off the highs, but IT is the one which is keeping it in the green today. So a 65-point bump up on the Nifty as we speak. Midcaps, they were actually in the red when we were just going to start the show. Now there's a recovery there as well. So 11 points higher on the midcap index. It was off around 220 points from the highs of the day as well. But now we are seeing some recovery. Now it's off 140 points of the day's low, back in the green. So is Bank Nifty currently. So there was this fall that came in because HDFC Bank was at the day's low. But yes, there's a recovery in Nifty Bank as well. The other sector to watch out for will be the consumption sector, because that is the one which is also pulling the Nifty lower. But there is a swift recovery in that as well. So we had trend at the day's low, but there is a recovery there as well. So look at something like an Eternal. We have Jio Financials, which has recovered from the lows. A lot of these names, Bajaj Auto, Axis Bank, Eternal, all of these are batting it for the bulls as we speak. But yes, continues to remain a choppy market so far. But Reema, we'll speak about IT in greater detail, but what a day.
What a day, right? 2.5% up on the index. I think if it wasn't for the IT index and the up move, perhaps the markets would be doing nothing or trading in the red, because none of the other sectors are actually doing none of the other sectors are doing well. By the way, the other big story is gold. Gold has gone ahead and hit another record high. The India gold price is now at 1,09,000 for 10 grams. And in the futures market, it's 1.1 lakh. That's staggering. Titan, on the other hand, is slightly subdued in trade. But we'll discuss IT, we'll discuss gold. But for now, let's get to the big movers. Hormiz is now at the big wall. He's putting the spotlight on stocks.
Plenty of movers in the broader markets, regardless of how choppy the markets are. We start off with a name called Salazar Techno Engineering, and was up 20% yesterday. Is building onto those gains today, another 15% higher in today's trading session. We have already had close to 6 crore shares change hands already, compared to a 20-day average of just around about 16 lakh shares, and this is in comparison to the 8 crore shares that were traded in yesterday's trading session. So almost 3/4 of yesterday's volumes already done in the first 2 hours of the trading session. The stock broke above its 100-day moving average yesterday and has broken above its 200-day moving average in today's session. Now, to take a bit of a throwback, once upon a time, Salazar Techno was one of the most subscribed Indian IPOs on record, and despite this 35 to 40% move that you've seen in the last 2 trading sessions, the stock still remains an underperformer. It is down almost 25% so far year to date. The other one is RailTel. A couple of PSU stocks are doing well today on the back of very strong volumes. The multiple orders that RailTel won, and the first volumes in the first couple of hours are already highest since the month of June. So it's only bound to increase as the day goes by. We already had close to 90 lakh shares that have changed hands, compared to a 20-day average of just around 5 lakh shares for RailTel. The next important level on the upside to watch out for is the 200-day moving average, which is placed at levels of 367. And why the 200-day moving average is more significant is because the stock has not traded above that level since the 30th of July. And even then, as per the trend in most of these PSU stocks, it's down almost 41% from its all-time high, which is above 600 rupees. The other PSU name doing well today is Engineers India. The biggest single day gain that the stock has seen since May, almost 65 lakh shares that have changed hands, compared to a 20-day average of just around 7.5 lakh. Currently at the 100-day moving average, which is at 211. And the next important level on the upside is the 50-day moving average, which is placed at around 217. But over the last couple of years, the stock has done precious little, returns of just over 20% since the end of 2023. And the last one on the list is Taj GVK, and it's the 6th day of gains for this stock, which during this period itself the stock has gone up 20%, and before this 6-day winning streak the stock had a 7-day losing streak, and today's session has already seen 30 lakh shares change hands, compared to a 20-day average of just around 1.5 lakh. And during this 6-day winning streak, the stock has broken above all of its key moving averages, including the 50, 100 and the 200-day moving average, up around 28% so far this year, making it the 4th straight year of positive returns for the stock.
All right, some interesting names there. Thank you so much for joining us with that list, Hormiz. But we have to talk about the big story, that big surge that we're seeing on the IT names. And Infosys continues to be in focus. There is a buyback which the company has announced. Reema, tell us more, the details for now.
Well, the first important detail is that the board will meet on 11th of September. This would be the company's 5th buyback since its listing in 1993. The next important question is, how much can the company buy back? Well, the rules say you can go ahead with 10% of your net worth without any shareholder approval. You can even go up to 25% of your net worth. If you do 10%, that means approximately the stock is down that would be about 9,400, 9,500 crore in size. If you go up to 25,000 crore, then the buyback size is 23,000 crore rupees. Now that looks unlikely, 23,000 crore, because the cash on the books itself is 25,000 crores. So it's unlikely the company will exhaust all the cash balances for the buyback. So what is realistic is about 10 to 15%, which ties in. The last 3 buybacks were in the range of about 9,300 was the last one. The street expectation is, Morgan Stanley, that the buyback will be of about 10 to 14,000 crore rupees. That would be 1.3 to 2%. And typically, the buyback happens at an 18 to 25% at a premium to the market price. So 10 to 14,000 at about an 18 to 25% premium. And that ties in with the cash that the company has. Also, the second important question is open versus, a tender buyback. Now, remember from 1st of April 2025, open market buyback is disallowed. So it's going to be a tender buyback. So that would be some numbers to keep in mind. 11th of September is the date.
Interesting. And as you mentioned, right, that it has to be a tender of a buyback because the previous 3 instances have been from the open market. So in that scenario, how has Infosys reacted in the past instances? You mentioned this is the 5th one that they have announced.
This will be the 5th one. So we have 4. Because, back in the day, the company used to pay more by dividends. Then about a few years back, the rules changed, right? So it made it more beneficial for the company to pay out via buyback, which is why for the last few years, they've been doing a buyback. This is the performance after 3 months. As you can see, it's been very, very mixed. There's no real trend. And one reason for that is there's hardly any promoter holding. So the free float is very large. So even if you buy back a 1.5%, a 2% stake at a tender buyback, at a premium, it doesn't move the needle. And also from the time the company announces and the time the buyback completes, there will be earnings also. Because in the case of Infosys, even ADR shareholders will be allowed to participate. So the stock would typically move basis the earnings, performance, because you will have the October numbers which also come in, maybe even January, depends on when the stock, closes.
Okay, so, this is about Infosys. Who from the IT universe is eligible for a buyback now?
So there are 5 large IT companies, right? You've got Infosys, Wipro, HCL Tech Mahindra. Who did I miss? I missed one. Right. Anyway, HCL Tech. 5 of them, right? Now, out of the 5, HCL and Tech Mahindra are not very regular with their buybacks. Okay? So HCL has only done 2 buybacks. Tech Mahindra has only done 1 buyback. So let's exclude them. So you're left with 3 of them now. Infosys is already announced. Yeah. And both Wipro and TCS are eligible for the buyback because the rule states after 1 year of completion, you are eligible for a buyback. So TCS completed its buyback in December of 2023. Wipro in July 2023. So investors, shareholders are all waiting for these 2 to come out and announce a buyback.
Awaiting the buyback from Infosys, and has been the trend with IT companies, right? They have a policy of returning X amount of cash to their shareholders. So how much?
But they do it over a period of time.
Over a period of time.
So in the case of Infosys, it's over a 5-year period. We will return.
So how much have these IT companies in general returned to shareholders via buybacks and dividends and so on? How has that been the trend?
There has been a lot of criticism over the past few weeks now, saying that Indian IT companies are rich with cash, they're flush with talent. Then, why didn't you all also come up with a DeepSeek or an OpenAI, right? Why did you use your cash for only paying shareholders? Instead, you should have redeployed and redirected towards, deep tech things, right? Which could have made the IT companies more than a services model, right? That is the backdrop, which is why we decided to try and find out how much have IT companies paid out, right? From 2017 to 2025, so excluding this infy, whatever they announced, 10, 15,000, we'll have to wait by to see, companies have paid back almost 6 lakh crore rupees, which is about close to about $70 billion. And this is converting it in today's market rate of 88.
Wow.
Right? If you had done it in 2017, 2018, 2019, where the dollar rate was, the dollar rate was much lower at that point, right? That number would have been inflated. So which is why we thought that, let's just try and find out this is the amount. Now, we're not in a position to say what the company should have done. Yeah. But generally, of course, the shares have been rewarded. It acts as a base price. It signals confidence when a promoter or a company buys back because they say, okay, we believe the share price is fairly valued, maybe even undervalued. And even in bad times, when there is a buyback price, it sort of acts like a cushion or a floor to the market price.
Okay, that's very comprehensive. Thank you so much, Rima, for making sense of this entire move and talk about the sector overall as well. But with that, we'll do one thing. We'll slip into a break. Up next, we'll put focus on the crypto market with Token Bay Capital's Lucy.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back on Crypto Corner. Today we have Lucy Gazmararian. She's founder managing partner at Token Bay Capital. Lucy, hi. Thank you so much for joining in. And what interesting times and what an interesting year, 2025, where we are looking at more and more countries joining. US clearly seems to be taking a lead, but when you look at the last 1 month or so, we've seen Japan, Hong Kong, Philippines, Bhutan also open up their markets when it comes to crypto as an asset class and as a medium of exchange as well. How have you read 2025 till time?
Yeah, I think some of those jurisdictions that you mentioned, they're hitting the headlines in 2025, but they've been working on crypto regulations for many years. Japan, Bhutan was exploring how to mine Bitcoin back in sort of 2017, 2018. So they've been preparing for this moment. And I think with the US going all in, it's really sort of triggered a cascade of even more activity in the crypto market and getting their policies and procedures actually up and working rather than just talking about how the policies are going to be implemented. So I think a lot of jurisdictions have been working on this for many years, and now we're seeing the fruits of that labor, if you like, in 2025. So it's an exciting setup for the next 5 years.
Oh, absolutely. Lucy, when you look at various partnerships that we've seen happen, even more startups coming in, how would you look at the future of this going forward? Technology clearly seems to be picking up, not just as asset class, but as technology as well.
I think, the internet obviously was an incredible innovation. And it's this idea that more pieces, more infrastructure is being added to the internet to make it more functional so that we can transfer value around the world. And now there's broad acceptance that blockchain is that key component, that key additional layer that the internet needs in order for us to do this. And that combined with obviously the explosion in AI and AI technology, they're very natural bedfellows, crypto and AI. So this idea that the internet is being broadened out to support many more use cases and high functioning financial markets is now broadly accepted. And with that shift is going to become new native blockchain assets. So it's an exciting time. And I think everyone's mind has now been open to the new possibilities that this infrastructure is going to give the world.
Lucy, there's one word, token economy, which really seems to be catching a lot of headline right now. You do work with startups, new companies there in sense of funding as well. To begin with, what is the kind of investment one that we are seeing within this segment, and how have you seen that grow year on year?
So typically in crypto, there's a number of different narratives, whether it's sort of metaverse, NFTs, whether it's social-fi, so the new economy from creators and how they're using blockchain to monetize their data and contribution. And you've obviously got financial services and DeFi. So there's a lot of different narratives in crypto. And as a investor, you're sort of looking to what are the strongest narratives and what's going to carry, the highest returns looking forward. So it's a varied landscape. It's not just limited to financial technology. There are use cases that extend beyond that. So it's an exciting time. Essentially, what this infrastructure is doing, and the act of making everything a token, and for all these tokens to now move on the shared infrastructure, means that all different types of assets can essentially become financial assets because they become tradable, because they move on blockchain rails. So obviously we saw in 2021, particularly this boom in digital art and gaming objects. And so we're going to continue to see those begin to gain traction, and they're not going anywhere. They're going to make a comeback.
Sure. Lucy, so what is the kind of investment that we've seen come in for the sector when it comes to investment as well, from family houses to funds to big institutions? How have you seen that grow, and is it there to stay?
So actually, just the sort of majors getting exposure to Bitcoin in a meaningful way now, it not being sort of a discussion whether you should or shouldn't, but the question is, how large should the allocation to Bitcoin be? And obviously the other major cryptos like Ethereum, Solana, etc. And really looking at these tokens as getting exposure to the new sort of layer one networks. But then there's been an incredible rush to set up startups in the payments and stablecoin space, because we had the first piece of crypto legislation come out of the US and has really put stablecoins on the map. And that triggers a whole new infrastructure around payments landscape. So there's a sort of gold rush to establish, payments infrastructure using this new technology. We're seeing M&A in the space with some of the established payments companies buying up blockchain-enabled stablecoin providers. So really, because of the Genius Act and this stablecoin legislation in the US, there's now driven a lot of activity around innovation in payments and who's partnering up to create the best experience and the cheapest experience for end users.
And Lucy, even as we talk about various geographies coming out with regulations and acts being passed, would you say the whole idea of crypto and blockchain clearly was about global, not regional?
I think the jury's out on that one. There is still divergence between different powerful countries, Russia, China, US, on how they're actually going to leverage and harness this technology. So I think there's broad acceptance that that piece of internet infrastructure is here to stay, but how they actually work with that and what they make legal in their own countries remains to be seen. We've seen that with the internet. There are differing views on how different countries deal with the internet and firewalls. And so we'll see. It's a difficult force to keep in check, because obviously blockchain is borderless. It's a technology that's meant to be decentralized and therefore immutable and censorship resistant. But there will still be some levers that governments can pull to really say what is and what is not permitted in their country. But essentially, ideologically, blockchain and crypto and tokens, the whole token economy, should be global and should be easily accessible by everyone that has an internet connection and a smartphone.
How have you also seen the Middle East perform well? Because within Asia as well, we've seen China continue to do well. India's adoption is strong, but only in sense of investment as an asset class, not exactly as per technology. But Dubai, Abu Dhabi seem to be doing very, very well, would you say?
They're definitely a leader in the adoption of this technology, and they were early. They were first movers. They're a leader today, and that's largely because they were first movers. ADGM, the International Financial Center that I'm a part of, rolled out a crypto framework as early as 2018. So they've really been identifying where the market's going, where financial technology is going, and want to be able to leverage it to create a sort of next generation financial center. And they're about to be launching their digital dirham. So along with China, they're going to be the economy that is launching a digital dirham, which will be legal tender and issued by the Central Bank of the UAE. So they're really stepping up their game when it comes to payments, because they're ahead of the curve have from other major economies that are looking to put fiat currency on blockchains. And the UAE story really is very all-encompassing. So today, they're probably the most crypto-ready country in the world at this point in time.
Oh, well, yeah, absolutely. There are just so many countries now pushing in for it to be on blockchain rails, and we're looking at a lot of success stories there as well. Lucy, thank you so much for joining in, and hope to speak to you very soon yet again. But with that, that's all the time that we have on this segment. Go for a break, come back and talk more market specifics on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Sula's moved to the high point of the day. Large volume. Stock is surged nearly 7.5%. Precision camshaft. Only buyers. Stock is surging 13%. JM Financial inched up a bit, now back into the green. Some interest there. And Amanta Healthcare, that's the new small cap company which got listed today. 126 rupees was the issue price. The stock opened up, gap up, and now is at 140. But it's a small company, Amanta Healthcare. Its market capitalization is just about 550 crore. But let's talk about some more stocks. RailTel, that's been buzzing on the back of several order wins. Vinny joins in with the numbers.
Hi, so yes, RailTel is buzzing in trade. They've received several orders. Total of these order wins is coming to around 700 crore rupees. Now, this order has mainly received several small orders have been received from the State Project Director of Bihar Education Project Council. In this, there are two big orders. One is a 262 crore order that is for procurement, supply, installation of smart classrooms for government middle school. And the other one is for a similar procurement, supply and installation of smart classrooms for government secondary school as well. So that is of around 257 crores. So this is odd around 500 crores that comes in from here. And then there are smaller ancillary orders related to this coming in from the Bihar Education Project Council, and that is why the stock is buzzing in trade.
Stocks buzzing on good volumes as well is RailTel. Winnie, thank you for that. Now, of course, the other mover on the downside today is MobiKwik. And after this relentless surge over the last 6 sessions that the stock has seen, the stock had gone up almost 50%, seeing a bit of profit booking today, 5% down on that stock and already on very significant volumes as well. Now, a trend since the start of September has been the fact that over 1 crore shares plus have been traded every single day for MobiKwik, and it seems to be sticking to that trend even in today's session, because already within the first 2.25 hours of the trading day, we have already had 90 lakh shares now that have surged, and in comparison to the 20-day average, which is around 62 lakh shares, so continues to move above its 20-day average as well. So that is one part of MobiKwik, and the stock has been on a tear even before the Abu Dhabi Investment Authority exited. The stock has started moving higher. ADIA exited on the 2nd of September, and since then the stock has been on an upward trajectory. Before yesterday's trading session, the stock was before today's session, of course, the stock was up 50% in the first 6 days of September. So interesting moves there coming in on MobiKwik. And even if you take a look at yesterday's session, we had already had somewhat 5.5 crore shares that had been traded without any significant blocks or anything of that sort taking place, and that is in comparison to a 20-day average of 1 crore shares. Now, of course, that 1 crore share is also because of the heightened activity that you have seen in the last few trading sessions. And on the delivery front as well, close to 40 lakh shares were marked for delivery, and that is in comparison to the 20-day average of around 12 lakh shares. So continues to move higher on volumes. Today is seeing some bit of profit booking, and even before today's session, this 6-day move that the stock had seen, it took it above its IPO price. So before today's session, the stock was up around 15-16% from its IPO price, but from its post-listing high, the stock is still down well over 50%. The post-listing high is somewhere close to 700 rupees.
Oh yes, it's been on a one-way move, right? So this fall that we are seeing is par for the course. That's MobiKwik for you, and the disclaimer is flashing for you on the screen as well. But let's get a quick technical check on the market. Sneha Sept is joining us from Angel One. Sneha, good morning. Thank you so much for joining in. Swift recovery is what we are seeing from the lows. Nifty is up 76 points. Midcaps too saw that recovery that came by. What are the next important levels to watch out for across the board?
Very good morning. If you look at the market has been consolidating. Volatility has little bit surged, and looking at the IVs historically, the IVs are still low, and I believe from here the IVs can surge. If you look at the market, Nifty has a range now. We are seeing decent writing happening in 24,700, 750, 800. These are the strikes where we are seeing writing. So for today, I believe being an expiry weekly, we may see index going higher, but there is a strong resistance placed around 24,950, 25,000. So that is the resistance zone. So at this point in time, the range is around 400 points for Nifty. And unless and until we don't see a move beyond this, one should be avoiding any index trade and better switch to stock specific and need to be very selective for now.
What about stocks, Neha?
So in individual counters, I'm liking Aditya Birla Capital. So if you see this counter, it is the third day wherein we are seeing this counter heading higher. In fact, it has been taking support near the 20 DEMA, and the chart structure looks poised for an breakout or fresh record highs. So I would suggest going ahead and buying this counter with a strict stop loss of 285, and the target expected will be around 300. Apart from this, another counter which I am liking is IDFC Bank. Here also, if you see the chart structure, it is quite strong, and I believe looking at the overall chart structure, I believe we may see an up move from here onwards as well. So keep a stop loss around 71 or so, and expect a target of around 77.
All right. Thank you so much, Neha, for joining in. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll discuss the market fundamentals with Rakesh Vyas from Quest Investment Advisors.
Choppy is the word, still 60 points higher on the index. Of course, not to forget that today is the weekly expiry of the NSE contract, so good time to get the latest trends from the futures and options market. Mangalam is here with all the latest data. Mangalam.
Well, it's all about the IT pack today. The Nifty is holding up with gains of almost 60 points. It's up about 0.25%, but majority of those gains are led by the IT pack itself. So if you look at the sectoral indices, you have the Nifty Bank, which is underperforming, and you have the IT index, which is outperforming and leading the Nifty from the front itself. And that is visible most in the contribution chart. The top gainer today is Infosys. We've been speaking about since morning. And if you look at it in numbers, the Nifty is up 61 points, 45 points coming in from Infosys, the other 13 points coming in from TCS and HCL Tech. So all those factors playing in for the Nifty. The broader markets, however, tell you that there are as many number of stocks which are declining as the number of stocks advancing, as against yesterday, where we had twice the number of stocks which are gaining. So it's a little more subdued in today's trading session as against yesterday. What's also very interesting is that the Nifty's day's high yesterday was 24,885. Today's high is 24,879. So as we move towards 24,900, we continue to see some supply coming by, and that's likely to take place as we move towards expiry as well. And that's what all those call writers at 24,850 are betting on as well. The 24,850 call has a premium of 32 rupees, telling you what 24,880 thereabouts could see some supply, very close to today's high and yesterday's high. But at the lower level, there is support coming in at around 24,775. Why do I say that? Because 24,800 put writers are equally active. So you have, support at just under 24,800 and supply just under 24,900. Infosys, the stock which is around 1,500 right now, very important mark to watch out for, because 1,500 call has the maximum open interest. If it sustains here and maybe 5-10 rupees above from here, then all these call writers will have to cover their positions, and that stock could see a further up move, leading a further up move to the Nifty itself. So that's something we'll be watching out for early part in the day, but we are seeing a lot of long positions added on Titagarh Wagons as well as Tube Investments. So those are a couple of stocks which are fairly well bid today.
Okay, all right. Thank you so much, Mangalam, for joining us. So that's the F&O setup for today. But let's talk about market fundamentals now. Rakesh Vyas from Quest Investment Advisors is joining us now to discuss some of his sectoral bets and the market moves as well. Rakesh, good morning. Thank you so much for joining in. I was looking at the breakup for your flagship PMS. Large caps are around 45%, mid caps 14%, small caps are 35%. Can you explain that breakup? Because you have more in small caps than mid caps. What's making you more comfortable in small caps versus the mid caps right now? Where do valuations stand right now?
Glad to be on the show, Sonal. I think if you look at the sectors that we have been more bullish on, it is primarily led by consumer discretionary space, so to say, because we have seen a lot of policy actions coming through, right from income tax cut to the RBI rate cuts and now to GST. And therefore, our portfolio is reasonably well positioned towards that. In terms of mid and small cap, I think when you look at the valuations that exist today, mid caps have been trading at premium significantly over last few years. Of course, it's been driven by the earning growth that can come through. But small cap last year had a very tepid earning growth, actually negative earning growth. We expect a lot of the specific stocks to deliver much better earning growth going forward, and stocks have corrected a lot. And therefore, we find a lot of good opportunities in that space. Just to take some examples, we are very bullish on the hospitality sector. One stock which we have significant bet on is a small cap name, but we expect it to deliver. So they last year delivered first profitability for the full year, but we expect this trend to actually accelerate going forward. The stock is actually trading at half of the EV/EBITDA multiple compared to the larger peers, and therefore we remain fairly confident on some of these re-rating to play out. So I think the small cap is primarily more focused on the specific bets in terms of where we see the stock, both in terms of the earning profile and re-rating potential.
Are you referring to Samhi Hotels, Rakesh?
That's right.
Okay, and because in the last 1 year, it's not done too much. I think just up about 2 to 3%. So are you comfortable even investing at this juncture?
Yeah, Rima. So if you look at this stock, essentially, so as I said, last year they actually delivered first full year of profit. But they have been actually doing a lot of changes to brands, etc., for their portfolio. And also one of the concerns that this stock earlier had was the leverage. Based on the asset monetization that has come through, and also the platform deal that they went through with the GIC Singapore is actually leading to a lot of deleveraging already. and we expect that this stock essentially will give almost similar or better EBITDA growth compared to peers, but is actually trading at half of the multiples, and therefore we expect this to re-rate.
Rakesh, firstly, thank you for joining in. I was just going through some of your names in the list, and among your top contributors for the month of August, most of them are retail names or they are real estate names. The one name that catches my eye is Vishal Megamart, and the stock has almost doubled now from its IPO price, 78 rupees, currently around 150 odd. Do you still find comfort at these levels, and also why Vishal Megamart over a significantly larger peer in Avenue Supermarts? Is valuation the only reason?
No, I think three things. One, the business model actually almost, even if it is same, the business mix is very, very different between the two. And I think over here we are actually looking at Vishal as more as a value retail player in the apparel and general merchandise business. And we expect this company to have maybe 13-15% space growth every year. And given all the impetus that government has put forward in terms of consumption boost, I think SSSG growth can be double digit, and therefore revenue growth can be in excess of 20-25%. And as that comes through, we believe there will be margin expansion as well, and therefore earning growth profile for these companies could be very strong. And that is why if you see, we have been fairly bullish on the small ticket discretionary plays, right from the food delivery, quick commerce to value retailers in terms of Vishal, Trend, etc. And I think although valuations have now caught up, but earning growth trajectory still remains very strong, and therefore we are looking at compounding of our bets there.
Okay, I wanted to check with you on your sector allocation. Real estate is around 5.5%. As Hormuz also mentioned, this is one space which has worked really well. But do you think we are towards the end of that multi-year upcycle that we saw in the real estate space? Because some dipstick surveys are suggesting that there is a lower demand coming by in bigger markets like Bangalore, Hyderabad. If you can give your insights on that, and which are the real estate stocks you are bullish on and why?
I think when you look at real estate, actually, Sonal, you have to go very micro market specific. So apart from 4-5 large pan India players, this sector is essentially around more micro market driven, and therefore the bets thereof are to be looked at from that perspective. The names that we actually own, one, we have seen a change in the ownership. So private equity firm has entered the company now as a co-promoter. If you look at the NAV of the business per se, the stock is at a reasonable discount to NAV. And we expect that with private equity coming in, we will probably see much more new launches, growth, cash flows, etc. coming through. It's a net debt zero company, and therefore for growth, I don't think they will probably need to leverage more. And therefore, it's in our case, the real estate per se is more, as I said, more micro market, more name specific. And in those micro market, we still expect that given the brand that these company command, we'll probably see from a low base for their business, because last 12 months or so, across various markets, we have not seen many launches coming through because approvals were very difficult to come by. All of it is going to change now, and therefore we'll see very strong traction going forward. And that's the bet we are having in the name.
What about pharma, Rakesh? I see a couple of mid-sized pharma names in your list, be it Piramal Pharma or be it Sequent Scientific as well. Where is your tilt towards domestic-oriented pharma companies, or some which still have a generic exposure to the US, especially considering the uncertainties with regards to the tariff scenario that would play out?
So two different bets there, Omar. I think one is around the CDMO plays broadly, and I think in that case, for example, Piramal works very well. They just don't have manufacturing base in India. They have global presence. And therefore, and there is a lot of traction that is coming through. Of course, this year has been challenging for many CDMOs companies. But I think over next 3 to 5 years, very clearly we see very strong growth in terms of revenue as well as profitability. And given that this particular name has underutilized capacity globally, with them getting a lot of traction going forward, the margin profile will improve as well. And therefore, we have bet on that. I think Sequent specific essentially is a bet around the merger that is happening now. And we see this business growing meaningfully well. and there is a lot of change in the leadership. New leaders that are coming in at the top has a very strong track record, and it's a business where we think that over next 3 to 4 years we will see growth coming in, not just from animal side but also from the CDMO side. And there has been a lot of one-offs historically in this name, but going forward we expect earning growth to be meaningfully higher, and it's available at a reasonable valuation. That's the bet there. So all these, as I highlighted, all these small cap names are more stock specific, business specific in that sense.
Got that. Piramal, though, again, is not done too well in the last 1 year. It's down, I think, 11-12%. But Rakesh, this has been a great conversation. Thank you very much for joining in and explaining how you're constructing the portfolio at this juncture and why you like what you like.
Thank you so much.
Thank you very much. Get into a break. We'll come back with more. Stay tuned. Welcome back. Equities are inching up very slightly. So now we're closer to 24,850 with a 70-point up move. But largely, this has been a quiet session of consolidation so far. The rupee opened strongly, going from 87.95, going to 87.95 from a low of 88.26 that it closed on Friday due to dollar weakness globally. But the Indian currency lost the early gains rather quickly. Lata joins in with more.
Well, after a long while, if you were a rupee bull, there was a bit of a cheer early morning when the dollar cost less than 88 rupees. It went rather quickly to 87.94, 93 levels. But it was only briefly over there. The reason for that is quite obviously only the dollar weakness. The dollar has weakened considerably in the last 24 hours, as it has been doing all of this year. It's because of the expectations of a Fed rate cut. There were also some problems in Indonesia with the financial minister getting fired and people expecting, therefore, that FPI is buying Indonesian bonds will now buy India bonds. And all that led to that kind of positivity we saw in the rupee, but it was very brief, a very brief moment under the sun. At around 87.90 levels, you just saw PSU banks come and buy the dollar heavily, mostly for importers. Importers probably stayed back on Friday because of the huge FPI buying. And the moment they saw some kind of, cheaper dollar, you saw them rush in, mostly oil importers perhaps, but importers of all hues. And therefore, the rupee remains the weakest currency in Asia. I'll just give you a measure. The dollar is actually weak 10% this year, if you count from January to now. Remember, it was 106, the dollar index, now at 96. It's a 10% fall. And you have seen gains in across, the Thai baht, Korean won rising 7% each of them. Even the Chinese yuan is up about 2.5%, 3%. The yen is up about 6% versus the dollar. The rupee is still weak, 2.5% versus the dollar, despite the dollar falling 10%. And that's largely because of this relentless tweets that you're getting, the fears in the market of, services tariffs, or, other kinds of bad-mouthing from other quarters. Unless those series of, negative tweets or negative statements stop, it's very difficult to see the rupee recover much. People are looking at 87.90 to 88.30 now. Correctly speaking, 87.50 should come very quickly, even if there is a bit of positivity on the tariff front.
Okay, that big move on rupee. Thank you so much for explaining that to us, Lata. But let's go back to stock coverage. Nimesh is here with the standout brokerage report of the day. Nimesh, what do you have?
Hi, Sonal. So today's standout was on the Aditya Birla Fashion and Aditya Birla Lifestyle brands. On Aditya Birla Fashion, Morgan Stanley yesterday upgraded the stock in overweight. They were target price of 113. And Morgan Stanley believes that the company is at the cusp of fundamental improvements, largely driven by profitability. And they expect valuation re-rating as well going forward. In fact, it's a good play on the luxury brands and the luxury side of the business. And they expect a 14% revenue and a 27% EBITDA CAGR between FY27 and FY28 estimate. And a 10 times EV/EBIT on FY27 estimates. They believe that the risk reward is favorable. So an upgrade on ABFRL by Morgan Stanley. Morgan Stanley has also today initiated coverage on Aditya Birla Lifestyle brand, which is a demerged entity from ABFRL. They have an overweight rating on that stock and a target price of 175. Now, Aditya Birla Life brands, according to the Morgan note, is a good mix of core lifestyle brands as well as the young brands, which includes like Reebok, and they believe there is a potential upside from there. For this particular company, they expect a 10% revenue CAGR on FY27, FY28, and this particular stock is trading at close to 13 times FY27 EV/EBITDA, and again, the risk reward is favorable. So, an upgrade on ABFRL to an overweight with a target price of 113, and an initiating a report on Aditya Birla Lifestyle brand, the target price of 175.
Interesting. Parent entity, demerged entity, both of them doing well for themselves today. Aditya Birla Fashion slightly off the highs of the day though, but the lifestyle business doing well, still holding on to gains of around 4%. Before we take that break, listen in to Sandeep Bhatia, the Managing Director and Head of Equity of India at Macquarie Capital, on his views on the markets and his top sectoral picks. Listen in and we'll be right back after the short break.
Yeah, I would agree that we're still in the slow burn phase of this market. I don't expect September quarter numbers to be a big earnings surprise. October, December, festival season logically should be good, and I'm actually optimistic for a change on that front. But even then, whether we see that that continue in terms of the tariff issue getting resolved with the US and so on. So we need a couple of, other than just the immediate GST earnings kicker, we need more stability on the economy and some good news on politics before the market can really see a big leg up. So domestics like autos and to an extent banks and, as I said, hotels all look better placed on the whole. Insurers, have to go through this margin hump in terms of the GST cut, input tax credits, and so on. So yes, I mean, longer term, that's fine. But in the near term, there is this GST impact and input tax credit impact, which you need to pass through. So we are cautious going into the near term numbers for IT stocks. So you should have a 3-year time frame for IT. Then you can probably look at them. There's a lot of moving parts in terms of the US and whether it makes any other further moves. I don't expect, actually. So I'm not in the camp that things will get worse as far as the Indian IT sector is concerned. But yes, I mean, you should, as I said, you need a slightly longer term time frame, at least 2.5 to 3 years.
Welcome back. Still 70 points higher on the index, but pull up Vishal Mega Mart. We were just having this conversation with Rakesh Vyas just a few minutes earlier about why he prefers that stock over a bigger player like Avenue Supermarts. And take a look at the spike that the stock has seen now, 0.75% higher. 156 would mean that the stock is exactly 100% above its IPO price of 78 rupees a share, and that is also in almost just a few months of its listing as well. So that's Vishal Mega Mart for you. And JTEKT India, that was up yesterday, up another 13% today, as is Precision Camshafts. That too is trading with gains of around 13% in today's trading session. Both of them at the highest point of the day. But the US just added 22,000 jobs in the month of August, which was dramatically lower than expectations of around 75,000. The unemployment rate also rose to 4.3%, the highest since 2021. The weak jobs data has now firmed up the case for a rate cut from the Fed next week. But here's a view from Ruchi Sharma of Rockefeller International on the Fed's rate cut outlook and the debate around the central bank's independence.
In the past, when the Fed has cut interest rates, when the economy has been doing okay, it has usually been a recipe for a bubble. That's what happened in 99, 2000. And some will argue that that's what, like possibly even happened in 2021. But I think the main issue here is the fact that financial conditions are super easy. The Fed has never cut interest rates when financial conditions have been this easy. There's no evidence, that's the point I make, that the monetary policy is being restrictive. We don't know what the neutral rate is given how fiscal policy is. The fact that you're running a fiscal deficit today of 6.5% of GDP, that's very stimulative as far as the economy is concerned. We don't know what the neutral rate really is, because the fact of the matter is that if the Fed funds rate is 4.5%, the nominal GDP growth is still well above that at 5 to 6%. So I don't see any evidence of how monetary policy is being restrictive. I had some sympathy with the argument that the Fed does need reform. That this whole idea that the Fed has done such a fantastic job for the last 20, 30 years and the Fed should be left alone. No, I do feel the Fed should be held accountable for its mistakes. But in my book, those mistakes have had to do with easy money, not to do with the fact that the Fed is being pushed now into cutting interest rates more. Even without pressure from the Trump, the Fed's been far too dovish, has been my argument. And it's the real reform that the Fed needs is to deal with its mission creep, something that Secretary Scott Bessent also spoke about in a recent piece. But I'm really surprised by how many people on Team Trump have now flip-flopped, that they used to criticize the Fed for being too easy, for stoking financial market bubbles, for promoting wealth inequality with their easy money policies. And here they are with the economy, they claim, doing just fine, and yet they're calling for lower interest rates and pretty aggressive rate cuts.
Well, that's some global opinion coming through. Well, for the day, there is a lot of interest in these new age tech companies. So Bluestone Jewelers, a recent listing, stock had a very flat, thanda debut. But when they came out with their numbers and we saw the losses narrow, the top line grow, the stock has been doing well since then. So 10% up on that, 652 on that. You've got a Brainbees Solution, the owner of First Cry, that's seen a bit of an up move. Again, it's not done too much. Stock is down 30% from the beginning of the year. But I think today there is some interest in that. And Aether Energies is the other one. The stock has gained close to about 3% and Ola Electric continues to be in the spotlight. Late revenues tech too.
You spoke in Hindi. Okay, wow. All right. With that, we'll do one thing. We'll wrap on this edition of Trading Hours. Stay tuned. Halftime report is up next. Stocks trade a tad in the green with the market breadth only mildly positive. IT, healthcare and FMCG not some gains, while consumer discretionary and realty drag.
And IT stocks rally after Infosys says its board will meet on September 11 to consider buyback of shares. The move ignites expectations of buybacks from other IT majors as well.
Muthoot Finance MD George Alexander Muthoot calls the GST rate cut a great savings tax that he will put more money in the hands of borrowers and savers, raising consumption and helping them meet their loan obligations.
Gold scales to a new high of over $3,650 per ounce as the weak US jobs report raises expectations of a rate cut by the Fed Reserve. Addition to its gold reserves by China in August also supports the yellow metal. Hello and welcome to Halftime Report live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Vinny Motiwala as well as Manglam Malu. Well, it's turning out to be a session where we're just about consolidating, but what really stands out is that we've given up gains from the day's high. Especially for the Bank Nifty, we've seen profit booking of around 200 odd points from the day's high. So not being able to sustain that sort of momentum at higher levels. Let's see whether there's any kind of respite as the day goes along. But as of now, we have the advanced decline ratio, which is even keel at around 1:1 at this point in time. What stands out at least is that the Nifty IT index is gaining, so up around 2.3% currently for the Nifty IT index, courtesy Infosys and the buyback news. Hi, guys.
Hi, Ekta. Courtesy Infosys and the buyback news itself, right? I mean, Nifty is up, what, 68 points? 45 points of that comes from Infosys. The other few points, if the contribution chart comes up for you, you would see are coming either from HCL Tech or TCS. They're contributing to another 14, 15 points on the frontline index as well. So the entire gain today can be attributed only to the IT index, even as the Nifty Bank is underperforming. The only fly in the ointment today as compared to yesterday is that the broader markets, we have as many stocks advancing as the number of stocks which are declining. Yesterday, that number was in favor of advances by a factor of 2. So we had nearly 2 stocks gaining for 1 stock which was declining. And now these lines are very close to each other. That's one concern that we'll have to watch out for. Today's high on the Nifty, very close to yesterday's high as well. So the second half, as expiry comes about, will be crucial to track. You know, we've been in our range. Every time we move towards levels of 24,900, we've continued to see supply.
Hi guys, good afternoon. So yes, absolutely what we're keeping an eye out on is going to be the Nifty expiry and where it's going to be headed, right, for the Nifty in terms of levels. IT snapped its 5-day losing streak. Like you were mentioning, today we're managing to see some bit of a green here. So that's something we'll watch out for. And we have those railway stocks that are buzzing in trade, right? Railtel had a reason, obviously because of the order wins. But with that, you're seeing some of these other names also. Titagarh Rail, that's managing to hold on to some bit of a gain as well. So that is what we'll be keeping an eye out on. But, you know, that's some of the movers that we're seeing. Other than that, Raymond Lifestyle, that's buzzing in trade. Engineers India, as well as Action Construction Equipment. That's another one that is buzzing away in today's trading session as well, Ekta.
Okay, all right. So that's what's taking place in terms of the markets. But now, time now for our movers and shakers segment, where we will be tracking a whole host of stocks which are buzzing in trade and which you need to keep on your radar. First up, we have Vinny, who's actually going to kick it off with the entire railway segment. Railtel is what you're watching, Vinny.
Absolutely. Railtel is what I'm keeping an eye out on. Buzzing away in trade. Around a 700 crore total order win is what they've received. There were several orders that came in yesterday post-market hours. Now the total value is 713 crores. This is from Bihar Education Project Council. 2 big ones in that I'll highlight. That's also all of this is from the Bihar Education Project Council. So first one is for procurement, supply, installation of smart classrooms for government middle school. That is at around 262 crores. And other than that, there's another one for government secondary schools as well. Similar, you know, procurement, installation, supply of these smart classrooms. So that is what is coming in for 257 crores. So 2 big order wins, or approximately 500 crore adds up from these 2. And then there are several smaller order wins and letter of acceptances that have come in here. And that is why today we're seeing Railtel is managing to still hold on to gains of almost 4%. But yes, that's Railtel. But let's talk about Voltamp. That's also in focus today, and that's on the back of the block deal that's happened. Nimesh is joining in with us to give us details.
Well, the stock is under pressure today. The stock is under pressure today after a large block. The promoter sold 7.8% stake via block deal today. and it was at a 2.5–3% discount to yesterday's closing price. What is interesting is after today's block deal, the promoter holding will fall below 30%, and now there is a 2-year lockup according to the term sheet that I've seen, that now for the next 2 years the promoters are not going to sell any further stake in the company. Interestingly, in 2023, the promoter had sold 12% stake via block deal, and after that, the stock had actually seen a big re-rating, was up almost 3 times and hit an all-time high of almost 14,800. From there, it has actually halved. Now, in that period, from the last block to now, if you look at the earnings as well, the revenue has been pretty much flat, or it's risen just 11% since the last time, since I'm comparing from 23 onwards. Whereas the margins have fallen by almost 100 basis points and the profit is up just 16%. Interesting to know, we'll get to know as to who all bought in today's block deal, so disclosures would be interesting. But the key question would be, like how it happened last time, can the stock re-rate from here as well after the big block? And remember, this is the last block and promoters are not going to sell any further for the next 2 years from here on.
Take that point, Nimesh, and very well raised as well. Can it lead to another round of re-rating because the promoter is not selling any more from here on? So we'll pose that question to Vamakshi itself. Vamakshi, that's what's happened with Voltamp. But while you speak about Voltamp, also fill us in on what's taking place on Quality Power.
Well, absolutely, Mangalam. The step-down subsidiary Endox Energy has received 2 significant orders. Now, keep in mind that Quality Power owns 51% of Endox Energy Turkey through its subsidiary Quality Power Engineering Projects, and they will be supplying fax system to a European customer for a steel plant, and the combined value of both these orders is around 75 crores, and this order will be executed over the period of the next year is what the company has said. Now, just to give you some perspective, now how big or small is this order for Quality Power? Now, keep in mind that Endox, which is the step-down subsidiary for the company, the order book stood at 175 crores in the first quarter. So, therefore, this 75 crore order is worth almost 43% of the current order book for Endox. Now, overall, in the context of the company, which include the order book includes the orders from Quality Power, Endox, as well as Meru, it accounts for nearly 10% of the current order book. Now, how will this actually translate to the margins then? This is just a back of the envelope calculation. Now, Endox PBT margin is at 27%. Now, assuming that this order is executed at the same PBT margin level, the overall profit from this order could be around 20 crores, and out of which Quality Power's 51% share could be around 10 crores. So, approximately 10% of FY25 PBT could come through. Again, this is back of the envelope calculation, but so this is how the order shapes up in terms of Quality Power, and resultantly the stock is reacting to that.
Okay, all right, Vamakshi, thanks very much for that complete outperform on this particular counter. So currently at around 344 odd rupees. But we have Rima now on Infosys.
Thanks so much for that. So Infosys is surging on the back of the company saying the board will meet on the 11th of September to consider a buyback. But the backdrop of the stock rise is also its underperformance. The stock is down 20% on a year-to-date basis. This would be the company's 5th buyback since its listing in 1993. Now, Morgan Stanley says that despite there is so much uncertainty in Indian IT, they find the timing of the buyback fairly interesting and in that sense positive. The big question is how much will the company do? Morgan Stanley's estimates are about 10 to 14,000 crore would be the buyback size. And this pretty much ties in with even what a lot of the other analysts I spoke to. Historically, the buyback size has been at an 18 to 25% premium, and the total amount that they buy back, according to Morgan Stanley, will be about 1.3 to 2.1% of the total shares. Now, after Infosys, the question is who next? Because some of these large IT companies like TCS, Wipro have been very regular with their buybacks. So Morgan Stanley points out that both of them are eligible for a buyback. They completed their buyback in 2023. TCS in December 2023, Wipro in July of 2023. So the 1-year cool-off period, which you need between 2 successive buybacks, is over, and therefore the investors are watching out whether these two, Wipro and TCS, come out with a buyback announcement. Tech Mahindra and HCL Tech have been pretty irregular, and very infrequent with their buybacks. So again, expectations don't come on them. Back to you.
Thank you so much for that, Rima. But just pull up Asahi India Glass. That's the stock that's suddenly buzzing in trade as well. In the last 10 minutes, we've seen a sudden spike up of 2% approximately for Asahi India Glass. So keep an eye out on that one as well. Currently trading somewhere around 870 rupees a share. And other than that, Jyoti CNC, that's also seen a spike up. So that is something that we'll be watching out for, other than the movers and shakers we just mentioned for y'all. But on that note, we're going to slip into a very short break. On the other side, we have K. Ramakrishnan, Managing Director, South Asia World Panel Division, Kantar, joining in with us to discuss World Panel India's Kharcha 3.0 report.
Welcome back. You're watching us here on Halftime Report. We've been speaking about the consumption space for a while right now, the impact that GST and income tax rates, etc., would have on overall consumption. But the important part is, over the last 3 or 4 years, we do have a big increase in overall expenditure that households have been making in the country, be it rural or urban. So there is this very interesting report which is coming from World Panel India's Kharcha 3.0 report, where they surveyed over 6,000 households, and this is what they found out. All India over the last 3 years, the monthly quarterly expenditure has increased from 41,800 to close to 56,135. That's all India. If you look at the urban spends as well, 52,700 turned into 64,500, went all the way up to 73,000. Rural India too has seen an increase, not as much in as comparison to urban, but it has seen an increase nevertheless from 36,000 all the way up to 46,000. The important part, there is increased financial stress. Perception of managing expenses, 38% of the respondents said that they're just about managing, 45% were struggling, and just 17% said they're living comfortably. And most of these expenditures are actually bunched towards the essentials, daily use items. So you have groceries, which account for 24%, utilities, communication, commute, another 19%, dairy, fruits and vegetables. So nearly more than 6/10 of your overall expenditure goes into essentials, and the others go into education or EMI, leaving very little for consumer discretionary items. Fashion and entertainment, for instance, is just about 6%. So increased spending observed in education and debt categories. They are prioritizing essentials over luxuries, and there has been notable preference for affordable and local brands, and there have been cutbacks on impulse purchases. What does the future look like? The respondents, only 11% of them expect improvement. In fact, 59% expect things to be the same, and 30% expect things to worsen from here on. This obviously was a survey. The respondents spoke in April. Thereafter, there was that income tax cut. The RBI rate cuts have come by. The GST cut has come by. Are things improving or not on the ground? What the outlook for the consumption space is? We have the authors of this report, K. Ramakrishnan, who is obviously the Managing Director, South Asia World Panel Division, joining in. Thanks a lot, Ramki. Always a pleasure listening to you, reading your insights on the consumption space. This Kharcha 3.0 that you've made exclusively for CNBC TV18 and its viewers. I have to ask you, from the time these responses came to now, there has been these cuts.
Yes.
And the hope is that there will be more money in the hands of people.
Yes.
Do you think things will improve?
I certainly think so. Just one correction to what you said. I think the income tax part of it came earlier.
Yes.
It's only the GST thing that came.
Yeah, but I mean, the impact comes in from April, right? The announcement came in February.
Correct. But most of these things, when it comes to, these are actually what people claim that they have spent or what they've increased or decreased. We also have data on what they actually purchased, right?
Got it.
All the categories that we've been sharing with you. So there's always not, these things don't go hand in hand all the time. Like, for example, I'll give you a simple example of, let's say, biscuits, right? If you see in the study right through, people have said that their expense on biscuits have gone up and they spent more on biscuits, etc. But if you see actual data on biscuits, what they've actually increased by is about 1%, and in fact, in consumption, and in fact, even less by 1% in terms of value. So there is a difference between conscious consumption and unconscious consumption. You know what I mean? So when people actually think that they're consuming lots, but they actually are not. So that's the thing to make note of. Your question on the future, certainly, I mean, this is very often when you ask people for perceptions, etc., they tend to feel a little more negative than they actually are. So to that extent, we'll have to be a little careful about reading this. Having said that, post that, the kind of inputs that have come into the picture, specifically from an FMCG lens, if you look at, is meant to boost consumption in some way or the other. What comes in the way is perhaps these, what you call as the rupee packs, 10 rupee pack and 5 rupee pack and 15 rupee pack, which are a major part of FMCGs. So how will that play happen? Nobody's going to decrease it to 9 rupees. So they either increase the volume or, perhaps margins can come for play. So that is one part which can come in the way, but definitely this input is going to have a significant say in terms of consumption. Even otherwise, we thought that in this calendar year, the last quarter, we'll see an uptick because rural has all the things going right for them, right? I mean, the monsoon is good, harvest is good, support pricing is good, and the non-farm employment is also good. So all of these factors being good, rural should have an uptick.
Monsoon, some would argue, is actually not too good by virtue of being too good because there have been so many floods, etc. in the northern parts of the country.
I mean, it's always going to be a mix, but if you take an average view of the country, I think most cases one would agree that this has been a good monsoon. So from that point of view, all these factors positively indicating a growth as far as rural India is concerned. So from a rural growth, which is about, let's say, 50% of India's households, 67% of India's households and 50% of consumption. That growth would have anyway driven a better growth in the last quarter of the calendar year. Add to that this inputs, and we're definitely optimistic about the last quarter.
So in the last two surveys, I've seen that your urban expenditure has risen 39% in the past two surveys, and the rural has risen by around 29%.
Correct.
Is this historically some of the highest jumps that you've seen in terms of the surveys that you've taken? And based on, historically what you've seen, are you expecting these kind of percentage jumps in the future? Say we're talking 3 years down the line, are you expecting another 40% jump in urban expenditure?
Unlikely. One of the things to remember is the base year. The base year is too close to COVID. So the base was low, so that indicates a very sharp growth. So 39 and 40% is a very, very high piece of growth. So, but that is when you look at the wallet as a whole. So it doesn't specifically talk about any particular aspect like, let's say, grocery or anything like that. So what one needs to look at is everywhere there is an increase in expense. I mean, because there is a cost increase, there is inflation, there is food inflation. Even though it keeps going up and down, there is inflation. Having said that, how are people playing with their wallet is what you should ideally look at in a study like this. So what Mangalam was speaking about, he said that the EMIs, debts, and those things which have gone up. Actually, if you look at it as a percentage, this is what the numbers that you see on the screen, these 24, etc., are what percentage of the wallet goes towards this. So as a percentage, EMI has gone up. But groceries, while they've remained at 24, while the total expense goes up, the 24% of a bigger value also goes up, right? So what is happening is, because of the higher propensity to spend on education, because of a higher propensity to borrow and spend in tight times, those are the two which are actually going up, education and EMIs and debts. The third one, which is actually seeing an increase, is selective in urban, in the higher income circles, is the entertainment one. So therefore, little more spent as a percentage on entertainment. Grocery remaining flat is purely a function of the fact that the overall wallet itself has gone up from there. So therefore, that 40% jump that you spoke about is unlikely that it's likely to repeat itself. It will moderate itself. So actually, it's better to look at the last year to this year, because these are clearly out of COVID or clearly out of any base effects.
What about discretionary side, right? You said in urban, there's slight bit of that increase that's come in fashion and entertainment, but is that going to be increasing a bit more? Do you think consumption on the discretionary side is now something that will grow faster.
So interestingly, if you look at what people have said they would do in case this continues in the future, what would you do?
Yeah.
Is a simple question asked. Some of the questions that they've said is, some people have said that nothing, I'll hold on to what I'm doing right now. Some people have said that I'll decrease the purchase of discretionary and premium.
Okay.
And some have said they will replace with cheaper alternatives. But the percentage of cheaper alternatives is actually lesser. So that is actually heartening to say that the percentage of people who have said that they'll go for cheaper alternatives is lesser, which means that we have to some extent come to a situation where we are used to a certain level of consumption or a certain category of consumption. And that is likely to kind of continue is what this study says, despite the fact that there is going to be a perceived pressure. And
the premiumization trend will also continue, that means that. That is the indication at least.
So there are two ways to look at premiumization. One is whether people are actually spending more money or whether they're buying premium brands. There's a difference between the two. Because even premium brands are available at 10 rupees, right? So when people buy a 10 rupee Tresemme, for example, or a L'Oreal at 10 rupees, for example, they're actually buying a premium brand. That is also considered premiumization. That is growing because of marketeer actions, saying, I want people to try, and if they're happy, they would like them to continue. On the second hand, are genuinely higher prices or people are moving towards higher payment of higher prices, that is something which is not as fast as the first one that I spoke about.
So that also speaks about the lipstick effect, right? If your income does not increase so much, you buy stuff which you can afford, the best of that. Just a final question before we let you go from my end. If you had to put your neck on the line, so far this year, what has the sector grown at? And the remainder of this year, what do you expect it to grow at? What are the categories that you believe will outperform? What are the categories which you believe will stagnate?
Okay, so far this year, if you look at a MAT, 1 year ending July, that's the last that we have. The growth rate of FMCG is around 4%, 3.94%, with actually urban being slightly higher than rural in terms of a household consumption lens, if you look at it. What we would expect that to happen in the last calendar quarter is that 4 is likely to, in our belief, will go up to about 4.5, 4.6. So there is a growth that is expected, more driven by rural than by urban. The urban tightness will continue. This is in the absence of any inputs. But now there are inputs. there is a GST and so on. So that 4.5 we actually strongly believe can go close to a 5 to 5.5 kind of a number. So the last quarter of this calendar year, it can be a good quarter for FMCG as a whole.
Okay, just before we let you go, I just wanted your thoughts on the entire consumption pattern. Because on one end, we have the rupee depreciating, we have tariffs which we have to reckon with, which will have an impact on possibly employment in certain sectors. But on the other end, we do have the GST rationalization which has come through. Is the GST rationalization enough to offset the consumption stress we might see because of the tariffs and the prolonged effect of it? And what's your sense in terms of the assessment of consumption as a whole?
So it's a very interesting question. The GST change or rationalization is real, right? The rest is perceptual.
Got it.
Right? If you talk about, let's say, tariffs or any of those, they're all noise in the air. I mean, these things tend to have a higher share of voice than share of mind. you know what I mean? So we all talk about it. People in boardrooms talk about it a lot more. But to the average consumer who's buying FMCG, going to the shop and purchasing atta and detergent, they know something is happening at the back, but they don't pay that much attention to it, number one. Number two, will it actually result in an employment change in terms of an employment reduction? Only in the extreme case of, let's say, IT companies being, IT services being slapped with tariff, which is only a talk right now. I think it's very far away from reality. So I don't think that's going to affect in such a big way. So all these global geopolitical things are, from an FMCG lens, from a common man perspective, are far away. But the GST thing is real. So from that perspective, the positivity is a little more.
Thank you so much for putting all those things into perspective. The key takeaway from here on is that earlier it was growing at around 4%. Now it will perhaps grow at closer to 5% in the second half of this year, largely because of the inputs and the underlying strengths that we're seeing in rural economy. That that is good enough for everyone who's seeking some sort of growth come by in the FMCG stocks. Ramki, always a pleasure speaking with you. Look forward to speaking to you more often.
Thanks a lot.
With that, we'll take a short break. Come back on the other side. We'll discuss more on the markets and individual stocks as we move forward. We have Sachidanand Uttekar joining in with Trade Bulls, from Trade Bulls with some trading strategies.
now a rationalization of GST. So will it now finally sort of move the needle on consumption?
100%. Because there's more money given already through the income tax cut.
Right.
The rates are coming down. So the citizen now has a choice.
Could we make the Chinese markets more accessible to Indian companies?
Just a lot of work to be done in that area. There's no hiding it. We need to have trade conversations, market access conversations, non-tariff barrier conversations with the Chinese.
So is there a sense in the government that this could be a slightly longer haul?
We hope not, but we really can't leave our exporters high and dry saying it's going to change sooner. We will work with them.
Nirmalaji, will we also continue to buy Russian oil?
Yes, that's been made very plain and simple.
Welcome back. Just about consolidating for the markets. A good time now to get in an F&O check. Mangalam is standing by the wall to give us an update from our CNBC-TV18 F&O desk. Mangalam, over to you.
Well, even as the market is consolidating, one thing that I'm watching out for is the India VIX. The India VIX has seen a bit of a spike higher, closer to that, 11 mark. So we'll watch out for how that moves, because that will give you an inkling into whether we see more volatility in the second half of trade or not. Typically on a consolidation session, we expect the India VIX to come down because more people are writing options on either sides. The important part, the Nifty day's high today was 24,879. Yesterday was 24,885. So as we move towards 24,900, there is some supply coming in, and that's what option writers are betting on for today as well. 24,850 call has seen a fair amount of writing. What's the action on that one? Right now, we have a premium of 37 rupees. Again, add that to 24,850, you come closer to that 24,885, 887 mark, which was closer to yesterday and today's high. 24,800 call as well has seen a fair amount of writing, premium of 70 rupees. Again, around 24,870 is where you see some sort of resistance come in. But 24,800 put writers, they are fairly active. Remember, yesterday as well, we saw more puts written than calls, and that's telling you that there is support at lower levels as well. So a narrow range-bound consolidation is what we're expecting. 24,800 put, the premium out there tells you that maybe around 24,750, which is closer to yesterday's low, is where we see some support. But the Nifty has to hold on to that 100-day moving average mark today for the bulls to have some sort of reprieve, because over the last few trading sessions, it's been closing below that mark. So 24,807 is the level that I'll be watching out for. On the way up, if we do cross past that 24,900 mark, we have the 50-day moving average at 24,948. That may prove to be a bit of a resistance as well. The one stock that I'm watching out for, Infosys, that has the highest contribution to the Nifty in terms of gains today. But if you look at the 1,500 call on Infosys, that has maximum open interest and a premium of close to 30-35 rupees. That means that if the stock stays above 1510, 1515 for a long period of time, these call writers will feel the jitters and they'll have to, cover their positions, and that may cause a further rally on Infosys. If not, then maybe we see some supply at current levels for that stock as well. A lot of long positions added on Titagar and some shorts added on names like 197, which is basically Paytm, and Torrent Power, both of them in, the red today.
Okay, Mangalam, thank you so much for that. Important to keep an eye out on those Nifty levels that Mangalam has mentioned as well. On the downside, the 24,807. Let's bring on board Sachidanand Duttekar from Trade Bulls as well to understand what we should be keeping an eye out on as well in terms of technical. Sachidanand, good afternoon. Mangalam mentioned the 24,807 level, right? For Nifty, we are keeping an eye out on that. What is something that we'll watch out for Bank Nifty? And is there a possibility that maybe we could go below the 24,807 today?
Good afternoon. I think well-defined levels already been communicated by Mangalam. But if you look at the overall support structure, I think there's multiple evidence that 24,760, 800, these particular levels will act as a very good demand zone. On the higher side, I completely agree that 24,930, 950 could be the resistance for the day. And the moment we see a breakout establishing on the daily scale, that particular level would be a trigger wherein we may see a very strong directional up move getting unfolded. But if you look at today's trading session, it clearly looks like a very sluggish day. But we are of the opinion that 24,800 may not be breached during the day itself. And we may see the expiry shaping up somewhere close to around 24,850, 900 kind of a zone. So the bias for the market remains positive until unless the Nifty continues to trend above that 24,730 mark. From a daily perspective, the trend has been evolving very well. We need a confident breakout above that 24,950 mark in a day or so, and we may see Nifty scaling towards 25,000, 25,200 during this particular series itself. When we look at Nifty Bank, there is underperformance, but if you look at the overall data, 54,000 looks like a decent support, at least for this particular week. On the higher side, we need a confident closing about that 54,440 mark, which may see a substantial change in the stance. But as of now, if you look at the Nifty Bank data, it looks more consolidative. I think financial stocks, Nifty Financial Index is something that we are watching out for. We are expecting that there could be a good rally in the coming weeks ahead, and that's why both the stocks that I am recommending today are from this particular sector itself. The first one being SBI Card. So if you look at the overall structure, the stock was in a severe low top, low bottom or a bearish sequence. But since last 2 weeks, we have seen that there has been a good, strong positive divergence on its daily RSI. The price has started appreciating that, and we have already seen this particular stock, heading towards its 200-day exponential moving average, which is placed around 840. We are expecting that this particular move may eventually unfold towards 880, where its gap area was formed on 28th July. That's why we are recommending building fresh long positions in SBI Cards, keeping a stop loss at 790 on a closing basis. One can expect a trading target of around 840, where its 200-day exponential moving average is placed, followed by a pattern target of around 880. The other stock on our radar, which we have also recommended to our clients, is Bajaj Finserv. Now, if you look at the V-shaped recovery in the last few trading sessions, that is followed by a consolidation on the daily scale. If you look at the overall structure on the 60 minutes charts, it looks like a classic bullish pennant formation, which is again a continuation pattern. If you look at the ADX on the daily scale, it has given a fresh breakout above the 25 mark. So it is a significant development from a trend momentum perspective. So we are expecting that this particular rally may extend towards 2080 immediately. But a position target is placed at around 2140, where its live high levels are placed. The stop loss can be placed at around 2020 itself on closing basis, and fresh long positions can be considered in Bajaj Finserv's futures as well.
Right. Okay, thank you so much for that, Sachidanand. But, let's move on to Vivek now, who is going to take us through some of the stocks that are moving around in today's trading session.
Well, thank you so much for that. Another session, it's been a choppy session, especially as far as markets are concerned. List of buzzing stocks is what we're looking at. First on the list has to be the kind of sharp bounce back that the entire IT pack has seen. Have a look at Infosys, buyback cheer over that. And along with that, hopes of other companies too, that have gone ahead and crossed the one-year barrier as far as announcing buybacks are concerned. So looking at names like Wipro, all of these names, even HCL Tech, all of them doing quite well in the session today. The other stock in focus, RailTel, AutoVinci over there, that particular stock higher by almost 3.5% today. Select pharma stocks too have seen some buying emerge after the kind of selling pressure that they witnessed in the week gone by. So names like Glenmark Pharma, Dr. Reddy Gland, Glenmark, receiving the first milestone payment from AbbVie is something that's seeing a bit of buying today. Prime focus, Friday you did see some block deal action. Yesterday also some good funds entering. That particular stock continues to be pushed on the upper circuit. And Titagar, one of the competitors, has seen some cancellations come in and also has been barred from bidding as far as railway contracts are concerned. So the street sees Titagar as a beneficiary. That particular stock higher by almost 3.7%. On the other hand, quite a few laggards as well. Old-time transformers, a large block deal, supply overhang as far as promoter entities are concerned. That particular stock down almost 3%. GMDC, this particular stock saw almost a one-way rally in the last couple of trading sessions today, seeing a bit of selling pressure, a bit of profit booking, top laggard as far as NSE 500 is concerned. And the new age names, today seeing a bit of selling pressure. So names like Paytm, Nykaa, Delivery, these stocks amongst the top laggards as far as the NSE 500 index is concerned.
Okay, all right, Vivek. Thanks very much for that. So those are a lot of the buzzing stocks today. We need to take a short break with the news that the mid-cap index is absolutely flat at this point in time with an advanced decline ratio, which is even keel as well. We'll take a break. On the other side, Manisha Gupta will join in to discuss what's on her commodity radar today. Stay tuned.
Welcome back to Halftime Report on CNBC-TV18. As of now, Nifty is managing to hold on to 79 points or 80 points of gains. 24,853 is what the Nifty is at, almost near the day's highest point. It's moving back up. Also, other than that, let's pull up Welspun Corp. That's been buzzing in the last 30, 40 odd minutes, so keep an eye on that one. But let's go across to Manisha, who's joining us now to take us through what's going to be happening in the world of commodities and some interesting conversations there.
Yes, thank you for that, Vinny. And we're talking about gold right now because that has been making all-time highs, scaling higher and higher. And to discuss that and the impact of that in the Indian jewelry markets, especially with the wedding season coming up, we are joined by Varghese Alucas. He's MD Joss Alucas. Varghese, hi, thank you so much for joining in. First of all, your sense on the gold prices, because we've gained nearly 38% now in this year alone, with expectations that this rally is not stopping anytime soon.
Yes, Manisha. So today we have seen the price which has gone up to 5-digit, where usually the jewelers have only 4-digit in their board, which has come up to more than 10,150. So in the morning time, all are in a hurry to change this board price into 5-digit. And we have crossed 10,150 selling rate in the south. And we see the customers are always inquiring why these prices are going higher and higher. So there is a confidence that gold price will stay as it is like for some more time. And we feel customer inquiry has come a lot on buying coins and bullions, even though the wedding season have started and we have festival season, which is coming up in October, November. So there is a positive side, and at the same time, people are still thinking whether the gold price can have a small correction for last 3-4 months, where we were seeing a gold price which was around 3,300, which has gone up to 400, 500. Now it is 3,650 per ounce, and the dollar price also has shot up to 88.17, something like that. So overall, we see that there is a slowness in the market, that customers still thinking, but again, the prices are going high.
Mr. Lucas, as you said, that what people are buying is investment. Is it more to do with coins and bullion, or do you think the jewelry demand continues to be strong as well?
There are some jewelry which is sold against the scrap gold, like old gold exchange has been done. Because as a requirement, as some wedding requirement, people see that they can buy new ornaments by exchanging their old jewelry. So most of the jewelers has more than 60% has come as a exchange jewelry to buy a new jewelry. So still people are buying thinking that they can change their jewelry to a new jewelry. And again, the prices are going up for both platinum jewelry, silver jewelry. So overall expectations of customers, as they think that it will not go very low like earlier days, but thinking they need to buy, so their buying is also happening.
Mr. Lucas, what is it that you're seeing in sense of South Indian demand? Because this is one sector which does not stop buying gold, come what may the price be. Is here as well, has the buying slowed down? Is the market looking at more exchange jewelry in southern part of India also?
Yes, overall, if you look into South Indian jewelry market, more are selling 22 karat jewelry, which is not fully studded jewelry, but plain gold jewelry. So sometimes when the prices are going such fast, like daily, if you say 100 rupees per gram or 150, sometimes 75 rupees, which is going up, as I said, 60% of them are trying to exchange their jewelry which is not been used for some time, can be exchanged with the new jewelry by only paying the making charges. So there is an exercise that customers are keep buying with the exchange facilities what most of the jewelers are offering them. So that is one way we are able to sell. But still then there is, if you look into last 6 months alone, we see a price which has been gone up by more than 2,200 rupees per gram. But if you look into 2020, the gold price was 4,500. In 5 years, it has come up to 10,150, which is more than double the price.
Correct.
So the one who has been earlier buying have a good chance of getting more money, but still then there are little slowness. As I said, 25% still there is a less in volume, then we can cover it with the revenue what each jewelers are making.
25% decline in volumes, and clearly exchange gold seems to be doing well. Mr. Lucas, one final question then. Are a lot of people selling their gold in need of money, or is it more to do with exchange? Have you seen that happen too?
Yeah, there are some selling is also happening in the market, because last when you see 3-4 days when the prices are rising, then there is a small stay in that, because people again think the prices are going up. But some who want to buy land or some other marriage, some other immediate requirement, people are thinking, well, people are having 10-15 years, which was brought for 1,000 rupees, 2,000 rupees, which has gone up to 10,000. So there is selling is also happening. But if the prices keep on rallying or keep on going up, there is also a waiting
So,
period. for them to
Mr. Alukas, are you keeping aside a lot of cash then for people who are coming and buying? Are jewelers doing that, readying their cash to buy this gold at these higher prices? Because these are higher prices to buy back for you as well.
Like we have both the policies for exchanging, and we buy the one which we have been selling now. We don't buy from outside gold, but we buy the jewelry what we have sold, or we can give the facility to exchange. So people who have brought from us for years, they're selling, but so we can source it from them, and we can reuse it by recycling it with MMTC and by getting it back into bullion and again making into ornaments. So whenever customers want to exchange or sell it for cash, we are giving all the guarantee to them that we buy it in cash or we exchange it for the jewelry, gold jewelry.
Okay, Mr. Alukas as well as Manisha, thank you so much for joining in with us for that interesting conversation. Gold is the hot topic. It's shining, glittering, and that's what we'll continue to talk about as well, where that's going to be headed. But thank you so much for this conversation. On that note, we're going to step into a very short break. On the other side, we have Kamlesh Rao, the MD and CEO at Aditya Birla Sun Life Insurance, joining us. So stay tuned in for that conversation.
Welcome back. Well, for the markets, it's actually just about consolidating. We have the IT index, which is gaining. Just watch out for a couple of these pharmaceutical stocks, such as Dr. Reddy's as well. To be fair, Dr. Reddy's was down yesterday. It was down around 1.5% odd. And today it's up around 2.3%. So some amount of bounce back, which has taken place there. GST on individual health and life insurance premiums has been reduced to 0. To discuss more on this, we have with us Kamlesh Rao, the MD and CEO of Aditya Birla Sun Life Insurance. Mr. Rao, thank you very much for joining in. Well, the move with regards to GST on life insurance has in fact been called a land back by a lot of your peers. Can you just give us a sense in terms of how important a move this is in order to shore up the life insurance industry?
I think it's in line with the aspirations of the government to ensure that we have insurance for all by 2047. So I think it's a welcome step in that direction. Premiums, like I said, on GST premiums could be as high as 18% on protection. India has lower coverage and has a huge protection gap. So my view is that it will go a long way in making the cost of insurance lesser, because 18% is significant, or the ability for customers with the same cost to buy significantly more protection than what they bought in the past could be the other way of looking at it, because India has two issues. One is penetration is lower, and of course people who are insured are lesser than what they should be. So I think from both points of view, it will be a welcome step for achievement of insurance for all by 2047.
You know, while these are positive from a from a customer standpoint, the worry is that they may increase the cost for insurers. Do you believe that this increased cost for insurers would be enough, and the increased preference or increased penetration by customers would be enough to offset the increased cost for insurers? What we're trying to understand is, from an insurance company standpoint who's in the business, they may stand to lose a little, right? Have you put a number to that?
So typically, there are three elements. One is you get input tax credit. So obviously, if the premium GST becomes zero, then there are issues related to input tax credit, which we are putting a note together and will make a representation. Fortunately, reinsurance premiums are exempt. So that's a part of the input tax credit. There are distribution costs which are related directly to the sale of the individual insurance policies. So that's not exempt. So that's some representation that will get made on behalf of all the life insurance companies. Adjusted for that, I'm saying there will be a hit on some other costs that are involved in terms of servicing. But even if I look at all these costs put together, depending on how the representation goes and what we get as feedback, still out of the 18%, my sense would be at least 12 to 13% would definitely be passed on. If any, depending on what comes through, 3 or 5% would be the cost that will have to be used for ensuring that the input tax credit cost that impacts the life insurance companies will have to get taken care of.
Okay. So, Mr. Rao, just wanted to understand what is the impact that you are assessing on your embedded value now?
So, embedded value impact is on account of a different parameter. So, basically, it's also on account of the fact that renewal premiums of what you've done in the past, they will also get exempt as per what the regulation says right now. So, if they don't pay on the entire stock, there will be an impact. But the impact of this on embedded value is not very, very large. The worry is more on the input tax credit because, GST will become zero, but there'll still be costs related to servicing of the policy that you do on an ongoing basis. And those costs on which we pay GST, we will not get input tax credit on that. So it's an issue of cost and not as much the impact on the embedded value. The embedded value impact will be very, very small. So that's not a big worry. Like I said, the bigger worry is on input tax credit related to GST, which has become exempted.
Okay, Mr. Rao, you mentioned 3 to 4%. Is that going to be the increase in cost that comes in, or what was that percent that you mentioned?
So typically in protection business, I gave you an example because that's where the GST is 18%. Because on the other products that we sell of insurance, the GST is roughly about 4.5%. So that impact is not very large. On 18%, assuming that everything stands as is right now, and input tax credit like what we want on at least basically distribution costs that we are making a recommendation. If it stays as is, then there could be an impact of 4 to 5%, which means the benefit that get passed on. Today he was paying 100 rupees plus 18 rupees was GST. It may end up to the cost to him was 118. It may end up being in the new regime, the cost may be 105 or 104 to the customer as far as the protection example that I took.
And what's your ask from the IRDAI and the GST Council right now? And have you gotten any assurance from them on whether they're listening or not?
So we've just, as an industry, putting a document together as we speak. And like I said, the basic ask is on two elements. One is on basically looking at the input tax credit on distribution costs because in they've exempted reinsurance costs, which is directly linked to the cost of doing the business. So distribution cost is similar. So we asked for that. And we obviously asked for looking at to see whether on past policies whose premiums will come going forward, can we still avail of the input tax credit even if the GST has become zero? Because for the input tax benefit that we get, these two are very large components. The insurance industry will still continue taking a little bit of hit on the other costs, which is related to servicing of the policies that we do because they are not directly attributable to every policy that we sell. But on distribution cost and for renewals of the past that will come with no GST, the input tax credit benefit on that is something that we are planning to ask for.
Okay.
Mr. Rao, just a quick one. Will term ULIP endowment, that see a higher increase in terms of costs?
I was talking only about term because in ULIP, it's basically on the charges, the GST is 18%, which is a very small part of the entire. But for other savings products, the GST is 4.5%. Whereas on protection business, which is term, the GST used to be 18%. So the discussion on that 18% is significantly large. But like I said, even if adjusted for cost, at least 12 to 13% benefit will definitely be passed on to the customer, as we see at this point in time.
I didn't quite catch what you're assessing in terms of the VNB now.
I didn't get that question. You're asking me, is
I
there
didn't
any
catch
impact
what
on-
you're assessing in terms of the VNB, the value of new businesses now going forward, Mr. Rao.
So VNB, like I said, if we have to take the impact of the input tax credit that we would lose or not get, like I said, if that translates to 4-5 rupees, which means the 18 rupees will not get fully passed on, but 4-5 rupees will is what the customer will pay instead of 118 if he pays 104 or 5 rupees, then there is no impact on VNB. The VNB also gets taken care of.
Okay, Mr. Rao, thank you so much for joining us on the show, explaining us, what this GST, how it plays out and what is the ask of the industry now from the IRDAI as well. Thank you so much for that. But on that note, we're going to sip into a very short break. Don't go anywhere. We'll be back with more market-specific and stock-specific action after the break.
Welcome back. The market hasn't done much from the time we started the show, and we're coming to the close of the show as well. The Nifty holding around the 24,850 mark off the day's high, but well off the day's low as well. The Midcap index is just about flat, while the Nifty Bank is the one which is underperforming. So what we'll do is take your leave on this edition of Halftime Report and leave you with the team of Business Lunch to take the market action forward. The second half coming in. Trade today crucial because it is the weekly options expiry. From Ekta Vinimi, thank you for watching.
Stocks remain in the green with the market breadth only mildly positive. IT, healthcare and FMCG are notching some gains while consumer discretionary and realty are the big drags.
IT stocks rally after Infosys said its board will meet on September 11th to consider a buyback of shares. The move ignites expectations of buybacks from other IT majors.
Muthoot Finance MD George Alexander Muthoot calls the GST rate cuts a great savings tax that will put more money in the hands of borrowers and savers, raising consumption and helping them meet their loan obligations.
Gold scales to a new high of over $3,650 per ounce as the weak US jobs report raises expectations of a rate cut by the Federal Reserve. Now, addition to its gold reserves by China in August also supports the yellow metal.
Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Fatakia. With me as always is Vamakshi Dhoria. Vamakshi, good afternoon. So far, it's turning out to be a good afternoon for the bulls, but the so far is the bigger emphasis because you know what happened in the last hour of trade yesterday, and the bulls would be hoping that a similar trajectory does not follow, especially considering it's the NSE expiry today.
Well, absolutely. Good afternoon to you, Hormaz. And, slowly but gradually, we've managed to recover from the lows of today, where I think about 40 points or so off the day's lowest point. So that bodes well. What's not actually doing well is the Nifty Bank, because, again, there's no support coming in from the Nifty Bank index. It's down almost 0.1%. But what's actually supporting the index, and in a big way, is actually the IT index. And one stock is a star performer, that is Infosys. It's up almost 4.5% in today's trading session and is contributing almost 70 points to the up move that we're seeing in the Nifty. Other IT stocks are also poked up in trade. Take a look at Wipro, that is up almost 2.6%. Emphasis is also doing extremely well, and Coforge as well, trading with a gain of almost 2%, Hormaz.
Indeed, and it is IT that has been doing the heavy lifting for a change today after being predominantly a drag, at least in the last 10 sessions in which it had gained only once, had the Nifty IT index. So 2.5% higher on that stock. But of course, the broader markets are the ones that you need to keep an eye out for, because the activity in specific stocks is pretty significant. Even though the index remains at the flat line, the mid-cap index and the small-cap index both are mirroring the are underperforming the benchmarks. In fact, today the mid-cap index at the flat line, as is the small-cap index. But take a look at some of the names in the broader markets. Look at ITDC, that is India Tourism Development Corporation. That has seen a very sudden spike today, 17% higher on that stock, and it has continued to move, particularly in the last half an hour or so, 18% higher on that stock. A couple of movers from the last few trading sessions. Precision Camshafts is one, JTKT India is the other one. Both of them continue to remain with gains, and Sula Vineyards is also trading with healthy gains of around 8% in today's session. But of course, Vamakshi was mentioning IT, and that continues to remain the flavor of the day. And of course, Infosys announcing that the consideration of the buyback the day after tomorrow is the big trigger behind all of these moves that you're seeing in IT stocks. 1500 now on Infosys. Rima is here with more details on this. Rima.
Thanks so much for that. So IT making up for lost ground, lost time. As you said, it was predominantly a drag. Even after the up move today, Infosys is down 20% on a year-to-date basis. But of course, this impending buyback announcement, 11th of September is when the board meet, has gotten the stock and the industry very excited. This will be the company's 5th buyback since 1993. Now, the big question is, how much will the company buy back? Well, estimates vary from about 10 to 14,000 crore rupees. That's the Morgan Stanley estimate. And typically, the buybacks happen at about an 18 to 25% premium. And just going by the last few, 4 buybacks, the company's historically bought back about 1.5% to 2%. So again, this time, Morgan Stanley says they should buy back 1.3 to 2%. But a buyback announcement signals confidence from the promoters about the value of the stock. It acts as a cushion. From the buyback announcement till the time it gets completed, earnings will come out. God forbid the earnings are disappointing, then at least there is that buyback support which comes in for the price. But the rest of the IT pack is also excited, because now after Wipro, the street is hopeful that maybe TCS and Wipro also come up with their buyback announcement, because the 1-year cool-off, which you need between 2 successive of buybacks has come to an end. Both of them completed their buyback in 2023, so they're eligible for a buyback. HCL Tech and Tech Mahindra have been very, very irregular with their buybacks, unlike some of the other larger players, which have been very regular. Back to you.
Well, thank you so much for that, Reema. But let's actually put the spotlight on MobiKwik. Now, this stock has been doing extremely well in trade. Yesterday it was up almost 11%. There was a block deal, and Hormaz is here to take us through what is going on with this stock. How has trading been? Hormaz?
There's very heightened trading activity that you've seen in MobiKwik over the last few sessions, actually since the start of September itself, and ahead of that impending block deal that was supposed to happen with ADIA exiting, and once it did exit on the 2nd of September, that trading activity has continued in that stock. Now, a trend that has been constant for MobiKwik since the start of the month is the fact that every single day since the 1st of September, the stock has had more than 1 crore shares change hands as part of its daily volumes, and that continues today as well. Now, as of last count, more than 1.1 crore shares had changed hands, and compared to a 20-day average of close to 90 lakh shares, so it is moving in tandem with the 20-day average as of now. And you take a look at the heightened trading activity here as well. So 2nd September was the day when the block deal took place, but on the 4th, 5th and 6th September, even in yesterday's trading session, you saw almost 5.5 crore shares that were traded in yesterday's trade. Almost 40 lakh shares were marked for delivery. Now, considering this move over the last 6 days, the 20-day average has, the daily average volumes before the 1st of September were close to around 19 lakh shares. Now, after this, the 1st of September, that daily volume has become 4.2 crore shares. Even in yesterday's trading session, with 5.5 crore shares traded, 1 crore was marked for, the 20-day average was 1 crore, 40 lakh shares marked for delivery, a 20-day average of 12 lakh shares. So still on heavily traded volumes in yesterday's trade as well. And yesterday had a turnover of close to around 1800 crore, which is almost 70% of MobiKwik's market cap. So after this move in the last 6 sessions going into today, the stock was up 50%. And as a result of that, the stock did manage to go back above its IPO price, but now it's seeing some profit booking today. And even after this move, the stock from its post-listing high, which is around almost 700 rupees, 698 is the post-listing high, is now around 53 to 55% from those levels. So it's been a strong mover in since the start of September has MobiKwik, but seeing some profit booking in today's session from higher levels.
Well, Hormaz, the stock is up almost 34%, as you were pointing out, in the last 1 month or so. So interesting data out there. But, let's go across to Upasana now, who is here with a roundup of all the stocks that are buzzing in trade today on the back of some news flow. Upasana, over to you.
First up, let us look at the Aditya Birla twins. They are in focus as Morgan Stanley is positive on these apparel retailers. It has initiated a coverage on Aditya Birla lifestyle brand with an overweight rating and a target price of 175 per share. It believes that it sees a gradual improvement in company's margin and return profile. It has also upgraded Aditya Birla fashion and retail with an overweight rating, and target price is hiked from 98 per share to nearly 131 per share. It believes that the company is at the cusp of improving financials and also sees opportunity for valuation re-rating. Next up is RailTel. On the back of order win, the company has received several orders worth 713 crore, and these orders are received mainly from Bihar Education Project Council. Next up is Voltam Transformers. There's an 8% change in equity via block deals of nearly about 7,611. And mind you, post the stake sale, the promoter holding will fall below 30%, which is why the stock is under pressure today. Glenmark Pharma also in focus as companies received upfront payment of $700 million from AbbVie for an exclusive global licensing agreement. Quality Power is the next one on our radar. On the back of the order win, again, the company's received orders worth 75 crore by Material Step Down subsidiary for a fax system supply. And lastly, Vare Renewable Technology is also on our radar as the company's got a LOA for a solar power project worth 1,252 crores. So all in all these counters are buzzing in trade today, and we will be closely watching out for all of them.
All right. Thank you so much for that, Upasana. But take a short break then. More news and updates follow on the other side, so don't go anywhere. Welcome back. You're watching Business Lunch on CNBC TV18. Well, let's now put the focus on precious metals. Gold has hit a record high while silver has also rallied. Manisha is here to tell us more. Manisha?
Been unstoppable. If you look at this year, it's been a couple of dozen times that gold has made all-time highs. Today, yet again, we've seen $36.50 an ounce being taken up on the higher side. If you look at silver, we are trading at 14-year highs in the international markets. But for the Indian markets, it's an all-time high for gold and for silver as well. Well, there has been quite a strong buying that we have seen into the markets. To begin with, it is about the US Fed meeting, the upcoming one in the month of September, where there is an expectation that the 25 basis point rate cut perhaps is going to happen. There's a 95% probability of that, and that seems to be getting factored into the prices right now. Also, when you look at the US data, whether it has been about jobs, housing, credit cards, and then of course that debt, which is at record numbers, all of that seems to be leading smart money in case of gold here. And then it's not just about US, even the Chinese data has been quite uneven. So we have seen strong buying come in from the Asian markets as well. The other point to remember is that the US dollar index continues to decline, and there is a forecast of further decline for this one, supporting gold. Markets also are looking at very strong central bank buying for the last 4 years now. China, of course, has been a very strong buyer and has bought for a 10th straight month in the month of August. That has been supportive for the markets as well. If you were looking at speculative buying, well, that is stronger. That's on the stronger side. ETF buying has been picking up, but it also has to do with the physical buying, even at these levels where you have physical prices trading in a premium, saying that every time there is a bit of a correction in gold, there are buyers already waiting in the sidelines. That continues to support gold buying as well. So when you look at this year and the last 12 months as well, it has been strong numbers that you can see in case of gold and silver. In this year alone, we've seen the gold prices gain up by almost 40%. And if you look at the last 12 months, it has gone up by 45%. Silver clearly outperforming with the kind of gains that we have seen, 43% higher for this year, 45% for the last 12 months. Platinum 55% up in this year. So it has been a very strong run-up rally that we have seen in the precious metal prices. Geopolitics, tariffs, uncertainties, concerns, the safe haven buying clearly coming in for gold with very strong targets for 26, even 2027 going forward.
All that glitters is gold. Manisha, thank you for that update. But from gold on to currency markets, then the rupee opened strongly today and dipping below the mark of 88 from a low of 88.26 that it had made last Friday due to the weakness and due to the selling pressure that was seen globally. But the currency lost its early gains rather quickly, now back above that mark of 88 against the greenback. Lata is here with more on this. Lata.
Well, after a long while, if you were a rupee bull, there was a bit of a cheer early morning when the dollar cost less than 88 rupees. It went rather quickly to 87, 94, 93 levels. But it was only briefly over there. The reason for that is quite obviously only the dollar weakness. The dollar has weakened considerably in the last 24 hours, as it has been doing all of this year. It's because of the expectations of a Fed rate cut. There were also some problems in Indonesia with the financial minister getting fired and people expecting, therefore, that FPI is buying Indonesian bonds will now buy India bonds. And all that led to that kind of positivity we saw in the rupee, but it was very brief, a very brief moment under the sun. At around 87-90 levels, you just saw PSU banks come and buy the dollar heavily, mostly for importers. Importers probably stayed back on Friday because of the huge FPI buying. And the moment they saw some kind of, cheaper dollar, you saw them rush in, mostly oil importers perhaps, but importers of all hues. And therefore, the rupee remains the weakest currency in Asia. I'll just give you a measure. The dollar is actually weak 10% this year, if you count from January to now. Remember, it was 106, the dollar index, now at 96. It's a 10% fall. And you have seen gains in across, the Thai baht, Korean won rising 7%, each of them. Even the Chinese yuan is up about 2.5%, 3%. The yen is up about 6% versus the dollar. The rupee is still weak 2.5% versus the dollar, despite the dollar falling 10%. And that's largely because of this relentless tweets that you're getting, the fears in the market of, services tariffs, or, other kinds of bad-mouthing from other quarters, unless those series of, negative tweets or negative statements stop, it's very difficult to see the rupee recover much. People are looking at 87.90 to 88.30 now. Correctly speaking, 87.50 should come very quickly, even if there is a bit of positivity on the tariff front.
Well, thank you so much for that, Lata. But now let's focus in on the US market. It is a Qs-heavy week there. Now, the street will be hawk-eyed on inflation prints. Both PPI as well as CPI reports are due this week. Now, CNBC's Steve Leisman is here with a comprehensive roundup of what's expected.
Wall Street got the stag part of the stagflation equation with a weak jobs report on Friday. And the question this week is if they get the inflation part. An outsized increase in prices could give some members pause in cutting rates, perhaps not in September, but in the months beyond. Monday, the New York Fed showed inflation expectations pretty much stable, but at a relatively high rate above the Fed's 2% target. Tuesday brings benchmark payroll revisions that could show a substantial revision downward of U.S. job growth in the year ending in March of 2025. Producer price inflation on Wednesday and the all-important consumer price inflation report on Thursday. August core consumer inflation, which takes out food and energy, are forecast to come in at 3.1%, the same level as July. That should keep the Fed's preferred inflation indicator about a percentage point above the 2% target. Weak job growth expected to keep the Fed's focus on the employment side of its mandate. Most Fed officials anticipate tariffs will prove to be one-time price increases. Soft growth should put downward pressure on the non-tariff goods. But the concern among some Fed officials is service inflation, taking out housing. It rose in July for the fourth straight month, raising concerns about a wider inflation problem because services are not subject to tariffs. Some forecasters, however, do see a reversal of that service inflation coming in August. Futures market in the wake of the August jobs report are fully pricing in 3 consecutive rate cuts at the Fed's 3 remaining meetings this year, with even a 10% probability of a 50 basis point cut in September. While the September cut is probably not in doubt, barring a huge upside inflation surprise, Fed officials have suggested that they may need to stay somewhat restrictive as long as inflation remains above target. That could limit over time the amount of rate cuts this year unless inflation tops out and starts heading downward. Steve Leisman, CNBC Business News.
Steve Leisman, thank you for that update. Now, that week's weak jobs data in the U.S. has cemented and all but confirmed the case for a rate cut in next week from the Federal Reserve. Let's listen to what economists and market experts had to say on these potential rate cuts from the Fed.
I think that the weak jobs report that we got, which sort of confirmed August weakness, really shows that the labor market has lost some momentum. It's not falling off a cliff, but it certainly has weakened over time. And even though, there's reasons to believe that immigration is affecting the supply side, we're not getting as many jobs per month as needed to keep the unemployment rate constant. We saw an uptick in that unemployment rate. Again, not a crashing labor market, but certainly one that has lost some of that positive momentum. So if I were in the room, I would say, let's move ahead with a 25 basis point cut in September. We still have some more data on inflation, but we know that inflation is going to be moving up because of the tariff.
In the past, when the Fed has cut interest rates, when the economy has been doing okay, it has usually been a recipe for a bubble. That's what happened in 99, 2000. And some will argue that that's what, possibly even happened in 2021. But I think the main issue here is the fact that financial conditions are super easy. The Fed has never cut interest rates when financial conditions have been this easy.
Well, all right. On that note, let's slip into a very short break. More news and updates follow on the other side, so don't go anywhere.
Welcome back. Now, India's vice presidential election is currently underway and is a direct contest between the NDA nominee CP Radhakrishnan and joint opposition candidate B. Sudarshan Reddy. The voting began at 10 a.m. and members of both houses of parliament will be able to cast their vote till 5 p.m. this evening. The counting of the votes will begin shortly after voting ends and the results will be announced later this evening.
Well, let's shift our focus to some updates from Nepal. Demonstrators have set the Nepal's president's residence on fire, escalating tensions further as anti-government protests entered their second consecutive day. Now, the unrest, led largely by students, erupted across multiple districts in open defiance of restrictions on public gatherings, with demonstrators demanding Prime Minister KP Sharma Oli's resignation. Now, the police's use of force has left at least 19 people dead and several injured following the deadly clashes.
Now, the Munich Motor Show of 2025 has opened for the public today. All major global brands are showcasing the future of mobility and their vision and technology. Skoda has unveiled its Vision O concept car, an electrified estate blending futuristic design, AI-driven technology, sustainability and autonomous features, marking the next chapter in the brand's philosophy. Shivani Bajaj gets us a sneak peek.
How would you like a car that has a portable fridge or ice box, a Bluetooth speaker that you can take for the picnic, and well, 4 umbrellas neatly tucked in? Well, meet the Skoda Vision O that combines all of these cool features. Now, this is a concept car that Skoda has given us a preview before, ahead of the Munich Motor Show here in Munich. And this is how Skoda's future cars might look like. Now, the production of this car has some time. It might go in production by 2029. So there is still time. But this is how Skoda's new age cars might look like. If you see the design language, it's very how Skoda's cars come right now as well, but a lot of modern touches to that. Now, this is a concept car I might not be able to show you, but these LED lights pop in and pop out whenever needed. So this is the design language of the new Skoda's Vision O that is, highlighted and showcased here ahead of the Munich Motor Show. Now, inside the car, if you can see, this is a modern, futuristic looking car with very sleek doors as well. Now, in the back, you can see that this is has a very spacious boot. If you recline the back seats, it goes to 1700, and that is a very Skoda-like thing to do. Now, let me tell you inside what is the cool thing. The LED lighting inside adjusts according to the daylight, so it basically adjusts with your biometric clock, your body clock, so it gives you a feeling of the sunlight moving according to the day. Apart from that, it comes in very cool colors. If you can see, there is a monochromatic sort of a thing going on. This is beige, but there are blue tones also that you can see. I would want to focus on the car and how sleek this entire thing is. There is this air movement space over here, and aerodynamics, obviously 21-inch wheels on this one. And check this out, the horizontal display inside the car runs throughout the cabin, 1.2 meters, but there is also haptic controls so that the driver is not confused looking at the screen. So you can touch, you can use the haptic, and you can also voice control the car. So there are a lot of cool features in this car. This car might not go into production right now. The production might take some time. By 2029 is what we are expecting, but this is how the future of Skoda might look like.
Well, thank you so much for that, Shivani. But Hormaz, looking at how the car is turning up, do you think maybe 4 years down the line when it finally comes into production, you might consider?
I love my public transport. I'll stick to that. And maybe that's how it should be as well. I prefer public transport that way. But interesting, no doubt about the car indeed. But that's all we have on this edition of Business Lunch from Amakshi and me. Thank you for watching. Midcap Radar on the other side.
Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me is Vivek Iyer. For the markets closer to the day's high, we started on a choppy note, but then we saw recovery. Nifty now above that level of 24,850. We'll see whether it stays at those levels or not. And we have a lot of stocks to talk about today, so we'll get started.
That's right. Good afternoon, Sonal. Well, it's a choppy trading session, but currently markets are continuing to hover around the flat line or in the green mark. We have a lot lined up on the show. Some important data to address as well, as you can see in the bottom of the screen. So let's start off with the top headlines. Stocks trade in the green with the market breadth only mildly positive. IT, healthcare and pharma notch gains, while PSU banks along with oil and gas track. Mid-caps are relative underperformers.
Voltam Transformers under pressure after 8.12 lakh shares worth 618 crore rupees change hands in a block deal window. A promoter holding to fall below 30%, stocks down nearly 3%.
Prime focus shares hit 10% upper circuit for the third consecutive trading session. Kraft Emerging Market Fund acquires 3.87% stake in the company. The stock now has surged over 30% in the last 3 trading sessions.
Glenmark Pharma gains after it receives an upfront payment of $700 million from AbbVie for an exclusive global licensing agreement. Stock is up nearly 3%.
Quality Power in focus after its step-down subsidiary receives 2 orders worth 75 crore rupees to supply FACT system to a European customer for a steel plant.
All right, those are the top headlines for the markets, as we pointed out, closer to the day's high. And if we talk about mid-caps, around 11 o'clock, it was deep in the red. Then it did see some recovery. And right now, as we speak, it's up around 100-odd points. So that drop that came by, that time, the mid-cap index was down 200 points from the highs of the day, but now recovered well. It's almost an 80-point uptick on the mid-cap index. The advanced decline ratio quite flat, actually. There are 2,100 stocks on the advancing side versus 2,100 stocks on the declining side. This is as per the BSE data. So converging these two lines, it started on the back foot, but now these two lines have been at par with each other. Nifty IT doing well. Nifty Pharma is the other one. We do have some pressure which has come by in the banking names, especially the PSU space. So watching out for that one. But we have a special segment now, Mid-Cap Movers. Vivek has gone across to the wall. He's going to take us through the mid-caps that are moving around in trade. Vivek.
Well, that's right. No dearth of names as far as the broader end of the market. Some sharp movers seen over there. First on the list has to be Engineers India. After a while, this particular stock is doing quite well in the session today. One of the top gainers as far as the NSE 500 is concerned. Cooled off a little bit in the last half hour or so. Railtel, Auto Vinci over there, that particular stock high by almost 4%. Action Construction, this particular name has been continuously buzzing since the last couple of trading sessions. Today, higher by another 5%. And PVR Inox, after a while, yesterday did see significant selling pressure, but today has bounced back quite sharply. And the mid-cap IT pack today has seen a bit of a bounce back. So names like Tata Elxsi, Coforge, some of the names along with the large-cap IT names are seeing a bit of a bounce back today. But on the other hand, quite a few laggards as well. GMDC, a stock that we've been talking about continuously in terms of this particular stock seeing a one-way rally. Today seeing a bit of profit booking. So one of the top laggards as far as the NSE 500 is concerned. Netweb Technologies today down almost 3%. Some of the new age names, so names like Nykaa, Delivery, Paytm, all three of these stocks under a bit of pressure today. Bharat Forge yesterday, remember, was up almost 6%, giving up some of those gains today. And CG Power, one of the names from the broader end of the market that's seeing a bit of selling pressure, has recovered though from the recent intraday lows.
Okay, all right. Some interesting names there. Thank you so much for joining us with those details, Vivek. Let's now welcome Shrikant Chauhan for a technical check on the market. Shrikant, good afternoon. Thank you so much for joining in. Well, what is the market factoring in? We have seen some choppy trade. Then it's closer to the day's high. Will that continue?
Good afternoon, Vivek. Good afternoon, Sonal, and everyone. So, market is finding a lot of difficulties to sustain at higher levels, but on the day of weekly expiry of Nifty options, we are seeing good amount of resilient activity close to 820, 830 levels, and most of the time whenever there is a recovery, we are seeing market moving towards 24,900. So broadly, I am of the view that till the markets are not breaking 24,600, we could see further upside in the near term, and we may even see the levels of 25,000, 25,100. That's the overall view. Bank Nifty is struggling, but it is holding well above the mark of 54,000, which is positive. And in case if there is any upward activity in the market, then we can expect Bank Nifty to move towards the levels of 55,000. So I think at these levels, markets are consolidating, and in the near term, we are going to see upside in the market.
Okay, so near term, you're expecting some upside, Shrikant. In terms of individual stocks, which are the ones that you're liking at current levels? All buys or any sells as well?
No, I think, see, like most of these mid-cap stocks, they are doing really well. They rallied a lot in the month of February, March, and April when the market actually recovered from the lows. And after that, they have started consolidating. JSW Infra specifically was like into downward activity of some few weeks, but now again it is recovering back. It has been consolidating since last almost 6 months, and now based on its technical pattern, I am of the view that it is heading for the levels of at least 350 and maximum 370. So the stock is forming ascending triangle, which is positive, and at current levels, it is quite attractive to buy and hold. The other stock on which we are bullish is Jamna Auto, and here the stock is forming V-shaped recovery sort of formation. Few days back, there was some block deal, and because of that, we are seeing renewed buying interest in the stock. Based on its technical formation, again, the stock is heading for the levels of 160. That is what that we can conclude based on its technical pattern. Currently, it is around 110 levels. We should look for adding the stock at current levels and more on dips.
Okay, all right. Thank you so much, Shrikant, for joining us today. We'll now do one thing. We'll shift focus to the August life insurance data. These stocks are surging in trade. Yash is joining us with all these details. Yash?
Well, very interesting data has come about as far as the month of August for life insurance companies is concerned. Let me speak about the best performer as far as the month of August. And it has been the best performer for the last few months now. And that is Axis Max Life Insurance. The strongest growth which the company has posted as far as the month of August is concerned, and it's the 5th straight month of strong double-digit growth for Axis Max Life Insurance. What's even better is that in the last 5 months that we are talking about, this strong growth has come on a base which was already very strong. The company has been growing at its base level for about 20 to 25%. On top of that, it's registering a growth of about 20 to 25%. To speak about the weakest growth, that has come from SBI Life Insurance. The renewal premium has been decent, but what has become a problem is the new business premium, coming in this year, which is very slow to the point of actually growing at flat levels. To speak about absolute numbers, for HDFC Life Insurance, the new business premium has grown at 10%. Total AP is grown at 3%. Retail AP has been flat for the month of August. ICICI Prudential Life, it's weak growth over a strong base. So the new business premium growing at 18%, total AP at 35%, but retail AP, that's down at about 13%. Axis Max Life Insurance, very strong growth, as I said, over a very strong base. So new business premium growing at 20% in the month of August. Total AP growing at 17% in the month of August. And finally, retail AP also seeing a growth of 16%. SBI Life, as I said, weak growth over a favorable base which the company had. So, of course, it had everything working for it. But still, in the month of August, the growth has been weak. The new business premium is up 23%. That is largely because of the renewal premium. But when it comes to new business premium, look at AP. That's grown by just about 1%. Retail AP has degrown, has fallen by about 4%. Finally, LIC, new business premium, that has come down by about 17%. Total AP down by about 0.2%. Retail AP down 5%.
Thank you so much, Yash, for joining us and helping us make sense as far as the August data for the insurance sector is concerned. But it's a good time to slip into a short break. We'll get you more on the markets and we'll focus on IOL Chem, Quality Power and RailTel on the other side. Stay tuned.
Your first reactions on this GST rationalization?
I see this as the most transformative step the nation has seen possibly in the last 50, 60 years. We will continue to be friends. We will continue to be engaged with the United States. And I'm sure we will continue to have greater economic relationships, defense relationships, greater interest in a safe fair and secure Indo-Pacific?
Can we trust China?
Now that we have been largely able to resolve the issues of disagreement with China, I think it was very natural that we should also reset our ties.
Welcome back to Midcap Radar. Well, quite a few of the midcaps are doing quite well in the session today. Have a look at 63 Moons. Now, this particular stock in the last 20 minutes of the session has perked up to the high point, now trading with healthy gains of almost 5%. It'll be interesting to see what is the news flow over here. Along with that, if you look at some of the other names as well, look at the midcap index. Tata Communication, yesterday did see some news flow in this particular name. That's doing quite well. Tata Com today amongst the top gainers as far as the midcap index is concerned. Glenmark Pharma, they've gone ahead and told the exchanges that they received the first milestone payment as far as the monetization of the important IGI molecule is concerned. Street clearly likes that, up over 3%. Ola Electric, again, this particular stock in the last 3 trading sessions saw a bit of selling pressure emerge, but today has recovered quite sharply. Again, cooled off a little bit from the day's high. On the other hand, quite a few stocks seeing selling pressure. The defense names, have a look at BDL, Bharat Dynamics, that stock near the day's lowest point. Also look at Geofin, has cooled off a little bit from the day's highest point. And UPL continues to witness selling pressure in the last few trading sessions. This particular stock has witnessed trading pressure. But a few stocks in focus on the back of news flow. Quality Power is one stock from the broader end of the markets that has seen some order inflows come in. Vamakshi is standing by to give us more development as far as this name is concerned.
Well, absolutely, Vivek. This stock is in focus today on the back of a couple of order wins. Now, keep in mind the company's step-down subsidiary, which is Endox Energy, has received 2 significant orders. Now, keep in mind that Quality Power owns nearly 51% of Endox Energy, which is a Turkey-based company, through its subsidiary Quality Power Engineering Products. This order is to supply fax system to a European customer for a steel plant, and both of these orders have a combined value of around 75 crores, and it will be executed over the next year. Now, how big or small is this order? Let's also give a perspective to our viewers. NDOC's order book stood at 175 crores in the first quarter of FY26. Now, this 75 crore order therefore accounts for almost 43% in terms of size of the current order book. So therefore, if you only look at NDOC's, it's a significant order win. Apart from that, the overall order book stood at 775 crores. So therefore, in the context of this overall book, which includes orders that came in for Quality Power, Meru, as well as NDOC's, this order accounts for almost 10% of the current order book. Now, how does this order actually translate to the profitability? We also did a back of the envelope calculation. Now, NDOC's had a PBT margin of almost 27% as highlighted by the management in the Q1 con call. Now, assuming that this order is executed at that same margin level, the PBT from this order could be at around 20 odd crores, and out of which 51%, which is Quality Power share, could be at around 10 crores. So this in turn is approximately almost 10% of FY25 PBT. So, just giving our viewers some perspective again, mentioning that this is the back of the envelope calculation, and this order win resultantly pushing the stock higher in trade today.
Okay, all right. Thank you so much, Vamakshi, for explaining that move to us. The stock, though, has come off from the highs of the day this month. It is up 20%, and in the last 2 weeks, it's up around 19%. That's about Quality Power, but RailTel is in focus as well. Winnie is here to tell us about the order wins that this company has received.
Hi, afternoon. So yes, last evening, post-market hours, RailTel received several orders amounting to a total of 713 crore rupees. Now, this order has come in from the State Project Director, Bihar Education Project Council. So this is from the Bihar Education Project Council that they've received these orders. Now, there are two big orders in this as well. One is for procurement, supply and installation of smart classrooms for government middle school, which is for around 262 crores. The other one is also related to procurement, supply and installation of smart classrooms of government in secondary school as well for 257 crores. So this amounts to around 500 crores. And then there's remaining smaller orders also that have come in from the State Project Director of Bihar Education, which we're seeing coming in. Now, other than that, do not forget, just a short while ago, we had seen one more order that's come in from IRCTC for RailTel as well, around 19 crores rupees. So keep an eye out on RailTel in terms for the orders that they've received in the last 2 days.
That's right, Winnie. A lot of orders coming in as far as RailTel is concerned. So that's keeping the stock active in an otherwise lackluster session. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. You're still tuned into Midcap Radar. A lot of stocks in the broader markets have seen a sudden surge, up maybe 20-30% in the last couple of days itself. This is a segment, Midcap Spotlight. Ekta is going to tell us what's happening with IOL Chemicals. What's the buzz here, Ekta?
Well, IOL Chemicals, seems to have picked up a lot of pace this year. It's up around 41% this year. It's buzzing today, and it was yesterday as well. Now, as of Q1, the company said that the overall demand environment remains stable, but pricing has been subdued for them. Paracetamol, which is one of their key products, that pricing was low, but demand is better than the pre-COVID levels. They are seeing good demand in non-ibuprofen APIs as well, such as metformin, paracetamol, pantoprazole. So they are seeing some amount of pickup, and in fact, they aim to diversify their API portfolio to 50-50 split between ibuprofen as well as non-ibuprofen. Now, paracetamol plant has commenced exports to Europe as well as other regulated markets. So that should probably also be a trigger for IOL Chemicals going forward.
Thank you so much, Ekta, for joining in and explaining to us what's actually driving the shares of IOL Chem higher in the last couple of trading sessions. Well, moving on, in an exclusive conversation with CNBC-TV18, Finance Minister Nirmala Sitharaman outlined the government's economic roadmap, highlighting GST rationalization as a key driver of consumption without compromising on fiscal discipline. Let's listen in.
There's more money given already through the income tax cut. Right. The rates are coming down. So the citizen now has a choice to meet his aspirations and his expectations. He cannot say, look, I have the money because the income tax is reduced, but these items are beyond my affordability. Now everything has come down. I'll give you this number which is important. 99% of all the goods and services which are touched by GST are now either in 0 or in 5 or in 18. That's right. With consumption going up, there's a potential for capacities to grow, investments to grow. It has an immediate psychological effect that I can do this, which was beyond my affordability. And therefore, I think there will be a buoyancy in terms of revenue.
All right, that's the word coming in from the Finance Minister. But even Commerce Minister Piyush Goyal says that the India-United States relationship is the most consequential. He said that India is a patient country and believes in dialogue and diplomacy amidst the tariff standoff with Trump administration. Listen in.
We have had certain blips, like we had the sanctions post the nuclear tests in 1998. Yes. I look at this only as one more situation which will pass as there's a deeper understanding of the reality of the situation. And I'm very confident this relationship will only strengthen in the years to come. It could happen soon enough. It may take some time. Irrespective, we will continue to be friends. We will continue to be engaged with the United States. And I'm sure we will continue to have greater economic relationships, defense relationships, greater interest in a safe, fair and secure Indo-Pacific. In some sense, it's a very multi-dimensional relationship. Issue that can hurt national interests, that can hurt the interests of our farmers, our fishermen, our MSME industry, issues which are sensitive with religious sensitivity. Those would be broadly the issues where India would need a more understanding when we finalize the framework of our agreement. And we will never compromise on the interests of our farmers, our fishermen, our MSMEs, or our religious sensitivities. Internal processes, legal processes in the US and will be sorted out by the US government. We have no role to play in that. But ours is an effort to reach a far more sustaining and long-term, fair, equitable and mutually beneficial agreement and partnership, and we continue to be focused on that.
Well, some very important commentary coming in as far as the Commerce Ministry Piyush Goyal is concerned. But having a look at the markets, the Nifty Bank has completely flattened out in the trade, now flirting in the negative territory. Nifty continues to hold on to gains of around 80 points. What are the stocks that are doing quite well, or the sectors? Well, the FMCG pack has made a bit of a comeback. So two names from there, Colgate-Palmolive as well as Tata Consumer. Both of these stocks have recovered, now trading near the day's highest point. Navin Fluorine, a stock that we highlighted earlier today, that particular stock has seen some buying emerge, especially in the last half hour of the session. So Navin Fluorine up almost 1.5%. ICICI Bank too has made a bit of a comeback, now trading near the day's highest point. And the entire mid-cap IT space and TechM within that stock is up almost 2.5%. Of course, Infosys continues to remain the top gainer as far as the Nifty IT index is concerned. But with that, it's all the time we have on this edition of Midcap Radar. Mutual Fund Corner when we return.
Hello and welcome to MF Corner. I'm Sonal Bhutra. With me as always is Vinny Motiwala, and there have been some interesting updates coming by in the mutual fund industry. A lot of interesting NFOs as well, and today that is exactly what we are going to be discussing with our two guests today. They are with us in the studio. But first up, let's talk about the discussion points. Winnie?
Absolutely, Sonal, just a couple of weeks back, we discussed the number of NFOs that have come in. Now, an exciting one that we're watching out for, and we're going to be putting the spotlight on Bandhan Mutual Fund's new fund offering. That's the BSE India Sector Leaders Index Fund. The new fund offering, which opened on 3rd of September, will close on 17th of September. So you still have time if you do want to go for it. Investors can actually explore this fund because why? This is a right balance with stock caps. Now, we will also talk about BSE India Sector Leaders Index as well with our guest for today. And we have Gaurav Parija, who's the head of sales and marketing at Bandhan Mutual Fund, as well as Mr. Ashutosh Singh, MD and CEO at BSE Index Services. Thank you, gentlemen, for joining us on the show. And, it's going to be exciting because everyone wants to know with these new fund offerings that come in, how should we go about it? And this is a good way to actually understand what this fund actually means and does this actually fit their portfolio. So that's going to be exciting. Now, Gaurav, let's start with you. What's the differentiating factor that this fund, that is the Bandhan BSE India Sector Leaders Index Fund, has versus other index funds in India? How is it differentiated?
Okay. Firstly, thanks for having us on the show. To answer the question, let me take a step back. Two things are happening in India. One, as the Indian market is expanding, the number of stocks being bought have expanded significantly. So 25 years back, you could get away with a portfolio of 100, 150 stocks. Today, you need to look at 800,000 stocks. That also means that the number of sectors you need to look at have expanded from the traditional IT, financial services to many more sectors. And that's the second thing which has come through. On the investing patterns, we now suddenly see a lot of interest coming for passive funds. And today, if you look at the assets under management, it's quietly grown to 5% in the industry, which is a significant move up. Now, where the BSE Sector Leader Funds differentiates itself from others is typically the most relevant sectors have been the BSE Sensex and Nifty 50. And they are very relevant still, but they would cover close to 30 and 50 stocks respectively across 15 odd sectors. Now, when we looked deep and did a little bit of research, what we found is that in keeping with India's times and the markets, you need to look at some sectors in addition to the existing. So, for example, realty is not present in any of the these other indices. And this is where BSE Sector Leader differentiates itself. It invests across 22 of the top sectors in India. It picks the top 3 companies in each of the sectors. And the beauty of that is every sector goes through a phase. Now, having said that, the top 3 leaders in every sector will continue to do well irrespective of whether the underlying sector is doing well or not. It also brings in a lot of risk measures that it caps the investment at 5%, the floor is 1%. So it's a beautiful combination of the leading sectors, the top 3 companies as per free float and market cap, and hence it's very, very different from the other broad-based indices. And for us, I think for a first go-to investor, this is a great way to start as a core investment.
So in this, you'll have the top sectors that are doing well and the top companies in that as well? How do you figure out the sectors?
We will pick up 22 sectors which broadly represent the
most of the
capital markets, and within each of the sectors it will pick the top 3 players in terms of market cap.
As they say, right, the majority indices or the major indices, they should reflect what economy is doing. And that's why we have to focus on different sectors. What was the thinking, Ashutosh, in that case to particularly launch this BSE India Sector Leaders Index? If you can take us through your thinking, does it cover Gaurav has mentioned some of it. What all sectors majorly would it cover? What were your thought processes behind it?
So, first of all, thank you for having us on the show. So there are 2 ways as an index company we launch new indexes. One is the product research team does scanning of the investment landscape. They keep looking at the existing product suite and they overlay the existing product suite on the existing investment trends, existing investment landscape, try to identify white spaces and launch products that kind of are relevant for the upcoming trends. So when we did that, we clearly felt that this index is a pretty strong one from a storyteller's point of view as well. Because in this index, like Gaurav said, it's a simple index with 66 companies on a higher side because in India there are 22 sectors. So there's a harmonized India industry classification structure which both exchanges follow. And in that, there are 22 sectors. The one way to get exposure to all 22 sectors would be to take an exposure to BSE 500, which covers all these 22 sectors. So we felt, if we launch an index that pretty much does the same thing, gives you a risk-return profile, which is very similar to a BSE 500, with a much lower number of stocks, and that too sector leaders. It will make the fund manager's life a lot simpler. Because, on every rebalancing 500 stocks, you have to have the whole paraphernalia. So given the challenges, operational challenges in managing a 500 stock portfolio, can be a headache for the dealer setup and the fund manager setup in asset management companies. So the whole idea was, why don't we give the market a offering
simpler
which has a very similar risk return profile to a BSE 500. In fact, the risk is slightly lower over different time periods.
Got it.
And return is also slightly superior. Okay. So we try to give a similar exposure to a BSE 500 with just 66 stocks. And these are like the best of the stocks. And I can...
Yeah, so basically it would be just going back and saying what you said earlier, it has lower risk than BSE 500 but slightly better returns than BSE 500. So I think if anybody has to compare, they should be accordingly going with this one if they're comparing between the two. But yes, to the next one.
And I think we did put up those graphics as well, in terms of the returns that when you compare it with the BSE India Sector Leaders Fund as well as BSE 500 and BSE Sensex 50 as well. Look at it. So you can see in terms of these are the number of stocks that are there, and then in terms of the returns also that come in. For BSE India Sector Leaders, it was, the top 3 sectors, weighted average was 30.2%, and top 3 stocks, the average was around, weight was 15.4%. So that is something that, is interesting to watch out for in terms of the exposure you get with lesser risk that comes in as well. Gaurav, the NFO that has come in right now, how does it fit Bandhan's overall portfolio as well, right? You all have different kinds of fund as well. So what is the broader approach? Because you were mentioning about passive investing coming in here as well. So what kind of investors are you targeting by coming out of this NFO now?
So again, excellent question. There are, again, 2 parts to it. Firstly, I think the thing we are trying to do at Bandhan is addressing the biggest debate, is it active or passive? So we are telling investors it is not active or passive. It is active and passive. The way we've approached the whole index fund strategies has been that we've split it into 3 broad buckets. One is the broad market index fund. So you have your Sensex, your Nifty 50, the next 50, the small cap index, the mid cap index, which should be the core of any investor's portfolio. Then you build what are called tactical or satellite themes around it. You could choose to go into thematics, which is IT and healthcare and consumption and materials and all of that. And what is coming through and evolving very fast from an investor's appetite perspective is the interest in factor-based funds, which is your alpha, low vol, quality, momentum. So the way we would approach this would fit in is my broad-based market indices, which is your go-to core strategies of either a Nifty 50, like you said, BSE 500. That's where this fits in. And you build this as a core and then work on the themes around it.
Okay, so then coming on to this, what is the methodology for constructing this particular index? What kind of weights are you taking? And so many stocks from 500, you're narrowing it down to 61. How do you go about that?
So the approach to this one is not very different to the way we create other indexes. So the starting point is always you select a universe. So in this case, the universe is BSE 500. For most of the broad market indices, the starting point is the market cap. You just look at the market cap, you select the top 30, top 50, top 100, so on and so forth. Whereas in this one, the uniqueness is the starting point is the sector classification. So basically, like I said, in India, there are 22 sectors. You're selecting the top 3 companies by market cap from these sectors. So in theory, you should have 66 companies.
Correct.
22 into 3.
Yeah.
However, there are 5 companies which are outside BSE 500, which is why they don't make the cut.
Got it.
That's how you basically have a, you have a portfolio or index composition, 61 constituents. And the other uniqueness that you're trying to bring in is the whole point on diversification and reducing concentration. Because here we have a floor and a ceiling. So no stock in this index composition is above 5% and nothing is below 1. So you're avoiding the problems of concentration. Neither do you have stocks that are there in the index just for symbolic representation with a 0.1 or 0.2% weightage. So the minimum weightage you assign to a single stock is 1, and on the higher side you have 5%. So it gives you diversification, avoids concentration, gives you the sector leaders, which is why you have a good risk-return profile on the index.
Just a follow-up, I want to know, what is the division in terms of, the market cap as well, right? Large cap, mid cap and small cap in this BSE index.
That's a very good question. So while, like I said, it's a storyteller's delight, this index, because the positioning is that of a sector leader, large cap oriented, which it is. About 81% of the portfolio at this point is large cap. But there are certain sectors in India that operate in the mid and small cap space, which is why you also have a nice sprinkling of mid and small cap in the index composition. So about 19% would be mid and small. And that's what helps you, generate a risk return profile, which is very similar to 500. Because you also have a 18 to 19% mid and small cap exposure.
Got it. Mid and small caps could become the next day's large caps. So maybe you have to have some of them, of course, goes by the fund manager's discretion as well. It's a very interesting conversation, but we have to slip into a quick break. On the other side, we'll continue our discussion and understand about this NFO and this index in particular as well. Stay tuned for that conversation.
I'm sitting here in the heart of India's financial markets, the National Stock Exchange, a fortress of technology and trust, a place where billions of dollars of trading is executed across equities, derivatives, commodities in a microsecond. But beyond the tickers, the symbols, the charts, today we go behind the scenes. We look at surveillance rooms, IT infrastructure, cybersecurity, and of course, the National Operations Command Center. And we do all of this with NSE's current MD and CEO, who was also instrumental in setting up of the exchange, Ashish Kumar Chauhan.
Welcome back. You're still tuned into MF Corner. We still have with us Gaurav Parija of Bandhan Mutual Fund and Ashutosh Singh, MD and CEO at BSE Index Services. And we are discussing the NFO by Bandhan, which is in BSE Index Services. We've been discussing the constituents, how this particular index was formed. Now to more questions, because now what does it mean for investors really? So Gaurav, let me come to you, because we want to understand what does it mean for retail investors when they go about investing in this particular NFO? Why should they? And what are some of the innovations that are expected in sector-based funds? What does it mean for a retail investor?
So quite a few questions in one. So let me take them one by one. I think from a retail investor's perspective, like I mentioned, this should be the first go-to strategy if you're looking at a broad-based market participation. Like both of us have been saying, the number of stocks in India have expanded, the number of sectors you need to look at have expanded. So to get a true flavor in investing across India's capital markets, I think this is a great opportunity to look at from a retail investor's perspective. To give you an example, financial services in most indices would have a very large market presence, so close to 25-30%. Here, financial services is 15. Some sectors like realty, textiles are not present in the other sectors. An investor gets an opportunity to buy into these sectors. What we are seeing from an investor interest perspective is, like I said, depending on the theme and mood, while the core is still the broad-based market indices, which is Nifty 50, BSE, Sensex, small cap, mid cap, a lot of interest is coming into the new age factor-based funds, the alpha, low vol, combination of alpha, low vol, momentum. In terms of innovation, I think we firstly believe that whatever you do as a theme has to be sustainable. It's not that we find a very fancy name, we'd want to launch it, because if the theme is not sustainable over 5, 10, 15, 20 years, the investor experience and returns is clearly not commensurate just by having a fancy name. So we look at themes which are scalable, sustainable. In terms of index providers innovation, now the whole world is talking about AI and quant and machine learning. I think at some stage the index providers need to look at using those algos and models to put up indexes which try to fine-tune their models or the underlying stocks basis more quantitative methods. So those are the new patterns we continue to believe. Having said that, I think the core would still be the plain, vanilla, boring, simple indices, which will give you returns over long periods of time.
But now I think, those indices are also changing. Now, where we had quick commerce that was trending 10 years ago. So that is also, would you all factor it in, coming in the index as well? How do you all change going about it as well? And in terms of overall, what is unique about this factor of BSE index?
So let me take the back end of the question first. What is unique about this one? One is the starting point itself. In most of the indices, the starting point is, like Gaurav pointed out, it's market cap. You just take the top 30, 50, 100 on market cap and you assign weightages basis free float market cap. In this one, the starting point itself is sectors. So that is one thing you've done. And the second unique aspect that we've tried to bring in here is the whole ceiling and floor. So while some of the broad market indices, could have certain constituents that are in the corridor of 13-15%, and the lowest ones could be 0.2, 0.3%. So you have a wide disparity between the top constituent and the bottommost constituent. In this one, to address that very problem, we have a floor. We've introduced a floor and ceiling, where no one is below 1 and no one is above 5. So these are unique things that we've done in the index. And sorry, what is the second question?
I wanted to know, so because there are so many new trends, right, that shape up, whether we talk about using AI, but AI is also where you can invest in, and companies focusing on that. Or whether you talk about quick commerce, fintech, which now are becoming larger than life when you talk about it, right? So how does that come into play as well, right? Because they may not come in market cap or top sectors, but then how do we move about it?
So this is a very good question, and it actually plays to my advantage, because in the last 1 year, we've launched a lot of themes and factors. And, the whole reasoning is just that, you look at the investment trends playing out, you look at the investment landscape, you see where the flows are. And basically to address those white spaces, you launch newer, fresher indices, which is what we've done through consumption index, through clean technology index. AI, unfortunately, there are not, at this point, there are not too many companies that are listed in the AI space, which is why we don't have an index specifically on AI. But yeah, so the whole idea is keep scanning the landscape, investment landscape, and wherever you find opportunities, launch indices. And in fact, I think in the last 1 year, we've done a pretty solid job of launching a lot of themes and factors, which is actually also seeing a lot of uptake by asset managers, whether it is insurance companies or mutual funds, having conversations with foreign asset managers too. So yeah.
Thematic funds, they were the talk of town last year, and they continue to be so. But Gaurav, when it comes to launching a new fund is one thing, but then it goes through various layers before it reaches the retail investors as well. You have the distributors, you have your own company. So how do you go about it? What's the process? How do you educate them about a particular index? How does it work that you ensure they make informed investment decisions? One is launching a product, but we have to ensure that retail money is made in that process.
So there are two broad segments we cater to. One is predominantly my partners, which you likely said, MFDs, key accounts, RIAs, and all of that. And the second is your B2C, your direct investors. For the later segment, the direct investors, you just need to log on to www.bandhanmutual.com and you'll see a host of information, be it video reels for the new age gen, separate thought leader papers, to all sorts of stuff and information on what is index funds, types of index funds, passives, and all of that. From a distributor perspective, we've clearly carved out, again, very intensive training programs, questioning or answering the basic question of active or passive and active and passive. Secondly, trying to help them understand how does passives fit into their overall client's portfolio, helping them understand what are factor-based funds, helping them to that extent. We are the first mutual fund actually to carve out a separate fact sheet for passives. We hold multiple webinars on ongoing basis. And what we find, like I said, is the participation of distributors in passives is seen a massive growth over the last 3-4 years. So much so that there are a host of distributors whose sales in passives would be close to 30% of their overall sales. So that's clearly shaping up as being one of the core components of their overall portfolio.
Gaurav, just a quick one. Since this, fund which is coming, that's mainly focusing on large cap side, right? Higher portion of large cap. How are you viewing the valuation? How would you, attract an investor to come in terms of returns point of view? What could one watch out for now?
So it's a tricky one. I don't want to get into the valuation question, but see, given the fact that these are sector leaders will typically always have a little higher valuation than the sector. Over a period of time. But typically people look at valuation from a P perspective. And one thing we want to call out is P is just one of the parameters to consider buying into a stock. Many a time a high P stock doesn't mean it's not going to give you returns, and vice versa, a low P stock doesn't mean it's a great buy. Having said that, if you have to look at current valuations, as of July, the P of the sector leader index was 24.84 against the broad-based BSE 500 at 24.3. It's not that it's superbly overvaluated, but people need to understand that when you buy the leaders, you have to pay a premium for owning them, and that's how you have to approach it.
Okay, all right. Take that point, Gaurav, and thank you so much, Mr. Singh, for joining us today and giving us all the details about the NFO, the index. There's so much to learn today, and understanding the methodology of creating an index as well. That was a new one. So thoroughly enjoyed this conversation, but with that, we'll take your leave on this edition of MF Corner today. Stay tuned for Closing Bell to take you through the last hour of trade.
beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
It's a relatively positive start for the Asian markets, continuing from where Wall Street left off last evening.
If I were in the room, I would say let's move ahead with a 25 basis point cut in September.
24,522 is the low that we saw, and I think as long as the market stays above it, I think hope that the market continues to see some repair and recovery. It's a pretty good start, all told, this morning.
I would agree that we're still in the slow burn phase of this market.
We're not affected or impacted positively or negatively by the GST.
The dollar's weakened considerably in the last 24 hours, as it has been doing all of this year.
Nifty, yes, it is off the highs, but IT is the one which is keeping it in the green today.
It's unlikely the company will exhaust all the cash balances for the buyback.
Yeah, it's been a couple of dozen times that gold has made all-time highs. Today, yet again, we've seen $36.50 an ounce being taken up on the higher side.
For the markets closer to the day's high, we started on a choppy note, but then we saw recovery. Nifty now above that level of 24,850.
Well, that is the day so far, and it has actually been a pretty decent session all told. Market, of course, up 100 plus points, almost at about 24,900. This is Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant Surabhi, and Rima with me here in the studios. Nigel is joining us from the newsroom floor. Guys, good afternoon.
Hi, good afternoon, folks. And we have IT to thank, Rima, isn't it?
Yeah.
I mean, Infosys has inspired so much confidence.
You all were blaming the tech sector. I think in the last 10 trading sessions, in 9 of them, it was a drag.
Yeah.
Today, it's like covering up.
Then
lost
IT
ground.
stocks came and said, hey, guys, don't forget, show me the money. I have the money. So that's what we're getting from Infosys.
No,
Indeed, and we've got the weekly expiry that plays out as well. So, 100-point gain is what we're holding on to. If we can get to 130, 140, there's a weekly expiry factor that could play out as well. So let's see whether or not we can conquer the higher levels or in fact, the bears want to fight back. Interesting 60 minutes coming up, though otherwise it's been a bit of a dull day, I think so. Not too bad after a while.
Shooting stars, Nigel, right here and there. Some 3, 4, 5 stocks up 10% out of the blue. Kind of hard to explain what's happening individually, but we will try to. We will try and look at some of these movers over the next 60 minutes or so. 24,500 roughly is the level. 24,980 or so is that level, which the market needs to get above for more upsides from here. So till then, I think people will still lament that maybe this is still ranged and contracting, etc. Nifty Bank, the last I saw, there isn't very much enthusiasm at all. Actually, if it's barely managing with a 60-point bump, it's barely managing to keep its head above water. It's absolutely flattish at this point in time. As Surabhi said, as Rima said, IT, of course, 2.6% gain. And I think bulk of the Nifty weightage, what's moving the Nifty, that table comes up, it should be largely predominantly IT services. And by the way, it's not as if, all stocks are up in a big way, but Infy is up, of course, 5. TCS is pulling its weight. Tech Mahindra, Wipro are up in the region of about 2.5% as well. So that's the picture as things stand right now. Lots coming up here in the next 60 minutes. So IT stocks, of course, is the top story, and Rima will talk more about that in just a bit from now. So that's helping the market keep above 24,800, closer to 24,900 now. PSU banks, Bank Nifty, etc. under pressure. Real estate counters also. So that is what is coming up in a bit. So Infy will sort of dissect in some detail as we come through. Life insurers are in the spotlight. So general insurance numbers came through. We put it out yesterday. Yash will talk about life insurance and individual companies where some companies have showed weaker numbers, some have been stronger. IOL Chemicals, big 30% move in September. 6-7 trading sessions? What's happening there? And Ekta perhaps joins us in a bit to take us through that.
Okay, how should you position yourself in the last hour of trade? We've got Mitesh Thakkar from Bonanza Portfolio joining in with a few closing strategies. Mitesh, afternoon. We've been quietly creeping up today's trading session. Now 100 points up on the Nifty. Last 1 hour to go. What would the trade be? And throw in your thoughts on Nifty IT, since that's been the leader.
Okay. In fact, I was going to mention the Nifty IT because I think that's where a lot of stocks are giving a reversal. A lot of IT stocks are giving a reversal. But just on the index first, the Nifty IT made a low of around 34,200, 250, which was way back in the first week of August. And then we kind of got the same level yesterday. So it looks like an early double bottom kind of formation. We'll get a confirmation at slightly higher levels. But the indicator setup and the overall price chart does look positively biased unless until you break 34,250. Good chance that the Nifty IT could head towards 36,500, which gives it another 1,400 odd points on the upside. But with that, I have a buy on Infosys. Buy here with a stop just below 1480, targets of 1535. And the other one is Titagar Wagons. I think Titagar, that's given a breakout above a declining resistance line. So buy here with a stop at 860 and look for a target of 920.
Okay, all right. Thanks a lot for that, Mitesh. Both those two doing quite well. Infosys, that's really the big one for today. Titagar's Rail Systems as well, looking up. Dharmesh Kant, Head Research, Chola Securities, joins us on the show. Hi, Dharmesh. Good to see you, Ben. Well, I think, Dharmesh, the last time we had spoken about a few of these auto names, and I think you hit the nail on the head. Hero MotoCorp, if I'm not mistaken, is what you liked, and Mahindra. Now, the auto index itself has done quite well, and the street is very optimistic. Second half of the year, we're going to see good amount of sales. Things will look up. Do you still like some of these names, and what would your top two picks be in the auto space?
Yeah, good afternoon, Nigel. Thank you so much for remembering the picks out there. I think most of the upside run-up has been done in both Hero MotoCorp and Mahindra. A couple of percentage points may still be there. But at the same time, downside seems to be pretty protected till the October numbers are being rolled out. So till say first week of November, you are in a safe territory if you are holding these companies, and we continue to recommend our clients to hold the same. We are looking at auto ancillaries now in a more meaningful way, and there are a few names which are standing out. Jamna Auto was one which we have flagged earlier on your show as well. There, I think more traction is likely to be there going forward. Along with that, some of other auto ancillary names like Motherson, Sony Wiring, which are purely domestic focused kind of a company. Uno Minda stands out again there. So the only caveat out is the valuations are still not reasonable. They are extending towards +1 standard deviation of their historical averages of 10 years. Having that in mind, but we think that this hope trade which is piling up, and hopefully our dealer checks does suggest that October month would be good. So this momentum is likely to carry out there, and thereafter we'll take a call. So these are the few names which we are focusing on as of now.
Okay, let's talk about IT, and just a quick word on Infosys and the big news here. Infosys board will be meeting on 11th of September where they will consider a buyback. This would make it the company's 5th buyback since its listing in 1993. The question is, how much will the company buy back? According to a lot of estimates, like Morgan Stanley's put out, the company is likely to buy back between 10 to 14,000 crore rupees. So, some of the other analysts I spoke to also have their estimates between about 12 to 13,000. They're unlikely to go all the way up to 25% of the net worth, because that would erode the entire cash that the company has, which is nearly 25,000 crore rupees. Now, generally, a buyback is positive because it signals confidence, in the minds of the company, the promoters, about the share value. But here, just remember that from now on, it will always be a tender buyback. Open market buyback is no longer permissible. And even on buyback, there has been a lot of changes on the taxation front. So you should get a hold on, before, just to understand the kind of tax you will pay on the amount that you receive from the buyback. The last 3 buybacks have happened were open market buybacks at a price of close to about 9,500 crore rupees. And both TCS and Wipro are eligible for a buyback.
Yeah, absolutely. I mean, that taxation change is important, right? Because it was felt that there is an arbitrage between the way dividends are being taxed and buybacks were seen as a more tax-efficient route, which is why a lot of companies moved from giving out dividends to buybacks. But that also got plugged in the budget last year, because now even dividends, they are even buybacks. The income from a buyback is treated the same as income from dividend. It's just the cost of acquisition of shares. That can be set off as a capital loss. Yeah. So therefore,
maybe in some time we'll just put out the math behind it, right, and explain to our viewers how the buyback has changed.
Yeah.
So in just some time we'll try and get the math up.
We'll do that. In the meantime, let's go back. Do we? Okay. Let's actually in the meantime let's ask Dharmesh. The buyback aside, I mean, today it's working so well for Infosys, 5% up. Dharmesh, I mean, I don't know, is this a bit of a no-brainer that for what it's worth, you look at a buyback? Rima saying in all likelihood it's going to be a tender buyback now. That's the way it works. What would you advise, people? Is this the time to buy Infosys just to play on this tactical move?
Yeah, good afternoon, Survey. No, I don't think it's a time to play a fresh buy into the stock. If you're invested, then you have an option to take a call. What it does provide a hope and to negotiate next couple of quarters to see if things are turning around on the business front. And I think Rima did a show in the morning where she was suggesting that around 5.5 lakh or 5,90,000 odd crores of buyback was done in the last 5 years. If you put that in context to what the acquisitions these companies have done, around 30,000 odd crores, all top 4 or 5 companies put together. So even inorganic route opportunities not available with them. At the same time, if you look at the dividend payout of all these companies, anywhere between 50 to 90% is kind of a dividend payout is rolling by. And on the business front, hardly any movement, mid-single digit kind of traction is there. So it's fatigue, saturation, everything is setting in. At the same time, light at the end of the tunnel is not visible as of now. So in the meantime, it does provide a floor, but I don't think things are going to turn around fast for these large cap companies, at least for 2-3 quarters down the line. So if you are hopeful and your study suggests that after that things are going to turn around and you want to play the wait and watch game, then it's fine. Otherwise, to our mind, it's more of an exit and take your profits and be out of the table on the large cap IT stocks.
You know what Dharmesh was referring to? So Morgan Stanley said that from 2017 to up until now, what has been the total amount the large 5 IT companies have paid out via dividends and via buybacks? And the number stands at, wait, let me just get that up. As he said, close to about $70 billion. And in lakh crore, it's 5.9 lakh crore rupees. So nearly 6 lakh crore rupees has been paid out in the last 8 years from 2017 up until now. And that is close to about $70 billion. Just to, because we've been making so many arguments. I mean, there's been a lot of criticism on whether Indian IT companies should have deployed that money into deep tech, some sort of a startup, instead of repaying shareholders, rewarding shareholders. And plus the $70 billion is assuming today's dollar rate of 88. In 2017, 2018, when they were making those payouts to the shareholder, the dollar value was a lot lesser. So I guess if you just, account for that, maybe the number would have been closer to about a lot higher than what we're talking about. So 5.9 lakh crore rupees.
But that's what we asked Sandeep in the mornings of, Sovilio, that whether this money could have been better used. But that's the point that he was making, that AI valuations have also gone through the roof in such a way that even if you take all the cash that all the IT companies in India put out, which is just under 6 lakh crores, there's nothing you can buy in the market. I mean, at today, maybe 10 years back, if you'd started, maybe some good, AI startup, but just the way things completely turned around post-COVID, the NVIDIA story. So, well, we wait in hope. Till then, there are the buybacks.
In the US, for example, right, buybacks, I think there's been lots of analysis done to explain what percentage of US's outstanding performance is explained by, things like EPS growth, P multiple expansion, and how much is explained by buybacks. I mean, essentially, what is a buyback, right? You're reducing the outstanding quantity of shares in the market. So the profits distributable go to that much lesser number of holders. I mean,
lesser number of outstanding shares.
So a lot, I don't have the number, but I think it's a very large figure in the US. Almost 70%, I think, from 60-70% is explained by buybacks in the US. But of course, they've been doing other stuff as well in terms of investing in technologies, etc. So it's a debate which we will keep having. Let's also talk about the other story, right? I think this is coming in from our sister network, CNBC Awaaz. Yatin is exclusive. Yatin tells us there's a block coming in Kotak. Yatin, take it away.
Good afternoon, Prashant. Now, talking about Kotak Mahindra Bank, sources have indicated that brokerages have approached mutual funds and FIIs for a potential block deal in Kotak Mahindra Bank, and the shadow book building process has already started. We understand that Sumitomo Mitsui Banking Corporation,
which recently has announced its intentions to buy a big stake in Yes Bank, is looking to sell its entire holding in Kotak Mahindra Bank. Currently, Sumitomo holds close to 1.65% stake in Kotak Mahindra Bank, which is valued at close to 6,500 crores. And they want to completely exit this particular investment so that they can fund the Yes Bank deal, which is already underway. So yes, this block deal is expected anytime soon. When we tried to contact Sumitomo Mitsui Group for this story and their comments, they have not yet responded. But yes, this 6,500 crores block deal can happen anytime, and brokerages have already initiated the process to execute this particular block deal in the market.
Yatin, thank you very much. That's an exclusive story, and we'll keep track of this. Dharmesh, any thoughts on Kotak? I think there was a note yesterday from, and we had, by the way, Suresh Ganpati. It was a note from Suresh, if I remember correctly, asking the question whether Kotak is it time to give Kotak a relook. I don't know if you have any thoughts here, Dharmesh.
Yeah, Prashant, I mean, good for Kotak if this deal goes through, because this quarter, when the other income would be reported, there would be a significant loss because of treasury, loss getting into play. And if the deal goes through before 30th of September, so some of it will be negotiated through the income coming on this deal sale. Other than that, I think, the businesses for all private sector banks will be in a tough spot in Q2. One is because of the loan growth has not been there significantly. They all have been focusing more on the secured book across the board, be it public or private sector banks. So there the trouble is there. NIMs will definitely contract this time around as well. And Q3 is when they will be looking for some uplift in the sentiment. And on top of it, you are having this other income reversals coming into play. So net, we are expecting only 4-5% kind of growth trajectory as profitability is concerned. Same on the lines of Q1. But as far as the long-term trajectory is concerned, I think if you are looking at from a 1 year, 2 year kind of a perspective, so any decline out there because of such results when they are reported is an opportunity to buy and stay invested in a large cap, private sector place like Kotak, ICICI, and Axis Bank.
A bunch of quick ones, if you will. Any thoughts on Prime Focus's 30% move, Dharmesh?
Yeah, Prashant, it's a surprise move which has come through. If you look at Prime Focus for the last 4 quarters, the operating profit has been good with margins, into early 20s, 22, 23% kind of a margin. I think this move is more to do with, just a wild guess, maybe something to do with financial re-engineering or restructuring, because the debt which is sitting on the balance sheet is quite high. 750 crores of networks as opposed to that 850 crores of debt is there. If some fundraising is being done through equity route, where this debt can be hived off to some extent, it would add their profitability in a big way. The business otherwise is doing nice for them. Only the debt is the concern out there. So maybe this move is something to do with that. I'm not very sure on it. It's just a wild guess which I'm throwing now.
No, the other one is a bunch of the, as I said, right, big moves. Precision Camshaft is another one. 18% is the number one volume-led gainer on the NSE right now. Should come up on your screen. 259 on it. There is Fluorochem, Gujarat Fluorochem, 9% move, and it's got huge volumes right now. Action Construction Equipment will come up on your screen. There you go. ACE, Action Construction, 7%. Again, some 4th largest NSE volumes overall. Sula has been having a bit of a move. I'm not sure, from about 250 to 280 in 2 days. So 8% move on Sula. Prime Focus we already spoke about. And look at something like a Bluestone. Bluestone has got it's a recent listing. And 10%, I think about 10, 12 days old in the market. 12% move, $660. And that's, of course, in the organized jewelry space. It's a newer, not a newer player, but newer listing in that sense. Let's actually talk about precious metals, right? And take a segue there. Manisha is joining in with what's happening, what's driving this, record run as far as gold is concerned. Silver not very far behind. Manisha, take it away.
Well, thank you for that. Yes, we've seen gold prices scale up new record highs for a 3rd day in a row here. And every day has been a $20 to $50 of a move that we've seen happen in case of gold. With the kind of run-up that we have seen, gold is making all-time highs, not just in US dollar or Indian rupee, but various other world currencies as well. So when you look at the last 12 months, well, we've seen 45% a piece of gain, both in case of gold and silver. For the year 2025, gold is up 39%, while silver is up 43% as well. Well, the support continues to come in from the fact that the markets have totally priced in a 25 basis point of a rate cut from the US Fed meeting in the month of September itself. Well, there is even 10-15% of a probability of a 50 basis points, something that the markets definitely are discussing. And then you have seen all US data come in on the weaker side, whether it has been about jobs numbers, home, credit cards, even the debt situation that the Western world seems to be dealing with. The better smart money seems to be moving in case of precious metals there. So there's quite a bit of a buoyancy that we've seen happen in case of these PGM metals. The second point really is that the weak economic data is not just about US, it's also about China and much of European Union. The street also is now looking at weakness in US dollar index and expected weakness going forward as well. And if you look at the gold buying right now, the investment demand is quite strong in sense of physical. Gold actually, even as it's trading at record highs, it's trading at a premium in the physical markets in US and many parts of Asia as well. So every time you see a bit of a correction coming for gold, all the people who have been sitting on the sidelines thinking they lost the buzz immediately get in. Is the reason you aren't looking at a very sharp correction in case of gold, because a little correction and you start buyers come back into the market, and that's exactly the kind of scenario that we are looking at. Expectation is that going forward by the end of this year, you perhaps could be looking at $3,800, even $4,000 an ounce. It really is a guesswork into the markets right now, because the way we are running up in case of gold, these are uncharted territories, and the global banks and brokerages are just about revising their upward targets in case of gold right now.
Thanks a lot for that, Manisha. And we have our own advisor in the newsroom, who's Manisha, over the last many years, telling us gold is the asset to look at. So Manisha split down the middle between gold as well as the Bitcoin. I don't know whether I got enough of gold, but your advice has helped. Thanks a lot, Manisha, for joining in. Well, sticking with the theme then, earlier today we spoke to George Alexander Muthoot, the MD of Muthoot Finance. Let's listen in to what he had to tell us.
Overall, we see that the cost of funding is coming down. And as usual, that's our practice, the Muthoot Gold Loan Company, Muthoot Finance practice, that whenever the cost of funding comes down or cost comes down, we pass on the benefit to the customers. Net interest margin has been in the range of about 5.5 to 6. I think we should be able to maintain that between 5 and 6. We may be able to maintain that also. During the second quarter results, when we are announcing, we should certainly give a revised guidance, which definitely will be more positive and probably which will reflect on what is happening and what is going to happen in the next year. Certainly, it will be a better performance this quarter also, and we hope, and I'm sure we'll be able to continue what we were doing last year with regard to the guidance.
Well, gold's at a high, Muthoot's at a high, and doing very, very well. We'll take a quick commercial break. Dharmesh, thank you very much. Always good speaking with you. Good conversation. We're going to take a break, come back, and Atul Mehra will be with us from Motilal Oswal Asset Management on the other side. We pick up on some of these sectors, trends, and markets coming up. Welcome back. Markets, of course, at a headline level looking good, 100 plus points, but lots of shooting stars. And Hormuz is here to spot some of them and tell us the action behind them. Hormuz, take it away.
Shooting stars, some of them with low free float, some of them springing up in the last few minutes as well. We start off with the PSU name first, is ITDC, the Indian Hotels and Tourism Development Corporation. The biggest single day gain and the highest volumes you're seeing on the stock since the February the 1st of 2024, which was the interim budget day. That too, on that day, the stock was up in a 20% circuit, as is today. And before this move today, in the last 12 sessions, the stock had gained only thrice. And today's session, we've already seen more than 25 lakh shares that have been traded for this 20% upper circuit. The 20-day average of this stock is only 10,000 shares. And courtesy of this one-day move, the stock has broken above all of its key moving averages, be it the 50, 100 or the 200-day moving average. Not just that, the stock has also turned positive on a year-to-date basis, continuing its trend of delivering positive annual returns since 2020. Of course, the returns are in single digits over the last couple of years, but positive nonetheless. And of course, talking of low free float, the government owns 87% stake in the company, so you need to keep that in mind as well. The other one, of course, is Sula Vineyards. The stock now 8% higher, the biggest single day gain you're seeing since January of 24. 5 out of the last 6 sessions, the stock has moved higher. Today, significantly high volumes, more than 1.1 crore shares have changed hands. Daily 20-day average of around 7.5 to 7.75 lakh shares, broken above its 50-day moving average, and the next level on the upside is 287, which is the 100-day moving average for the stock, yet remains an underperformer, down 31% so far YTD, and well below its IPO price of 357. Name that has sprung up in the last few minutes, Lakshmi Organic, has a second day of gains for the stock, 9% higher now here, and more than 60 lakh shares that have changed hands. 20-day average is 20 lakh shares, and over the last few days, the stock has continued to find support at its 200-day moving average of 206, and from there, it has reversed even in today's trading session, yet remains an underperformer, down 5% so far this year, and has negative returns every single year since its listing in 2021. And lastly on the list is Gujarat Fluorochem, and this 8.5% move, the biggest single day gain and the highest volume since September of last year. More than 14 lakh shares have traded today, and this is compared to a 20-day average of just 50,000 shares. The stock has moved above its 50 and 100-day moving average today. The 200 DMA on the upside comes up to levels of around 3762, and the stock yet again is an underperformer this year, down 12% so far, and also the returns in the last year was a gain of 12%. So the returns over the last 2 years have basically been zero for this stock. Gujarat Fluorochem 8.5% higher today.
Okay, Hormuz, thank you very much for that. That's a list of stuff which is moving around very aggressively. Some on pretty small free float, but volumes, of course, significant. Atul Mehra is with us, fund manager, Motilal Oswal Asset Management. Atul, good to have you with us here. Thanks for joining in. In the large cap fund, Atul, it's all some 20-25% weight in financials, right? So that's the one space, clear way that you're very overweight. We were having this conversation with somebody earlier in the morning as well. Not sort of a huge underperformer or neglected space in that sense, but yeah, relatively, it is an underperformer. What's your sense, Atul? Is it a economy-wide? These are economy-facing large sectors. If the economy's got to turn, instead of picking this or that sector, it should show up in these in financials in a significant way. But having an exposure to your HDFCs and ICICIs, you think that's the right way, or maybe more focused, like a housing finance or specific areas where you think there's perhaps more delta?
Yeah, hi, Prashant. So in terms of financials, I would say that if you look at it from the perspective of last 12 to 18 months time, the larger cap financials have actually outperformed. Like many of the HDFCs, ICICIs, they've had a 15-20% outperformance over the benchmarks. So what we are seeing within financials as of now is the larger banks and so on, they are kind of insulated from the current in terms of asset quality issues that you're seeing, which are more pertinent to the smaller names within the financial services space. So that is something that is very peculiar at this point in time. So hence we believe that even at the current in terms of valuations, in terms of a lot of these names are very reasonably priced. And I think, like we've discussed in the past, a lot of financial names are highly correlated to foreign flows. So like we've seen in the last few months, FIIs have again turned kind of net sellers. And a lot of that brunt is felt on the financial names. So I think once things kind of stabilize, you'll start to see them kind of in terms of improve further in terms of returns and so on and so forth.
Atul, hi, afternoon. Was just looking at the key holdings of your large cap fund, and we should just get that up. HDFC Bank, ICICI Bank, Reliance, Bharti, Infosys, L&T, SBI, ITC, TCS, M&M, Kotak Mahindra Bank, and Maruti. That's a quick run through. But some of these, pure consumption names like Eternal, it's a part of your large and mid cap fund, but it's missing in the pure large cap fund, or a Trend, or a Titan. These are absent as a part of the top holdings. Can you explain that?
Sure. So although we own some of these names as well in the portfolio, and even in the large cap fund, what you see is the weights in the fund for some of these stocks are on the lower side as compared to the larger holdings like you spoke about. So many of these names we own it in the portfolio, but they are not as large weights because the thought process is that basically you need to assign in terms of active weights to names where you see a significant kind of outperformance potential. And hence, the better way to look at it would be more from the perspective of active weights rather than in terms of absolute weights, because some of the larger names like HDFC and so on, like they're also pretty large in the benchmark itself. So that is the kind of thought process. Like so look at it from the perspective of active weights rather than absolute weights, because they are a large part of the index itself.
Atul, hi, good to have you on the show this afternoon. So I was looking at your large and mid-cap fund, where if you look at some of the top holdings, top 5-6 holdings, you have a fair play, on the consumption side through something like an Eternal, the new age platform companies. You also have, of course, industrials. I think there's CG Power, there's also Siemens, which is on your list. I think there's also Amber. So, a lot of plays on the manufacturing and the industrial side as well. Now, with these GST cuts happening, are you making any overall pivots in the portfolio, say more in favor of consumption, taking some money off the industrial side, or not? Basically, how are you balancing the two sides of it?
Sure. So in terms of sector-wise, if you look at it, consumer is an overweight, telecom is an overweight, industrials at the margin, I would say, is slightly tilting towards underweight. So that is the current positioning. And what we've seen even from the top-down perspective is in a lot of the government actions we've seen in the last 12 months, the bias is towards reviving consumption, either in the form of income tax cuts that we saw about a few months back, and now with the GST rate cuts and so on. So the government bias, top-down bias, is also tilting now towards consumption, and they want the results more in the near term. And if you look at it from the perspective of capex, then capex tends to play out more in the medium to long term. So the top-down tilt, even from the government perspective, is tilting towards consumption, and our portfolios are also aligning towards that theme.
Okay. Got that sense. Within consumption, since you said that that's an overweight for you, and that's a very large basket. So can you drill it down a little further? And these are not trading calls we're talking about. Someone who's getting into the fund is, you're obviously looking at it from a medium-term perspective. So what's going to be your order of preference? Auto, FMCG, consumer durables, hotels, footwear, value retailing. It's a very large universe. Absolutely. So just give us your order.
So the order is more at the top-down level in favor of discretionary over staples, because see, a lot of, in terms of rate cuts, etc., like we've seen on the taxation side, we believe that they will tend to benefit the discretionary aspect of consumption more than the staples, because staples, by and large, I don't think there is going to be any major elasticity of demand at a 5% lower price point. So the overall tilt is towards discretionary than staples. And within that, obviously, the biggest beneficiary so far, like we've seen even in the stock prices, is on the auto side. But even consumer durables would be a space which would start to revive, I would say, in the next few weeks as the festive period starts to come about. So autos and consumer discretionary in the form of durables, those remain the key, I would say, beneficiaries. Staples would, I would see, like limited elasticity of demand happening over there.
Thank you, Atul, for joining in. Great conversation as always. For the market still up nearly about 90 points. Let's find out what the futures and options trend look like. It's also the weekly expiry day. Nigel's at the F&O desk.
Well, that's right. We're seeing the markets in a bit of a band. And in today's trading session, you have the Nifty bank that continues to underperform. But the reason that we're higher is courtesy Infosys as well as the tech space. We need both those two batsmen to move in the same direction and both of them find their form for the markets to go ahead and break that crucial 25,000 mark on the upside. That said, just take a look at the option space. A couple of call options. You were just highlighting that the Nifty is still up 80 to around 90 points. Now the 24,850, beg your pardon, 24,850 call and the 24,900 call. Both those two, you're getting the direction right? Because the Nifty is up. But the premium has come down because there's writing at that particular level. And the 24,900 call from the word go is seeing aggressive writing. On the downside, though, the 24,850 put as well. The premium, the last time I checked, had come down to around 10 rupees or thereabouts. But that's the one that's seeing some writing. So the lower levels as well, the bulls believe is protected. So now we're at a very, very crucial juncture. And the next 25 to around 28 minutes is going to be important to see whether or not the high and the low of the day can be protected. If we can get past the high of the day, which is closer to around the 24,900 odd mark, if we can get past that, we can have a quick fire of 40-50 points on the upside. So just keep that upside in mind. And on the downside, the 24,815 is the important mark, going by the options data, going by the levels that we've seen today. Stocks that I'm looking at, well, Tube Investments as well as Titagar. We're seeing both those two stocks up. And there is a good amount of open risk built up. So there is fresh buying on both those two names. And on Amber Enterprises, yesterday we did see that there was a good amount of shorts in the system. However, it appeared there was some pre-positioning ahead of the good news that we saw. And now we're seeing a bit of a short covering bounce that's playing out because those shorts are covering out that position. And the stock has recouped all of yesterday's losses. And finally, JSPL taking a bit of a breather. The stock has had a good run. But it appears there is more unwinding of long positions that we're seeing on JSPL. No stocks going in or out of the F&O band. RBL is the one that's in the F&O band. But the last time I checked, the open interest as a percentage of MWPL is at around 89%. So it's a far cry away from that 80% that it needs to breach to come out of the F&O band. So we'll keep an eye out on that. Back to you.
Okay, all right, Nigel, very, very interesting data. Thank you for joining us with that. Now to an exclusive conversation with CNBC-TV18. Finance Minister Nirmala Sitharaman outlined the government's economic roadmap, highlighting GST rationalization as a key driver of consumption without compromising fiscal discipline. Listen.
There's more money given already through the income tax cut. Right. The rates are coming down. So the citizen now has a choice to meet his aspirations and his expectations. He cannot say, look, I have the money because the income tax is reduced, but these items are beyond my affordability. Now everything has come down. I'll give you this number which is important. 99% of all the goods and services which are touched by GST are now either in 0 or in 5 or in 18. That's right.
Okay, that's the finance minister talking about the GST cuts and their implications, the impact on the economy. Let's get your view from Mr. Piyush Goyal as well. The Commerce Minister has said that the India-United relationship is the most consequential. Goyal also said that India is a patient country and believes in dialogue and diplomacy amidst the tariff standoff with the Trump administration.
We've had certain blips, like we had the sanctions post the nuclear tests in 1998. Yes. I look at this only as one more situation which will pass as there's a deeper understanding of the reality of the situation. And I'm very confident this relationship will only strengthen in the years to come. It could happen soon enough. It may take some time. Irrespective, we will continue to be friends. We will continue to be engaged with the United States, and I'm sure we will continue to have greater economic relationships, defense relationships, greater interest in a safe, fair and secure Indo-Pacific. In some sense, it's a very multi-dimensional relationship.
Okay, important statements. We'll get into a break. We've got about less than 30 minutes to go to wrap up trade. On the other side, we'll get you a check on what dealing rooms are saying in our segment, D Street Chatter.
Welcome back. Well, let's get straight to the action coming in from the dealing rooms. Nimesh is with us. Nimesh, tell us what are you picking up?
And it's all about IT today, right? That's the only index which is supporting the Nifty, and that's buzzing in trade. Otherwise, it's been pretty much flat to negative. There is not much to talk about as well from a broader market perspective, barring IT names today. Even within IT, it's largely a short covering rally rather than a big move or a cash-based buying in the IT names as well. Having said that, I understand there is a small MOC buy basket at the leading FIDs. So maybe you'll see some institutional data towards the end in terms of today's market. But otherwise, there's not much to talk about. Even in the broader markets, the index looks flat, but there is a lot of unexplained moves in a lot of cash-based stocks. You can't justify kind of moves we are seeing in many of those names. We keep talking about many of those. Like, for example, MobiKwik. It's rallied 50% from the lows, but there is no specific reasons. Yeah, there are so many such stocks which are doing good and buzzing for the last few days, but you can't explain really as to what's going on there. So unexplained move in a lot of the mid and small cap names, but from a large institutional point of view, it's more of short covering rally in IT rather than big buying as well.
Okay, all right. Yeah, some interesting moves, and some of the stocks have been the biggest underperformers who have come back up. What about individual names? What are you picking up?
So the first stock on my list is Nykaa. That's been under pressure today. In fact, most of the platform businesses are a bit under pressure, but Nykaa stands out and is under pressure largely on fears of a large block deal coming soon. So that's the buzz there. The second stock is Tata Communications. It's out of the FNO now, and you've seen first signs of move in Tata Communications. Two reasons. One, the big selling seems to be largely over from a leading FI. And I understand in the last few days, some domestic mutual funds have been accumulating Tata Communications. The third name is Vikrant Engineering. And a recent listing has recovered a little bit from the IPO price and the lows. But again, in Vikrant, I understand some HNIs have started buying as well. And also for Vikrant Engineering, there is a strong buzz that the company is likely to bag a large order very soon. So that's the trigger there. And the last one is M&M. That's been relatively outperforming within the auto pack ever since the GST rate cut. And for M&M, it's also backed by very strong FII buying. And within that, I understand one large leading FII fund has been aggressively buying M&M. And that's the reason why it's relatively outperformed the auto basket in the last few days.
Yeah, no, absolutely. Interesting names there. By the way, Nimesh, every day yesterday, not every day, but yesterday also we spent a minute on Prime Focus. Today, again, 10%.
And again, there is a block of 1 crore shares. So again, looks like some institutional buying has happened. And we know the seller, right? There are two large funds who own 25% and they've been selling out, or at least pairing stakes. So looks like that same entity has sold again today. Even yesterday, the feedback was some large FIs have bought, and it got reported in the block data as well. So it looks like some more interest from larger institutions in Prime Focus.
Yeah, I mean, that's the thing with stocks, right? You don't, it's a name in which so many people, and that Nimesh was talking about the 25% holder stand, see, frustrated for years, right? Nothing happened. And then in 3 days, 30%. So that is markets for you. You can never time these things. So you've got to be in the market, as they say.
But Prashant, just to add, if you look at the recent data, Prime Focus is not the only example. Look at what happened to Ola as well. Some larger FIs moved out, and then the stock rallied from 45 to 65 non-stop. I think similar thing happened in MobiKwik as well, right? Adia sold out 2-3%, and after that the stock has rallied 35-40%. So that's market for you.
Yeah, no, absolutely. And there would be so many people, right? I mean, who would have held on for all times and sold out in frustration, and then see prices go up. So while we look at, of course, the gains and the wins, etc., but there's also the other aspect of it. So can't time. You got to time in, stay in that sense, if you believe in some of these stories. Thank you, Nimesh, for that. So those are a bunch of names to keep an eye out on. Vikrant is a new one. So HNI buying and some order expected there. All right, Mitesh is with us with what to buy or sell today for a reverse trade tomorrow. Mitesh, take it away.
Yeah. Well, I have two long side calls. One is Adani Ports. Now the stock is just near the day's high. Very positive setup on the hourly and 2-hourly chart. So keep a stop below 1371. Look for targets of 1395. Dr. Reddy's, pharma is another sector which is slightly better after IT. So DRL is a BTST as well. Keep a stop at 1278 for targets of around 1305.
Okay. All right, Mitesh, got that. Thanks very much for all the calls and the trading advice today. We'll, of course, see you with the market again tomorrow morning. But for the time being, let's move on. And we're looking at a story from the insurance space. The Department of Financial Services is going to be meeting life and general insurance CEOs tomorrow. Yash joins in to tell us what perhaps could be on the agenda. I don't know if they're still going to talk about GST and the lack of that input tax credit or not. But Yash, what's the likely, talking point?
Well, you exactly preempted it. It is about GST and the demands, but the difference is going to be that the demands amongst the industry now have been firmed up. There are two important demands, and Department of Financial Services officials are expected to meet the CEOs of life and general insurance industry tomorrow itself to discuss these demands and understand the rationale behind the demands. As far as the meeting itself is concerned, this meeting will follow a letter or a presentation which will be sent by the life insurance industry to Department of Financial Services, Finance Ministry, as well as CBIC, and that presentation or the letter is expected to be sent today itself, after which tomorrow the meeting is scheduled between DFS senior officials and the life and general insurance CEOs. Now, what are these two important demands? The first demand is make GST changes prospective. The simple argument from the industry today is that, if you are bringing changes to GST, then why not make it on policies sold after September 22nd, which is when GST becomes applicable, the changes become applicable. The reason behind that is because the industry says that the policies which were sold before that were priced keeping in mind the input tax benefit which the industry was getting. The premium pricing was done keeping in mind that input tax credit benefit. And now suddenly with the changes, you can't reprice the policies and the industry has to take that loss on its books when it comes to that particular element. If not, just a demand on the other side of the same core demand would be that make GST changes, that is exemption on life insurance policies, prospective, that is after September 22nd. So everything that was sold before that would attract the same GST rate, that is 18%, the same ITC benefit of 18%, and exempt status would only kick in for policies sold after September 22nd. That is the first demand. The second demand is essentially commissions to be exempt from GST for new policies. Now, the government has made reinsurance exempt, but the industry is seeking the commission part of it to also be exempted from GST. Now, reinsurance and commission both together form about 80 to 85% of the total expenses. The industry believes that if commissions are made exempt from GST, then, there won't be any additional cost on the books of insurance companies, and they would very conveniently pass on the entire benefit of GST to policyholders. These are the two demands. The meeting will be very crucial between DFS senior officials and the life insurance industry CEO tomorrow.
No, absolutely. Yash, thank you very much for that. So we'll keep an eye out on this one. I mean, stocks, of course, have been sideways, under pressure, because this is one area where, it's tricky because of those input credit not available on some of the some things like commissions, etc. And we've been sort of highlighting this, reporting on this as well. So that is the insurance story. IOL Chemicals is what we want to sort of quickly talk about. Stocks up, I think 30% in September so far, and if you stretch the timelines a little bit, it's up more. Is something changing? What's happening? Ekta is here with details. Ekta.
Well, IOL Chemicals, seems to have picked up a lot of pace this year. It's up around 41% this year. It's buzzing today, and it was yesterday as well. Now, as of Q1, the company said that the overall demand environment remains stable, but pricing has been subdued for them. Paracetamol, which is one of their key products, that pricing was low, but demand is better than the pre-COVID levels. They are seeing good demand in non-ibuprofen APIs as well, such as metformin, paracetamol, pantoprazole. So they are seeing some amount of pickup, and in fact, they aim to diversify their API portfolio to 50-50 split between ibuprofen as well as non-ibuprofen. Now, paracetamol plant has commenced exports to Europe as well as other regulated markets. So that should probably also be a trigger for IOL Chemicals going forward.
Ekta, thank you very much for that. There's 11 minutes to go for market closing, and things are holding pretty steady. Let's just revisit Infosys, right? But not from a stock perspective in that sense, but from a different angle. This is, of course, taxation, buyback taxation. There were changes which were made in the in the budget, and many out there in the markets are not happy in terms of how this would work. So let's break this down for you, Rima, from the beginning. What are we talking about?
Well, firstly, the new buyback tax is effective 1st of October 2024. The buyback amount that you receive, the total amount, will be now treated as dividend. Let's take a simple example. Now you have 100 shares of a company and you're going to tender in the buyback at 2,000 rupees, which means the total amount that you make is 2 lakh. 100 into 2,000. Now this 2 lakh will be treated as the taxable income. Of that 10%, 20,000 will be paid by the company, TDS, and the balance 40,000 will be paid by you. Okay, so that seems very high because I'm assuming a 30% tax rate, assuming the highest tax rate for a person, right? But the difference is your cost of purchase. Now, suppose I've purchased those 100 shares at 1,000 rupees, which means my cost of purchase is 1 lakh. That will be treated as a capital loss, which means it can be set off against other capital gains. And if you don't do that this year, I think there is a period of about 7 years over which you can treat it as an offset for capital gain. So basically, it's a lot more complicated. Yeah, it's a lot more complicated.
It should have been 2 lakh minus 1 lakh.
Yeah, which is what you do in your regular capital gains and you pay LTCG on it. But now, there's TDS, then you have to pay at your highest tax rate. And then, part of it is paid by the company, and then there is a set-off. So you need to have other shares that you're selling on which you're making capital gains to make, the most of it. So we just thought we'd put that out there. So just check with your CA. And this will be the first test. This is the first big buyback which has been announced, which will test, the buyback rules.
Absolutely, and it'll depend individual to individual, depending on the gains they've made, the set-off that they can avail of, etc., etc. But there is a time period; it doesn't have to be done immediately. But as Rima pointed out, it is more complicated. Lots of people have made, by the way, representations to the government, to the regulator, etc. And hopefully, perhaps this is going to be under consideration as well. Okay, there is a news flash at the bottom of the screen. Big relief from the Consumer Affairs Department to ensure smooth passage of GST cuts from the 22nd of September. The relief itself, what is it? We'll try and put that up in just a bit from now. But that's the flash which is coming up on our screens at this point in time. Let me just see if we have it and if you're able to go to it straight up and if this is significant. Okay, I think we'll just wait for it. Let's just address the other story, right? Sona Comstar, of course, there is the succession issue, after Mr. Kapoor passed away. Ashmit is standing by with the latest in terms of what's going on. Ashmit, take it away.
Well, there's a fresh legal issue that's at play as far as the Delhi High Court is concerned. Bear in mind that Sanjay Kapoor was married to Bollywood actor Karisma Kapoor. The children between Karisma Kapoor and Sanjay Kapoor, we understand, two of them, one age 20, the other 15, they've moved to Delhi High Court. In this petition, there are two important takeaways. Number one, they're claiming their status as Class 1 heirs of Sanjay Kapoor, and to that end, they're seeking entitlements to the assets of Sanjay Kapoor, going on to say that each of the two children are entitled to 1/5 of the personal assets and effects of Sanjay Kapoor. That's part one of the story. The other part is that they are challenging the will that is being claimed by Priya Kapoor, the widow left behind by Sanjay Kapoor. They're saying that this will is forged, that it has been it's been forged, that there's very suspicious conduct of Priya Kapoor, that she's refusing to share the details of, that there is an obstinate refusal by Priya Kapoor to share the details of the will, and that demonstrates that there is a suspiciousness with respect to the will itself, and therefore they are rejecting, the children are rejecting this will which went against them, that refused them the entitlement. And finally, they're also seeking an interim prayer of having an injunction, the Delhi High Court restraining Priya Kapoor, or for that matter Sanjay Kapoor's mother Rani Kapoor, from transferring or selling any of these assets. The lawyers, we understand, are pushing for listing of this case tomorrow before the Delhi High Court.
Okay, Ashmit, thank you very much for that. I mean, so that's a fresh angle which we'll have to keep our eyes on, and we'll continue to follow that story coming through. What we're going to do is take a quick commercial break here. We'll come back Okay, so Consumer Affairs Department permits companies to continue with old MRP labeling and packaging till the 31st of December. Companies will have to publish new pricing via ads and notices to dealers and distributors. And I'm assuming this is largely to take care of inventory-related issues on which there is GST marked up and to avoid complications therein. So that is what's coming through. So all the way till the 31st of December, the ministry is allowed for the older MRPs, etc., to be on. Okay, so publish new pricing. We'll get you more in this, and maybe a tax expert as well in terms of how this would work. I don't know if you have the time to do that on this show, but we will surely pick up on this. But this does seem to be aimed at that. We take a break. We're back 5 minutes to market close.
Welcome back. I think we have Jay Bala of Cash the Kiosk who's joining in. Jay, good afternoon. Good to see you win. Two indices, one on the Nifty, you were quite positive. Do you believe that uptrend is intact? Point number one. And the Nifty IT index, the big underperformer, suddenly finding its form. It's good for more.
Hi, Nigel. The fact that Nifty is trying to hold up 24,357, that is good. But it needs to quickly take out 25,153 because it's stuck in this range, and that's not an encouraging sign if markets stay much longer. So it needs to take out the range very quickly. Nifty IT index has tested 34,200 for the second time and bouncing from there. That's a positive sign. And the fact that markets are trying to rotate into a different sector besides the auto, that's a good sign. So, yeah, it might be good for more as long as 34,200 holds. The object, it's a relief rally. It's not a change of trend for me. It's possibly trying to scale somewhere close to 40,000 plus, possibly closer to 43,000 on the Nifty IT index.
Well, that's a good 15% away from current levels. So you won't rule that out?
Yeah, that's right. It's a reasonable possibility. And the only chink in the armor for the Nifty IT index is TCS. That's not, in my opinion, completed a perfect low. But Infosys, HCL Tech and Wipro, they are all doing quite well. And the fact that Infosys is up 5%, which has more weight to the Nifty IT index, that might be telling us that it's good for more.
All right, quickly, two bullish calls you have. Bharat Forge and Prestige Estates. You believe they can scale higher?
That's right. Bharat Forge is coming off yesterday's bounce, and that's a good sign. It offers an opportunity to get in for people, and an objective of 1380 with a stop of about 1,080. Prestige Estates is looking very interesting in the short term and the medium term. As the lows it registered last week is probably a perfect correction. I don't see it dropping much below 1,400. And if it registered a low last week, it's probably heading past 2,100 in a few weeks' time frame.
Yeah. No, absolutely. Jay, just a quick word on, by the way, why don't you talk to us a little bit about the structure for IT services, if you will, And do you think there is more here?
Yeah, if you look at select stocks like Intellect Design Arena, or if you look at something like Quick Heal Technologies, or something like Apple, they're all looking quite bullish. Apple is quite late; it's already at fresh record highs. But it's been bullish for quite some weeks. And IT services in particular are particularly the second-line ITs. They're actually looking far better than the frontline ITs. So yeah. It's still good to go for more there. So be very selective there. Choose your picks very wisely there.
Your trades, Jay?
Yeah, and I would take a punt on Quick Heal Technologies. That's quite interesting. Intellect Design, I'm a bit hesitant. But if you're already holding, hold with a trailing stop loss. But Quick Heal is an ideal setup at current levels.
Jay, thank you for joining in. We'll connect with you after the break. The bell has gone and the Nifty has shut just shy of 24,900, but still managed a century. 103 points up on the Nifty. The Sensex up 330 points, and it was a tech-led rally all the way. The Nifty Tech Index ending with a gain of more than about 2.5%, and right on top is Infosys, up 5% ahead of the buyback announcement 2 days later. Wipro, Tech Mahindra, HCL Tech, TCS, Infy's buyback announcements infuse life in the rest of the sector. Other gainers include Dr. Reddy's, Adani Ports, SBI Life, Eicher Motors.
Absolutely. And, I just want to highlight a few other names, right, before we wrap up here. And lots of individual moves, I think, which we can maybe talk about. So let me just do that for our viewers. On the upside, maybe start with Precision Camshaft. Biggest volume-led gainer today, 14%. Bluestone was up 12%. Gujarat Fluorochem, 8% pop. Action Construction Equipment came through with a 6% gain. Railtel was up 6%. There was Affle India, which was up 7%. Sula was up 7%. Aether Energy, 10% gain. Prime Focus, of course, we've been highlighting for 3 days now. Ujjivan Small Finance Bank, we played sound bites yesterday after the management's sort of, guidance going forward. And, two of the names which Jay put out, Quick Heal, 13% higher. And of course, the other one was Intellect, which I think did pretty well today as well. ITD Cementation, another one, which ends with about a 6.5% gain. So lots of moves in the broader market. Almost exactly 1:1 advances to decline ratio on the NSE 500 is what we had. It's a wrap on this edition of Closing Bell. Jay Bala is with us, and he'll come up along with, of course, our other anchors to take you through Markets Forward, which follows shortly. Stay with us.
Nirmalaji, thank you so much for giving us this exclusive interview, one of your first to any media outlet. This is after this monumental, historic decision of GST rationalization. In many ways, GST 2, the second coming, there has been a lot of talk in the past. Let me begin with a broader question. From the Prime Minister's vision of making life easy for the common man, of, reducing the burden on the common man. You did it in your budget last time by cutting the income tax rate, a bonanza for the middle class. What was the vision behind this? What did the Prime Minister tell you? How did it come about?
Thank you very much for giving me this opportunity to interact soon after this major reform measure has been approved by the Council. And I thank every one of the ministers who've attended the meeting, the states, the finance ministers, and supported it. Otherwise, it wouldn't have come to see the light of the day.
So now that you've done two monumental things, you've put more money into the hands of the consumer, you brought down for the middle classes the income tax cut, and now rationalization of GST. So will it now finally sort of move the needle on consumption?
100%. Because there's more money given already through the income tax cut. The rates are coming down. So the citizen now has a choice to meet his aspirations and his expectations. He cannot say, look, I have the money because the income tax is reduced, but these items are beyond my affordability. Now everything has come down. I'll give you this number which is important. 99% of all the goods and services which are touched by GST are now either in 0 or in 5 or in 18.
That's right.
There's nothing beyond. So that 1% is what makes for the demerit goods, which popular parlance says sin goods.
Yeah.
So that is the extent to which we have cleansed the system of anomalies, doubts, duplications, and any interpretative issues.
So this will also lead to higher investments. It will fire up investments as well.
Obviously, with consumption going up, there's a potential for capacities to grow, investments to grow.
Now the combined tax revenue impact of this, earlier your income tax cuts, and this is about 1.2 lakh crore. Do you think that there will be a certain revenue buoyancy as well in the coming years to make up for this? And
every economic theory that one studies says that.
Yeah. Have you seen that in the past?
Well, at least the moment the income tax reduction happened, you heard people very clearly coming out and saying, I've met up with a lot of individuals coming from different strata of the society saying, I'll have more money to send my son to this particular college. My daughter is already doing engineering. I'll be able to fund her for her higher studies and things like that. And from ordinary citizens who are leading their lives either working in a small store or driving a car, taxi, and so on. So it has an immediate psychological effect that I can do this, which was beyond my affordability. And therefore, I think there will be a buoyancy in terms of revenue.
Any impact on capital spending or fiscal deficit?
I wouldn't think. At this moment, I can say with confidence, capital expenditure of the government will not come down. It will be completed as is stated in the budgetary planning time, the budget estimate time, and so with the fiscal deficit. And this is the last point of my gliding path. Right. I will adhere to it.
Will petroleum products and alcohol continue to be outside the ambit of GST?
Yes, the current proposal doesn't include it. Right. The states will have to.
And you don't see that happening in the near future?
Not in the immediate future.
Okay. Let's move, to a few broader economic questions as well. With GST rationalization, inflation is likely to come down quite naturally. Does it make a case for further repo rate cuts in the future? I know it's not your, but generally, directionally speaking.
Not my domain. We'll have to see how the RBI assesses for itself.
September 22nd is a tight deadline. Are you confident you'll be able to roll this? Is the back end ready?
Yes, the back end was mentally prepared, and many structural things have already started getting corrected, reset and so on. It is with the agreement of these GST and related technology managing team related issues that we have had a discussion with them, and they have clearly given me the confidence that yes, they will be rolling it out on Sept 22nd.
So Rahul Gandhi, who earlier called it Gabbar Singh tax, now has been talking about one nation, one tax. On the other hand, former Finance Minister P. Chidambaram, he said that, it is 8 years too late. How do you react to all of this?
Well, being in the opposition, I think they have to say something. When the popular response has been so overwhelming, for an opposition to try to take some credit out of it, but yet with a hesitation that the credit should not be completely given to the government is quite understandable. But I would want them to ponder that neither could they bring it in because they couldn't win the confidence of the states, nor could they truly and literally understand how the mechanism works. After all, the GST Council has members from Congress party,
yes.
finance ministers from Congress ruled states are there. But I have a feeling the Congress High Command, as they call it, doesn't do its homework to understand the way in which this wonderful organization works, the GST Council. And therefore, at one point in time, they call it Gabbar Singh tax, another point in time saying, oh, this is fine, but it should have come earlier. These are clearly statements coming from people who have not really spent time to understand how post-independence, that one institution which has been created, a constitutional body, if I'm right, this is the only one which has been created post-independence,
yes.
is spent 8 years, but has delivered so much in terms of revenue, in terms of uniting this country, in terms of making ease of doing business a reality, and is now coming up quickly in succession within 8 years with the second generation reforms. To understand it and then to comment would help the government, not stray comments which doesn't get into the details.
So Q1 GDP numbers are heartening, 7.8%, at a time when President Trump said that, India is a dead economy. How do you react to something like that?
I may not be able to comment on, let's say, foreign head of the state commenting on it. But in India, one line which I keep repeating several times, probably even once when I met you once earlier when we chatted like this, it is the cynics within India who worry me. It is the naysayers within India who worry me. Assume somebody had said it, a head of state has said it. Building India together, and all of us together building India, are we going to carry those tales or stories or observations which somebody else says and then repeat that here, oh, so and so has said this, India's a dead economy, we knew it, this is happening, that's happening. India requires its citizens to be respected. They are toiling and struggling and working to build their families and their economies, their own personal family wealth and whatever. At this time when we are trying to create more opportunities, do we need the naysayers to even borrow such observations, be it as it may that it is coming from a head of state? Do we need our own people to use these expressions? It is undermining not the government, you're undermining our citizens' efforts. And a responsible opposition, I wished didn't repeat these lines, but I think it is, I would react only to what our people are saying rather than a head of state elsewhere.
No, five quarter high number, I think it gives us a lot of confidence in the Indian economy.
And also inflation coming down.
Yes.
Drastically coming down.
Yes. But it brings us to a related point, which is on the point of tariffs. Now that tariffs with the US are at 50%, what is the likely impact on the GDP going forward? There are various estimates by various sort of consultancies, from 10 basis points all the way to 100 basis points, some have predicted. Where do you see the impact really of this?
But with the reform like this, many of that should be offset.
Yes.
So it is never a situation of a one fixated point. It's a dynamic situation where you're moving from one to another with newer players coming in, newer factors coming into play in this scheme of things. This one, you have the GST reforms, which is going to make people understand that they can fetch more things with the same amount of money with which they bought some amount earlier. So it is very clear that industries have been speaking about the tariff and its impact. The government has designed something for itself. We will come out with something to handhold those who are hit by the 50% tariff from the US. This has been said earlier. I've met up with the delegations when I went to Chennai in recent past few days. I have said this there and I will repeat it. Government is working.
So will they be allowed to sell in India, or how do you plan to alleviate their concerns?
No, there is a package which consists of very many different ways in which we want to help them. So we'll wait for the cabinet to clear it, but there is something coming to help them so that this tirade of the tariff is something which they can face, and also suddenly having to look for newer markets is also a challenge, but we'll have to help them out on that.
So is there a sense in the government that this could be a slightly longer haul?
We hope not, but we really can't leave our exporters high and dry saying it's going to change sooner. We will work with them.
Nirmalaji, will we also continue to buy Russian oil?
Yes, that's been made very plain and simple. Whether it is Russian oil or anything else, it's our decision to buy from the place which suits our needs, whether in terms of rates, logistics, anything. So where we buy our oil from, especially being a big ticket foreign exchange related item, where we pay so much out of our highest in terms of import, we will have to take a call which suits us best. So we will undoubtedly be buying.
Another question about, the officials of the Trump administration have been using really hurtful language against India, saying that we are Brahmins profiteering at the expense of, ordinary Indians, or, calling the Ukraine-Russia war Modi's war, or us as Kremlin's laundromat. How do you see all this? I mean, how do you react to something like this?
Very much the same principle as I said earlier. It is one thing, it can be hurtful. It is one thing for a foreign government head of state or an official or anybody to say all that. And the global diplomatic world is astonished that that kind of an expression is being used against India. And that will have people in the diplomatic arena to respond or to deal with. But what hurts me more is when those very expressions are being justified in India. Oh, don't you all know, don't you, I mean, you know, dirty, unwashed Indians, you don't understand what this expression means? This is how, this is explained. Who wants these explanations from Indians? Who actually wants us to know better? And who are these people explaining to us, this expression is used in this context? Yes. I'm outraged by that. I don't want explanations to justify that. Whether I'm going to have to deal with them, stand up and challenge them or retort is a different story. Right. But Indians quoting those words and telling us, oh, you dirty Indians, you don't know this colonial justification of the language that is being used against Indians, against such countries which have come out of its colony and from its empire and stood up to build its own country with its own self-confidence. And even now when we are talking about Atmanirbhar, it's not just in terms of producing everything in your country. It's also about being
self-reliant.
There is no self-respect.
Self-respect.
As much as you want everything produced in India for Atmanirbharta, you should have something of a self-respect. If somebody is saying, all of us in one voice should respond to it, rather than have a few of us justify it by saying, don't you all understand it? Are you a part of the imperialists? I'm outraged more by that.
Yeah, the opposition picking up this and, making it their own narrative.
And saying...
Like dead economy was picked up by Congress, Rahul Gandhi to
and
say.
even for this, Brahmins are being are the ones who are benefiting out of it. Oh, you Indians.
Us Boston Brahmins.
Yes, Boston Brahmins. Oh, you Indians, you don't understand this Russian oil purchase is to help Brahmins to benefit of it, and you are being fooled. Exactly the same divide and rule principle which the British used here, which the imperialists used here. And even today you have the friends of the imperialists telling us, no, the expression Boston Brahmin is this and not that. Who damn cares? I'm sorry.
Yeah.
Who damn cares? I want Indians to think for ourselves. I want those Indians who are now defending that language to get up and say, we are free from you all. Now for over 75, 80 years, we'll mind our business, we'll take care of ourselves. Refrain from using these words. Should have been that voice. That not being the voice, and upar se to teach us saying, don't you know the meaning of this expression? Outrageous.
Today we've got to know Nirmala Sitharaman ko gussa kyun aata hai. Nirmalaji, India and China are now mending sort of fences. So, right now it is at the level of resuming the flights and giving visas to each other. But what could be the next steps? How could we make the Chinese markets more accessible to Indian, Indian companies? There is, of course, a huge deficit of $100 billion here. So how do we do that? I mean, what are the next steps?
There's just a lot of work to be done in that area. There's no hiding it. We need to have trade conversations, market access conversations, non-tariff barrier conversations with the Chinese. Unless we do that, and unless there is a true engagement and not a procrastinating engagement, you may talk as much as you want on these issues. I've done it myself. And to have a conclusion arrived at takes a lot of time with the Chinese. Sorry. Market access is something which has not been realized despite our almost a decade-long engagement with the Chinese. In between, everything had come to a halt. But on both these issues, there should be meaningful conversations. Otherwise, the very products that we want to export to China go through different destinations to China. But why can't it go directly?
Yeah. And will it also be reciprocal? I mean, Press Note 3 prevents investments from China to India. So would you look at, doing something about that as well?
As it is, I think in one or two cases, particular cases, we have relaxed some of them. And in those sectors where their technology has come in, and the technicians and also the experts had to come to actually see the projects through, we've not allowed these experts to come. That has now changed. In some sectors, people are coming in. The projects are already on the ground.
So India will be open to that idea?
Of course.
Yes. Nirmalaji, you've ushered in the boldest of reforms. I say this in every interview that we do because you corporate tax cut. I mean, that was a phenomenal sort of move. Then after that, last budget, we have income tax rates going down. Now GST2, as I called it. So, one thing that we probably haven't seen enough is on private disinvestment. What would you say to that? You did sell Air India, but after that, things have been slow.
You'll see action in that also.
This year?
Yes.
Oh, that's great news. Any deadline for strategic stake sale in IDBI Bank?
No, I think the secretary has already, DIPAM secretary has already spoken about it. IDBI is moving quite fast.
Okay.
And I expect it to be concluded this
financial year? Okay, and any more banks which could then be looked at after this?
I wouldn't say any more banks. I'm not negating anything.
Right.
But yes, more disinvestments.
More disinvestments, okay. So we've seen that since June this year, the yield on 10-year bonds have risen 30 basis points since June, to more than 6.5%. Are you concerned about rising borrowing costs?
Yes. I wouldn't say I'm concerned, but I'm observing it. It is not affordable. And also at a time when interest rates are otherwise low,
yes,
bond yields becoming unsustainably high has a big bearing on the government. Not just our union government, states are also up against odds in getting affordable,
Also your fiscal math?
My fiscal math is as of now absolutely fine.
Yeah. So, Nirmala-ji, we are again, near an election. Bihar elections are coming up, and before every elections, we have seen all political parties dole out reveries, and we've discussed this in previous, encounters as well. Does this worry you? State after state, promising welfare schemes, doling out reveries, and how does it all really add up for a country like ours?
I think I'll speak for all finance ministers.
Yes.
It is a very, very difficult thing. To have a scheme approved and also budgeted for is not wrong. And I would approve of that, because that at least takes the view of the legislature and also makes it public about how they are financed, and therefore also brings in that responsibility to keep your revenue generation equally attended to. But what most often happens, not so much with Prime Minister Modi's leadership, but I can say what generally happens is you give away a promise. Once you have to come to fulfill it, you're searching and scrambling for resources. And if you're an opposition-ruled party, it is very quickly arsenal in your hand to say central government is not giving me money. That's the biggest unsustainable argument. I'm more tempted to say bogus argument, because you give a promise, you win the election, you come to power, and then after that you're not able to fund it. Why would you want to?
A lot of cases.
Yes, why would you want to throw the blame at somebody else, particularly the union government?
Yes.
So these kind of sort of recklessness in dealing with public finance has got to be discouraged. There's no doubt on it.
Nirmala-ji, India holds about $227 billion of US Treasury securities. It also holds a lot of gold in its reserves. Should we diversify away from US Treasuries for reserves?
To some extent, I think the Reserve Bank of India has already started doing it. I wouldn't want to divulge more by saying how are they doing it. But I think Reserve Bank has taken a very considered decision, and they've also done by purchasing gold. So I think the bank is competent and they're taking a fine call on it.
One more question was on the decision to ban online gaming, which came as a surprise to many, especially, after many years when people had poured in a lot of money in that business. What was the thinking behind this? How do you assure people of consistency in sort of decision making at a time like this?
No, what is the time? What is so special about the time like this?
No, what I meant was that, a lot of investments had come into that sector.
No doubt. Yeah. We have not banned games which are for recreational purpose.
Right.
We are still online games for these things are not banned. It is only when you start betting with money. And why is it? Not because we want to say we don't like it. It's a question of the number of people who came to say families are getting absolutely shaken up.
Yeah, that's true.
Their monthly bills are shooting up, and children cannot be controlled from the temptation. And many children, in fact, I wouldn't mind even saying this. There was a finance minister who once met me in a very different context.
Right.
And he narrated an incident of his own family, where his own grandson, who's a very good person, the child is a very good child, well groomed and well brought up, used his credit card for just one day for some other purpose of a family's genuine buying requirement. He helped them because children are very savvy. Post that one another day, he picked up the card and said, I want to just do something. They said, all right, please. Because they never suspected this child as, into games and into betting and things like that. So the boy used the card and played and gave back the card. Again, probably he did it 2 or 3 times more. Phenomenal increase in the bill that month. And that's when the grandfather sat up and said, what's going on? Let's check up. And this grandson told him right in front of him that it was all free. I didn't go into any money playing game.
He didn't know.
So the methodology is, say it's free, you get in, and for the duration of time that you've played, some kind of a charge is put, and again tempts you to go into another round and so on. So the adolescent child is under the impression that he's playing a free game.
Right.
But he ended up paying through his nose. So that's a classic example, but many people approached us, the PMO and so on, and said, this is ruining our country, ruining our youth, please do something. That's where this bill has come.
Okay. No, understood. The rupee is at an all-time low against the dollar. Does it concern you?
It is, I've said this and I'm going to have to repeat it, it is only against the dollar that the rupee is highly volatile. Whereas rupee is not affected similarly by other currencies. So, and there are countries in emerging markets and even in developed countries whose currencies against the dollar are weakening. So it is an issue on that aspect and at that level about the volatility as a result of the strengthening dollar. It's not rupee weakening. I know I've been trolled immensely for saying this, but this is the truth. So.
Okay, thank you. Nirmalaji, one last question. For profitable companies with over 1,000 crore turnover, 2% of their profits go into CSR. Now, at a time like this, when MSMEs are facing a problem because of tariff issues, etc., is there any thought to take a relook at this for a little while?
Nothing before me as yet. Okay. If there's anything, I'll tell you, but there's nothing.
All right. Nirmalaji, thank you so much for your time. Thank you for patiently answering all our questions, very candid. And heartiest congratulations on yet another big reform, GST2 or rationalization of GST. Thank you so much for being with us.
Thank you very much.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex and the Nifty ended a 2-week high led by recovery in IT stocks. The Nifty reclaims 24,800. The rupee gains some strength against the dollar in volatile trade. Gold prices hitting a record high in India and across the world. Weak jobs report in the US raises expectations of a rate cut by the Federal Reserve next week. China adds to its gold reserves, further bolstering prices. President Trump's trade advisor Peter Navarro equates the BRICS to vampires, says the grouping of developing nations cannot stay together. Silence in both Washington and New Delhi as 3 days pass after Prime Minister Modi fully reciprocated positive statements from President Trump on the special relationship with India. Infosys is the top gainer on the Nifty 50 index after the company says it will consider a share buyback proposal on Thursday. It will be Infosys' first buyback in 3 years and the fifth since its listing in 1993. The move ignites expectations of buybacks from other IT companies. The Securities Appellate Tribunal sends a notice to SEBI after Jane Street challenges the charge of market manipulation. The U.S. quant trading firm claims SEBI's own internal report gave it a clean sheet. Jane Street has paid 4,800 crore rupees in penalty imposed by SEBI alleging market manipulation in some bank Nifty trades. The Sona First family feud gets murkier. Late Sanjay Kapoor and actor Karishma Kapoor's children moved the Delhi High Court, accused Sanjay's wife Priya Kapoor of forging his will to try and gain total control of his assets worth 30,000 crores. Karishma and Sanjay were married for 13 years and have a daughter and a son together. The children are seeking a 20% share each in their father's assets. Nepal's Prime Minister KP Oli resigns after violent protests over corruption and social media ban leave 19 people dead. Oli says he's resigning to help resolve issues politically. All flights cancelled to Kathmandu airport. India's External Affairs Ministry appeals for calm, issues a travel advisory to Indian nationals. Parliamentarians to vote to elect India's next Vice President. NDA candidate CP Radhakrishnan has the edge ahead of opposition's B. Sudarshan Reddy, Naveen Patnaik's Biju Janata Dal, K. Chandrasekhar Rao's BRS and Sukhbir Badal Shiromani Akali Dal abstained from voting. Jagan Mohan Reddy's YSRCP decides to support the NDA candidate. Media mogul Rupert Murdoch finalizes a family settlement in succession. The eldest son, Lachlan Murdoch, cements control over the media empire that includes Fox News and Wall Street Journal. 3 other Murdoch siblings will sell their personal holdings within 6 months. Well, let's start with the day's market action. As always, the market's ending at a 2-week high led by IT stocks today. The Nifty ended above 24,800. The Sensex rose over 300 points. The IT index gained nearly 3% today, and you see that playing out 945 points higher there on the IT index. Meanwhile, the rupee gained some strength against the dollar today. The rupee was below the 88 mark in intraday trade, but it ended the day above that level after gaining over 16 paise against the dollar, 88.10. That's where the dollar rupee closed for the day. But there is no stopping the yellow metal. Gold price is hitting another record high of $3,600 as U.S. labor data buoyed expectations of a Fed rate cut. Gold, silver and platinum have gained between 40 and 55% so far this year, so gold continues to be on a tear. 2 mining giants, Anglo American and Teck Resources, have agreed to merge to create a copper producer valued at $53 billion. The combined entity will be among the top 5 copper producers in the world. Anglo American shareholders will own over 62% of the business. Teck Resources will hold more than 37% stake, and the deal comes as miners look to shore up access to copper, which is essential to the renewable energy transition as a core component in wiring used in the booming data center sector. So that's a big global deal there. The Fed cutting rates while the economy is okay is a recipe for a bubble. That's the word coming in from investor Ruchir Sharma. Speaking to CNBC, Sharma added that the Fed has never cut interest rates when the financial condition has been this easy. The Fed is expected to announce its rate decision next week.
In the past, when the Fed has cut interest rates, when the economy has been doing okay, it has usually been a recipe for a bubble. That's what happened in 99, 2000. And some will argue that that's what, possibly even happened in 2021. But I think the main issue here is the fact that financial conditions are super easy. The Fed has never cut interest rates when financial conditions have been this easy.
Well, no cut warranted. Donald Trump will have nothing off that. Let's see which way the Fed decides to finally vote. White House trade advisor Peter Navarro is hit out at the BRICS alliance, of which India is also a part yet again. This time, Navarro has compared the BRICS to blood-sucking vampires. In an interview with cable news channel Real America Voice, Navarro said, and I quote, "The bottom line is that none of these countries can survive if they don't sell to the U.S. And when they sell to the U.S., their exports, they're like vampires sucking our blood dry with their unfair trade practices. Let's see what happens, but I don't see how the BRICS stay together since historically they all hate each other and kill each other," end of quote. Now, this isn't the first time Navarro trained his guns on the BRICS. He has on previous occasions leveled charges of unfair trade practices and internal divisions, among others. Meanwhile, there is silence in both Washington and New Delhi as 3 days have passed after Prime Minister Modi fully reciprocated positive statements from President Trump on the special relationship with India. We learned from sources that ongoing discussions with US officials exhibited contentions over sectors including dairy, agriculture, fisheries and MSMEs. The government has reiterated that it is open to a fair, equitable and balanced trade deal with reciprocity. Union Cabinet Ministers Finance Minister Nirmala Sitharaman and Commerce Minister Piyush Goyal have said that they believe that the tariff standoff won't necessarily be a long-haul situation. Meanwhile, former Indian ambassador to the US, Nirupama Rao, has said that the recent statements made by the Prime Minister and President Trump are positive but do not convey a reset in ties. Take a look.
There is a package which consists of very many different ways in which we want to help them. So we'll wait for the cabinet to clear it. But there is something coming to help them so that this tirade of the tariff is something which they can face. And also suddenly having to look for newer markets is also a challenge. But we'll have to help them out on that.
So is there a sense in the government that this could be a slightly longer haul?
We hope not, but we really can't leave our exporters high and dry saying it's going to change sooner. We will work with them.
Nirmalaji, will we also continue to buy Russian oil?
Yes, that's been made very plain and simple. Whether it is Russian oil or anything else, it's our decision to buy from the place which suits our needs.
You know, some of the officials of the Trump administration, calling it Modi's war or, a laundromat of Kremlin. I mean, how do you react to this? I mean, are conciliatory noises coming from the other side now?
I think there could be either some misunderstandings or some personal opinions that may be reflected in that. I do not think that deters the US and India from continuing to maintain our strategic alliance and partnership. Our friendship is far stronger than a few comments that may be made by a few people.
You look at the entire world today, there is huge turmoil, there is turbulence, policy decisions are changing overnight, and the process which used to be followed in a multilateral, in a discussion, those kind of processes are today not very visible. So under such circumstances, the stability that India offers, that's huge. That's what is attracting a lot of investors to our shores.
The tone today is better, but it's an opening gambit, not a reset. So if you ask me, are these statements a sign things will improve? I would say they're a de-escalation signal, certainly, and they buy both sides some breathing room. Now, there's the tariff overhang also. The US duties, as we all know, as announced, are at 50% on a wide basket, and no new talks have been announced. So both sides, I believe, needed a political valve while the officials reassess the next steps.
Well, reactions there on where things currently stand between India and the US. And speaking of India and the US, a proposed legislation in the US is causing a stir on Dalal Street, especially for IT companies. Now, here's what this is about. Bernie Moreno, he's a Republican member of the US Senate from Ohio, and he has floated a legislation seeking to impose a 25% tax on outsourcing payments. But this proposed bill does not enjoy bipartisan support, and even other Republican colleagues of Senator Moreno have not openly backed the bill. First, here is what the legislation proposes to do. The senator wants a 25% tax on what he calls outsourcing payments. This is defined as money paid by a U.S. company or taxpayer to a foreign person whose work benefits consumers in America. Now, the bill also prohibits companies from deducting any outsourcing payments. This proposed legislation will need the approval from the House, the Senate, and President Trump since it involves tax changes. So this is a long way away from being a done deal. Another point to note is that the proposed legislation is akin to a private member's bill. Usually, lawmakers cutting across party lines propose a legislation so it carries more weight on the floor of the House and Senate. But in this case, Senator Moreno is not being backed by any Democrat or even his own Republican Party members. Now, Who is Senator Bernie Moreno? Well, he is an immigrant himself, born in Colombia. Moreno was a car dealership owner before he became a firebrand Republican. Moreno is also seen as an outsider who's keen on shaking up the Republican establishment. He won the endorsement of President Trump for the Ohio Senate race, which proved pivotal in his victory. But like many Republicans, Moreno opposed Trump in 2016, calling him, and I quote, a lunatic, and I quote again, a maniac. But he has reversed his position since and is now an ardent supporter of the president. Here's Ganesh Natarajan, the former CEO of Zensar Technology, who believes American companies will be firmly opposed to this proposed legislation to tax outsourcing. Take a look.
There have been many attempts in the past to do these outsourcing bills, etc. And what I think Senator Moreno has tried to do is something very similar. But in that sense, I think the first point of resistance will come from American corporates themselves. I mean, every significant corporation in the Fortune 500, and indeed most of the IT CEOs who were at dinner with President Trump the other day, I think they all have huge investments in India, in GCCs, what is Global Competency Centers. There are over 1,600 of them in India. Plus, of course, the fact that a lot of their work is done by Indian companies. So I don't think this is going to happen in a hurry. So I'm pretty sanguine about that.
Well, this is unlikely to go through. That's the view of Indian IT. And as we pointed out, that this is almost like a private member's bill. Long journey to go through, if at all it does go through. But Infosys, the top gainer on the Nifty today, the company will consider a share buyback when the board meets on Thursday. Rima standing by with the details. Rima, buyback on the cards for Infosys.
Thanks so much for that. So IT making up for lost ground, lost time. As you said, it was predominantly a drag. Even after the up move today, Infosys is down 20% on a year-to-date basis. But of course, this impending buyback announcement, 11th of September is when the board meet, has gotten the stock and the industry very excited. This would be the company's 5th buyback since 1993. Now, the big question is, how much will the company buy back? Well, estimates vary from about 10 to 14,000 crore rupees. That's the Morgan Stanley estimate. And typically, the buybacks happen at about an 18 to 25% premium. And just going by the last few, 4 buybacks, the company's historically bought back about 1.5% to 2%. So again, this time, Morgan Stanley says they should buy back 1.3 to 2%. But a buyback announcement signals confidence from the promoters about the value of the stock. It acts as a cushion. From the buyback announcement till the time it gets completed, earnings will come out. God forbid the earnings are disappointing, then at least there is that buyback support which comes in for the price. But the rest of the IT pack is also excited because now after Wipro, the street is hopeful that maybe TCS and Wipro also come out with their buyback announcement because the 1-year cool-off which you need between 2 successive buybacks has come to an end. Both of them completed their buyback in 2023, so they're eligible for a buyback. HCL Tech and Tech Mahindra have been very, very irregular with their buybacks, unlike some of the other larger peers which have been very regular. Back to you.
Well, we will be tracking that closely. Rima, many thanks for joining us. On to a CNBC Awaaz exclusive. Japan's finance giant Sumitomo Mitsui is likely to sell its entire stake in Kotak Mahindra Bank via block deal. Sources say the banking firm plans to offload 1.6% stake worth over 6,000 crore rupees. The company is likely to deploy the funds for its Yes Bank acquisition, so exiting Kotak Mahindra Bank and likely to pick up Yes Bank. Now, several brokerages have waved a big thumbs up to India's automobile sector after the recent GST cuts. Morgan Stanley believes the tax cuts will lead to a new auto upcycle. Sudarshan here with the details. Sudarshan, big call there for the auto sector.
Will the GST rate cut boost consumption? The answer from Finance Minister is 100%. And one of the many sectors that is expected to benefit from this is the auto, which has been battling a major slowdown for now more than a year. And this tax relief has come as a much-needed catalyst. Brokerage house Morgan Stanley sees this development as the beginning of a new auto upcycle. It points out that only 13% of Indian households currently own passenger vehicles, while 73% own two-wheelers. For passenger vehicles, first-time buyers are expected to drive demand, while two-wheelers, it will likely come from replacement. Reflecting this optimism, Morgan Stanley has raised its growth forecast, now expecting 10% growth in passenger vehicles and 8% in two-wheelers in FY27. According to Morgan Stanley, there are 3 major tailwinds that will support the sector. First, GST cuts, which can lower prices to a magnitude never seen before. Second, monetary easing, which will improve credit availability. And third, the implementation of the 8th pay commission, which is likely to boost disposable income. Within the auto pack, Morgan Stanley prefers passenger vehicles, expecting them to surprise more on the upside, as this segment is currently in a down cycle, unlike two-wheelers, which are in a mid-cycle. It also notes that while auto stocks have moved ahead of their 10-year median levels in absolute terms, relative to the Nifty, they remain below their 10-year median valuations. In terms of the top picks, Maruti, Mahindra & Mahindra, TVS Motor, Hyundai and Ashok Leyland top the list, and it has also upgraded Hero MotoCorp and Eicher Motors, expecting them to benefit from the two-wheeler recovery. Though it cautions that valuations look stretched and margin upside is limited for both the names. Conversely, it has downgraded Bajaj Auto to underweight, citing lower exposure to domestic auto demand recovery. So while sentiment has clearly turned positive post-GST rate cut, but the real test of demand pickup will be seen only during the festive season.
Well, top gear there for the auto sector. So many thanks for joining us. We'll take a break, but up next, Nepal's Prime Minister KP Oli resigns after violent protests over corruption and social media ban leave 19 people dead. That and more when we return. The Securities Appellate Tribunal heard U.S. trading firm Jane Street's plea challenging SEBI's ban order. Now, Jane Street argued that SEBI ignored its own internal surveillance department report and an NSE report. This is what Jane Street has told the SAT. It claimed that both the reports gave the firm a clean chit. However, SEBI termed the plea a fishing expedition, stating that it has already shared 10 GB of data but cannot disclose more as the probe is still underway. The matter will now be taken up on the 18th of November. News coming in, Vodafone Idea has challenged the government's computation of the AGR before the Supreme Court. Once again, the company has filed a fresh petition before the Apex Court. Previous petitions from the company, including a curative petition, have been dismissed by the top court. So it remains to be seen if the Supreme Court will admit Vodafone Idea's fresh petition on AGR, whether this will be entertained at all or not. Remember, as we pointed out, even the curative petition was rejected. Now, the Sona First family feud gets murkier. Late Sanjay Kapoor and actor Karishma Kapoor's children have moved the Delhi High Court. They accuse Sanjay's wife Priya Kapoor of forging his will to try and gain total control of his assets worth 30,000 crores. Ashmit joins us now to take us through the details of the plea filed by Karishma Kapoor's and Sanjay Kapoor's children in this matter. Ashmit.
Well, the issue of inheritance of assets left behind by Sanjay Kapoor gets murkier still. We're given to understand that Sanjay Kapoor was married to Bollywood actor Karisma Kapoor. They were married for a period of 13 years. They have two children, one daughter, one son, aged 20 and 15 years respectively. It's these children who've moved the Delhi High Court in this petition, and there are four key takeaways. Number one, these petitions, the two children are claiming their status as Class 1 heirs, and by virtue of being Class 1 heirs, they're claiming, each of them is claiming an entitlement to 1/5 of the total personal assets of Sanjay Kapoor. That's one. The second is a will that is being cited by Priya Kapoor. The petition makes several references to this will, which is being claimed by Priya Kapoor. The petitions claim that this will is being used to deny the children of Sanjay Kapoor and Karisma Kapoor their entitlements to the assets. Also going on to say that this will is forged, that despite repeated requests, Priya Kapoor is not sharing any details or a copy of the will, and therefore it raises suspicions about the authenticity of the will itself. That's number 2. Number 3 is that this petition is essentially seeking for an injunction that would restrain the likes of Priya Kapoor, the likes of Rani Kapoor, from transferring or selling or alienating any of the assets of Sanjay Kapoor. Those assets are to be preserved. That's one, the third direction that this petition seeks. And finally, this petition also seeking clarity on the various assets that are available in the name of Sanjay Kapoor, his personal assets, details being sought. This petition has just been filed. We're given to understand that the lawyers for the children of Sanjay Kapoor and Karisma Kapoor are seeking for an urgent hearing tomorrow before the Delhi High Court.
Well, many thanks. This is now becoming a two-front battle. Remember, Sanjay Kapoor's sister and mother have already been out in the public challenging the current state of affairs. And now you have Karisma Kapoor's children moving the Delhi High Court in this matter. Nepal on the boil. Prime Minister KP Oli has resigned after violent protests over corruption and social media ban, which has left 19 people dead. Oli says he's resigning to help resolve issues politically. Archana Solanki joins us now to decode the massive upheaval in Nepal. This is not just about the social media ban. This is also a protest against corruption, Archana. And of course, the protests that continue now leading to Oli's resignation. We don't know what the status is in terms of what happens to his government at this point in time. Take us through what has led to these happenings.
Well, Shireen, Gen Z has taken over the streets of Nepal. Prime Minister KP Sharma Oli resigned this afternoon after 2 days of violent anti-corruption protests that killed 19 people and injured over 400. Now, it has been named the Gen Z Revolution because of the young participants. Hashtag Nepo Kids is trending across the country. As we speak, the situation is quite tense. Protesters defied a curfew and stormed the residence of the Prime Minister and vandalized it. Protesters also set on fire the office of the country's largest party, Nepali Congress, and residences of several prominent politicians, including the President. They also breached the parliament. All flights at Tribhuvan International Airport have been cancelled. Coming to your question, what led to this? Why is Nepal on the boil? The main reason is corruption, and the immediate trigger was the social media ban. Now, at the heart of this is the movement that's called Nepo Kid campaign. It's a trend that targeted the children of the wealthy and influential politicians. It started before these deadly demonstrations. Now, the campaign has put the spotlight on the children of political and powerful people, accusing them of flaunting their lavish lifestyles, foreign education, luxury cars, exotic holidays, all allegedly funded by corruption. Now, many social media users posted TikTok videos of politicians' children living a better, luxurious life and compared it with that of an ordinary Nepalese. Now, the protesters had one demand: the resignation of Prime Minister KP Oli, whom they blame for growing corruption, worsening economic conditions and the misuse of power. Reason number 2, which was the immediate trigger. Before that, let's also understand that the politicians there did not escape the protesters' wrath. Now, what we can see is that there's a purported video of Nepalese finance minister being chased away on a road and thrashed by demonstrators. Now, we at CNBC cannot independently verify the authenticity of the video. And as I said, that the main reason, another trigger for this was the social media ban that was imposed on September 4th. Why was it important? Because Nepal has one of South Asia's highest rates of social media users per capita. Now, the ban on prominent apps like Facebook, YouTube, WhatsApp, Instagram and Snapchat affected many people who rely on these apps, A, for their small businesses, B, to criticize the government, and C, to connect with friends. Now, this ban was lifted late last night, and as per the government, the reason was that these platforms did not comply with the registration rules of the country. Now, despite police crackdowns and PM's resignations, protesters are still on the streets. This is the first time the youngest citizens, the Gen Z, have staged a movement of their own. Not to mention, there was extensive participation from schools and colleges, and some students were also seen in their uniforms. Back to you.
Archana Solanki, many thanks for joining us. That is the latest in a developing situation in Nepal. The Prime Minister has resigned. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a moment with more.
Hello and welcome. You're watching Commodity Champions and I'm Manisha Gupta. Gold prices hit yet another record highs this week as soft US labor data buoyed expectations of a rate cut by the US Federal Reserve. The yellow metal has gained nearly 40% so far in this year. The strong central bank accumulation and heightened global uncertainty are also supporting prices. As per official data, China's central bank extended its gold buying streak to a 10th straight month in the month of August. Other precious metals, including silver and platinum, have also gained around 43% and 55% respectively so far this year. Well, to discuss the outlook for gold, we have now with us Philip Newman. He is Managing Director, Metal Focus. Philip, hi, thank you so much for joining us here. First of all, your sense on the gold prices, because this rally seems unstoppable. What is your sense on where we could see in sense of prices?
Well, you're right. And first of all, good afternoon. You're right, it does seem unstoppable. It is quite incredible. I mean, when we broke through 3,500 for the second time, we thought we would see a period of consolidation. That hasn't happened. And again, at 3,600, we thought exactly the same. And here we are today. It's interesting that you mentioned about the Fed potentially cutting rates next week. But that's interesting because that seems nailed on for some time now. Yet here we are with gold hitting new highs. So we do feel like the rest of the market that the Fed will reduce rates next week by 25 basis points. I think what's really important, though, is the language around that announcement. And I think the market is watching that very closely about how many more rate cuts are likely this year. I would say to you, though, we do feel that prices will still, I think, consolidate around these levels, even though as a research house, we are still bullish for gold for this year and also into next year as well.
Philip, would you say that 25 basis point of a rate cut is now baked in, factored into the prices?
Absolutely. But again, we've been saying that for a little while now. And yet with the new economic data, it seems to find, new impetus. And so, as you know, we have new inflation data coming out this week for the US. And of course, markets were watching that very closely. But I think, as I said, 25 basis point, I think it'd be quite a surprise. Does the Fed not reduce rates? I think that'd be really quite a shock. And I think something quite dramatic has to happen for that to come to fruition. And I think the other side of that, the chances of a 50-point cut also, I think, seem quite unlikely.
Oh, yes. So while you are bullish on the prices, Philip, and we have had reports suggesting that the prices can go to 3,750, 3,850, 3,800, 4,000, perhaps 5,000, 6,000 in the next 2 to 3 years. I mean, there are all kinds of reports out there. What is the best case scenario that you see for the gold prices, let's say in the next 6 to 12 months?
Yes, so you're right. We do see some quite aggressive forecasts coming out now. And I think it would be unlikely that you would find anyone that would be bearish on the price. So I think in terms of the prices, I think we would call that perhaps by the end of this year, I think 3,800 is quite possible. It's not just about the Fed, of course, in terms of its rate cycle. I think it's everything else that you've been discussing for some time now. Fed independence has gone front and center, debt levels in the US, and of course, the weaponization, the uncertainty created by tariffs as well. But I think 3,800 seems not likely, but it's quite possible given the speed that we're seeing. And we could see further strength into 2026 as well. I think what I would caution, though, because so much is investment driven by institutional investors, that adds, I think, a degree of volatility into the price. And so, for example, a period of consolidation is almost quite healthy if we're thinking about the prospects for the price, rather than sort of a straight line rise up.
Philip, a lot of people feel that they have missed this buzz the way that we have seen gold prices run up. So would you say every correction perhaps would be bought into?
Absolutely. I think there's plenty of money on the sidelines. There are plenty of investors that didn't see this coming, and frankly, Metals Focus didn't see this coming. I'll hold my hands up to that. So I think there's quite a lot on the sidelines. And of course, prices that were quite recently thought of as resistance points are now support points. So I think, yes, there's quite a lot of money on the sidelines that would come in and, again, support the price, whether it was a low of 3,400 or 33. I think these levels would be very well bought into.
All right. Philip, talk to us about the physical demand as well, because that is something that really seems to be picking up. It's not about speculative money. It's not about just paper money or even ETFs, by the way, which all seem to be doing quite well. But would you say it is the physical buying in case of gold, holding of gold, that really seems to be catching up now?
Well, if we're including central banks in that, I know in your introduction you touched on China. So we still see, I think, relatively strong buying there in sort of absolute terms. I mean, our figures for the first half of this year, they were down on the same period last year, but that was either, I think, a record high or close to record high. So in absolute terms, you know, central banks are still very present on sort of the physical side of the market from a demand standpoint. And even if they may well potentially be backing off at these prices, I think if we take a step back, then I think they are aggressive on the demand side. And I mean, I think our current forecast for this year is about 900 tons for calendar 2025. So from that point of view, yes. I think from a retail standpoint, it's much more mixed. The US, for example, which is quite an important coin and bar market, there are some heavy liquidations there. So that market is very weak. In Europe, which is really led by Germany, we're seeing a bit of an improvement so far this year. And in India, again, I think quite a mixed picture. But I think, you know, the market, you know, I think there are quite bullish price expectations. And I think that is fueling, I think, some relatively decent levels of bar demand there as well, or here, I should say.
Yeah. Philip, you are in India. You're in Mumbai right now. Thank you so much for coming to the studios, by the way. And you have been meeting people, talking to them as well. What is it that you're picking up their reaction to these gold prices? Well,
I think it's quite difficult to separate the gold price, because a lot of people we're seeing are manufacturers or wholesalers with sort of export business as well. So trying to separate the price from the tariff or the potential tariff is quite difficult, and the uncertainty that's bringing. For example, if they're shipping into Western markets, this, like India, is an exceptionally important period of time, or coming up to that, when the trade should be really restocking. And also, you know, there's a lot of headwind there, and how they're trying to deal with that. And, you know, thinking about the local market from a jewellery standpoint, you're getting moves to lighter products. Well, that's been going on for some time now. And also the potential, perhaps on the margin, but the potential for lower carats as well.
The exchange market also seems to be quite strong, by the way, with old jewellery being bought for new jewellery there. Either way. How are you looking at demand from here on, with where the gold prices are trading right now? I remember last September 2024, gold was trading at 2650. It's trading at 3650 right now. Is it becoming a very niche market as we move ahead from here? Because at these current levels and the kind of forecasts that the markets are throwing at, is it going to become difficult to buy?
I think, again, from a retail standpoint, I touched on jewellery, so they're moving to sort of lighter weight or lower carats. I think in the retail investment space, there are opportunities to produce, you know, smaller weight products. So I think that helps to keep the retail space broader. But you're right in terms of that risk that it does become more of a high net worth institutional play. But, you know, other markets are, I think, are also quite active. But yeah, but that's always a risk at these prices until, say, consumers can perhaps start to adjust to some of these levels.
The tariff impact is something that we already have seen in sense of positive for gold going forward. This whole play of central bank buying, with the de-dollarization play coming in, with the markets believing that the US dollar index will decline from here, and September is just the beginning. We will see much more interest rate cuts coming in from US. How are you playing all of that in gold?
You're right, there's quite a lot there. I mean, as I said, I think from a de-dollarization standpoint, we think that will continue. Of course, for some central banks, simply because of how the gold price is behaving, by definition, it's now in a higher share of their reserves than they were perhaps expecting it would be. So we'll have to see how some of those play out. Do they adjust that higher? Do they pause? We still feel that, as I said, because of our forecast for the year, you may well have other countries coming into the market. Now, we don't have any, I think, special information that would suggest who they may be. But I still feel there's perhaps more activity we could see coming in from that part of the market, and therefore that should help to support prices going forward.
Philip, just one more point about Indian markets there. Do you see demand getting impacted? I mean, you've said 900 tons is what we could see in sense of imports. You've also talked about on how Indians have been buying gold for thousands of years, one of the top buying countries when it comes to retail here. Are we looking at a dent going forward, really? Or do you think it's just that the market will change from retail perhaps to institution?
Well, I mean, again, I guess it depends how you look at it. I think on the investment side, I think the ETFs, there's a little bit of growth there. We've seen some modest growth from a gold standpoint. Silver has been much more exciting. But on the gold standpoint, a little bit of movement. As I mentioned, I think the physical investment is reasonable. And again, from a jewellery standpoint, we'll have to see. As you know, the 22-carat price just has gone through 100,000 rupees per 10 grams. So I think it's too soon to see how the market will react. I think as it stands, you know, from a festive demand point of view, that is down year on year. But what I'd also say to you, it's not down aggressively.
Okay.
And I think that is quite encouraging.
All right, so there are some positives coming in for gold as well. But Philip talked about silver, and that's exactly what we will be talking about after this very short break. And joining us for this discussion would also be Michael Durenzio from the Silver Institute from the US in a short break. Welcome back. You're with us at Commodity Champions. We'll talk about silver now, and that also seems to be soaring on the higher side. In the international markets, we are trading at a 14-year highs. We've seen $41.50 an ounce onto that one. And that's not all. Silver has gained a big 43% in this year alone on expectations of interest rate cuts from the US Fed, a softer US dollar, and declining treasury yields all have aided the metal's rise. Joining us in the discussion now is Michael Durenzio. He's president and CEO at the Silver Institute. Michael, hi. Thank you so much for joining in. Wishing that you were here in Bombay as well. But how are you?
I wish I'm doing great. I wish I was there as well. It's great to see you, Manisha. Philip, good to see you as well.
Likewise.
Michael, while of course we've been talking about gold with Philip, but silver, I mean, that's another one. 14-year highs, not too far away from its all-time highs. And almost everybody seems to be believing that we could see an all-time high this year or next. How are you watching the prices?
Well, we're keeping a very close eye on it, and we think we're in the middle of a secular breakout with respect to silver. I mean, the rise this year alone of some 43% has been quite remarkable. It's being fueled by all those points you mentioned, but it's also being fueled by a focus on green energy across the globe. It's being focused on the investment side of the equation, especially with ETPs and in India with ETPs. So look, it's firing on all cylinders at the moment, and we're very bullish going forward.
You know, while of course gold has been gaining because of the safe haven demand, silver also in addition has the deficit, the industrial demand, and most people seem to believe that silver perhaps will outperform gold going forward. How are you looking at the way silver is doing? The physical buying, the investment buying, the ETF buying, as you mentioned, has been on the stronger side as well. Are you willing to put out a number, Michael, on where the silver could be this year, next year?
I will leave that up to Mr. Newman and some of the banking analysts to give a final number, but everything is pointing north. I can say that. Many investors are looking at the deficit. We're in the middle of our 5th consecutive year of a deficit. And while it may be a little bit smaller than in previous years, it's still a deficit market. Only recently, 2 weeks ago, the United States identified silver as a critical mineral, which means its importance to national energy, national strategic and defense applications have been identified by the U.S. government as a critical mineral. Many investors are looking at the deficit, but I think they're looking more long-term too. When you look at the metal, you look at the investment purposes of the metal, you're seeing strong ETP, a little weaker on the physical side, especially in the United States, but India is picking up, as Philip mentioned earlier, with respect to gold in Germany. Silver is picking up there as well with respect to bar and coin sales and demand. So we're quite bullish on the year, as I mentioned, and we're looking forward to continuing this trend, hopefully.
Michael, as you mentioned that, well, yes, there is a lot of buying that we've seen, and US adding it into the critical list just gives it that fillip. But apart from that, we also have news reports that Russia is buying it for its central bank. Saudi Arabia could be doing that, and more banks perhaps could be adding silver in addition to gold.
Well, that's very encouraging. Last year, in 2024, in December, Russia announced that it would be looking at silver as potentially an acquisition for its central banks, and other countries are doing the same. I don't have any verification that that's taken place so far, but it's encouraging that banks are looking, or central banks are looking at silver as another alternative asset to put on the books.
How are you looking at the Indian demand going forward? Because as far as gold goes, it does seem strong. When it comes to silver, do you see it stronger?
We see it being very strong this year. We see it very strong, especially on the investment side, the jewelry side. The silverware side is slipping just a little bit, but I believe that's because of the high prices of silver in India. But we were in India in April. Everybody seemed to be in a very good mood. There was a lot of OEMs, jewelers, other manufacturers, and even mining companies at the India Silver Conference, and the mood was quite bright. And we think India, again, will be one of the central countries in this remarkable year for silver.
Philip, getting you in this conversation as well. And as Michael said, price is something that he'll let you talk about. So what is your sense? Where is the buying coming from? And what's your sense on prices?
Well, I think to add to what Michael was talking about from an investment standpoint, you look where ETFs are globally. India, yes, has been strong globally as well. And even though we're just below those record highs from a volume standpoint, in value terms, we are at record highs in terms of ETF positioning. So I think that's very encouraging. And so from a price, we do think prices can strengthen from where they are. And we think that will continue into 2026 as well. And I think what's really positive from a price standpoint is the fact that when we did break out just through 30, get into the mid-30s, that it held those levels. So those mid-30s became a very credible point. And even as we get into the very high 30s or into the 40, again, it seems to have held that. So I think that's very encouraging looking ahead as well.
Philip, how would you read those reports which suggest that silver could go to 50 and 70 and 80 and triple digit in the coming years?
I think $50 is quite feasible. If you're looking at very high threes or potentially even gold beginning with a 4. We always think that silver, when gold prices are doing well, it should outperform to the upside. We haven't seen that just yet. So I think if gold does get to those points, you could see some positive spillovers into silver. Perhaps some investors saying, you know what, gold's done very well. It's time now for silver. And so if that money does flow in, given it is a smaller market from a value standpoint, then 50 is feasible. I'm not quite sure what year that would be, but I think that is, potentially on the cards.
Michael, how would you look at the demand trends going forward from here? I mean, that's a question that I put to Philip as well in sense of gold. And yes, this seems like a changing market. And if the prices do balloon up further from here, would you say that that would really change it strategically on how silver is bought as well as investment?
As an investment, absolutely. I do agree with you. When you look at the overall demand side and just taking industrial demand, it may not post another record year, but it's going to be darn close to the number of ounces, 680 million ounces of industrial demand in 2024. So we're looking at China, we're looking at India, we're looking at the United States. We're seeing silver being incorporated more and more into data centers, into AI, of course, into solar panels, electric vehicles. The electrification of everything is leading to greater demand for silver. And that's something that's just not going to go away. We're not going to return, in my opinion, to a fossil fuel-based economy on a global scale. So silver has a critical role to play going forward, and it will lead to greater demand for the metal as the years go on.
So while, Michael, we are into a 5th year of deficit, how longer do you think that we will see this deficit of a situation continue into 26, 27 or beyond?
That's very possible. Look, there are no new silver mining projects in the pipeline at a large scale. We may have a small increase in mine supply this year. Some smaller projects have come online. But quite frankly, until the mining side of the equation catches up and the demand side continues to move forward, we could be in a deficit for several years to come.
Philip, coming on the gold and silver ratio, I mean, that seems stabilizing now.
Well, we're still in, I guess, a relatively high 80s. So yes, we do seem to be stabilizing at that point. And I think it will remain broadly around there, at least for the next few months. So if gold does strengthen, silver will run with that, I would suggest to you. But I think as we move into next year, and perhaps even for 2027, to Michael's point about the deficits, we do feel that they will start to have an impact as well. And of course, the other thing I think is really important, looking about how much silver is held in London and how much is freely available, that's not allocated against the ETF, that is exceptionally low. We've only got about 20% there. So that's something also that we are watching. So that's something that could have an impact this year or next year. And so that could therefore bring that ratio down as well.
I have a final question for both of you, and this really is demand related, because from where the prices are, that really seems to be the next thing. A lot of people have bought and are absolutely happy for that, grateful as well. But some people have not bought and do not believe that they can now get into these markets. So what is the sense that you get, Philip, on gold first? Where are we standing in sense of buyers here?
Again, I think for buyers that if we do see some liquidation, they will be coming into the market. But even equally, if we start to run up, then I think they would come in fairly quickly before prices do move higher.
And what's your sense, Michael? You think people will start moving into silver now, given the fact that it's not too far away from all-time highs, but people have missed buying somewhere?
I think they will. When you look at the global economy, when you look at the wars and what's happening across the globe, the tariff situation. Philip spoke earlier about the potential for a rate cut in the United States. It's that in particular is encouraging for silver, but there's a lot of economic and geopolitical uncertainty, which is leading people to get where they are right now with silver, but there's a lot more room to run. And I think that other investors who may have been on the sidelines will jump into the silver market.
All right, a lot more room to run for gold and silver, both on the higher side here. So even as we are trading at all-time highs for gold and silver in the Indian markets and multi-year highs for silver and all-time highs for gold in the international markets, well, there is still more upside left given the kind of global scenario that we are dealing with right now. If you're on sidelines, perhaps you'll get a chance to buy, but much higher rates from here is something that markets are talking about. Michael, Philip, thank you so much for joining in. You guys are a team and it's always amazing, very interesting to talk to both of you. Thank you for your time. Appreciate it. And with that, that's all the time that we have on Commodity Champions. Thank you for watching.
Hello and welcome to News Center. I'm Parikshit Luthra. The Goods and Services Tax Council has recently approved mega cuts in a bid to put consumption on the highway to growth. The 12% and the 28% tax slabs have been scrapped. There is a tax slab for 40% GST as well, but it would be limited to sin and super luxury goods like aircraft and yachts. Nearly 99% goods, which were previously in 12% tax slab, have been shifted to the 5% slab. The new rates will apply from 22nd of September. These products include daily essentials like toothpaste, toilet soaps, etc. Footwear below 2,500 rupees, among others. Now let's focus on the 18% GST slab. Around 19% products that were earlier in the 28% slab have been moved to 18% slab. White goods, air conditioners, televisions, among others, are expected to become cheaper. The government has pegged the GST cuts as a Diwali bonanza for Indians and hopes it will drive consumption in the festive season. But will it have the desired effect? What kind of impact will it have in the rural sector as well? And what will be the ratio of demand uptake between urban and rural? Let me now go across to our guests. We've got Dherashil Patil, National President of the All India Consumer Products Distributors Federation. Also on the program with us is Viren Shah, who is the President of Federation of Retail Traders Association. Thank you very much for joining us. Mr. Patil, let me begin by asking you, are you looking at a strong demand uptick now in both rural and urban areas? Has this news of GST cut gone to different sections of society? Have people started realizing that there could be major differences, major price cuts coming their way?
Yes, Parishit, definitely. These reforms have sent a positive signal into the entire consumer base. These reforms were very long awaited, and we are really, really, really happy that the government has taken this bold decision as such a step, where we were having a lot of ambiguities between the traders, manufacturer, and the entire economic circle. So yes, definitely there would be a boost in consumption. Driver for the economy will also be in a very, very positive role, where we are seeing a boost up in the procurement of goods and the rural and urban in both the ways.
All right, let me also go across to Viren Shah. Viren, when it comes to different product lines, are you looking at an increased uptick right now, or do you expect things to only pick up from Navratri, that is the 22nd of September, because we're also in the Shraddh period right now?
Yes, I completely agree with you. It will pick up from Navratri onwards, because that's the time where the festival is on. And also, since the cutoff date is on 22nd of September, so a lot of prices will be changing from there on, because right now the prices at what the retailers or the vendors are selling at the old price, which is a little more than the more than the current price, because the percentage of the GST were higher earlier, and 22nd onwards it will be cheaper. So there will be a lot of more offers to the consumer, which is going to be directly passed on to them, because the vendors is going to be selling at a lesser price. So I feel the festival period will be the boom for Indian market, especially in the town. I'm not sure about the village, because still the stock has been moved out of the shelf. The retailers will keep the same price, but moment it is after 22nd September, whatever the buying take place, that will be a cheaper, and that will be passed on to the consumer.
Right. And do you think this is going to be having a positive impact on sales in both rural and urban areas?
Yes, there will be a major change in the consumer buying, because most of the items, 90% of the items, their prices have been reduced because the GST has been reduced. So I guess all those items which are coming in the 5% bracket, they will be cheaper, and consumer will have a really great time in the sales, and during the festival period come out and large numbers, and we are expecting this Diwali is going to be a bumper Diwali for all of us.
Right. Mr. Patil, asking you now, when it comes to the FMCG distributors, what kind of demand uptick are you expecting starting Navratri? And I'm sure different retailers are stocking up now in a big way. Have you started seeing big demands coming in from shopkeepers for FMCG goods all across the country? What is the kind of surge and uptick in sales that you're expecting?
Yeah, Parikshit, definitely, because the third quarter of the year is always a highest quarter for the FMCG segment, because we have a lot of festivals in this quarter. We have just finished Ganpati, we have just finished Onam, and we are on the way for Navratri, thereafter Diwali and Christmas. So definitely the retail market is all geared up to have heavy stocking. But we feel that this, say about 10 to 15 days, which are pre the launch of 22nd, there will be some change of stocking pattern, because since the companies are not yet have given a clear-cut signal as to who will be responsible for the closing stock or the floor stock at the retail level or the distributors, so that the discount can be taken care of. Because if the clothing stock is not been handled in a way where the retailer will be responsible to give away the discount, where his margin is just 8 to 10%, and the average price cut is 7% down from the 12% GST slab and 13% down from the 18% slab. So we are yet to receive a few notifications from the company, and as well as we are also expecting some intervention from the government directing the manufacturing companies, because ultimately the manufacturer is responsible for the price control into the market. So if the price has to go down, it is the whole responsibility of the manufacturing company. But as you said, we are hoping for a very, very boosted season right now.
Right. And Viren, asking you about the issues related to compensation cess. Federation of Automobile Dealers have also made a representation to the finance minister. So have different other industry bodies, because they worry what will happen as a result of loss of compensation cess as of 22nd September. Could you give us a sense, if retailers, traders are to be asked, as a whole, what would be the quantum of cess that your representatives, your members have come and told you that they may suffer a loss on account of?
So that's exactly the issues are being faced by most of the retailers and of course the manufacturer, because the MRP is always decided by the manufacturer, and that MRP which is there right now, which is on a higher side, moment the GST is reduced to 5%, the MRP changes, so that discount has to be passed on to the consumer. But as on today, the MRP is little higher side because of the GST slab which is on a higher side. So that there is the confusion, and there is a little bit of issues which have been brought into the notice of the finance minister. Also, there is one more sector, which is the ethnic sector, which is a traditional sector, bridal group, where we have raised objection on 18%, because it was 12% and now it has gone to 18%. That is a very, very serious concern which we have raised it to the Prime Minister office as well as the Finance Minister and the GST committee. That's where they have to look into it, because this is a huge market in India on a bridal segment, on an ethnic segment, and government has to look into that area, because suddenly they have increased from 12% to 18% is going to really give a lot of effect, because 2,500 rupees the limitation is too low. It has to be more, and 18% has to come down to 12%. And this is the where government has to come in, either today or tomorrow. They have to look into this.
All right. And Dherishil Patil, final question to you. Any concerns which you hope that the Finance Minister, the Finance Ministry can address before the 22nd of September?
Yes, we would really hope that the Finance Minister or the Finance Department would issue a directives as to how this implementation is there, and it is taken into the letter and spirit of the entire law, where on 22nd of September, every consumer buying goods gets and receives the gift given by our Prime Minister to these people. So the end consumer is benefited from the very first day, rather than waiting for the old stocks to finish. So that is my concern and request.
All right. Thank you very much. Thank you very much, Mr. Dherishil Patil and Viren Shah as well. We're taking a short break, but don't go anywhere. We speak to Gerrit Marx, CEO of CNH, a European-based equipment company, which is majorly into tractors, farm equipment, and building machinery on its India bet, new launches, and much more. That exclusive conversation coming up on the other side. repeat. Today we're joining you from the manufacturing plant of CNH Industrial. Case New Holland is a maker of tractors, farm equipment and industrial machinery. This company has a 180-year-old legacy. It is an Italian-American multinational which has been present in India for the last 26 years. They've got 3 manufacturing plants. At a global level, they're owned by the Exor Group, which is the investment arm of Italy's famous Agnelli family. The Agnelli family is the founder of the Fiat brand, and they also have a significant stake in Ferrari. Joining me right now to speak about CNH Industrial's India strategy is Gerrit Marx, their global CEO. Gerrit, thank you so much for being with us here at your plant in Greater Noida.
Thank you, Parikshit, for having me on your show.
So you've taken over 1 year ago, and
Yep.
within a span of 11 to 12 months, you've already visited India twice.
That's correct.
Clearly, India is an important market. Tell us about your thoughts.
India is a very relevant market for us in CNH for 4 different reasons. It's a market for us to produce and sell. It's a market for us to produce and export. And it's a market for us to source and engineer. These are the 4 areas, and hence it's very obvious that I come here at least once a year and to see how things are going, because things are going very rapid and very swiftly here with all the projects that we have going on with our local team.
Right. Tell us about your new compact tractor that has been launched, and how important is it for CNH's strategy?
So here you can see the compact tractor lineup that we have engineered together with our partners from LS. From South Korea and localized here in our Noida plant in India. This is going to be a brand new lineup of compact machines that we're going to produce for export markets, for the European markets as well as for the US markets. And we are going to see seeing quite some good momentum with the products with our dealers and our customers in both of those regions.
Right. Let me ask you about increasing your market share, your presence across the country. You've been here for the last 26 years. Clearly, there would be an aspiration to go into the top 3 or top 4 levels. What's your strategy going to be here onwards?
Well, we have shown in the last couple of quarters that we are amongst the fastest growing tractor brands in India, gaining market share across all our products, whether it's hay tools, whether it's balers, whether it's combines, whether it's tractors. And I think with this foundation, that as you said, it's 26 years we have been here, formerly known as Ford, now New Holland, since a couple of decades already. We are gaining ground with new technologies. We are investing a lot. We are expanding our capacity here at the Noida factory, and we are even considering adding a new site, another factory in India for our production to gain more ground to become double-digit at some point in time, not too far in the future.
Right. So if I were to ask you, what's the investment that you're considering putting in India? You told me a short while back how you've made sure that the India market is now reporting directly to the CEO.
Correct. Look, 1 year ago when I came, I told my team here there is great news coming, and then everybody was super excited about what might happen. And 2 weeks later, I was able to announce that our India organization and our India leadership team under the leadership of Narinder Mittal will report directly to me. So we separated the India region from Asia Pacific and made it an own reporting region to give it the right level of attention and have it at the same table among the other colleagues of our North American region, South American region, Europe and Asia Pacific. So that was a very needed next step, because India is probably for agriculture what China was 15 to 20 years ago for passenger cars, and we don't want to get it wrong. We want to play here the right way and make it the right priorities right from the gates.
Right. So the investment, the capex that you're looking to put on the table in the next 1 year and maybe in the next 5 years?
I think the details the team can provide you with. For us, it's a material capex that we put into this site. As I mentioned, we are considering adding another factory, significantly enhancing our production capacity here. We're putting serious money down on product engineering, product development here in our technology center, close to Delhi in Gurgaon, and also in the other sites. So for us, CapEx and R&D goes hand in hand, and for us this is a pretty material investment, and the team has proven to be able to deliver quite a bit with the resources we make available.
So market share that you're targeting in 5 years?
Market share that we target in 5 years, I want to be double digit. And that is clearly something that we can achieve here if we keep the pace and momentum and the focus on this very, very relevant region for CNH Industrial.
Product pipeline for the future.
Product pipeline. Look, we are going big on hay tools. We're having combines coming up also for localization. We are doubling down also on our sugarcane harvesters here, besides the tractors, which is obviously the volume product. So compacts is one, utility lights is coming next. We are putting the global center of utility light production for CNH Industrial into this very site, into Noida, and we export from here either as completely built units or as CKD kits to other sites around the world to make it really the center of our operations.
So you earlier said that India is what China was for agriculture about 15 years ago.
Passenger cars.
For passenger cars.
For passenger cars.
Right. Tell us about the importance of India in terms of manufacturing, vis-a-vis manufacturing in China.
Well, look, India has a great deal of support from the government, the local government, as well as the national government, to bring production and industry into the country and to support us as a company that was sort of born 26 years ago in India with the Ford brand, to support us to win in this market, because we are considered to be a local player. And hence, this is a great deal of support that we can see here for us, and that gives us a lot of trust to keep investing and make our footprint even larger here in this fantastic, beautiful India, incredible India. Yeah?
Right. I would also like to ask you about the impact of US tariffs. The 50% tariff has hit the Indian exporters, the Indian economy. How is it impacting exports and the demand for tractors like these?
Well, look, these 50% at this point is the current state of discussions. I wouldn't even call it necessarily negotiations. Probably the negotiations between the US and India haven't yet really started. So we'll see how this will unfold. For us right now, it's a moment to pause and take a moment to think about how can we even better leverage this region and how to better use this region for our global interests. However, I don't see the 50% here to stay, because 50% on exported goods makes it very hard to ship from here to the United States. But it is kind of not only the reason why we are here to ship products to the United States. As I said, we are here to sell very successfully products in India, export them to Europe, to Southeast Asian countries, to Australia, New Zealand, and that is going really, really well. So on tariffs, I don't think this is the last word is not spoken. So the 50% are clearly not there to stay. We will see in the next probably 6 months how this will go, and then we can talk again whether this is then dropping to another percentage or another level. But 50% is.
Has this led to a pause in exports?
No, not at all. I mean, when it comes to exporting to the United States, I mean, we have decent stock levels in the United States of our compact line, so there's no need for us to now push even harder. You've seen that the global agriculture market is in a downswing, and we have the same phenomenon also on the compact segment or the utility light, the small tractor segment. So the United States market now is very much down, mostly in cash crop. This is more for livestock, and it's more like the farm dog, if you will. That kind of machine does the job on the farm in the very small parameter. But given the market is low, I believe we will not need to have necessarily any worry, given that we have now paused importing to the US and we wait for, let's say, better import tariffs to come with the next negotiation.
Overall, the US tariffs, how is it impacting your strategy? All companies are holding back future investments. Plans are in disarray. How are you using this opportunity?
Well, we are not holding back with any investments, because I think doing the right thing is the right thing at any point in the cycle. And in this particular moment, we are living through a rebalancing of global trade. So what obviously is a question mark for all our manufacturers is there is going to be a BRIC bloc like Brazil, Russia, India, China. It's very obvious that there is stronger collaboration between those four, and there will be some sort of self-sufficiency within this bloc when it comes to probably energy and crop and nutrition and food, etc. So there will be this one. And obviously there is the US-led European, Canadian, world order with Korea, Japan, Taiwan, and the other countries in there. And I think we need to see how this world order is going to, in this geopolitical situation with global trade, will balance out. And then, we will see where to focus our investments on even more so. But we're not holding back. We keep investing heavily in the United States. We We heavily invest in Europe. We are localizing products in the United States. We are localizing products here in India. We're going to take this as an advantage because in the end, the most agile mind, the most agile thinker is going to benefit from this very moment of instability and uncertainty, which I consider always a huge chance for those who lean into change as a benefit for the future.
Right. You remain committed to India, but if I were to ask you between India and China, where do you think CNH will be focusing its manufacturing operations on for the future?
We will base on India and China. We will be in China to supply in China the products that the Chinese operations need, and the machines that we are currently selling in China are the very large machines like the Magnum tractors, the very large combines, sprayers. I mean, these kinds of machines are localized in China, and we proudly will continue to invest in Harbin to further expand our heavy machinery, high-end machinery production and supply to the Chinese large farmers. At the same time, we are investing heavily in India, which is a market predominantly all around the compact and utility light, and this market will grow in horsepower, and when the time is right to then also invest into higher horsepower classes in India, we will do the same.
Okay, my final two questions. There has been a GST reduction in India, so the overall tax rate on tractors, farm equipment has come down to 5%. How do you see that leading and triggering more demand?
Well, I mean, the farmers have more money in their pockets, and with more money in their pockets, they can obviously invest. It's a great step forward from the government to incentivize consumption, to incentivize investments in newer machines, higher productivity machines, and with that, we will see an uptick in demand. Maybe not yet necessarily in the fourth quarter this year or so, but certainly throughout the year of 2026, we're going to see an uptick there because this consumption tax cut is applying multiple areas across the industry, and I think it's a great step for India to grow its gross domestic product.
Percentage terms that you could share with us?
No, there's a price demand sensitivity because the same benefit is impacting everybody in the industry, and now it's about how do we tactically play in the commercial terms in the various different regions where we play to get the best benefit out of it and bring the best product to our farmers.
All right. Thank you so much, Mr. Marks, for joining us here on CNBC-TV18. Wonderful talking to you about your new compact tractor and your outlook for the India market as well. Thanks once again.
Thank you very much for having me on your show.
Nirmalaji, thank you so much for giving us this exclusive interview, one of your first to any media outlet. This is after this monumental, historic decision of GST rationalization. In many ways, GST2, the second coming, there has been a lot of talk in the past. Let me begin with a broader question. From the Prime Minister's vision of making life easy for the common man, of, reducing the burden on the common man. You did it in your budget last time by cutting the income tax rate, a bonanza for the middle class. What was the vision behind this? What did the Prime Minister tell you? How did it come about?
Thank you very much for giving me this opportunity to interact soon after this major reform measure has been approved by the Council. And I thank every one of the ministers who've attended the meeting, the states, the finance ministers, and supported it. Otherwise, it wouldn't have come to see the light of the day.
So now that you've done two monumental things, you've put more money into the hands of the consumer, you brought down for the middle classes the income tax cut, and now rationalization of GST. So will it now finally sort of move the needle on consumption?
100%. Because there's more money given already through the income tax cut. Right. The rates are coming down. So the citizen now has a choice to meet his aspirations and his expectations. He cannot say, look, I have the money because the income tax is reduced, but these items are beyond my affordability. Now everything has come down. I'll give you this number which is important. 99% of all the goods and services which are touched by GST are now either in 0 or in 5 or in 18.
That's right.
There's nothing beyond. So that 1% is what makes for the demerit goods, right, which popular parlance says sin goods. Yeah. So that is the extent to which we have cleansed the system of anomalies, doubts, duplications, and any interpretative issues.
So this will also lead to higher investments, it will fire up investments as well?
Obviously, with consumption going up, there's a potential for capacities to grow, investments to grow.
Now the combined tax revenue impact of this, earlier your income tax cuts, and this is about 1.2 lakh crore. Do you think that there will be a certain revenue buoyancy as well in the coming years to make up for this? And
every economic theory that one studies says that.
Yeah. Have you seen that in the past?
At least the moment the income tax reduction happened, you heard people very clearly coming out and saying, I've met up with a lot of individuals coming from different strata of the society saying, I'll have more money to send my son to this particular college. My daughter is already doing engineering. I'll be able to fund her for a higher studies and things like that. And from ordinary citizens who are leading their lives either working in a small store or driving a car, taxi, and so on. So it has an immediate psychological effect that I can do this, which was beyond my affordability. And therefore, I think there will be a buoyancy in terms of revenue.
Any impact on capital spending or fiscal deficit?
I wouldn't think. At this moment, I can say with confidence, capital expenditure of the government will not come down. It will be completed as is stated in the budgetary planning time, the budget estimate time, and so with the fiscal deficit. And this is the last point of my gliding path. Right. I will adhere to it.
Will petroleum products and alcohol continue to be outside the ambit of GST?
Yes, the current proposal doesn't include it. Right. The states will have to.
And you don't see that happening in the near future?
Not in the immediate future.
Okay. Let's move, to a few broader economic questions as well. With GST rationalization, inflation is likely to come down quite naturally. Does it make a case for further repo rate cuts in the future? I know it's not your, but generally, directionally speaking.
Not my domain. We'll have to see how the RBI assesses for itself.
September 22nd is a tight deadline. Are you confident you'll be able to roll this? Is the back end ready?
Yes, the back end was mentally prepared, and many structural things have already started getting corrected, reset, and so on. It is with the agreement of these GSTN related technology managing team related issues that we have had a discussion with them, and they have clearly given me the confidence that yes, they will be rolling it out on September 22nd.
So Rahul Gandhi, who earlier called it Gabbar Singh tax, now has been talking about one nation, one tax. On the other hand, former Finance Minister P. Chidambaram, he said that, it is 8 years too late. How do you react to all of this?
Well, being in the opposition, I think they have to say something. when the popular response has been so overwhelming, for an opposition to try to take some credit out of it, but yet with a hesitation that the credit should not be completely given to the government is quite understandable. But I would want them to ponder that neither could they bring it in because they couldn't win the confidence of the states, nor could they truly and literally understand how the mechanism works. After all, the GST Council has members from Congress party,
yes,
finance ministers from Congress ruled states are there. But I have a feeling the Congress High Command, as they call it, doesn't do its homework to understand the way in which this wonderful organization works, the GST Council. And therefore, at one point in time, they call it Gabbar Singh tax, another point in time saying, oh, this is fine, but it should have come earlier. These are clearly statements coming from people who have not really spent time to understand how post-independence, that one institution which has been created, a constitutional body, if I'm right, this is the only one which has been created post-independence,
yes,
is spent 8 years, but has delivered so much in terms of revenue, in terms of uniting this country, in terms of making ease of doing business a reality, and is now coming up quickly in succession within 8 years with the second generation reforms. To understand it and then to comment would help the government, not stray comments which doesn't get into the details.
So Q1 GDP numbers are heartening, 7.8%. At a time when President Trump said that, India is a dead economy. How do you react to something like that?
I may not be able to comment on, let's say, foreign head of the state commenting on it. But in India, one line which I keep repeating several times, probably even once when I met you once earlier when we chatted like this, it is the cynics within India who worry me. It is the naysayers within India who worry me. Assume somebody had said it, a head of state has said it. Building India together, and all of us together building India, are we going to carry those tales or stories or observations which somebody else says and then repeat that here, oh, so and so has said this, India's a dead economy, we knew it, this is happening, that's happening. India requires its citizens to be respected. They are toiling and struggling and working to build their families and their economies, their own personal family wealth and whatever. At this time when we are trying to create more opportunities, do we need the naysayers to even borrow such observations, be it as it may that it is coming from a head of state? Do we need our own people to use these expressions? It is undermining not the government, you're undermining our citizens' efforts. And a responsible opposition, I wished didn't repeat these lines, but I think it is, I would react only to what our people are saying rather than a head of state elsewhere.
No, five-quarter high number, I think it gives us a lot of confidence in the Indian economy.
And also inflation coming down.
Yes.
Drastically coming down.
Yes. But it brings us to a related point, which is on the point of tariffs. Now that tariffs with the US are at 50%, what is the likely impact on the GDP going forward? There are various estimates by various sort of consultancies, from 10 basis points all the way to 100 basis points, some have predicted. Where do you see the impact really of this?
But with the reform like this, many of that should be offset.
Yes.
So it is never a situation of a one fixated point. It's a dynamic situation where you're moving from one to another with newer players coming in, newer factors coming into play in this scheme of things. This one, you have the GST reforms, which is going to make people understand that they can fetch more things with the same amount of money with which they bought some amount earlier. So it is very clear that industries have been speaking about the tariff and its impact. The government has designed something for itself. We will come out with something to handhold those who are hit by the 50% tariff from the US. This has been said earlier. I've met up with the delegations when I went to Chennai in recent past few days. I have said this there and I will repeat it. Government is working.
So will they be allowed to sell in India, or how do you plan to alleviate their concerns?
No, there is a package which consists of very many different ways in which we want to help them. So we'll wait for the cabinet to clear it, but there is something coming to help them so that this tirade of the tariff is something which they can face, and also suddenly having to look for newer markets is also a challenge, but we'll have to help them out on that.
So is there a sense in the government that this could be a slightly longer haul?
We hope not, but we really can't leave our exporters high and dry saying it's going to change sooner. We will work with them.
Nirmaji, will we also continue to buy Russian oil?
Yes, that's been made very plain and simple. Whether it is Russian oil or anything else, it's our decision to buy from the place which suits our needs, whether in terms of rates, logistics, anything. So where we buy our oil from, especially being a big ticket foreign exchange related item, where we pay so much out of our highest in terms of import, we will have to take a call which suits us best. So we will undoubtedly be buying.
Another question about, the officials of the Trump administration have been using really hurtful language against India. Saying that we are Brahmins profiteering at the expense of, ordinary Indians, or, calling the Ukraine-Russia war Modi's war, or us as Kremlin's laundromat. How do you see all this? I mean, how do you react to something like this?
Very much the same principle as I said earlier. It is one thing, it can be hurtful. It is one thing for a foreign government head of state or an official or anybody to say all that. And the global diplomatic world is astonished that that kind of an expression is being used against India. And that will have people in the diplomatic arena to respond or to deal with. But what hurts me more is when those very expressions are being justified in India. Oh, don't you all know, don't you, I mean, you know, dirty, unwashed Indians, you don't understand what this expression means? This is how, this is explained. Who wants these explanations from Indians? Who actually wants us to know better? And who are these people explaining to us, this expression is used in this context? Yes. I'm outraged by that. I don't want explanations to justify that. Whether I'm going to have to deal with them, stand up and challenge them or retort is a different story. Right. But Indians quoting those words and telling us, oh, you dirty Indians, you don't know this colonial justification of the language that is being used against Indians, against such countries which have come out of its colony and from its empire and stood up to build its own country with its own self-confidence. And even now when we are talking about Atmanirbhar, it's not just in terms of producing everything in your country. It's also about being
self-reliant.
There is no self-respect.
Self-respect.
As much as you want everything produced in India for Atmanirbharta, you should have something of a self-respect. If somebody is saying, all of us in one voice should respond to it, rather than have a few of us justify it by saying, don't you all understand it? Are you a part of the imperialists? No. I'm outraged more by that.
Yeah, the opposition picking up this and, making it their own narrative.
And saying...
Like dead economy was picked up by Congress, Rahul Gandhi to say.
And even for this, Brahmins are being are the ones who are benefiting out of it. Oh, you Indians,
us Boston Brahmins.
Yes, Boston Brahmins. Oh, you Indians, you don't understand this Russian oil purchase is to help Brahmins to benefit of it, and you are being fooled. Exactly the same divide and rule principle which the British used here, which the imperialists used here. And even today you have the friends of the imperialists telling us, no, the expression Boston Brahmin is this and not that. Who Who damn cares? I'm sorry. Yeah. Who damn cares? I want Indians to think for ourselves. I want those Indians who are now defending that language to get up and say, we are free from you all. Now for over 75, 80 years, we'll mind our business, we'll take care of ourselves, refrain from using these words. Should have been that voice. That not being the voice, and upar se to teach us saying, don't you know the meaning of this expression? Outrageous.
Today we've got to know Nirmala Sitharaman ko gussa kyun aata hai. Nirmala, India and China are now mending sort of fences. So, right now it is at the level of resuming the flights and giving visas to each other. But what could be the next steps? How could we make the Chinese markets more accessible to Indian, Indian companies? There is, of course, a huge deficit of $100 billion here. So how do we do that? I mean, what are the next steps?
There's just a lot of work to be done in that area. There's no hiding it. We need to have trade conversations, market access conversations, non-tariff barrier conversations with the Chinese. Unless we do that, and unless there is a true engagement and not a procrastinating engagement, you may talk as much as you want on these issues. I've done it myself. And to have a conclusion arrived at takes a lot of time with the Chinese. Sorry. Market access is something which has not been realized despite our almost a decade-long engagement with the Chinese. In between, everything had come to a halt. But on both these issues, there should be meaningful conversations. Otherwise, the very products that we want to export to China go through different destinations to China. But why can't it go directly?
Yeah. And will it also be reciprocal? I mean, Press Note 3 prevents investments from China to India. So would you look at, doing something about that as well?
As it is, I think in one or two cases, particular cases, we have relaxed some of them. And in those sectors where their technology has come in, and the technicians and also the experts had to come to actually see the projects through, we've not allowed these experts to come. That has now changed. In some sectors, people are coming in The projects are already on the ground.
So India will be open to that idea?
Of course.
Yes. Nirmalaji, you've ushered in the boldest of reforms. I say this in every interview that we do because you corporate tax cut. I mean, that was a phenomenal sort of move. Then after that, last budget, we have income tax rates going down. Now GST2, as I called it. So, one thing that we probably haven't seen enough is on private disinvestment. What would you say to that? You did sell Air India, but after that, things have been slow.
You'll see action in that also.
This year?
Yes.
Oh, that's great news. Any deadline for strategic stake sale in IDBI Bank?
No, I think the secretary has already, Deepam secretary has already spoken about it. IDBI is moving quite fast.
Okay.
And I expect it to be concluded this
financial year? Okay, and any more banks which could then be looked at after this?
I wouldn't say any more banks. I'm not negating anything.
Right.
But yes, more disinvestments.
More disinvestments, okay. So we've seen that since June this year, the yield on 10-year bonds have risen 30 basis points since June, to more than 6.5%. Are you concerned about rising borrowing costs?
Yes. I wouldn't say I'm concerned, but I'm observing it. It is not affordable. And also at a time when interest rates are otherwise low,
yes,
bond yields becoming unsustainably high has a big bearing on the government. Not just our union government, states are also up against odds in getting affordable,
Also your fiscal math?
My fiscal math is as of now absolutely fine.
Yeah. So, Nirmalaji, we are again, near an election. Bihar elections are coming up, and before every elections, we have seen all political parties dole out reveries, and we've discussed this in previous, encounters as well. Does this worry you? State after state, promising welfare schemes, doling out reveries, and how does it all really add up for a country like ours?
I think I'll speak for all finance ministers.
Yes.
It is a very, very difficult thing. To have a scheme approved and also budgeted for is not wrong. And I would approve of that, because that at least takes the view of the legislature and also makes it public about how they are financed, and therefore also brings in that responsibility to keep your revenue generation equally attended to. But what most often happens, not so much with Prime Minister Modi's leadership, but I can say what generally happens is you give away a promise. Once you have to come to fulfill it, you're searching and scrambling for resources. And if you're an opposition-ruled party, it is very quickly arsenal in your hand to say central government is not giving me money. That's the biggest unsustainable argument. I'm more tempted to say bogus argument. Because you give a promise, you win the election, you come to power, and then after that you're not able to fund it.
Yeah,
why would you want to?
A lot of cases.
Yes, why would you want to throw the blame at somebody else, particularly the union government?
Yes.
So this kind of sort of recklessness in dealing with public finance has got to be discouraged. There's no doubt on it.
Nirmalaji, India holds about $227 billion of US Treasury securities. It also holds a lot of gold in its reserves. Should we diversify away from US Treasuries for reserves?
To some extent, I think the Reserve Bank of India has already started doing it. I wouldn't want to divulge more by saying how are they doing it. But I think Reserve Bank has taken a very considered decision, and they've also done by purchasing gold. So I think the bank is competent and they're taking a fine call on it.
One more question was on the decision to ban online gaming, which came as a surprise to many, especially, after many years when people had poured in a lot of money in that business. What was the thinking behind this? How do you assure people of consistency in sort of decision making at a time like this?
No, what is the time? What is so special about the time like this?
No, what I meant was that, a lot of investments had come into that sector.
No doubt.
Yeah.
We have not banned games which are for recreational purpose.
Right.
We are still online games for these things are not banned. It is only when you start betting with money. And why is it? Not because we want to say we don't like it. It's a question of the number of people who came to say families are getting absolutely shaken up.
Yeah, that's true.
Their monthly bills are shooting up. And children cannot be controlled from the temptation. And many children, in fact, I wouldn't mind even saying this. There was a finance minister who once met me in a very different context.
Right.
And he narrated an incident of his own family, where his own grandson, who's a very good person, the child is a very good child, well groomed and well brought up, used his credit card for just one day for some other purpose of a family's genuine buying requirement. He helped them because children are very savvy. Post that one another day, he picked up the card and said, I want to just do something. They said, all right, please. Because they never suspected this child as, into games and into betting and things like that. So the boy used the card and played and gave back the card. Again, probably he did it 2 or 3 times more. Phenomenal increase in the bill that month. And that's when the grandfather sat up and said, what's going on? Let's check up. And this grandson told him right in front of him that it was all free. I didn't go into any money-playing game.
He didn't know.
So the methodology is, say it's free, you get in, and for the duration of time that you've played, some kind of a charge is put, and again tempts you to go into another round, and so on. So the adolescent child is under the impression that he's playing a free game.
Right.
But he ended up paying through his nose. So that's a classic example, but many people approached us, the PMO and so on, and said, this is ruining our country, ruining our youth, please do something. That's where this bill has come.
Okay. No, understood. The rupee is at an all-time low against the dollar. Does it concern you?
It is, I've said this and I'm going to have to repeat it, it is only against the dollar that the rupee is highly volatile. Whereas rupee is not affected similarly by other currencies. So, and there are countries in emerging markets and even in developed countries whose currencies against the dollar are weakening. So it is an issue on that aspect and at that level about the volatility as a result of the strengthening dollar. It's not rupee weakening. I know I've been trolled immensely for saying this, but this is the truth. So.
Okay, thank you. Nirmalaji, one last question. For profitable companies with over 1,000 crore turnover, 2% of their profits go into CSR. Now, at a time like this, when MSMEs are facing a problem because of tariff issues, etc., is there any thought to take a relook at this for a little while?
Nothing before me as yet. Okay. If there's anything, I'll tell you, but there's nothing.
All right. Nirmalaji, thank you so much for your time. Thank you for patiently answering all our questions, very candid. And heartiest congratulations on yet another big reform, GST2 or rationalization of GST. Thank you so much for being with us.
Thank you very much.
Piyushji, thank you so much for giving Network 18 this exclusive interview. Welcome to the show.
Thank you.
What a day to be interviewing you. You know, historic reform in GST rationalization. You've been in the center of news for so long, so it's a great time to be interviewing you. My first question, all this started with the Prime Minister's address on the 15th of August, Independence Day, when he spoke about Atmanirbharta. He framed it in the context of Swadeshi, he framed it in the context of quality drive, and he also, you know, so that is where it all started, and it has led to this. He gave a hint to us on that day that big reforms are coming. So here it is, your first reactions on this GST rationalization.
Well, I'd like to compliment Prime Minister Modi for taking this bold decision. I see this as the most transformative step the nation has seen possibly in the last 50, 60 years. This is a journey that Prime Minister Narendra Modi started right in 2014. Back then, he spoke about making in India. He was conscious that ultimately we will have to become self-reliant. Atmanirbhar banna padega. He promoted Digital India, he promoted Startup India. Swachhata was at the core of his working.
Yes.
He started the concept of trusting the people of India. Remember, one of the first decisions was you don't need to notarize a document.
Right.
It was crazy. A Xerox copy, needed a notary and you spend money, go and sit before and plead with somebody. For him, ease of doing business is the pathway to a developed economy, and ease of living is a commitment to the people of India to ensure wider prosperity and inclusive growth. And these decisions yesterday have happened over a sustained 11-year journey of taking a broken, fragile 5 economy to become the top 5 economy of the world, soon to become the 3rd largest by 2027. An economy that was low on growth, high on inflation, an economy that was starved of foreign exchange, with a completely broken banking system, an economy where there was no hope, investments were falling,
right.
Our passport had no respect anywhere in the world. Inheriting that from the Congress, Prime Minister Modi, brick by brick, step by step, brought reforms, brought changes, showed that he trusted the people of India, focused on better quality of life for the poorest of the poor, through various initiatives, brought social security into their lives, got 25 crore people out of poverty, faced the crisis of COVID admirably, without letting the economy collapse as happened in many other developed nations. In fact, bouncing back so well that for 4 years now, we are the fastest growing large economy. Last quarter was 7.8% growth,
yes,
with only 1.55% inflation. Who could have imagined, if you look back at 2014, Rahulji,
yes,
that in a decade, this country will transform so rapidly,
right,
so beautifully, and a foundation will be created on which a $4 trillion economy aims to become a $30 trillion economy by 2047. That, I think, is Prime Minister Narendra Modi's very astute handling of the economy.
There was also, you know, income tax cuts, you know, for the bonanza for the middle class in the last budget, followed by now rationalization of GST, a long-standing demand. Like you said, it's taken months of, you know, work on it. Are you sure that this is, how confident are you that this is going to spur demand, spur consumption, and also eventually investment?
It's very logical, Rahulji. Take, for example, the reduction in cement from 28% to 18%.
Yes.
It suddenly brings down the cost of real estate and building a home. Prime Minister Modi has already provided a free home to 4 crore brothers and sisters, families in the country, another 2 crores more in the coming 4 years, 4-5 years. A reduction in cement price also helps the middle class now get the ability to own an affordable home. When you reduce the price for tractors, tractor parts, all other farm equipment, you are helping the farmer modernize, helping him improve his productivity.
Right.
When you make the two-wheeler cheaper or a small car cheaper of 1200 cc, the aspirational middle class, the young men and women who wants to have a two-wheeler, gets encouraged and is able to afford to buy a two-wheeler, with interest rates also simultaneously coming down, thanks to low inflation, and loans becoming cheaper and easily available in a strong banking system that we have today, not what we had in 2014. When the housewife goes out into the market, almost every product of daily use, all food products, all processed goods, foods, all material that is required for her kitchen, foodstuffs, utensils, everything will see a transformational reduction in prices. And industry has committed to us that they will make sure that the full benefit is net of input taxes is passed on to the consumers. So consumers are in for significant gain, and I'm very, very confident.
Let us also talk a little bit about the revenue implication or the revenue impact that this might have. You know, by one estimate, about 48,000 crore would be the revenue impact. Do you see that, you know, we will be able to take care of this, and, you know, any kind of fiscal slip that you see, you know, going forward?
Rahulji, we are currently collecting nearly 2 lakh crores every month. And with this boost in demand, the revenue will probably go up rather than being a revenue
So
loss.
you're expecting some amount of revenue buoyancy as a result of this?
So it is always so. And I think that every theory, economic theory, suggests that. And for that matter, in 2 lakh crore a month, so 24 lakh crore, 22 lakh crore collected in a year.
Yes.
This is hardly a very consequential amount.
So will it give some comfort to the markets as well? They have been slightly soft over the last few quarters. Do you think it will also give market men a reason to celebrate because bold reforms are on the way, that this government is not hesitant to take risks?
I think very clearly the market recognizes that we are in safe hands. They recognize that a decisive, strong leader like Prime Minister Modi will always keep national interests ahead of everything else. And therefore, if you see, while they've been a little soft, but they've been range bound.
Yes.
Between 24,500 and 25,500, the Nifty has moved.
Right.
But I'm very confident that this and the impact of this starting on the first day of Navratri on 22nd September will give a big leg up to the economy, to GDP growth, will ensure that Indian investments continue to power on, will attract more people to set up base, because ultimately when there's demand, there will be interest in investment to meet that demand. And a growing demand means growing jobs, growing number of people required in the supply chain. More investments will lead to jobs in the manufacturing side. Services is already growing in a double-digit level. You saw the numbers, the services PMI is at an all-time high almost. So I think all in all, India is poised for a very bright future. I assure you our exports also this year will be higher than last year.
Let's come to that. So I think, you know, let me rewind a little bit and, you know, come to what you've been dealing with, and you've been at the center of all of it. You know, till about July 6th or 7th, things seem to be going fine with in our negotiations with the US. Then in a matter of weeks, you know, we had a tariff of 25%, then another 25% on top of that. What went wrong in these few weeks?
Well, I think the US-India relationship is one of the most consequential relationships on the globe today. We are two very large democracies. We believe in the rule of law. We are allies and friends for long. We have had certain blips, like we had the sanctions post the nuclear tests in 1998.
Yes.
I look at this only as one more situation which will pass as there's a deeper understanding of the reality of the situation. And I'm very confident this relationship will only strengthen in the years to come.
And how soon do you expect things to resolve?
It could happen soon enough. It may take some time. Irrespective, we will continue to be friends. We will continue to be engaged with the United States, and I'm sure we will continue to have greater economic relationships, defense relationships, greater interest in a safe, fair and secure Indo-Pacific. In some sense, it's a very multi-dimensional relationship where we contribute to each other's economies in different dimensions and will continue to do so.
It's comforting to hear these words from you. And we also picked up that you said somewhere that things could happen as soon as November. Is that a correct?
Well, if you recall, when Prime Minister Modi and Honorable President Donald Trump met in February, they had tasked the two teams to conclude the first tranche of a bilateral trade agreement by fall of 25, which is about November 2025. And I'm sure we will continue to be engaged to try and find solutions to reach that outcome. If at all it's give and take a few days, a few weeks, a few months, in a nation's history, such small periods will not define long-term objectives and goals.
I think what surprised and even shocked some people was the erratic and incendiary language that was used by, some of the officials of the Trump administration, calling it Modi's war or, a laundromat of Kremlin. I mean, how do you react to this? I mean, are conciliatory noises coming from the other side now?
I think there could be either some misunderstandings or some personal opinions that may be reflected in that. I do not think that deters the US and India from continuing to maintain our strategic alliance and partnership. Our friendship is far stronger than a few comments that may be made by a few people.
China in the beginning had retaliated with retaliatory tariffs. Would India do anything like that?
Well, India is a patient country, and I believe we should give it every effort to come to a better, deeper understanding within the framework of international trading laws. And therefore, I think we have always believed in dialogue, in diplomacy, and an effort to strengthen rather than weaken relationships.
So President Trump has recently said that, India has offered to cut tariffs to zero and time is running out. What do you say to that? Do you agree with...
Well, I never negotiate such agreements and free trade deals with the media. We negotiate behind closed doors. And once the negotiations are complete, we'll certainly come back to you.
Okay. So what are the red lines? Which are the no-go areas for you? Things that we will not compromise on.
I think any issue that can hurt national interests, that can hurt the interests of our farmers, our fishermen, our MSME industry, issues which are sensitive with religious sensitivity, those would be broadly the issues where India would need a more understanding when we finalize the framework of our agreement. And we will never compromise on the interests of our farmers, our fishermen, our MSMEs, or our religious sensitivities.
Okay, thank you. A US court has recently ruled that President Trump has no authority to impose tariffs, including on India. How would that impact our talks going forward?
Those are internal processes, legal processes in the US, and will be sorted out by the US government. We have no role to play in that. But ours is an effort to reach a far more sustaining and long-term, fair, equitable and mutually beneficial agreement and partnership, and we continue to be focused on that.
what is your message to the exporters? You know, the real pain in the short term is being felt by them. You know, will you make it somewhat possible for them to sell in India? Will it be a possibility? And what steps are you taking to do that?
Fortunately, the timing of the GST reduction at such massive levels couldn't have been better. This will give a big impetus to domestic demand, which will help some of the exporters who may lose a part of their business.
Will you make it easier for them to do so because they can't?
No, we are even trying to make connects. So, for example, when I recognize that garment industry could face some stress, I called up the Tatas who run the whole Zudio and the West Side. And I'm going to be talking to all other high street malls or retail large-scale outlets to see if they can help these garment exporters by buying their produce and making it available at affordable prices. So high quality at affordable prices, now at reduced GST rates, will make it a great story.
So you will remove the restrictions on them to sort of...
Absolutely. We are trying to make it easier that they can supply in the domestic market. It's a part of one of the reforms we are working on. Similarly, I'm in dialogue with 50 countries. Our missions are working in 50 countries, which we have identified through data analytics and artificial intelligence on the data of import and export of all other nations, to identify where our products, which will need a market, can be offered, and in lieu of that, what we can buy from those countries who may also be stressed similarly. So for example, the UAE minister and I, over our meetings on Friday, Saturday last week, identified people, identified areas. He already connected us with his people there who can help our textile sector get an entry into the Gulf and into all of Africa. He sent me connects with the seafood industry there. I'm mounting a delegation to visit UAE to connect with those people. 18th, 19th, we have the high-level task force on investments dialogue in UAE, where I'll be taking a large business delegation, identified sectors where we can support our exporters to get new markets. We'll be looking at fast-tracking our free trade agreements with other regions. We are doing a second tranche in Australia. We'll soon announce closure of Oman. New Zealand will also close by the end of the year. My Commerce Secretary was in Brussels last 2 days. Their teams are down on Monday for the next round of negotiations. The Trade Commissioner of European Union, Maros Sharkovic, will be in India on the 11th, and will be spending 3 days together to speed up and conclude the European Union FTA. So I have the 4-nation FTA, EFTA, Switzerland, Iceland, Norway and Liechtenstein, which comes into effect as near as 1st of October.
I see.
As soon as Navratri gets over, or on the last day of Navratri, we'll have the EFTA agreement come into force. UK has been executed. Oman will be announced. Chile, Peru, Eurasia terms of reference are finalized. By 4th or 5th of October or 6th of October, I'm in Qatar to finalize terms of reference with Qatar. The Prime Minister of Singapore is in India today.
Yes, I believe you had lunch with him.
We had lunch and we had extensive discussions with their teams to see what we can do. And they've already committed to take in more chicken and eggs and poultry. I talked to them about seafood and they said, we love the taste of Indian fish and Indian shrimp. So I've told them my High Commissioner who returns tomorrow to put together a group of seafood importers, and I'll mount a delegation to Singapore very soon. Similarly, Latin America, huge potential for our exporters. So sky is the limit. This will help us expand. And as I said earlier, exports this year will be higher than last year.
Just a couple of more questions. One around our newfound friend, China. So Prime Minister Modi in Japan said that, China and India have to come together for a new global economic order. Can we trust China?
Well, I think we've always had good relations over many years with China. Prime Minister Modi has visited China earlier. President Xi Jinping has come to India. Unfortunately, the incidents post-Galwan had brought a little bit of ice to the relationship and created a hiatus. Now that we have been largely able to resolve the issues of disagreement with China, I think it was very natural that we should also reset our ties, take them to the pre-Galwan level. And I think attending an SCO summit where many countries were all getting together had a multilateral dimension also, and a dimension of a whole grouping, because SCO is a pretty large group, just like many other groups in the world. NATO is a very large group, the OECD countries is a large group, SCO is a large group. And Prime Minister Modi attending the SCO there has signaled that we have a thaw in the to get back in the frost, get back into better relationship. India believes in good relationships with everybody in the world. Vasudhaiv Kutumbakam.
Absolutely.
The world is our family, is at the core of our philosophy.
No, it was a huge message, Prime Minister's visit, and his coming together with Putin and Xi Jinping. In China,
I would only urge you and the people of India not to look at the relationship with one country through the lens of the relationship with another country.
Absolutely.
Our relationships with each country stand on their own legs.
Yeah. No, I was coming to the point, we have a huge trade deficit with China. So how do we ensure greater access to Indian goods and services in China?
Prime Minister Modi has raised this issue in his dialogue with his counterpart in China.
Okay.
And we will be looking to work together to see how we can expand opportunities for Indian businesses in China, and how we can work to collaborate and work together to see that the Make in India program and Swadeshi manufacturing gets a boost in the years to come.
So, by the same token, Press Note 3 puts, fetters on Chinese investments in India. So, with relations improving, do you see any changes in Press Note 3?
Well, I would allow time to take the decision. I would not like to preempt what will happen in the future. But I can assure you that Prime Minister Narendra Modi is looking at everything that can help ease of doing business and ease of living. He's looking at it very holistically for comprehensive, fast-paced next generation reforms, and the massive GST concessions, the massive GST reduction, the transformational story around yesterday's GST decisions is only the beginning of much more to come.
Couple of more questions, small questions. In light of this, trade diversification going forward is really important for India. So you've recently, done a big deal with UK. What is, how are you seeing, what is it in the works with EU? Can we hope?
Very rapid progress.
Yeah.
Very rapid progress. My Commerce Secretary has returned yesterday. He reported that discussions made good progress and a lot of work has happened. Their team is here in the same office, next door rooms. You'll have 8 rooms full of bilateral meetings going on for settling many chapters, many legal aspects and issues of discussion over the whole of next week. The Trade Commissioner, Maros Sharkovich, is landing in India on 11th. We have 3 days of very, very intense discussions ahead of us.
So we hope
and we are very confident of having a very good, fair, equitable and balanced, sustaining long-term relationship with the EU.
And soon?
Quite soon.
My last question. Does it worry you that, rupee is at an all-time low against the dollar? Scott Bessent also referred to it recently. How would you react to that?
Well, we are monitoring the situation and we are very confident that things will get back to normal in the near future.
Hello and welcome to Startup Street. I'm Shruti Mishra and with me are Arundhati Ramanan and Ritu Singh. These are the top headlines from the startup space. TrackCheck, an AI enterprise company, has raised a bridge round to expand its product offerings and build a broader suite of AI solutions for HR. The round was led by angel investors at a valuation of $17 million.
ProWrap, a one-stop procurement platform, has raised 4 crore rupees in a pre-series A seed round led by Callan Software and IIT Varanasi alumni super angel investor Amit Govil. The company plans to raise its Series A round in the next 18 to 24 months to further accelerate growth.
11 Labs is letting employees sell shares at a valuation of $6.6 billion, double the voice cloning artificial intelligence startup's previous value. The tender offer will allow staff to sell as much as $100 million in stock and will let employees who have worked at the company for at least a year to cash in on shares.
Data analytics firm Databricks is on track to hit $4 billion in annualized revenue as it closed a $1 billion funding round. The Series K funding valued the company at $100 billion, making it one of the most valuable private companies in the world. The round was co-led by existing investors Andreessen Horowitz, Insight Partners, and others.
Cybersecurity firm SentinelOne will acquire Observo AI, a data streaming platform for telemetry pipeline management. The acquisition aims to complement SentinelOne's AI SIEM and data offerings, which the company reports were among its fastest growing solutions in Q2 of FY26, building on its 25.39% year-over-year revenue growth. Well, those were the headlines we've been tracking for you this evening on what's brewing today. Fitness in India just became more affordable. The GST Council has reduced tax on fitness services from 18% to 5%, recognizing it as preventive healthcare rather than a luxury. Now, the move comes after years of industry advocacy by players including FitPass, an app-based full-stack fitness and wellness membership program. The venture has also launched a unified fitness and wellness super membership, FitPass 360. And to discuss the policy shift, its impact on consumers and the changing dynamics of India's fitness industry, I'm now joined by Akshay Verma, the co-founder of FitPass. Akshay, welcome back to Startup Street. The GST reduction has been a long-standing demand from the industry, from the cut in 2018 to fitness being recognized in insurance in 2020, and now this 5% GST. Akshay, what did it take to consistently get the government to hear a sector that isn't even formally recognized as an industry?
Yeah, hi, Shruti. Thank you for having me back. I think to be heard at this level is historic. And you're right, said that without even being recognized as an industry. I think what it takes to work with the government is a lot of perseverance. And we have been doing that for a decade now. Where I think we've been helped is that we always recognize that when fitness was not an industry, what we needed was to bring about structural change, which then incentivizes behavior change. So for that, the government is a very big stakeholder in our society and in our country. So their buy-in was always important. So we always maintained sustained dialogue with them. We worked a lot on consensus building, on policy submissions. And I think what we see now is an outcome of 10 years of sustained dialogue. And actually, the first incident was in 2018 when we had helped reduce GST from 28% on fitness services to 18%. And then in 2020, when we got fitness services included as part of insurance coverage. Sure. And then now in 2025, when you see GST 2.0, where we've been recognized not as luxury, but as an essential service, bringing us into the 5% slab.
Akshay, you've said that this is a strong interim outcome, but not a complete solution. So what more would you like to see from the government, especially around preventive healthcare policy?
I think when I say it is a strong interim outcome, we sincerely welcome the move, but I think there are nuances to this that we need to work through with the government. One is obviously bringing us into a 5% slab is very welcome, but no ITC, no input credit has been provided for now. We have to wait for the full notification that hopefully should come out in this week. We will get more clarity. But as of now, 90% of fitness centers' expenses actually carry 18% GST. So not allowing any input on equipment, on rent, on marketing services may not be able to pass the benefit to the customer as much as is intended. So we need to align the national policy intent also with action. The second thing is that while we are saying that we've been recognized as preventive health, we're an essential service, that is not how we have been classified even now. Fitness services currently has still been classified with beauty. Although the government has a section under their healthcare GST heading 9993, where other preventive and wellness-oriented treatments are classified, like say Ayush. And in Ayush, the Y is yoga, right? But yoga currently lies with beauty, not with preventive and wellness-oriented treatments where Ayush, naturopathy, rehabilitation centers are classified.
Sure.
So the other thing is to reclassify. And actually what we really want and what we're going to push for and continue is every mission that the Honorable Prime Minister has launched, Fit India, Khelo India, Eat Right India, an anti-obesity mission, these are serviced by gyms, fitness centers, sports centers, academies, nutrition counseling, fitness training.
Okay.
All of this should be given a separate heading as preventive health in the GST classification.
Okay. All right. You know, Akshay, I'm going to ask you 2-3 questions in one go, and if you could answer that because we're running out of time. But FitPass has just launched 360, one-stop subscription covering gyms, nutrition, AI-led coaching, live workouts, and even doctor consults. With your offerings, Toga, you're also taking fitness into Indian homes. So how big is this B2C opportunity beyond traditional gym access? And you've also been PAT positive for 3 years now, growing 178% year on year with over 170 crores in ARR. So take us through your growth targets with AI central to your next phase and the new offerings we can expect.
Okay, so very quickly, I think preventive health is actually the only opportunity in a country that is so young, with the average age of 28.8. 2/3 of the country is below 35. These guys are not sick. So the biggest opportunity is to help them stay healthy and help them be positive contributors to our economy and to our GDP. Just India getting active, physically active, can contribute 15 lakh crore every annum to the GDP. So not only do you benefit as a person, but your family and the economy. So the opportunity is not only to help them get access to gyms, but to nutrition, sports, everything that helps India get active, stay healthy. Second, how big is Toga, which is our very intricately engineered, exquisitely designed products for home workouts? I think Tier 2, Tier 3 is where the growth opportunity is, where everybody understands the value of being fit, and that's where our athletes come from. Tier 2, Tier 3, that's where most of the NDA aspirants come from. That is where aspiration truly lies. So to give them equipment that they can be proud to own and work out with is what we're aspiring to do at affordable prices, of course. So I think this opportunity overall is far bigger than the healthcare opportunity. Because as a population, it is always less people who fall sick and more people that want to stay healthy.
Okay. All right, Akshay, we've completely run out of time. I'll have to wrap up our conversation, but many thanks for joining us on Startup Street today and wish you the very best with all your growth targets.
Thank you so much.
Quick commerce startup First Club, founded by Flipkart veteran and former ClearTrip CEO Ayyappan Rajgopal, has raised $23 million in a Series A round that was led by Accel and RTP Global. Now, this funding raise closed just within 3 months of starting the company, values it at $120 million. Now, since the Bengaluru launch in June of this year, First Club has expanded to 4 dark stores, which it calls clubhouses in the city, onboarded more than 4,000 curated SKUs, built a 185-member team and an in-house supply chain and tech stack. But for more on their path ahead, joining me now is Ayyappan himself, the founder and CEO of the company. Ayyappan, thank you so much for your time here on Startup Street. You know, you've intentionally bucked this quick commerce trend of 10-minute delivery, emphasizing rather on quality. But what are early indicators showing you? Are customers happy to wait for a longer time just to get a differentiated experience? And over the next 3 to 5 years, are you going to remain this premium offering, or are you also going to look at faster delivery?
Yeah, great question to start with, Ritu. Firstly, happy to be here, part of the conversation. Yeah, so before launching First Club, we did a lot of user research with the consumers across multiple markets and cities. And we understood very clearly that when there is not much of a differentiation between multiple quick com platforms, then the only thing that they can index on is speed. Like, who delivers the fastest to me because somebody has the dark store closest to my community or the place that I stay at. So in that case, people are going for the speed. But with respect to the kind of selection and the products that they really want, we understood from them that if the products are differentiated, if they're going to get very, very good quality of products, then they're happy to wait for more time. There's absolutely not an issue. In fact, we have seen consumers asking us like, hey, I'm absolutely fine if you can deliver it tomorrow morning also. You don't even need to deliver in 30 minutes. So it's quite clear that if you have selection, which is of very high quality, if you have it at the right pricing for the consumers, and you know that the end-to-end experience is like top-notch for them, they are happy to wait for a lot more time, and this 10 minutes is not needed at all. And this also creates a very different sort of supply chain model, the procurement, the inventory management for us from a business point of view. And it's for the riders' safety as well. They don't need to rush as well. So all put together, I think this would be a great proposition for the users over a period of time. And to the second part of the question, whether it will remain premium. So firstly, we don't position ourselves as premium, while the platform comes across as premium with the kind of app, the catalog, the imagery that we have. But we want to stand a lot more for mid-premium, where the products that was unaffordable for the consumers, we want to bring it at a pricing which is very palatable to them. So long term, we believe mid-premium is the positioning that we want to take. And this is selection that is not available elsewhere, and at the pricing that they're happy to pay. And within the delivery time, they're absolutely okay with.
Okay, mid-premium it is. Well, you know, in just 3 months since your launch, you've raised this money at $120 million post-money valuation, which is triple the amount, that we saw in your seed round. What is underpinning this kind of investor conviction? Is it market traction, unit economics, or something else?
It's broadly three things. One, firstly, the addressable market. A lot of people might think that, okay, is this going to be a smaller proposition or a much larger proposition? From the consumer data point, it's very clear that this is going to be a much larger proposition than what we had originally, even we ourselves envisioned. This is going to be a much bigger, considering, in fact, one of the data points that we have seen is that 1 out of 4 consumers who shop from us are actually at the rental of, they're staying in a community where the rental is less than 40,000 rupees per month. So shows very clearly that this is not just for consumers who are paying a lot more.
And how exactly are you going to deploy this $23 million?
One is from a store expansion point of view. Currently, we are live at 4 different locations. We are planning to take it to 35 in the next 6 months. We are planning multiple other fulfillment models. We are planning to launch daily subscription model. We are bringing slotted delivery. So we want to cater to across Bangalore even before Diwali. So that's the second part. Third, category expansion. We are launching our own cafe to start with. Again, cafe built with the differentiator of freshly cooked food and not reheated food like in other platforms. And we are launching gifting and home categories. So that's the third part. Fourth, we are solidifying the talent that we have and investing in the brand as well. So these are the large areas where we would be investing.
Well, you mentioned operating with twice the average order values of competitors, enjoying highest gross margins in the industry. Could you share more specifics on these margins and cost structures, and when you anticipate achieving profitability?
See, we believe fundamentally the model that we have started with, this will be the most profitable model across all quick commerce platforms, considering, like I spoke about, the average order values are upwards of 1,000 rupees. This is like unheard of. Not just for quick commerce, but for any model, because quick commerce is always seen as a top-up sort of a model. What we are seeing is a basket building to happen. People are adding 10 to 10.5 number of items in one particular order, which is very, very unheard of in this sort of a space.
So right now you have 4 clubhouses or dark stores in Bengaluru. How many more do you plan to open here? And what's your roadmap for expansion beyond Bengaluru as well?
So our first objective is to expand across Bangalore, which is what we're planning in the next 6 months. We'll hit 35 dark stores in total, which we internally call it as clubhouses. So there will be 35 clubhouses in Bangalore by the end of March. But before Diwali, the plan is to take it to 15 stores along with the slotted delivery model to reach entire Bangalore. Every other city, we are planning only post that. So as of now, there is no discussion of the second city at this point of time.
All right, Ayyappan, we'll leave it at that. Thanks very much for your time here today. Thank you.
Thank you so much.
On that note, it is time for us to head into a short break. But coming up on the other side, New Delhi-based kitchenware startup Cumin Co. secured fresh funding worth $1.5 million. We speak to Niharika Joshi, the co-founder of the company, to know more about their growth plans, expansion strategy, and more. Welcome back. You're still with us on Startup Street. New Delhi-based kitchenware startup Cumin&Co has cooked up fresh funding of $1.5 million in a round led by Fireside Ventures, with Huddle Ventures also participating. The health-first brand, founded earlier this year, is already profitable and has reached more than 7,000 households with its patented toxin-free cookware. The new capital will help scale R&D, ramp up manufacturing, and roll out over 80 new products by the end of the year, with innovation at the core, including its proprietary Enviromax enamel coating. The firm is aiming to disrupt India's decades-old kitchenware market and expand its community to over 1 lakh households in the next 12 months. Joining me now to discuss this further is Niharika Joshi, the co-founder of Cumin&Co. Niharika, thank you so much for joining us on the show today. You know, you are building a brand that is helping India kick off its journey to healthy kitchenware, right? If you could sort of take us through the gap that you're trying to address and what do you have on offer?
Awesome. Thank you. First of all, very excited to be here. Honestly, the reason why we started Cumin&Co, and this is started by me and my husband together, is honestly very, very personal journey where we were looking for a healthy cookware for our own families, for our own little one. And we figured that a lot of the cookware in the market currently has an extremely high amount of toxin. Sadly, in cookware, because it's not visible, one tends to consume all sorts of stuff, PTFA, PFOA, all sorts of stuff, which is there in Teflon. And that's exactly where we come in as a brand that we are trying to solve, to generally build toxin-free, healthy, no chemical, sort of ridden cookware. And that's kind of what our aim overall as a brand is as well.
Sure. And you know, Cumin&Co has now raised $1.5 million, led by Fireside Ventures. How do you sort of plan to allocate this funding between R&D, manufacturing, and market expansion?
Yeah, so I think Cumin's sort of core as a brand essentially is we are a very innovation and R&D driven. We have 3 patents to our name at this point. So a large share of the investment is actually going to go into further R&D. We have 2 more sort of patents that are in the pipeline that we are hoping to convert very, very soon. A part of this will also go in expanding manufacturing. Like we have a very sort of large scope of expanding the entire portfolio from a current 40 plus to about 80 plus by the end of the year. So it goes there. And the last bit of it goes in overall channel expansion and market building activities.
Sure, and you've already sort of reached 7,000 households in just a few months, right? You launched earlier this year. So what kind of strategies helped you will help you now scale to your next target of 100,000 households within the year? Because that's a big target and December's almost here, right? So you're currently present only online. Will you also look at physical stores?
Yeah, so I think in terms of what we are trying to do initially as a brand is we're trying to focus on the online market. There's a huge amount of focus and attention there. In all fairness, we believe that the next 1 lakh customers will come in from insights from the 7,000 that we have already. At the core, we are a very, very data-driven organization, which means we have a very clear sense of who we are selling to, why we are selling to. And this is the level of perfection in terms of just kind of reaching out to the audience and giving them exactly what we need. That is helping us unlock more and more households. In fact, from the time that we started, we were looking at a very modest number, and we are already at 7,000, and we are looking to close festive at probably a substantially higher number than we have in mind. In terms of a channel strategy, like we mentioned, we will be online heavy for the first 1 year. And then gradually, once we have got a very clear sense of our entire product portfolio, have understood what a PMF looks like, then we definitely look at expanding across the offline channels as well.
Sure. And you know, your Enviromax enamel coating is at the heart of your innovation, right? How is it different from traditional non-stick cookware, and what makes it sort of safer?
Yeah, actually, interesting question. And that was actually one of the things we were trying to solve as a brand as well. There are a couple of different things if I were to kind of compare with what Enviromax has versus what is traditional non-stick. Non-stick, by the way, is a feature, not necessarily a coating. In most cases, that coating is something which has chemicals like PTFA, PFOA, PFAS. All of these are forever chemicals. Once they are in your body, they're not going to be leaving it, right? So we were building out our coating. We were very clear of the fact that we don't want to have any of these chemical compositions. And hence, we wanted to go with a coating type, which is fundamentally very, very healthy and does not include any amount of toxins, which is the ones that we mentioned already. Enviromax has 2 nuances to it. One is the fact that none of the sort of usual suspects in terms of what comprise a non-stick surface is part of this coating, which actually is the major USP of this product. Second is we've actually custom made this coating for Indian cooking. Indian cooking is aggressive. Indian cooking is very acidic high. And all of these nuances kind of make sure that this enamel coating is kind of sturdy enough and durable enough, which is the reason why we're able to kind of extend 10-year warranty to our products as well. So both in terms of the chemical composition and in terms of overall durability, those are the nuances that we've kind of incorporated into this coating that we've developed.
Sure. That's interesting. And, you know, another thing about the company is that it's been profitable since inception, right? Which is rare for a young consumer brand. So what's sort of driving this early profitability, and where do you hope to end this year, considering, you know, you've got the festive season coming, you've got big targets, so where do you hope to end this year?
Yeah, so I think for us, honestly, the ethos is less burn or no burn and make it as sustainable as we can. We still, even with our funding, we continue to run our business as frugally as we did before. I think that's kind of reflective in every single thing that we do. We are very deliberate with our choices. We just don't go ahead and expand. We just don't do marketing because we feel like marketing is the right route to do. I think very, very deliberate, conscious, thought-through choices is the reason why we are profitable and continue to be so. In terms of where we are looking to close the year, this is our very first festive. We started earlier this year, so I think we have a lot of hopes pinned on what we plan to achieve. At a broader metric level, I think we are hoping to be probably 2 to 2.5x of where we are in terms of a revenue. And in terms of a product spread, we are looking to probably increase it by 2x by the end of this year. So these are some sort of soft metrics that we are aiming for this end of this fiscal.
Absolutely. All right, Niharika, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best on this journey going forward.
Awesome. Thank you so much.
Moving on, India has taken a big step towards building its bioeconomy. The Department of Biotechnology and BIRAC have launched the country's first biofoundry network, a national platform to accelerate advanced biomanufacturing. Now, the initiative, rolled out under the government's Bio-E3 policy, aims to position India as a global bioeconomy leader and drive progress towards a $300 billion target by 2030. Aishwarya Anand gets more details from Dr. Jitendra Kumar, the Managing Director of BIRAC. Take a look.
There was a huge gap in the Indian ecosystem for these companies who have done proof of concept. They have the new ideas which have been proven, but how to actually produce it commercially. So these biofoundries will actually create the facilities for them to actually go for manufacturing. So automation, automated process flow, high throughput process flow, computational biology, all have come together along with the pilot scale and biomanufacturing. All these have come together for innovators and startups and bigger even companies as a boon. Now they can actually, right from ideation to commercialization, boom, very fast process, fast tracking of the process. And it has a ripple effect because it will attract a lot of venture capitals also.
Okay, so help me understand what kind of investments have gone into setting up these 21 facilities, and directly how many startups do you think initially would you be, if I have to talk about the one-year plan, how many startups are you planning to directly impact through these facilities? Do you have any data in mind on that front?
Yes. So each biomanufacturing hub, there is a platform that we have created, a biofoundry, although they can accommodate as many as their capacity involved, but we think that every year they should help at least 10-15 startups.
Okay.
Minimum. Many of these have got 50 crores funding. So, so I would say that first tranche, if you say, so around 400-500 crores have gone for this. However, we expect that second call and third call will have much more robust pipeline, and we'll be able to exhaust 1,500 crores.
Okay. Now, it's been a year since Bio-E3 policy was launched. I want to understand what has been achieved so far.
First of all, it has generated a lot of awareness among people, startups and innovators who did not have any kind of a horizon to look at, how do they go for biomanufacturing, where do they go? So that, awareness has come. It has reduced the entry barrier. Much more startups and innovators can come and use that facility. So entry barrier is reduced. Second impact that we see here is that now these facilities will be operational and running within 6 months or so. And we see that the regional economy to grow and national economy to grow.
Now, BIRAC has played a very fundamental role in disbursing funds to biotech companies because, I think you funded over 1,000 startups, more than 4,000 startups, right?
Yeah, directly benefited from us.
So now tell me how much funding has been disbursed till date, and how does this new platform build on that foundation?
So far we have around 4,000 crores have been
disbursed
around, say, 12-13 years.
So, building on that, I do want to understand this, that you've stressed reducing reliance on imports, right? So, can you quantify the size of India's biotech import bill today? And what's the realistic timeline for these hubs to start cutting that down?
See, because biotech is a huge, field, I cannot pinpoint an exact figure to it.
Maybe a ballpark one.
Ballpark, actually, I can say that, around import would be around $100 billion US. And we will be able to cut it drastically over a period of time. At least 50% we can cut within, say, 3-4 years when this all biofoundries, biomanufacturing, etc. kick in, and a lot of production can happen. So these are guess figures, I think, but the exact figures, it will have to actually compute from different sources. But this is just one guesstimate, I can say, just to give a ballpark.
Correct. One final question. What is the employment potential of this initiative, and can India use this momentum to position itself as a global manufacturing hub, much like we did with vaccines?
Yes, this is very, very important question, and the growth potential is huge. Definitely India can emerge as a biomanufacturing hub. I think we have created the momentum. We have now set off 100 biomass centers, incubation centers, combined with now 21 biomanufacturing hubs. Much and more will come. Venture capital is kicking in. Government has come up with RDI scheme of ANRF, Anusandhan National Research Foundation, which has come up with the RDI scheme. You must have heard about 1 lakh crore that Honorable Finance Minister wants to for deep tech, actually. So all this will combine together to fuel this innovation. And Atmanirbhar Bharat is one thing, but then we will be able to actually export also. This is my, take from this.
And with that, it is a wrap on this edition of Startup Street. From Shruti and me, goodbye and many thanks for watching. More news and updates continue right here on CNBC-TV18.
Hello and welcome to Finding Alpha. On today's episode, we focus on how to identify and invest in structural growth themes through platform businesses. To help us unpack this theme, joining me on the show today is Sandeep Agarwal, Fund Manager at Sovilo Investment Managers. From digital transformation to new age consumption, well, Sandeep will be shedding light on why platform-led models could be the next big driver of wealth creation. Well, Sandeep, thanks a lot for coming down and welcome to the show.
Thank you, Nigel, and good afternoon. And thanks to all your viewers, your production team, and everyone who enabled this. So before we start this discussion, I would like to just give a disclaimer because we run a SEBI-registered PMS. So we may hold, buy, sell any of the stocks discussed during the conversation in self and client portfolio. Hereby sharing my thought process and industry insight and not providing any direct or indirect recommendation on any of the stocks.
Got it, Sandeep. We'll get that disclaimer periodically up for our viewers as well on the screen. So, the regulators are well, they're satisfied with what you say. But we want to learn a lot about tech-related plays and also platform companies, because today we're talking about tech with a twist. So let's get first, to this question that we discuss quite often actually. Why hasn't India produced, say, a Magnificent Seven type of tech giant yet? Could you tell us what's holding us back? And do you believe actually we're headed in that direction? We're getting a little impatient.
Yeah. So it is a very interesting question. And Nigel, let me tell you that, evolving a platform like Mag 7 type of companies, it takes time. It is a factor of GDP growth rate. It is a factor of how internet is spreading and all those things. These platforms, if you see Mag 7, I am tracking for last 20 years, they have evolved over a period of time. You will be surprised to know that Microsoft listed in 1986 at $750 million valuation only. And at that time, US GDP was $4.9 trillion. And we are not yet there. And we are seeing in India, small caps listed at $750 million. Okay. So I think, we in our country also now, when GDP comes in, when GDP starts growing and the incremental money which comes, this money, allows people to spend on different things which generate the need for platforms, and that is how the ecosystem of tech develops.
So, Sandeep, just to get this clear, you're talking about Microsoft when it listed as a percentage of the US GDP was how much? Currently, what is it? And if you could tell us, what about our guys? Here we talk about TCS, Infosys, Reliance. Where are they as a percentage of GDP, since you're comparing the market capitalization as a percentage of GDP? Tell us more.
So when Microsoft listed, it was in 3-4 decimal places as a percentage of US GDP.
Okay.
Today it is in double digit, 13-14% of US GDP, which is a huge number. But if you see the journey also, as GDP grows, the incremental amount which comes up, more and more goes to these players who are in platform enablers, because they make life easier for everyone. So that is how in India, I think if you see today, Reliance and TCS, they are 1 to 5% of the India GDP. So they are doing phenomenally well, and I think they have listed at much higher percentage of GDP than what you have. May not be Reliance, but TCS at least, because TCS listed at $10-12 billion in 2004. So we are doing great in my view, and we need to see data in full perspective. We cannot just say that Magnificent Seven is doing phenomenal and we are not doing.
Okay, so you're saying in the coming years, as India scales higher into a bigger economy, you're expecting these companies' market cap as a percentage of GDP to go to double digits?
Yeah, absolutely. I think it will go.
Okay, all right. Now let's talk about the platform business itself. Could you tell us which are the platform businesses that excite you right now? And also there's plenty of talk, right, about getting in early, pre-IPO and the likes. What is your comment on that?
So, platforms are very interesting business. So I will just tell you why platforms become important and how they grow. So for platforms, one thing is internet spread and internet penetration, which has gone up substantially in last 7-8 years. So India has become a platform-friendly country in only last 8-10 years because our affordable telecom and affordable and good reach and good bandwidth has been available in last 8-10 years only.
Okay.
Now, second thing is why platforms are becoming important, because if you see the fertility rates in last 20-25 years, they have fallen from 2.5 to now below 2, which means that you are below replacement level. And now you add to that the falling population growth rate, it is now below 1%, which was around 1.5, 1.6% 2 decades back.
Okay.
And now you add to that the nuclear family concept. People are working, both partners are working and all. So earlier, the chotus of your home who used to do your small stuff, bring this thing, bring that thing, that has been replaced. There was a vacuum, right? And that space has been taken by these delivery platforms, whether it is Zomato or Swiggy or whenever.
Right.
So it is a very interesting way, and this will increasingly, as you move forward, this will continue to replace those chotus in the rural. Right now, they have replaced the chotus in the urban and semi-urban. And it needs internet, it needs platforms, and it needs delivery, everything. And it will happen, and it will grow very phenomenally in my view going forward.
Talking about the chotus, I used to be a chotu at my home, and I loved it, go and help out. But I don't know whether the kids will do that right now. But as you're saying, you believe that these platforms like Zomato, Swiggy, they still have a longer runway going ahead. Let me get in a soundbite first. In fact, Sanjeev Bikhchandani, who is the founder and executive vice chair of InfoEdge, explained how no one thought that Zomato's market share could rise to a point where it is now. Let's listen in to that comment.
We got lucky in Zomato that we went there into Zomato in 2010, and we were so low in the first 4 rounds. And then the floodgates opened of capital, and suddenly they got as much capital as they needed and wanted and more.
Yeah.
Okay, and now I haven't checked last week, but last time I checked, the market cap was over 3 lakh crores.
Over 3 lakh crores, that's correct.
Yeah, but so you got to go in early. You got to stay the course. You got to demonstrate commitment and faith and keep on investing. And you have to be right.
Who would have thought after that rocky listing, Zomato had more than 3 lakh crore. In fact, but we also spoke to Swiggy's leadership, who spoke on the dream for Swiggy and where they expect to reach their goal. Let's listen what they had to say.
As I spoke, right, like for us, it's
100
million people 15 times a month.
100 million people 15 times a month.
Yeah.
And, ballpark, when do you believe you'll be able to get there?
See, they say, right, like you overestimate the short term and underestimate the long term. So my heart says, hopefully in the short term, but I think it'll probably be 10 years.
We looked at general data as well. The quick commerce penetration in proper urban, where you would expect it to be very high, still lower than the modern trade penetration. So I think there's still 2 to 3 years of clear opportunity available there. T2, T3 is like whole ocean still essentially actually lying there. We believe, as we said, right, we are in Bhubaneswar, we are in Patna, we are going all the places. Those cities really surprise us. I think
what's been the biggest surprise in operating in a Patna, in a Bhubaneswar, etc.?
I think Patna we launched, and in like 4 or 5 days, it reached universally 1,000 orders without even advertising or even informing people.
Interesting times. Sandeep, but tell us, about the entry time. Everyone wants to get into the race early, because they want to make the big money. What is your view on that, about entry pre-IPO? Sometimes it's very risky as well. A lot of investors you hear who have burnt their fingers. Your take?
Yeah, so, Sanjeev is master of when to enter and how to enter. So, no one can probably match him. He's different. But let me give you some data which will give you an idea. So, Amazon listed in 1997, right? Till 2015, their net income went up only 20 times. But their burn went down from 21% negative to 0%. And in this period, the market cap went up more than 200 times, right? Now, after 2015, when they became profitable, their net profit has gone up by 117 times, but market cap has gone up only 8 times. The point I'm trying to make is that you have to match, the formula is that, your incremental growth should be much higher than your incremental burn. So your burn ratio has to consistently fall, and when you see that, that is the time when highest value creation happens. Once it starts making profit, all the big institutions come and everyone comes, so your returns will also be a compounding story and not a multi-bagger story. That has been the story across the globe in all platforms broadly.
So Amazon till 2015, the burn ratio came down from what to what?
21% to 0%.
Negative 21% to 0%, and from 2015 to 2025, it went up
from 0 to 11%.
11%. Got up. That's the big swing out there. Got it. Now let's talk about the other aspect. Now, most people talk about hotels and airlines when it comes to tourism. But you've spoken about some unconventional thoughts that you have, some unconventional angles, including the rich biodiversity and the big cats that India hosts. Could you explain that to us before we get to the market relation? The big cats, that's a big attraction in India.
So I'm a big fan of tigers and I love tigers. So I will give you some data. There are 573 wildlife sanctuaries in India, and India is the only country where you find one-horned rhino, you find snow leopard, you find now cheetah, which is imported, you have Royal Bengal tiger, and you have Asiatic lions. Nowhere, including Africa, you won't get tigers, right? So this is one country where you get everything, right? And they have more than 400 rivers and more than 1 lakh water bodies. Our team has done research which says that out of 780 districts in India, majority of them, more than 80-90% of them, have water body, hill station, religious place, or wildlife, or a combination of 2 or 3 of them. So we are very, very well placed to grow tourism in a big way. And when tourism grows, then platforms will grow in a very, very different way, because to handle such a traffic, on an exponential basis and on a year-over-year basis, to give experience and good quality of customer experience, you have to, enable more and more platforms. So I believe a lot of platforms will come in the tourism side.
Okay, all right. But how do you play this theme? If you could help us out on that aspect as well. If I'm looking at playing the tourism play via an app or via a platform, what comes on your radar?
So, right now, even for hotels, we are also, playing through the listed hotels and small hotels and all that. And there are 1 or 2 car travel agencies, we are playing that. But we are very keen that, something which comes and replaces or is a quasi Airbnb in India and gets listed, we will like to play that theme, because this is going to be a very big theme. And also, this theme will also be a catalyst to Zomato and Swiggy also, because when tourists go to a particular place, they will order sometimes in the evening, they will go in the morning somewhere, but in the evening they will like food to be delivered in their hotel or lodge or wherever they're staying.
So from the hotel place that you're looking at, in the unlisted space, I think you're still researching on OYO.
Right.
That's something that you're looking at. And from the listed pack, with all due disclosures, Ecos is a company you like.
Yeah, we like it, but we may or may not be invested. So
okay, all right. Ecos Mobility, got it. Now, we have a viewer query that's coming in, and since you're sounding very, very optimistic about these food delivery apps, they are becoming a household habit. So the query is that itself, because you're talking about this, but could it have an impact on health trends? And that's what could position diagnostics for strong growth. Do you agree? How should investors play this theme with regard to the diagnostic space, given that there's going to be so much of eating from out?
Oh, fantastic question by whoever has asked, and thanks for the question. So, see, what happens is right now, whatever food you're ordering from outside, and the foods are being ordered because lifestyle is becoming more and more busy. Both the partners are working. Kids have different choices of food. They need it instantly, right? So, and it is becoming incrementally difficult to get help for cooking food and all that. So, people are ordering. Now, obviously, when this food is ordered and when it comes home, you have to reheat. So, it reduces the nutrient constituent of that food. So obviously, after 10, 15 years, I believe a lot of preventive healthcare and the curative healthcare will pick up because of these habits, because they have their own setbacks. And I think that is the place where, diagnostic will become very big. And again, in diagnostics, you will see a lot of logistics chains evolving, a lot of platforms coming in.
Okay, all right. Taking that that discussion a little ahead then, could food delivery platforms themselves, get into this diagnostic space, and there could be unexpected growth even from here? Could this be an optional value?
It could be, because they already have lot part of that system, but I think this will need different skill set, and I'm sure that if not the direct food delivery guys, someone else will develop and come out with it.
Okay, all right. You're also bullish on other platforms, right? I think Book My Show is something that you've liked. In the automotive space as well, I think you liked Cartrade, if I'm not mistaken. So tell us the investment rationale there.
So, again, rationals are broadly similar. Both the family members are working. They don't have time. No one can go and buy the tickets on the stand in queue and buy tickets. Plus, platforms give you the choice to select the seats and all that, So it is much, much easier. So it is convenience. See, technology and platforms make life convenient, easier, and they save time. And that's why anything which is enabling those, and if they have the right content or right offering, for example, if you go to Book My Show, they have everything, any drama, anything you want to buy ticket for, everything is broadly available. Even the World Cup tickets were available. So basically, they are an aggregator. So I think, they will also do phenomenal well, and they charge a bomb for fees. I have just recently experienced it.
Okay. No, so that's Book My Show, and that clearly, there is a lot of potential. But from a stock market perspective, investor, perspective, they will want to understand what about Cartrade. I think the stock is up 2-3 times in the last 1 year. It did some inorganic growth as well. Is there a bigger potential for companies like these?
Yeah, absolutely. Because, again, all the platforms are addressing the same thing. They're saving time. They are giving you more choices. They are giving you bids and all those things. So, all these platforms have a very big advantage of giving you everything at your fingertip. And your mobile is basically the place from where you can do everything. So as long as that factor is addressed, I think platforms do well. But in platform business, only you have to be careful that, whoever has the maximum footprint or whoever has the maximum audience, they are the winners. Not everyone can make money because the burns are very high.
Okay, all right. Sandeep, I'm just going to drift a bit away from the platform themes because, there is some work that I've done with regard to CapEx spend as well. So when a company announces a CapEx spend, you often break it down into 3 broad pieces. So explain that to us, walk us through that, and also highlight where there will be real opportunities. So, assuming someone is going ahead and announcing a big CapEx, break up the top 3 segments that you're looking at, and where is the opportunity?
So, Nigel, very good question again. So we roam around in all the important districts, industrial districts in the country, in Gujarat, Karnataka, Tamil Nadu. We try to find what is happening on the field. My team is mostly on the road, and it is a large team which is doing that. So what we are observing consistently when we speak to the promoters of these companies in the manufacturing side, if you see if the capex is total 100 rupees, then 30 to 40 is core machinery, which is generally imported from China, Japan, Sweden, all these countries, right? 30 to 40% is ancillary, right? You are putting the utilities, you are putting some of the machines which can be made in Rajkot, Ludhiana, or some parts of the country. And 15 to 20% is this shade, the whole development of the site, right?
Right.
We are seeing that in shade almost it is 100% indigenous. In the ancillary, there are 2 reasons. One, why we are able to develop in India, because the core machinery is not very complicated. It is more fabrication, welding, customizing and all that. This needs a lot of space, right? And the transportation and the logistics is a very, very big challenge. And that is the reason this is today already being made in India. You see, if someone is announcing 100 crore of capex, broadly at least 60% will be done in India.
Okay.
So that is a very big theme which we play.
So which is the component that's being imported out of the 3 broad categories?
So all the ancillaries, like, the chimneys
so
and everything.
Machinery and shed is where there is that...
core machinery we import, shed and the ancillary we make in India.
We make in India.
Yeah.
Got it. And which are the companies that could potentially be the plays out here from, which are into these 3 big segments that you're talking about?
So I think, with all disclaimers in place, I think there are a lot of companies which are doing superb work in the ancillary side. And the good part is the companies which are doing ancillary, they are also slowly promoting towards making the core, right? Because the cost differential is huge and they learn and they do reverse engineering. So we have seen great work being done by Anup Engineering, Elecon, so many of the companies which are doing superb work in that space also. And Ajax is also there, Kilburn is there, and you will see more and more unlisted companies coming out in this space which are doing the ancillary or the SAID. And this is really, really very core to the country, and it will slowly move up the value chain, and you will see that 30-40% of core machinery going down to 15-20% in the next 7-8 years.
So some of these companies, Azad, Anup, Kilburn, Shelly Engineering as well, they have already seen a big run. So do you think investors that are getting in, they have to be ready for a longer run? Because the potential is huge, but in the near term, they could have run up a good bit. Would that be a fair estimate?
Yes, you are absolutely right. So, price-earning ratio is very important. PEG ratios are very important. People have to see that because, sometimes this stocks built in next 5, 7, 10 years of growth. So, there could be time correction and there could be price correction and, investors can suffer. So, that is the challenge. So, you have to identify them at a right price. Anyone can identify because you just put in screener, everything is there.
Right.
But right price, right management and all those things, all hygiene factors have to be in a place. But this space is very good.
Okay, all right. Let's focus on Reliance as well. But first, at the recent Reliance AGM, Mr. Mukesh Ambani unveiled Reliance Intelligence as India's AI engine. Let's in fact hear out the man himself and then we'll get Sandeep's view on this space.
It is my great pleasure and privilege to announce the formation of a new wholly owned subsidiary of Reliance called Reliance Intelligence. This new company is conceived with 4 clear missions. 1, to house India's next generation AI infrastructure. Reliance Intelligence will build gigawatt scale AI-ready data centers powered by green energy and engineered for training and inference at national scale. 2, to house global partnerships. Reliance Intelligence will bring the world's best tech companies and open source communities together. 3, to build AI services for India. Reliance Intelligence will deliver trusted, easy-to-use AI services for consumers. And 4, to house talent for AI. Above all, Reliance Intelligence will create a home for world-class researchers, engineers, designers, and product builders.
Sandeep, lot of queries on this one, Reliance Intelligence. Could you tell us how significant could the opportunity be if you could break it up for us?
Yeah, sure. So, I used to track Reliance when I was in Edelweiss, the telecom part. So, I can say you that, they are doing phenomenal work. And this, if you see what this strategy is and why they have announced Reliance Intelligence now, it is all well timed. So, if you see Perplexity has made a strategic move by partnering with Airtel for free services. And at the same time, OpenAI is giving it 399 rupees per month. Right now, what you need for AI, right? There is a consumer AI and there is an enterprise AI.
Right.
But you need 3 things. One is the hardware, one is the software, and one is the platform to distribute. So on the hardware, we cannot make all the hardwares today. So what Reliance is doing, they have done a joint venture and they are spending around 855 crore rupees in Jamnagar to buy the servers and the GPUs. So spending that money, they are buying. They're very smart. Sorted. They don't want to make. Will buy it, right?
Correct.
Then they have acquired. They have tied up with Meta. Meta, people think that tying up with Meta will not do big change and all that. But I will tell you, their Llama model. Earlier it was for developer. Now they have started making it for the larger consumer in place. And you see the Meta hiring. They have hired everyone from the best places. So all LLM players, all the AI architects, everything, whichever best talent was available, from base salary of $100 million to 1.4 billion also. Now they have hired the best talent in the world, and they are building this Llama. And I believe that the software part or the LLM part will be addressed soon. So you will have the hardware, you will have the software. Now what you need, third part, is platform. So Reliance has already bought Haptic in 2019.
Okay.
And they will start distributing their offering through this platform because they have already Geo, which has all the information, all the data of the consumers. So I think they have built a wonderful ecosystem, and it is a very well thought thing. How big it will happen, how people will embrace, I don't know that. But I think it is a complete ecosystem which is there today.
Okay, so you believe the opportunity could be very, very large?
Yes.
Do you want to put a number to that?
It will be very big. I think, let me put it this way, that, there are very fair chance of Reliance becoming one of the size of Mag 7 in next 7-10 years if everything goes right. With a disclaimer that, we may be holding, not holding, selling, buying the stock in our PMS or self-client portfolio. So,
and just to clear it for our viewers, LLM is large language model.
Yes.
All right. All right, Sandeep, we request you to stay with us. We're going to take a snappy break, come back. We'll try to squeeze in a couple of queries. Don't go anywhere. Welcome back. You're tuned in Finding Alpha. You're on CNBC-TV18. We've got time for one query, and we've got quite a few queries on that itself. That's the new listing, Urban Company. What is the view, Sandeep, out here? Do you think that investors should give it a look? Should they be putting their money out there? Your brief analysis.
So I will tell you how I think of Urban Company, right? So I will bring Chotu back into the conversation and also the nuclear family concept. So earlier, our grandparents or parents, whoever was senior in the family, there was a joint family. We used to know the plumber. We used to know some or other person who is doing some kind of work, right?
Correct.
Now with fast, everyone going for work and families becoming nuclear, now, it is not possible to take someone's help. How much time you will ask someone? The guy may not be available at that time. So, that there is a big vacuum that, both husband, wife are working, couples are working. They need someone to come and, solve the problem when they are not there or when they are there at their convenience and all. Now, Urban Company being or any other platform, they are very professional. They track the guy. They do everything. Moreover, nowadays, there are a lot of security cameras put in everyone's home. So you can track from your office also that whether the guy has come, he's doing, your kids are safe and everything, right? So this is phenomenal, right? They are solving all the problems which otherwise used to consume a lot of time. And people generally see that, what is the incremental cost? What is the relevant costing, basically? So I am working in office comfortably and my work is getting done at home. I'm paying 20-30% extra, it's fine, but there is being done by someone professional. Plus, if you have any complaints, they will come back and resolve. Every whole network is there, right? So I think these platforms will, again, they are solving a very critical problem for the people and they will do phenomenally well over long term. I'm not recommending anything. We are not invested. But we love the concept of the business.
But you all will be giving it a look
absolutely.
ahead of the IPO. Well, Sandeep, we appreciate you coming down. As you're telling us, there's tremendous potential for a lot of platforms. India is not very, very far off of having our own Magnificent Seven. Reliance could be the potential company that makes it to that list or could be heading in that direction itself. And platforms, be it Zomato, Swiggy, InfoEdge, CarTrade, there's tremendous potential ahead. Thanks a lot, Sandeep, for coming down and explaining that to us. Approaching tech with a twist, platforms is the way to go. We've got all your disclosures up for you on the screen, so don't worry about that. Well, on that note, though, we'll wrap up on this edition of Finding Alpha. Thanks a lot for watching.
Nirmala ji, thank you so much for giving us this exclusive interview, one of your first to any media outlet. This is after this monumental, historic decision of GST rationalization. In many ways, GST 2, the second coming, there has been a lot of talk in the past. Let me begin with a broader question. From the Prime Minister's vision of making life easy for the common man, of, reducing the burden on the common man. You did it in your budget last time by cutting the income tax rate, a bonanza for the middle class. What was the vision behind this? What did the Prime Minister tell you? How did it come about?
Thank you very much for giving me this opportunity to interact soon after this major reform measure has been approved by the Council. And I thank every one of the ministers who've attended the meeting, the states, the finance ministers, and supported it. Otherwise, it wouldn't have come to see the light of the day. Well, the Prime Minister did announce it from the Red Fort on Independence Day. But even about 8 months ago, he called me once and had a long talk about how GST can be, revamped, looked at, and only from one point of view. He said, look, both from the point of view of the process and also for the common man, the tax rates, is there a way in which we can make it simpler? So I had agreed that I will go into it and come back to him. Then around the budget, when we were talking about many, tax-related issues, he reminded me about the work which has got to be done. And I assured him again that time that yes, the work is progressing and I'll come back to him. So sometime after the budget session was over of the Parliament, I said I'm somewhere close to giving him a proposal, which he can guide me further and so on. And then a bit later, much later, because you know the developments of May, April, when Operation Sindoor had happened, and after April priorities have been on very many different grounds, and when next opportunity came, I went, gave him a detailed description. Is that I just want, as I said at the first meeting, the simplistic or simplified, not simplistic, simplified way of doing business. So I don't want small people, small businesses sitting at the computer, getting the auditor to do it. And also, like the way we did in the budget, respecting the middle class, respecting the taxpayer, respecting people who are really the ones.
Hello, welcome to News Center. I'm Parikshit Luthra. The top story this evening. Donald Trump has softened his stance on India days after slamming its ties with the United States as a one-sided disaster. Speaking at the Oval Office on Friday, Trump said that he will always be friends with Prime Minister Narendra Modi and that there is nothing to be worried about. Only hours earlier, Trump had doubled down on India after Prime Minister Modi visited China to participate in the Shanghai Cooperation Organization Summit. He posted on Truth Social saying, and I quote, "Looks like we've lost India and Russia to the deepest, darkest China. May they have a long and prosperous future together." End of quote. His post was accompanied with a photo of Prime Minister Modi, Russian President Putin and Chinese President Xi Jinping from the summit in Tianjin, where they were sharing a light moment. Prime Minister Modi has responded to the statement. We will come to that in just a bit, but first let's listen in to what the US President had to say.
I always will. I'll always be friends with Modi. He's great. Prime Minister, he's great. I'll always be friends, but I just don't like what he's doing at this particular moment. But India and the United States have a special relationship. There's nothing to worry about.
Soon after President Trump's remarks on India-US ties, Prime Minister Narendra Modi said that he appreciates and fully reciprocates President Trump's sentiments and positive assessment of their ties. Remember, this is the first official response from the Prime Minister to the US President since the Trump administration escalated the tariff offensive. We learn from sources that both India and the US are also working towards finding common ground, signaling a step towards lowering tensions between both nations. Sources have also told us that the statements made by Prime Minister Modi and President Trump are the strongest indication of continuing connect between the two leaders. To take this forward, I'm now joined by former Foreign Secretary Nirupama Rao. She was also India's former ambassador to the US. Thank you very much for joining us, Ambassador Rao. Let me begin by asking you, are these statements a sign that things will improve here onwards?
Thank you, Parikshit, for having me on the show. To give you a short answer, the tone today is better, but it's an opening gambit, not a reset. So if you ask me, are these statements a sign things will improve? I would say they're a de-escalation signal, certainly, and they buy both sides some breathing room. Now, President Trump has publicly called the India-US bond special, to use his words, and Prime Minister Modi has reciprocated, and our External Affairs Minister has kind of amplified that framing. So in a sense, this calms markets and bureaucracies enough to keep the channels open, but it doesn't undo tariffs or resolve, the frictions as far as the US is concerned in regard to our relations with Russia or China.
Important points there, ma'am. Let me also ask you, this is at best an opening overture, something that you've also said earlier. What do you think has led to this positive signaling?
Well, first and foremost, I would say the risk of backlash, because if you recall, President Trump said a few days ago that the US had lost India to deepest, darkest China. And that's a line that kind of, I think, spooks people. It spooks allies, it spooks partners. It definitely drew criticism. And the friendlier post, I suppose, his friendlier statement corrects course. And our Prime Minister's reply also meets it halfway. Now, there's the tariff overhang also. The US duties, as we all know, as announced, are at 50% on a wide basket, and no new talks have been announced. So both sides, I believe, needed a political valve while the officials reassess the next steps. And the optics, thirdly, the optics around the Shanghai Cooperation Organization summit. So after the leaders at the SCO met around the end of last month and early this month, neither side, I believe neither the US nor India, wants the narrative to harden that India is drifting. So a positive signal of the sort you heard yesterday counters that. And then finally, domestic data, economic data out of the US. August jobs were weak, unemployment up by 4.3%. And a softer economy, if you can have it, raises the premium on predictable trade ties and calmer headlines. So it's a kind of effort to calm the situation, to sort of give it some stability. But we're not there yet.
We're not there yet. And I think this is what the government is also emphasizing. This is not a truce. This is not a victory. We cannot call this a win. This is just a first positive signal. Now, you've also emphasized earlier that the domestic sentiment in India has been deeply bruised by the kind of statements that have been made by Howard Lutnick, Scott Bessent and Peter Navarro. Lutnick even going on to the extent of saying that India will have to say sorry. Does this mean we will have to be very cautious in picking up threads from here?
I think the Lutnick, Bessent, Navarro statement or noise or whatever you can call it has definitely stirred a hornet's nest. And domestic sentiment is rather bruised in India, as I've said before. And comments like Mr. Lutnick saying India will have to say sorry, calls for sanctions over Russian oil from Mr. Bessent, and Navarro's jabs have landed, I think, very badly in India, and they will linger in public memory. Let's not, hide that. Therefore, all this that we've been hearing, this noise, these, the way they've heaped scorn on us, I think there is necessity for caution now in tone, and of course, firmness and substance in trying to build the common ground that you referred to. So we have acknowledged Mr. Trump's remarks. Prime Minister Modi has acknowledged those remarks, but we have always rejected the premise about negotiating under ultimatums. That is not our style, that is not our approach, that is not our policy. We will pivot according to our interests. And I think that is the best way forward.
Right. How do you think India should approach talks from here onwards? Should we insist on one deal which removes not only the 25% additional penalty, but also addresses concerns on our reciprocal tariffs?
Well, I think we should be calm, but we should be transactional, and our approach should be layered. I think the first priority is to de-risk, and perhaps, and I'm not privy, of course, to discussions within government, but I believe we could propose a narrow stabilization package like export facilitation, carve-outs for critical supply chains, defense co-production continuity, and that all this doesn't require touching the biggest political landmines on day one. And then perhaps a very laddered trade track, Phase 1, removing 25% of the additional penalty layer on top of baseline duties. Phase 2, addressing reciprocal concerns like select tariff lines, data standards, agri-quotas, with performance-based triggers. And US reporting itself, I believe, notes that the 25% add-on is the immediate choke point for resuming talks, as even our press has reported. And thirdly, we need very quiet offsets, maybe targeted energy and security purchases that are commercially rational, but visibly count in Mr. Trump's ledger, without, of course, affecting our strategic autonomy.
Right. Coming back to the SE.
If I may add, it's better to sequence things than bundle everything, because we don't want a single deal that will invite last-minute moving of goalposts. So we take it stage at a time and let ourselves bank the relief early and condition the next tranche on verifiable steps on both sides. So you want small, bankable bites.
Right. One thing that we are seeing, Scott Bessent has on Sunday again said that they are considering, along with the European Union, further sanctions, further secondary tariffs on countries that buy Russian oil, because they want to cripple the Russian economy, not allow it to wage the war. So clearly more sanctions, more secondary tariffs are not off the table. Now, how should we read the sentiment in the US when you also have this threat of further sanctions against India?
Well, I think there are lessons to be learned about engaging this administration, and particularly President Trump. Forget what Mr. Bessent is saying, and forget all that. The very negative vibrations that continue to be directed towards us. I think where we deal with this administration, and particularly with the top leadership, with Mr. Trump, I know this is difficult for us to stomach and to swallow at this time, but he is looking, I think, for personal respect and institutional receipts. So if he, is able to send out positive signals to us, we can be courteous and make it visible that our leader-to-leader messages are, in the right tone. He will keep citing his wins, but even as we respond to him in as positive a manner as we can, provided he is positive too, I think it's very wise to anchor everything in written and measurable side letters. So, front load the optics, whatever they are, but backload the substance. And that is why we need to tie whatever concessions we make to dated milestones, because this is an administration. Forget what they're saying in public, but even where deals have been reached, as they have with Japan and South Korea, they are prone to changing it. So we need very, very defined milestones, and we should never trade autonomy for atmospherics, because praise, he may heap praise on us, but it costs nothing. We need to look at what action is being taken on the ground. So there are lots of benefits, but there are also a lot of risks to personal diplomacy, because the benefits may be we unblock the agenda, we headline stability, but there are lots of risks. There is a lot of volatility, and all the public ultimatums, like you mentioned, Mr. Bessent saying today, and asking for some deal after each concession. So you have to pair whatever personalized diplomacy is being undertaken with very structured guardrails. It's very important. This is constant evaluation. I talked about the need for constant evaluation. It's like a patient in the emergency ward. You need to constantly evaluate it. And you have to be able to defend what you do back home, domestically, within this country. That's also important.
Ambassador Rao, the question about buying Russian oil. All data shows that we will remain as the #2 biggest buyer of Russian oil in September. This is important for our strategic needs and for our meeting our energy needs, and we'll continue to do so. How will we show the US an intent that we can reduce or trim purchases from Russia or we have a strong intent to help the US in ending the war? Because currently this seems to be a priority for the US administration, especially Donald Trump. He has this goal of being the person who ends the Russia-Ukraine war. How does India help him or make a compromise without cutting down our strategic partnership with Russia?
You know, we've never been for the war in Ukraine. We've been very, very vocal about the need for peace and settlement of the conflict between Russia and Ukraine. So nobody really can doubt our credentials as far as that is concerned. As far as the import of Russian oil is concerned, obviously we will be dictated by our strategic interests, by our energy needs, by our own energy security and what is good for the country. I don't believe we in any way have been privateering, as Besant and Navarro and others have been calling it, as far as this conflict between Russia and Ukraine is concerned, and reaping benefits for ourselves. So those charges, I think, need to be firmly refuted. And the United States, and that is where I think the challenge to our diplomacy lies, I think they have to understand there is an energy calculus here. And whatever we've done has been within the G7 price cap compliance. So there should be no really these Besant-style noises being continued to be made. I think what we need to establish is a 24/7 hotline protocol with the United States, and so that we can deal with these rhetoric spikes. You know, statements made like this should not escalate the problem. We should look at de-escalation.
That's an important point. 24/7 hotline protocol to deal with this kind of sharp rhetoric coming in from the US. We are taking a short break, Ambassador Rao, but don't go anywhere. We'll tell our viewers to stay with us. When we return, we're going to be discussing more about the optics at the SCO summit. How much of this is a reset? How much of this is a recalibration? And also, what about India's engagement with China and the BRICS? All of that coming up on the other side. Welcome back. You are watching News Center. We still have with us Nirupama Rao, former Foreign Secretary. Ambassador Rao, let me ask you about the optics at the SCO. We spent a considerable amount of time with the Chinese president, almost 55 minutes to an hour, 2 hours with the Russian president. How much of this was a reset? How much of this was recalibration? And how much of this was just optics to show that India will be committed to multilateralism and we will accelerate our multilateral approach if cornered by the US?
I think there is no doubting of India's commitment to constructive multilateralism. And when you look at the SCO summit, of course, the Chinese do these things with a great deal of panache and pomp and circumstance. But if you are to ask me about takeaways from the SCO summit and and the fact that Mr. Modi and Mr. Xi Jinping were able to meet and converse after a long time. I think when you think of the India-China relationship today and post the meetings in Tianjin, what you should expect is not a grand pivot. You know, there are realities on the border. You're aware of the situation along the line of actual control, the unresolved problems that relate to the boundary between the two countries, the critical dependencies that have, I must say, unfortunately developed where India is concerned on China over the last couple of decades, and regional contestation in South Asia, as you know, the whole China factor, especially the China-Pakistan relationship. So they keep the ceiling very low on this relationship and the floor very uneven. So the SCO optics really don't erase the structural rivalry between our two countries, but they keep the door ajar. They keep the door open for communication and connectivity and better coordination, I think, when it comes to stabilizing the situation along the border. So we don't discount the importance of these meetings. So as far as it comes to Russia, of course, we have a time-tested relationship. There is a great deal of mutual trust because of the legacy nature of this relationship and the defense and security interests that have been there. They predate anything to do with the Ukraine conflict. So, you know, there is a kind of definition to the India-Russia relationship that in a sense eclipses all the kind of debate and discussion you see concerning Russia today in the West.
I would also like to ask you about a statement made by the Chinese ambassador. He has said on Twitter that it is high time for India and China to do big business, big investments and big commitments together. It seems that China is extending that olive branch. How do you think India and China relations will take shape in the next 3 to 4 years? And are the current positive statements by the two sides more to do with the kind of geopolitical situation we find ourselves in? It also began last year at the Kazan summit, not immediately because of what's happening with the Trump administration.
Yes, of course, the move towards disengagement and de-escalation began at last year's Kazan summit in Russia. But, you know, I think with China, if I may use this metaphor, it's like playing some kind of three-dimensional chess in the dark. I think the pieces keep changing shape. The rules shift mid-game. So for all the hyperbole and the diplo-speak of the Chinese ambassador, I think sometimes the Chinese tend to knock the board over while they're smiling at the cameras. So I think you should unpack all this that way. Please, we shouldn't think that all is dandy with the Chinese just because we've had a couple of these meetings. There are problems, there are challenges, there is a history to this relationship. So we have to be very clear-eyed and hard-nosed about it.
Right. That indeed is an important statement, ma'am. I would also like to ask you about BRICS, because we saw Howard Lutnick also attacking BRICS for de-dollarization. Today, there is a BRICS virtual summit that Xi Jinping would be attending at the invitation of the Brazilian president. The External Affairs Minister is participating there on behalf of India. The Prime Minister is not going to be there. Do you expect India to somehow recalibrate its relationship with BRICS as a positive overture to Donald Trump? How do you think our relationship with BRICS is going to change?
You know, without sounding too defensive, I would say that as far as India and the BRICS are concerned, there is nothing, absolutely nothing, not a shard of evidence that we have done anything concerning BRICS that the Americans should see as something directed against them. So, you know, they are subjecting us to this kind of whiplash diplomacy, scorn one day, friendship the next, and that's how bruises are created by statements like this. So I think, you know, we should, in a sense, set aside these verbal jabs and tell the Americans exactly where we stand and where they get off on this. And they're trying to put us through a stress test. But historically, India-US ties have survived worse storms. You know, the sanctions or the special economic measures, as they were called after the 1998 nuclear tests. We had disagreements over Iraq. We've had differences over trade for a long time. So let's look at the ballast in the relationship. And that's what, on the American side, this very much vaunted, much elevated bipartisan consensus should also understand the shared democratic identity, the defense cooperation. We've bought billions of dollars of defense equipment from the United States in the last few years, despite what Mr. Trump says. The partnership on emerging technologies, the people-to-people linkages, the role of the Indian diaspora, you know, this is what has brought our two countries together. So this whiplash diplomacy, I think we have to stop. And that's why we need a protocol that is able to say this rhetoric must be set aside. We value the partnership too much to let rhetoric derail it. So all this is just tactical turbulence, but let's focus on the strategic continuity of the relationship.
Right. Also, Ambassador Rao, considering that we have a transactional president in the White House, as you mentioned, a lot of the changes in statements that we have seen could also be because of the domestic economic situation in the White House. He also needs to show victories to his population. Having said that, even if we do achieve some sort of trade agreement, some sort of understanding with the US, it is quite possible that President Trump may demand more in 2026 for that matter. So now, how do we take, especially companies who are invested in India and US, how do we take a long-term view of this relationship? Will the larger relationship remain the same 3 years from now, or has the relationship between India and US changed for good?
I don't believe it has changed for good, but it has gone through a phase of extraordinary turbulence. And as I said, these are injuries that are kind of whiplash injuries. And you know that whiplash injuries take time to heal. And there is also, I believe, the apprehension that no matter what we offer, President Trump could ask for more. So how do you handle that? I think that really is the challenge for the remaining years of his administration. How do you cap the game? How do you lock in reciprocity? How do how do we pause benefits if agreed relief isn't delivered? So I think the strategy for India is not to have a single vendor approach. We have to have multiple patrons, multiple partners. We have to keep the G7, the Quad, the EU tracks warm so that we're not negotiating in a tunnel with the Trump administration. So if you ask me to boil it down to an approach, let's be gracious in public, but very precise in private and relentless about verification.
Right. Finally, ma'am, we've run out of time, but just in a few seconds, what kind of concession should we offer on the trade deal? I'm not talking about the 25% additional tariff, but when it comes to the actual tariff arrangement and the market access, where do you think the ball should finally land as far as India is concerned?
I don't think that's a question you should address to me. It has to be addressed to the officials who are actually engaged in this process. They are best equipped and best able to answer that kind of question. I think we should look for the best deal for India, a deal that safeguards our national interest, but also keeps in mind that there is a ballast to the India-US relationship. It is a vital, crucial, consequential, indispensable partnership for both our countries. So keep that in mind also. Keep that in the range of vision also.
All right. All right, Ambassador Rao, pleasure talking to you. Thank you so much for this comprehensive conversation of India-US ties and how we are looking at and how we should ideally look at the changes in the relationship with China, Russia and the BRICS as well. With that, it's a wrap on this edition of News Center. More news and updates continue right here.
Hello and welcome to India Business Hour. I'm Shireen Bhan. The headlines we're tracking for you this evening. Nepal plunges into political uncertainty. Prime Minister KP Oli resigns after violent protests over corruption and social media ban, which leaves 19 people dead. Nepal's finance minister gets attacked on the streets as demonstrations continue. All flights to the Kathmandu airport cancelled. India appeals for calm. Gold prices hit a record high, and in India and across the world, weak jobs report in the US raises expectations of a rate cut by the Fed next week. China adds to its gold reserve, further bolstering gold prices. The government allows companies to continue with old MRP labeling and packaging till the 31st of December, even as the GST rate cuts kick in from the 22nd of September. The government asks companies to mandatorily publish ads in newspapers with the revised selling price. Heavy Industries Ministry asks all automobile dealers to prominently display the new prices. Infosys is the top gainer on the Nifty 50 index after the company says it will consider a share buyback proposal on Thursday. This will be Infosys' first buyback in 3 years and fifth since its listing in 1993. The move ignites expectations of a buyback from other IT companies. Securities Appellate Tribunal sends a notice to SEBI after Jane Street challenges the charge of market manipulation. The US quant trading firm claims SEBI's own internal report gave it a clean sheet. Jane Street has paid 4,800 crore rupee penalty imposed by SEBI alleging market manipulation in some bank Nifty trades. President Trump's trade advisor Peter Navarro equates the BRICS to vampires and says the grouping of developing nations cannot stay together. Silence in both Washington and New Delhi as 3 days pass after the Prime Minister fully reciprocated positive statements from President Trump on the special relationship with India. The Sona First family feud gets murkier. Late Sanjay Kapoor and actor Karishma Kapoor's children moved the Delhi High Court, accusing Sanjay's wife Priya Kapoor of forging his will to try and gain total control of his assets worth 30,000 crores. Karishma and Sanjay Kapoor were married for 13 years and have a daughter and a son together. The children seek a 20% share each in their father's assets. Israel bombs Qatar's capital, Doha. Israeli military claims to have targeted Hamas leadership. Qatar called it a criminal act and a flagrant violation of all international laws. Coursera cuts its prices by 60% in India in a bid to make the country its largest learner base from the current number 2. Plans to expand its local language offering by adding Odia this year to the existing 26 languages. CEO Greg Hart says the company is deepening its focus on AI-driven education in India. Media mogul Rupert Murdoch finalizes a family settlement in succession. The eldest son, Lachlan Murdoch, cements control over the media empire that includes Fox News and Wall Street Journal. 3 other Murdoch siblings will sell their personal holdings within 6 months. Let's start with the day's market action. The market's ending at a 2-week high, led by IT stocks today. The Nifty ending above 24,800. The Sensex up over 300 points, but the IT index up almost 3% there. Excitement building around the Infosys buyback and, of course, what that could potentially mean as far as other IT stocks are concerned. But in the currency market, the rupee gaining some strength against the dollar. The rupee is below the 88 mark in intraday trade, but it finally closed above that level, closing the day at 88.10. That's the rupee dollar for you, and of course the bond market action as well. There is no stopping yellow metal though. Gold prices hitting another record high of $3,600 as the US Labor Department buoyed expectations of a Fed rate cut. Gold, silver and platinum have all gained between 40 to 55% so far this year. Manisha standing by with more on the gold rally. The gold rush continues, Manisha.
Well, thank you for that. Yes, we've seen gold prices scale up new record highs for a third day in a row here. And every day has been a $20 to $50 of a move that we've seen happen in case of gold. With the kind of run-up that we have seen, gold is making all-time highs, not just in US dollar or Indian rupee, but various other world currencies as well. So when you look at the last 12 months, well, we've seen 45% a piece of gain, both in case of gold and silver. For the year 2025, gold is up 39%, while silver is up 43% as well. Well, the support continues to come in from the fact that the markets have totally priced in a 25 basis point of a rate cut from the US Fed meeting in the month of September itself. Well, there is even 10-15% of a probability of a 50 basis points, something that the markets definitely are discussing. And then you have seen all US data come in on the weaker side, whether it has been about jobs numbers, home, credit cards, even the debt situation that the Western world seems to be dealing with, the better smart money seems to be moving in case of precious metals there. So there's quite a bit of a buoyancy that we've seen happen in case of these PGM metals. The second point really is that the weak economic data is not just about US, it's also about China and much of European Union. The street also is now looking at weakness in US dollar index and expected weakness going forward as well. And if you look at the gold buying right now, the investment demand is quite strong in sense of physical. Gold actually, even as it's trading at record highs, it's trading at a premium in the physical markets in US and many parts of Asia as well. So every time you see a bit of a correction coming for gold, all the people who have been sitting on the sidelines thinking they lost the buzz immediately get in. Is the reason you aren't looking at a very sharp correction in case of gold, because a little correction and you start buyers come back into the market, and that's exactly the kind of scenario that we're looking at.
Manisha, many thanks. The gold rush continues. The big global story: two mining giants, Anglo American and Teck Resources, have agreed to merge to create a copper producer valued at $53 billion. The combined entity will be among the top 5 copper producers in the world. Anglo American shareholders will own over 62% of the business. Teck Resources will hold more than 37% stake. The deal comes as miners look to shore up access to copper, which is essential to the renewable energy transition as a core component in the wiring used in the booming data center sector. Now, the Fed cutting rates while the economy is okay is a recipe for a bubble. That's the word coming in from investor Ruchir Sharma. Speaking to CNBC, Sharma added that the Fed has never cut interest rates when the financial condition has been this easy. The Fed is expected to announce its rate decision next week. The Trump administration has been pushing hard for a cut.
In the past, when the Fed has cut interest rates, when the economy has been doing okay, it has usually been a recipe for a bubble. That's what happened in 99, 2000. And some will argue that that's what, possibly even happened in 2021. But I think the main issue here is the fact that financial conditions are super easy. The Fed has never cut interest rates when financial conditions have been this easy.
Well, that's Ruchir Sharma on whether the Fed should or should not cut rates. He believes it shouldn't. Let's see what happens. The union government has allowed companies to continue with old MRP labeling and packaging till the 31st of December, even as the GST rate cuts kick in from the 22nd of September. But companies have to mandatorily publish advertisements in newspapers with the new selling price. Also, the Heavy Industries Ministry has asked all automobile dealers to display the new prices at dealerships across the country. So while there is some leeway there as far as old packaging continuing till 31st of December, but it is very, very clear that the GST cuts have to be passed on to the consumers from the 22nd of September. Now, the Securities Appellate Tribunal heard U.S. trading firm Jane Street's plea today, challenging SEBI's ban order. Jane Street argued that SEBI ignored its own internal surveillance department report and an NSE report. It claims that both reports gave Jane Street a clean sheet. However, SEBI termed the plea a fishing expedition, stating that it's already shared 10 GB of data but cannot disclose more as the probe is still underway. The matter will be heard next on the 18th of November. Vodafone Idea has challenged the government's computation of AGR before the Supreme Court once again. The company has filed a fresh petition before the Apex Court. Previous petitions from the company, including a curative petition, have been dismissed by the top court. So it remains to be seen if the Supreme Court will admit Vodafone Idea's fresh petition on AGR. This matter now back in the Supreme Court. The top global story tonight: Nepal staring at political uncertainty after anti-corruption protests led by Gen Z stormed the corridors of power. Prime Minister KP Oli has resigned. Nepal's finance minister was attacked on the street as demonstrations continue. Archana joins us now to decode the massive upheaval in Nepal. It has been a trying day. Oli is out, the army taking over. Archana, the situation very, very dynamic in Nepal.
Yes, Shireen, some disturbing headlines emerging from Nepal, which is witnessing a regime change. The country's top leadership, including the Prime Minister and Home Minister, have resigned. Prime Minister KP Sharma Oli resigned after 2 days of violent anti-corruption agitation led by Gen Z protesters that killed 21 people. As we speak, the situation is quite tense in the capital, Kathmandu. Protesters earlier in the day defied a curfew and stormed the residence of the Prime Minister and vandalized it, set it on fire. They also set on fire the office of the country's largest party, Nepali Congress, and residences of several prominent politicians, including the president of the country. The Nepali army and chiefs of other security agencies issued a rare joint appeal calling for dialogue as the only path to restore order. Another set of disturbing details of assault on former Prime Minister Sher Bahadur Deoba and his wife Arzu Rana Deoba, whose current foreign minister, have also emerged. The protesters also breached the parliament and set it on fire. Now, all flights at Tribhuvan International Airport have been cancelled. Meanwhile, the Indian government has advised its citizens to avoid travelling to the Himalayan nation until the situation stabilizes there. New Delhi has also issued helpline numbers for those who are stranded in Nepal. Now, other politicians, other ministers of the Nepali cabinet did not escape the protesters' wrath. On your screen, you can see what has been purported to be a video of Nepal's finance minister being chased on a road and thrashed by demonstrators. We cannot independently verify the authenticity of the video. Another big question, why is Nepal on the boil? There are two reasons. One is corruption, a very important reason, and the immediate trigger was the social media ban. Now, at the heart of this is the movement called Nepo Kid campaign. It's a trend that targeted the children of the wealthy and influential politicians. The campaign put the spotlight on their lives, their luxurious lives, accusing the politicians of corruption because the kids were living a very lavish lifestyle. They had foreign education, luxury cars, exotic holidays, allegedly funded by corruption money. Now, many users posted TikTok videos of politicians' children living a very, very luxurious life and compared that with of an ordinary Nepali citizen. Now, the protesters blamed KP Oli for corruption, worsening economic conditions and misuse of power. And like I said, the immediate trigger was the social media ban. Now, that ban on prominent apps like Facebook, YouTube, WhatsApp, Instagram and Snapchat affected many people who rely on these apps for their small businesses and, of course, to criticize the government and connect with the loved ones. The ban was lifted late last night. The government said that the reason was that these platforms did not comply with the new registration rules. Back to you.
Archana, many thanks for joining us. Big developments there in Nepal. The government is out. The army has virtually taken over. White House trade advisor Peter Navarro is hit out at the BRICS alliance, of which India is also a part, and this he's done yet again. This time he's compared the BRICS to blood-sucking vampires, in his words. In an interview with cable news channel Real America Voice, Navarro said, and I quote, "The bottom line is that none of these countries can survive if they don't sell to the US, and when they sell to the US, their exports, they're like vampires sucking our blood dry with their unfair trade practices. Let's see what happens, but I don't see how the BRICS stay together since historically they all hate each other and kill each other," end of quote. This isn't the first time that Navarro has trained his guns on the BRICS. He has on previous occasions leveled charges of unfair trade practices and internal divisions, among others. Meanwhile, there is silence in both Washington and New Delhi as 3 days have passed after Prime Minister Modi fully reciprocated the positive statements from President Trump on the special relationship with India. We learned from sources that ongoing discussions with the US officials have exhibited contentions over sectors including dairy, agriculture, fisheries and MSMEs. The government has reiterated it is open to a fair, equitable and balanced trade deal with reciprocity. Union Cabinet Ministers Nirmala Sitharaman, Commerce Minister Piyush Goyal have said that there is optimism that the tariff standoff won't be a long-haul situation. Former Indian ambassador to the US, Nirupama Rao, has said the recent statements made by the Prime Minister and President Trump are positive but don't convey a reset in ties yet.
There is a package which consists of very many different ways in which we want to help them. So we'll wait for the cabinet to clear it, but there is something coming to help them so that this tirade of the tariff is something which they can face, and also suddenly having to look for newer markets is also a challenge, but we'll have to help them out on that.
So is there a sense in the government that this could be a slightly longer haul?
We hope not, but we really can't leave our exporters high and dry saying it's going to change sooner. We will work with them.
Nirmaji, will we also continue to buy Russian oil?
Yes. That's been made very plain and simple. Whether it is Russian oil or anything else, it's our decision to buy from the place which suits our needs.
You know, some of the officials of the Trump administration, calling it Modi's war or, a laundromat of Kremlin. I mean, how do you react to this? I mean, are conciliatory noises coming from the other side now?
I think there could be either some misunderstandings or some personal opinions that may be reflected in that. I do not think that deters the US and India from continuing to maintain a strategic alliance and partnership. Our friendship is far stronger than a few comments that may be made by a few people.
You look at the entire world today, there is huge turmoil, there is turbulence, policy decisions are changing overnight, and the process which used to be followed in a multilateral, in a discussion, those kind of processes are today not very visible. So under such circumstances, the stability that India offers, that's huge. That's what is attracting a lot of investors to our shores.
The tone today is better, but it's an opening gambit, not a reset. So if you ask me, are these statements a sign things will improve? I would say they're a de-escalation signal, certainly, and they buy both sides some breathing room. Now, there's the tariff overhang also. The US duties, as we all know, as announced, are at 50% on a wide basket, and no new talks have been announced. So both sides, I believe, needed a political valve while the officials reassess the next steps.
And staying with India and the US, a proposed legislation in the US is causing a stir as far as IT companies are concerned. Bernie Moreno, a Republican member of the US Senate from Ohio, has floated a legislation that seeks to impose a 25% tax on outsourcing payments. But this proposed bill does not enjoy bipartisan support, and even other Republican colleagues of Senator Moreno have not openly backed it, so that's important to note. But first up, here's what the legislation proposes to do. The senator wants a 25% tax on what he calls outsourcing payments. This is defined as money paid by a US company or a taxpayer to a foreign person whose work benefits consumers in America. This bill also prohibits companies from deducting any outsourcing payments. Now, this proposed legislation will need the approval from the House, the Senate, and the President, since it involves tax changes. So this is a long way away from being a done deal. Another point to note is that the proposed legislation is akin to a private member's bill. Usually, lawmakers cutting across party lines propose a legislation so that it carries more weight on the floor of the House and in the Senate. But in this case, Senator Moreno is not being backed by any Democrat or even his own Republican Party members. Who is Senator Moreno? Well, he is an immigrant himself, born in Colombia, was a car dealership owner before he became a firebrand Republican. Moreno is seen as an outsider who's keen on shaking up the Republican establishment. He won the endorsement of President Trump for the Ohio Senate race, which proved pivotal in Trump's victory. But like many Republicans, Moreno had opposed Trump in 2016, calling him, and I quote, a lunatic and a maniac. But he reversed his position since and is now an ardent supporter of the president. Here's Ganesh Natarajan, the former CEO of Zensar Technology. He believes American companies will be firmly opposed to this proposed legislation to tax outsourcing. And this is something that we've seen previously as well. So he's not too perturbed. Take a look.
There have been many attempts in the past to do these outsourcing bills, etc. And what I think Senator Moreno has tried to do is something very similar. But in that sense, I think the first point of resistance will come from American corporates themselves. I mean, every significant corporation in the Fortune 500, and indeed most of the IT CEOs who were at dinner with President Trump the other day, I think they all have huge investments in India, in GCCs, what is Global Competency Centers. There are over 1,600 of them in India. Plus, of course, the fact that a lot of their work is done by Indian companies. So I don't think this is going to happen in a hurry. So I'm pretty sanguine about that.
And that's perhaps why IT stocks today didn't really react to the news coming in overnight. Commerce Minister Piyush Goyal says more than 60% of the chapters of the India-EU FTA are now finalized. Speaking on the sidelines of the Indian Steel Association event, Goyal said that he's hopeful that an FTA will be concluded substantially by the time the European Union Trade and Agricultural Commissioners come to India, which is later this week.
Almost 60-65% of the chapters also are now completed and finalized. By the time my counterpart, Mr. Maros Shevčovič, the EU Trade Commissioner, and Mr. Christoph, the EU Agriculture Commissioner, come to India, I think we'll be quite set to try and conclude the agreement substantially.
Progress there on the India-EU FTA. Up next on India Business Hour, media mogul Rupert Murdoch has finalised a family settlement in succession. That and more when we return. Catch all of CNBC-TV18's news and updates on YouTube, Facebook, Instagram, X and Jio Hotstar. Prime Minister Modi conducted an aerial survey of the flood-affected areas in Himachal and Punjab. He's announced a 1,500 crore rupee relief package for Himachal, where 370 people have died in the last couple of months. The Himachal government has estimated losses of more than 4,000 crore rupees. The Prime Minister has also announced 1,600 crores in assistance for Punjab, where more than 50 people have died just in the last month. Protests erupted in Doda district in Jammu and Kashmir after the police detained Aam Aadmi Party MLA under the Public Safety Act. Security arrangements and internet slowdown across district were reported. A crowd was seen gathering at the Kahara and Malkapura areas of the district, where the legislator has considerable influence. The protest was later dispersed by the police. The Sona First family feud gets murkier. Late Sanjay Kapoor and actor Karisma Kapoor's children have now moved to Delhi High Court, accusing Sanjay Kapoor's wife, Priya Kapoor, of forging his will to try and gain total control of his assets worth 30,000 crores. Ashmit joins us now to take us through the details of the plea. Ashmit, first it was the sister and the mother, though they've gone public with the fact that they believe that there's been forgery as well. But now Karisma Kapoor's children moving the court.
Indeed, preferring the legal route and claiming their status as a Class 1 heir. Bear in mind that Sanjay Kapoor, for a period of 13 years, was married to Bollywood actress Karisma Kapoor. The two of them had two children, a daughter, 20-year-old, a son, 15-year-old. And importantly, the children, that's the daughter and the son, they've preferred to move the Delhi High Court. Now, there are four aspects to point out as far as their petition is concerned. Number one, both of them are flagging their status as Class 1 heirs of Sanjay Kapoor, and by virtue of being Class 1 heirs, they're seeking, each of them are seeking 1/5 of the total available assets of Sanjay Kapoor. That's one. The second, they're using this petition to dismiss, to reject the will that is being cited by Priya Kapoor, the widow of Sanjay Kapoor. They're pointing out that this will is not authentic. In fact, they point out that on a number of occasions they've made requests for disclosure of that will. That will has not been supplied by Priya Kapoor, that it only adds to the suspicions on the authenticity of that will, and therefore they're rejecting that will, especially on account of how that proposed will seeks to disallow the two children from their entitlements as Class 1 heirs. That's the second key takeaway. The third, they're seeking directions from the Delhi High Court to protect the known available assets of Sanjay Kapoor. They're saying that very specific direction needs to be issued to restrain Priya Kapoor as well as Rani Kapoor, the mother, Sanjay Kapoor's mother, to ensure that none of his assets are sold or transferred in any shape or form. And fourth and finally, they are seeking disclosure of full assets, known assets, public assets of Sanjay Kapoor, so that they are known to the children in question. This petition being preferred before the Delhi High Court. There is some urgency in the matter. The lawyers in the case, we understand, will be seeking an early hearing from the Delhi High Court.
Ashmit, many thanks for joining us. Now, tensions in West Asia continue to worsen. Israel has now bombed Qatar's capital, Doha. The military has confirmed that it has carried out an assassination attempt on top Hamas leaders. Qatar has condemned the Israeli attack, calling it cowardly and a flagrant violation of international law. From one war-torn region to another, Russian forces have killed at least 6 people in Ukraine after launching nearly 450 drones over multiple settlements. Ukraine's forces retaliated with a massive drone attack on Russian-occupied Donetsk, killing 2 civilians. EU officials are holding talks with their American counterparts in Washington to impose more sanctions on Russia. The French Prime Minister has been outed in a new no-vote no confidence vote. This has come only 9 months after the Prime Minister came into power. French President Macron will name a new Prime Minister in a matter of days. Prime Minister Bayrou's fall came after he warned that the country was facing life-threatening debt. This is the 4th Prime Minister to resign in 2 years. The long-drawn succession for media mogul Rupert Murdoch's businesses has finally seen a deal. The eldest son, Lachlan Murdoch, has cemented control over the media empire that includes Fox News and Wall Street Journal. 3 other Murdoch siblings will sell their personal holdings within 6 months.
It is the real-life story that supposedly inspired TV drama Succession. But the battle for control of Rupert Murdoch's family empire seems to have reached its final episode, and the victor is the tycoon's oldest son. An agreement announced Monday will see Lachlan Murdoch cement control of the media group. Rupert's children James and Elizabeth Murdoch and Prudence MacLeod will sell major stakes. One Reuters source says they will get about $1.1 billion each. Meanwhile, a new trust will be created to benefit Lachlan and his younger siblings Grace and Chloe Murdoch. The battle for control had played out last year in a Nevada courtroom. Rupert Murdoch wanted to change the terms of a family trust that holds big stakes in Fox News parent Fox Corp and Wall Street Journal owner News Corp. He was concerned that James, Elizabeth and Prudence could mount a coup to oust the politically conservative Lachlan, and wanted to amend the trust to block interference by the more liberal siblings. But the court rejected that plan, with a source saying the ruling opened the way for new settlement talks. Now Lachlan's anointment as successor ensures that the family empire retains its conservative tilt. That's sure to be welcomed by Republicans, who prize the prominent role played by Fox News